Yes, good morning everyone. Welcome to CA Foundation Accounting Marathon for Jan 2025. So our target is with this marathon to feel happy on Jan 12th. When? Jan 12th, right? Your accounts exam is on Jan 12th. Law got postponed and all. Good only. 3 days revision time you will get for law, and other two subjects are on 18th and 20th. Yes, so what we are going to cover in this marathon? Today is day 1. Okay, today's target. Let's set the target. We have starting time set 8 o'clock. Ending time we don't know. Ending time is not set. Okay, so today's target will be in the basics. Okay, basics. You all will know the basics. So I'm not covering the basics. In the basics, only one area we have to touch. That is journals for GST. Journals for GST is one tricky area which is newly introduced. That we will do in today's class. After journals for GST, next thing we will do from basics, rectification of errors, obviously. Okay, around 10 marks weightage. So then we go into BRS. BRS also has roughly around 10 marks weightage. Then we'll go into depreciation. Then we will complete inventory. Then we'll complete bills of exchange. Then we'll complete final accounts. When we finish final accounts, that's it. We wind up today. Okay. Tomorrow's day, we will have partnership, NPO, company accounts, incomplete records. Lesser number of chapters for tomorrow, but all are heavyweight chapters. Okay. So let's begin. And before we begin, let's set some rules. No breaks. Okay, when I give you a break, that time only is the break. Lunch break, pakka 1 hour. 1 hour, pakka lunch break I will give you. But before that, I can't promise you any breaks. Maybe when we finish some concept, 5 minutes, we can take a break there. Okay, when we finish some concepts, just to rearrange or bring the material and all that, maybe we can take some 5 minutes break, but nothing more than that. I hope you had your breakfast and you have come. Okay, you'll get only 5 minutes break here and there. So be prepared for that. And one more thing is the questions that I'm covering. Okay, it has covered almost all the concepts. Other than that, if you have any questions which is doubtful, okay, keep it. At the end of the day, after the marathon, we'll clear all the doubts. Okay, we'll have a doubt clearing session at the end of the day. So if you feel, for example, I might have solved one practical question which is there in the study material, which I felt, but you had a doubt in one more practical question, just keep that pending. At the end of the day, we will discuss that and we will clear all the doubts. Okay, that is one thing. Another thing, mindset for the exams. Jan 2025, when you're going for exams, I am telling you, I have told 1,000 times before, I'm telling you again, go to the exam expecting a lengthy paper. Accounts will be lengthy. Think like that only and go. So that from minute 1 itself, you are in your top gear. Otherwise, first question, you always feel like first question I'll write very nicely. I want it to be beautiful. Okay, second question, the beautifulness will go a little down. Then when we go to last 15-20 minutes, though, we are in some other level only, beast mode on. Okay, and this thing, handwriting also will be like that only, like beast only it will be looking. Okay, so we don't want that to happen. From starting itself, go in full speed. Yes. So what is the problem with speed is? Pass the remote. What is the problem with speed is? If you don't have conceptual clarity, you will not get speed. Simple. If you don't have conceptual clarity, if you have not solved many questions, then you will not get speed. That is one of the ways people make it lengthy. How? If you read the question, if you have conceptual clarity, when you read the question, your brain has already solved half the solution. Then as soon as you finish reading the question, you directly start. When you go into the solution at particular areas, you know there is an adjustment, you will straight away go to that adjustment and check. Correct? That is if you have studied properly. Otherwise, what happens? You will read the question once, then you are confused, you will read the question again. Then when you are solving, you are stuck, again you will read the question. Those are the areas where you will spend more time. And because of that, time is lost. Clear? So accounts is a paper which can be lengthy because of so many heavyweight chapters. You can see the heavyweight chapters. No, NPO lengthy question only. Final accounts, lengthy question. Incomplete records, lengthy question. Partnership, lengthy question. Company accounts, lengthy question. All these are lengthy questions. So if you have, even without intention from ICAI, paper can become lengthy. They might not intend to make it a lengthy paper, but still there might be a situation where it is lengthy. So from beginning itself, you have to be in top speed. When you're writing this mock tests and all, no, at home also, if you're writing mock test on your own, don't give yourself 3 hours time for accounts. Give yourself 2 or 45 minutes. Try to finish it in 2 or 45 minutes. Why? Because if you're writing at home, you're in your comfort zone. You are very comfortable. You don't have that added pressure and all that. So in 2 or 45 minutes, you should be able to finish. So 15 minutes buffer time for the pressure, for the confusion, for getting stuck, you should keep. Clear? If you can finish in 2 or 45 minutes at home, you can complete aram se at in 3 hours in the exam. Okay. So those are the things. Okay. Good morning. Do we have breakfast break? Wow. I keep telling the story. There were 2 guys. One guy. He got married to one girl. Okay. Then his father had given promise to his wife. So he sent this son of his to the forest for 14 years. After 14 years, he came back. But in those 14 years, his wife got kidnapped. Then he rescued his wife, came back. After everything, someone is asking, what is the relationship between these 2 people? Do we have breakfast break? I just explained. No breakfast break. You are online mode, man. You will sit at home, eat breakfast. 2 times you can have breakfast and watch marathon. Sir, is it compulsory to put working note number in answer paper? Working notes are compulsory. And it's better to give reference. For example, you have calculated something. This calculation is in the working note. Just in bracket, you write working note 1. Okay, no harm. So that for them also, if they want to see how you got this number, they can quickly go there. Sir, we didn't have a breakfast, but you are in online mode. You can always have it. Okay. Comfortably, you can have breakfast, popcorn, everything you can have. Yes, let's start. Our first topic for the day is from journal GST. Okay, how to pass journal entry, how to post them into ledgers, how to prepare subsidiary books, how to prepare trial balance. All this I'm expecting you to know it when you're coming for the marathon. Okay, so directly journals I was planning to skip, but journal GST is something that is new. Okay, that is one thing that we have to discuss. Yes. You have to be on time. Come first. Close the door. Okay. Now, journal for GST. Journal for GST. This is one thing that can be tricky in the exam, and the previous exam they have not asked, but previous to previous. That is the first attempt of CA Foundation new scheme. They have asked this. So tell me, journal for GST. It will be applicable for purchase and it will be applicable in case of sale entry. And purchase means purchase of goods also it is applicable. Purchase of services also it is applicable. Sale means sale of goods also it is applicable. Sale of services also it is applicable. Clear? Because GST itself is goods and service tax. It is not only for goods, it's even for services. Now, from examination point of view, what we have to worry about? If I am purchasing, what will be the entry? Purchase account debited. Purchase account debited. This value is excluding GST. This value is excluding GST. Purchase account debited. When you purchase, goods are coming in. Easy way to remember for exams. When you're purchasing, goods are coming in. So GST will be input GST. This can be input CGST account debited, input SGST account debited, or you can also have input IGST account debited. Input CGST, input SGST, or input IGST. All three cannot be there. Okay, now always keep CGST on top, central government on top, state government next. Clear? 2. Creditor, if you have made a credit purchase or cash or bank. Okay, this should be your situation. Now, this value is there, no creditor. This is inclusive. This is inclusive of GST. Inclusive of GST. Is that clear? Now, what about sale? Who do you sell to? You sell it to debtor, or you get cash, or you get money through bank. So account debited to sales account. First you have to sell to get the GST. Sales. This is excluding GST. This is excluding GST. Clear? Now, two. Now simple. Think. When you are selling goods, goods are going out. That means output GST. So to output CGST, to output SGST, or to output IGST. Clear? This is the basic entry that we have to remember if they ask you journal entries for GST. Now, even if goods are not there, imagine I am purchasing service. I am taking some service from someone. That time also this GST entry will be applicable. Imagine I am providing service. They might tell consultancy service provided. That time also GST is applicable. They might tell rent charge. That means I have given my building on rent. That time also GST is applicable. All these entries GST is applicable. Is it clear? Now, where you will struggle, where you might struggle is they might use one word called as list price. What is list price? List price is like MRP. If you go to a shop, grocery shop, what will happen? They will have one list of items. When you purchase, they will look into that list. Then they will see the price over there. But for you, they will not give it at that price because you are a regular customer. They will reduce some value and give. Correct? List price is basically MRP. Maximum price. Correct? But are you purchasing at list price? No. List price minus trade discount. List price minus trade discount. This is the transaction value. List price minus trade discount is the transaction value. That is one thing that you have to remember. Okay. Another thing apart from this where people can go wrong is cash discount can come into picture. Cash discount. Now remember this. If you are, what is cash discount? Discount for paying early or receiving early. If you are receiving money early, discount allowed. If you are paying money early, discount received. When you are calculating cash discount, only thing you worry about is discount on value without GST. If 100 rupees is the value, after GST it becomes 118. But when you're calculating cash discount 5%, if they tell you don't calculate on 118, it will be on 100. If you calculate on 118, it will be as if you are giving discount on GST also. You don't have the right to give discount on GST. That is government's job. So calculate on the value which is without GST when you're calculating discount. Is this clear? That is one thing. Even when you're calculating trade discount, it is on the value without GST. Now, after that, what can trouble you in GST part? If you are having drawings, drawings means what? Goods which you purchased, you are using for personal purpose. If drawings is in cash, GST will not be applicable. If drawings is in goods, then GST will be applicable. If you have a situation where drawings is in goods, then the entry is actually drawings account debited to purchases. Correct? That time what you have to do? Input GST should be reversed. That means credited. Is it clear? When you purchased, input GST was debited. If you are using for your own purpose, then input GST will be credited. What if there is returns? There can be purchase return, there can be sales return. What if there is purchase return? Then again same thing, input GST will be reversed. Clear? You know the entry. What is the entry for purchase return? Creditor account debited to purchase return to input GST. Clear? What if there is sales return? Here output GST will be reversed. Yeah, it will be debited. Clear? What is the entry for sales return? Debtor account debited. Sales return account debited. Output GST debited to debtor. Is it clear? That should be the entry. And one thing that might have caused confusion when you were solving problems is something called as rebate. What is rebate? Discount. Okay, in the question in the study material, rebate is basically, they said that goods were spoilt or something, so rebate was given. So if goods are in semi-spoiled condition, they'll return the goods itself. It will become sales return or purchase return. But if goods are in completely spoiled condition, then you are not able to return. But you'll call and tell, I'm not going to pay money for these goods. So when you are telling that they are not going to pay money, that means you have to reverse whatever has happened. Rebate is like sales return only. Treat it like sales return or purchase return. See which kind of rebate. Are you getting rebate or are you giving rebate? Check that. Okay, treat it like purchase return or sales return. If you're treating like purchase return or sales return, what you have to understand? Even the GST will get reversed. If it is purchase return, input GST will get reversed. If it is sales return, output GST also will get reversed. Is this clear? This is your concept of GST. This much you need to remember. Where else it can trouble you? In final accounts questions. In final accounts questions, they can put in the trial balance itself, output CGST, output SGST, input CGST, input SGST. What you are going to do? Nothing to worry. In the balance sheet, see which is more. If output is more, input is less, show it on the net amount, you show it on the liability side. If input is more, output is less, then net amount you show it on the asset side. Clear? That's all you have to worry about. Journal entries can be tricky. In final accounts, if you find it, only do this and put it in your balance sheet. Clear? This is your discussion of journal GST. Yes, we'll see some problems. Question number 1, which we are going to solve or which we are going to see, is journal SM8. In study material, question number 8. We have some questions now on GST. That's your first question for the day. Okay, now you need to have your calculators ready because we are not solving, we are understanding. Now, first thing, can you see purchase goods from Sahil for 50,000 plus CGST and SGST? What should be the entry? Purchase account debited, input CGST debited, input SGST debited to Sahil. Entire amount goes to Sahil because we are supposed to pay that amount to Sahil. Clear? Next, purchase goods from Sam for 40,000 at a trade discount of 10%. Automatically this became 36,000, trade discount 10% plus CGST and SGST 9% each. Okay, but they said 20,000 was paid immediately. That means 20,000 is paid now. Part of it is cash purchase and balance payable after 3 months. So now what happens? Purchase account debited 36,000. On 36,000, CGST and SGST is applicable. Out of the entire amount, 20,000 is paid now. Remaining amount is going to be paid in future. So can you see to bank and to Sam? Is this clear? Second entry. Clear? What they have done in one entry only, one transaction only, trade discount is also included. Cash, they made it part is cash purchase and part is credit purchase. Clear? Next. Goods costing 20,000 withdrawn from our personal use. See, in GST, one thing you have to remember, GST is actually not paid by purchaser also, not paid by seller also. It is ultimately paid by consumer. I sold to you, you sold to somebody else, that person sold to somebody else, nothing. Input, output will keep getting adjusted. Finally, who will pay the entire amount of GST? Consumer. So if you are taking goods for personal use, that means you are the consumer. That means entire amount GST you should pay. So input will be gone. So such goods were purchased by paying CGST and SGST 9%. What is the entry? Drawings account debited to purchase. So when drawings is there, that time input GST should get reversed. Drawings account debited 20,000 plus GST. Two purchases 20,000 and see input GST is getting reversed. Is this clear? Yes. Let's go further. Rent paid to Gagandeep 30,000 plus CGST SGST. Rent paid to Gagandeep. That means we are taking some service. There also GST is applicable. You can see the entry rent account debited. Instead of purchase account debited, it is rent account debited. To input CGST, to input SGST, and the entire amount is supposed to be paid to Gagandeep. Clear? Here they said paid rent to Gagandeep. So I feel ICA is wrong by writing Gagandeep over here. They should have written to bank. They should have written to bank. Are you getting my point? Because they said clearly paid rent to Gagandeep. They didn't tell payable. Clear? Yes. So be careful. Such cases ICA will correct itself in exam hall. So you also have to correct yourself. Goods costing 5,000 before trade discount. Return to Sam. That means the goods which are returned is only 4,500. Okay. Such goods were purchased by paying CGST and SGST. This is what? Purchase return or sales return? Purchase return or sales return? Purchase return. Yes. So you can see Sam's account debited including the GST part. Purchase return 4,500 because 10% trade discount was there. And 2 input CGST, 2 input SGST. Is this clear? Yes. Next. Purchase furniture for 44,800 including. Can you see all the questions we had to calculate? Here it is including IGST. So 44,800 is including IGST. Imagine the cost is 100. IGST is 12%. So total amount becomes 112. We want to know what is 100. How much is it? 40,000. So 40,000 is the furniture value. Remaining is the IGST. So what you will do? Furniture account debited 40,000. IGST 4,800. To bank 44,800. So one more area where we have to be careful if it is GST question, whether it is inclusive or exclusive. If they use the word inclusive, you have to separate it. Why you have to separate? Because GST is shown separately and the transaction value, that is for purchase of services, goods, asset, whatever it is, transaction value is separate. Clear? Next, purchase machinery from Symphony Industries for 1,40,000 plus CGST. That means here it is not inclusive. Okay, 9% each, paid 1 lakh immediately and balance is paid after 2 months. Again, it is cash purchase and credit purchase. So what you will do? Machinery account debited, take the 2 GSTs. 1 lakh is paid immediately, so it is written to bank and balance amount will go to Symphony Industries because it is credit purchase. Is this clear? Okay. Now we'll go into the next question, that is GST SM9. This is about sale. So both angles are covered, purchase and sale. Journalize the following transactions in the books of Nidhi traders. Clear? Sold goods 50,000, charged CGST, SGST. What is the entry for sales? What is the entry for sales? Debtor. Here they have not told debtor. So cash or bank account debited. 2 sales. 2 output GST. 2 output whichever. 2 GSTs which are there. Bank account debited. See, sales is 50,000. 2 GSTs. When you add all this, it becomes 56,000. Clear? Shouldn't be any problem. Next. Sold goods to Surjit for 28,000 including CGST and SGST. So you take 28,000 as the value. How much is the CGST and SGST? 6%. So 12%. So this becomes 112. How much is 100? Is it 25,000? 25,000. So the sale value is only 25,000. Can you see the entry? Surjit account debited 28,000. Sales 25,000. To output CGST, to output SGST. Including word should be very, very important. Observe it. Don't get carried away. Received 25,200 from Surjit in full settlement of his account of 28,000. Received. Okay. So now nothing to do with GST. Now if you see GST in the question, okay, that doesn't mean that every entry GST, I have to search for GST only. There can be in the middle entries like this also. Here what is going to happen? Bank account debited. You are getting less money. Discount allowed debited to Surjit. Is this clear? Yes. Next. Sold goods to Kapil for 30,000, charged IGST 12%, received 12,000 immediately and balance to be received after 1 month. How in purchase we had credit and cash together, in sales also we have credit and cash together. So now understand this, bank account debited, you are getting only 12,000. 30,000 plus 3,600, 33,600. Out of that 12,000 is paid now by that person. Remaining he will pay in the future. So remaining will be Kapil's account debited. Is this clear? IGST entry? Yes. Kapil was allowed rebate. This is the thing I was talking about. This is the one tricky thing which is there. Kapil was allowed rebate of 5,000 as goods supplied to him were defective. 5,000 we are giving rebate. Okay. These goods were sold by charging IGST of 12%. So rebate you will treat just like returns. Sales return, what you would have passed entry? Sales return account debited to sales return account debited. Output GST also will reverse and then you will put the amount to Kapil. See what they have done. Rebate account debited, output IGST you will debit and it is to Kapil. So you will treat this rebate just like sales return. If it is me getting rebate, then you will treat it like purchase return. Clear? Now, sold goods to Manpreet for 1 lakh at trade discount 20% and charge IGST. Shouldn't be a problem. Again, Manpreet's account debited to sales. Why we are taking only 80% over here? Because trade discount is there, 20% trade discount, and on the 80,000 you will apply the GST. Clear? Next, goods of list price. See, this is what we were discussing. List price 20,000 returned by Manpreet. Did you sell to Manpreet at list price? No, you sold to Manpreet after giving discount. So your transaction value should be 20,000 minus 20% is equal to 16,000. So whatever entry you are passing, you pass it for 16,000. So your sales return will be 16,000. Can you see sales return 16,000? Output GST reversed to Manpreet. Is it clear? If you had sold to Manpreet without discount, then you would have taken 20,000 only. You would have taken list price only. Clear? Yes. Received commission 15,000, charge CGST and SGST 6% each. Received commission. Commission is also a service. Correct? So how you would have passed the entry for sale of goods? Now you are passing sale of services. So if you are receiving commission, are you giving service or getting service? You are giving service because you are receiving commission. Are you getting my point? So see the entry here. Cash account debited to commission to output CGST, output SGST. Is this clear? Yes. This should be it with your GST part. Any doubts? Anybody has any doubts? Okay. You will find one more question in your study material. You can take that as practice. One small question is there. And last to last exam, that is the June attempt, there was one question which was asked from GST. You can take that as revision. I don't think anything extra they have asked which is not covered in these two questions. Clear? That is it. That's the first topic for the day. Done. Done. Now we go into rectification of errors. Rectification of errors, I have not picked any question from your study material. What I have done is one master question. Okay. Try to cover all the errors, only 31. Try to cover all the errors, only 31 are there. Now, rectification of errors, see, whichever questions I have picked from study material, what I will do is I will keep the solution only and we'll discuss the solution. Whichever question, like for rectification of errors and BRS, I have made master question. So those questions we are going to solve in class. Okay, and we means you. You are going to solve in class. Now, before that, we'll discuss the concepts of rectification. Rectification of errors. Rectification of errors. See, like this you'll be sitting when you see rectification of errors in the exam. You're like, what has happened in my life? What am I doing here? I see, why? All the sins I have done in my life, are you punishing me for that? Yes, actually rectification of errors is the scoring area. Okay, now we'll try to see what are the types of errors we have. What errors we have? Actually, there are only two. You might think of many, but actually there are only two. Errors of principle and clerical errors. Join the wrong course, doing mistake in the course. Error of principle is, oh, why did I take CA? Okay, clerical error is joined CA, did not study. 28 days were left, 27 days were left, but still we were having fun in Jain College. Okay, that is clerical error. Now, error of principle. Understand what is usually error of principle? That means you made one accounting mistake itself. Your basic rules of accounting only is wrong. Capital item is treated as revenue item. You are supposed to treat it as asset, you put into P&L as expense. Correct? You are supposed to treat it as a sale of goods, you took it as sale of asset. Clear? Capital item is treated as revenue item. In such cases, trial balance will tally. That means it is tougher to find. See, there are some chapters where exam oriented is easy, practical is tough. Some chapters are there, practical is damn easy, exam oriented is trickier. BRS is one of them. BRS exam oriented is little tricky because they list the things you have to see plus minus. In practical situation, what we do, we just keep passbook here, we keep cash book here, we keep looking like this. Correct? But rectification of errors, practical is much tougher. Why? There you have to find the error first, then rectify it. Exam, they will give you spoon feeding. These are the errors. You just pass the entry. Clear? Now, capital item is treated as revenue item. Trial balance will tally because instead of one debit, you have put into some other debit. Or instead of one credit, you have put into some other credit. Clear? Now, clerical errors are what? Errors of omission. Errors of omission means what? You missed it. Accounting process is there. No, what is the accounting process? From journal, instead of journal, you put subsidiary books. From journal or subsidiary books, it will go directly to ledger. From ledger, it will go to trial balance. From trial balance, you are supposed to go forward. In this process also, journal to ledger is called as posting. In ledger, what you do, total it and balance it. If you do wrong balancing, there also there is an issue. So error of omission is you have missed something in the accounting process. Clear? Complete omission. We follow which system of accounting? Double entry system of accounting. So complete omission means entire entry only is missed. Trial balance will tally. If you don't pass the entry, trial balance will still tally. Correct? Partial omission. That means one-sided error. If it's one-sided error, trial balance will not tally. Is this clear? Errors of omission. What is errors of omission? Errors of commission. What is errors of commission? You have done the work, but you have done wrong. You have done the work. Accounting process you have done, but you have made some mistake in the process. Errors of omission, errors of commission, what will happen? Here there are types of things. Writing wrong amount in journal, both debit and credit. You wrote wrong amount. You are supposed to pass the entry cash account debited to sales. You wrote instead of 100, you wrote 10. Both the places you wrote wrong amount. Trial balance will tally. Trial balance will tally. What if entering wrong amount in subsidiary books? You entered wrong amount in subsidiary books. If you put correct amount and you did totaling mistake, then there is one-sided error. If you put correct amount and you transferred wrong amount, then there is a problem. You entered only. You had to enter 1000, you put 10 rupees. Will it make any problem? Both the side, it will go 10 rupees only. Trial balance will tally. Is this clear? Yes. Correct entry posted to wrong account. Entry is correct. Purchase account debited to X. You wrote it as, you posted it to Y. Correct entry, but posted to wrong account. Still trial balance will tally. Clear? What if posting wrong amount in ledger? Correct entry, but you posted instead of 100, one place you posted 10, another place you posted 100. Now will trial balance tally? Trial balance will not tally. This is one more error of commission. Posting amount on the wrong side of the ledger. Correct entry, you had to put to the X account credit side, but you put to X account debit side. Now what will happen? Trial balance will not tally. Wrong balancing of ledger. Obviously, you totaled correctly. You did not make the mistake. Your calculator made the mistake. That time what happens? Instead of 100 in your calculator, you got 80. So you have to blame the calculator also for the result later. Okay, wrong balancing of ledger, trial balance will not tally. Okay, wrong total in subsidiary books. Very common error in rectification. Sales book undercast, purchase book undercast. That means what? You entered correctly. Undercast means what? When you totaled, you made a mistake. So when you have a totaling error, trial balance will not tally. Is this clear? Okay, last error is compensating error. What is compensating error? Two errors. You made two errors. One error you made which caused the debit to increase. Another error you made which caused credit to increase. Two errors are compensating with each other. Trial balance will tally. But is your financial statement correct? No. Clear? Rectification should be done. Next we move into stage of rectification. This is very important, no? For you to solve. Your solving methodology only changes. Before preparation of trial balance. Clear? That means I was preparing my trial balance before, I was doing my journals. It happens to you, at home when you're searching for something, you never find it. Correct? Next day you're just walking in the house simply, and it will be there only. Correct? It will be there only. Correct? Before preparation of trial balance is that. You are doing something, that time you suddenly noticed, 3 days ago the entry is wrong. Correct? So you still have time. If it is before preparation of trial balance, can you use suspense account in your rectification entries? No. Suspense account is born only when you prepare trial balance. You prepare trial balance and you are getting difference in the trial balance. Now there is suspense in your life. You will put that amount into suspense account. Clear? Before preparation of trial balance, no suspense at all. So if it is one-sided error, you will write one statement and rectify it. After preparation of trial balance, two things can happen. After preparation, you are rectifying in the current year only. You got difference, you put the difference into suspense account. After you put the difference into suspense account, you search, you found the mistake and you rectified it. In the current year, you will rectify it. Suspense account will be used for one-sided errors. Remember, whenever you are rectifying, if suspense account has to come into your rectification entry, it has to be a one-sided error. Why one-sided error? In my rectification entry, only debit is there, no credit. Credit will be suspense account. In my rectification entry, only credit is there, no debit. Debit will be suspense account. Clear? But that suspense account will be only after this stage. In this stage, there is no suspense account because suspense account is not born itself. Clear? Yes. In the next accounting year, we are rectifying in the next accounting year. That time what happens? Everything is same. But instead of certain items, you will use P&L adjustment account instead of nominal accounts. Instead of expenses or incomes, you will use P&L adjustment account. Why? Because if at all you made a mistake in an expense, if you are rectifying that expense in the next year, that expense will go to P&L of next year and it will cause difference in profit of next year. We don't want this year's error to cause difference in the profit of next year. Next year's profit we want to calculate correctly. So instead of those expenses or incomes, you will use P&L adjustment account. Is this clear? Yes. Rectification before preparation of trial balance. What are the things we discussed? Suspense account not to be used. Rectify one-sided errors by passing a statement. Only statement you are going to write. What has happened, undercast, overcast, extra, whatever it is you are going to write. Rectify two-sided errors by passing necessary journal entry. Two-sided errors, no problem. Now, if it is after preparation of trial balance in the same accounting period, suspense account to be used. Should we use suspense account? Yes. When one-sided errors are rectified, suspense account to be used. You came little too early. Settle down, little back on you go. Because last time's regular classes we couldn't upload only because you sat in the first bench and spoke for the entire 150 hours. More than me, only your voice is heard. When people got to know that you are coming today, their general question was, did you get kakra? Lot of your old classmates were asking, did you get kakra? Why did you come? Go back. Sit. Do one thing. Anyways, you have come. No, turn on that AC. No, but still, it's hot. More number of people are there in class. So, huh? Morning jokes are good for health. Yes, rectification after preparation of trial balance in the same accounting period. What happens? Suspense account to be used. Clear? For what? One-sided errors. When one-sided errors are rectified, suspense account to be used. When two-sided, there is a small spelling mistake here. Two-sided errors are rectified, suspense account not required. Is that clear? Yes. What about when one-sided errors are rectified? If in the rectification entry an account has to be debited, then suspense account has to be credited and vice versa. I told you this. If there is only debit, there is no credit. Credit will be suspense account. Only credit, no debit, then debit will be suspense account. Now rectification entry in the next accounting period. This also we have discussed. Rectification entry will be passed same as previous cases. Only extra thing is P&L adjustment. If in the rectification entry, if there are incomes or expenses, what will you do? What?
The previous one.
No. This is after preparation of trial balance in the same accounting period. And this is after preparation of trial balance in the next accounting period. No need to write. I'll share this notes. No need to write. Okay, rectification entry will be passed. Whatever material we are discussing in class, everything I'll share at the end of the day. Don't worry. So you try to understand. Rectification entry will be passed same as previous cases. What is the extra thing? If you have incomes or expenses in the rectification entry, then you will use profit and loss adjustment account. Clear? Now, one-sided error. We have discussed this. Trial balance will not tally. Difference would have been put into suspense account. Therefore, use suspense account in rectification entry. Two-sided errors. Trial balance will tally. So, there is no suspense account needed. Okay. Method to rectify. This is the method we use. But at this stage, when you come to marathon, I feel you can skip this method and directly write rectification entries. Correct? Usually, what is the situation? Pass the correct entry. Pass the wrong entry, pass the rectification entry. If you have not understood this, if you are not following this, follow it because it will reduce the number of errors in rectification. Okay, so we first of all rectify. No, in that also you should not make mistake. No. Now, pass correct entry means what? Passing correct entry means ignore what they have done and see the transaction and write the entry. Ignore the mistake, write the correct entry. Pass the wrong entry means what? Make the mistake what they made. You also make the mistake and write the entry. Now you have correct entry in front of you. You have wrong entry in front of you. So you can literally compare the two and you can get your rectification entry. Is it clear? But because of practice, I think in the exams directly you will be able to write rectification entry. Next. This thing you have to remember. If an account is not debited, what will you do? Debit it. If an account is debited less, what will you do? Debit it. If account is not credited, what will you do? Credit it. If account is credited less, credit it. If account is wrongly debited, wrong debit to remove, what will you do? Credit it, and wrongly credited, debit it. One more thing you can add over there. Instead of debit, if they have done credit, then you have to double the amount. For example, I wanted 500 on the debit side. Instead of that, I have put 500 on the credit side. Now what should I do? First, I should remove this 500. So one debit comes. Once more, if I put, then I'll get the result what I require. Is it clear? This is your rectification of errors. We'll go into our material. Question number 3. Rectify the following errors before preparation of trial balance, after preparation of trial balance in the next accounting period. All 3 stages. Before preparation of trial balance, after preparation of trial balance, and next accounting period. This is question number 3. What are you going to do now? Open your notes. Open your notes. Divide the page into 3. Divide the page into 3 parts. What are the 3 parts? You're going to write before preparation of trial balance, after preparation of trial balance. Okay, and you can write in the next accounting period. In the next accounting period. You should have these 3 in your notes. Are you ready? Okay. If you are confused anywhere, we will discuss the correct entry, wrong entry, rectification entry. Otherwise, we are going to write directly rectification entries only. Okay. All 3 stages we have to write. What will be the difference between this stage and this stage? Here, suspense account will be used for one-sided errors. What will be the difference between this stage and this stage? We will use P&L adjustment account for incomes or expenses. First, purchase return day book has been correctly entered and totaled at 6160, but has not been posted to the ledger. Partial omission, not posted, means not posted to whom? Which ledger? Are you sure it is purchase return? Purchase return day book has been correctly entered and total, but not been posted to the ledger. That means it is not posted to which ledger? See, you have this subsidiary book. Subsidiary books looks like this, correct? I will enter one amount over here. This is for one person. I will enter one more amount over here. This is for another person. I have totaled correctly 300. Correct? What will happen to this 300? It will go to the respective ledger. What will happen to these line items? If it is purchase return, that means it is creditor. If it is sales return, it is debtor. If it is purchases, it is creditor. If it is sales, it is debtor. It will go to respective debtor accounts. Correct? Golden rule of rectification is what they have not told is always correct. What they have not spoken about is always correct. Why? Because can you see always the heading will be rectify the following errors. Heading will be rectify the following errors. That means they are talking about errors only. Correct things they are not telling you. Clear? Sometimes in the error also they'll tell this is done correctly. But 90% of the time they're talking about errors. So if they are talking about purchase return day book has been correctly entered and totaled, but not been posted, who is, which side is mistake? Purchase return is mistake. Correct? The entry should have been purchase return should have been credited, not done. So what will you do in one-sided error? You will just write to purchase return, how much? 6160. Purchase return day book has been correctly entered and not posted. So what does it mean? They have entered correctly, totaled also correctly, but we didn't post it. If you have not posted, it has not gone into purchase return account. Purchase return should be credited. That is not done. So now we are crediting it because it is before preparation of trial balance. If it is after preparation of trial balance, the same entry will look like this. Suspense account debited 6160 to purchase return 6160. Is this clear? If we are in the next accounting period, the same rectification entry will look like this. Suspense account debited 6160 to P&L adjustment 6160. Is this clear? Yes. Let's go into the second one. Discounts received 1320 had been debited to discount allowed. Discount received should be credited. That is not done. So what should be the rectification entry now? You have to credit discount received. Discount received 1320. What they have done? It has been debited to discount allowed. So you have to remove that. To remove that, what should I do? To discount allowed 1320. 1320. Clear? You have done the credit which is not done and you have removed the wrong debit. Rectification entry in second stage will be suspense account debited 26402, discount received 1320 to discount allowed 1320. Rectification entry in the third stage will be suspense account debited 2640 to P&L adjustment 2640. Is this clear? Anybody has any doubt? No. Next, I'm not passing correct entry, wrong entry. You should visualize it. Okay. Third stage. Sales account has been under added. Most common error in your rectification of errors chapter. Sales account has been under added. That means you put less sales. You put less sales. So what should you do? You should put the sale now. So here it will be just 2 sales 10,000. In the next stage, what will you write? Suspense account debited 10,000 to sales 10,000. In the third stage, what will you do? Suspense account debited 10,000 to P&L adjustment 10,000. Is this clear? I hope you are following. Next, fourth one. A credit sale of 1470 has been debited to a customer account as 1740. In credit sale, should you debit customer or credit customer? You should debit customer only. They have debited only, but they have put extra amount. If they put extra amount, what should you do? We should credit it. So it will be 2 debtors 1740 minus 1470, 270. Correct? That is the rectification. Obviously, you have to write a statement for rectifying this. When we go to next, it will be suspense account debited 270 to debtor 270. When we go to the third stage, it is going to be no P&L adjustment this time. Every time there need not be P&L adjustment in third stage. Third stage P&L adjustment is only if you have income or expense. Don't think that every time I should put P&L adjustment. Rectification entry will be suspense debited 270 to debtor 270. We don't have any income or expense. That's why that is a rectification entry. Fifth. A vehicle bought originally for 7,000 4 years ago and depreciated 2,200. It is depreciated 2,200. That means today's value is, what did I tell? 2,200. Okay, depreciated to 1,200. Okay, had been sold for 1,500 in the beginning of the year. Beginning of the year saves your one problem. No need to calculate depreciation till the date of sale. But no entries other than in the bank account has been passed. Money came, that we have recorded, other things we forgot. Okay, now what should happen? What is the correct entry for rectification? For sale. When you are selling, bank account debited to asset, Are you making a profit or a loss? Profit. So the rectification entry should have been to P&L, correct? So here bank is done, no? So I will write to asset 1200 and to P&L 300. If I'm in the second stage, my rectification will look like this. Suspense account debited 1500, to asset 1200, to P&L 300. Is that correct? Now, if we are in the third stage, then it will be suspense account debited 1500, to asset 1200, to P&L adjustment 300. Is this clear? Yeah. When I sell an asset as entry is bank account debited to asset account, if there is profit to P&L, if there is loss, P&L will be debited. In this case, 1200 ka asset we have sold for 1500. So we have 300 rupees profit. That should have been the entry. Bank is debited already. So in our rectification entry, we don't have bank here. But when we go to next stage, one-sided error, only one side. So suspense account will be debited. When we go to third stage, P&L is a profit item. Okay, so we put it to P&L adjustment. Yes. Let's go further. Question number 6. An accrual of 560 for telephone charges had been completely omitted. Accrual for telephone charges means what? Outstanding telephone charges. So completely omitted. Whenever it is complete omission, nothing. What is the correct entry? Do it. What should be the entry? Telephone charges debited to outstanding telephone charges. How much? 560. What should be my rectification entry here? Same thing, because two-sided error, no suspense account will be there. When I go to the third stage, what will be my rectification entry? I can't use telephone charges, so I'll write P&L adjustment debited 560 to outstanding telephone charges. Outstanding telephone charges is liability. For that, we don't need P&L adjustment. Is this clear? Oh, I never noticed so many people are there. Now I'm feeling conscious. Oh, Spurti is there. I can see Spurti there. Spurti is that girl who used to sit there and feel cold. I'm grateful that you are online. Big Boss. No, Big Boss is not there. Big Boss has been evicted from the Big Boss house. Eliminated. He was planning to come, but I don't know what happened. Yes, good morning. Yes, let's go into the 7th one. A bad debt of 1560 had been written off and provision for doubtful debts should have been maintained at 10% of trade receivable, which are shown in the trial balance at 23,390 with a credit provision for bad debt as 2320. Now, what has happened over here? What has happened? They have not passed any entry. They have missed everything. So we are supposed to pass the entry now. Now, how much is your debtors? 23,390. Bad debt of 1,560 had not been written off. Okay, but do we have provision for bad debt? Provision for bad debt I have 2320. When I have provision, what will I do? I'll take the bad debt from the provision only. So minus 1560. How much provision do you have now? 2320 minus 1560. 760. I have 760 provision. Correct? 760 provision is there. Let the provision be there. What is the entry for bad debt? Bad debt account debited to debtor. So you have to remove 2320 from the debtor. Remove. Who will remove? 21,070. On this I have to create provision. How much provision? 10%. That makes it 2107. I need provision of 2107. I have to pass the bad debt entry. Bad debt entry, if provision was not there, it would have been P&L account debited to bad debt. Because provision is there, it is taken from provision itself. Are you getting my point? Understand this. What is the bad debt entry? Bad debt account debited to debtor. Bad debt account debited to debtor. That is not done. That is not done. Clear? Next entry is usually P&L account debited to bad debt. But if you have provision, you will not take the money again from P&L. It will be provision account debited to bad debt. Then you will create provision. For creating provision, the entry is P&L account debited to provision for bad debts. 3 entries. So what will I write? All 3 are missed. So what will I write? I will write bad debts debited to debtors. How much? 2320. Correct? Sorry, 1560. Oh, then why did we remove 2320 here? What is this? Nicely 10% we have calculated. Bad debt is only 1560, no? Why are we removing 2320? 2320 is a complete provision. 1560, that gives you 21830 into 10%. That will make it 2183. I need provision of 2183. Is it clear? But when I require provision of 2183, I already have provision of 760. 2320 I don't have. Because out of 2320 I removed the bad debt. So 760 I have. Can you give me the difference between 2183 and 760? 1000? This much provision is required. Are you following this? Again I am explaining this. Okay, I had debtor of 23,390 given in the question. I had provision of 2320 given in the question. If at all there is bad debt, debtor will reduce. Debtor will reduce. So remaining debtors are only this much. If there is bad debt, that is a loss. Loss should be debited to P&L. But I have already removed money from P&L and I have created provision in the past. So I'll remove that 1560 from the provision itself. So my remaining provision is 760. They told maintain 10% provision. When you calculate 10%, you're getting 2183. I require provision of 2183, but I already have provision of 760. That means how much provision will I create? 1423. Clear? Now tell me what should be the entry. First, bad debt account debited to debtors. How much? 1560. Then next entry will be provision for bad debt account debited to bad debts. 1560. Clear? You can compound it, but if you write separately also, it's better. You can compound it in the exam, no issues. Then third entry is what? Creating provision. So you'll write P&L account debited to provision for bad debts. 1423. Is it clear? Are you following this? Now, when we go into rectification entry, in the second stage, same. All are two-sided errors. Same. But when we go to third stage, what will happen? First entry, I cannot write bad debt account debited to debtor. I'll write P&L adjustment debited 1560 to debtor 1560. And second entry, I cannot write PBD to bad debt. I will write PBD debited 1560 to P&L adjustment 1560. Then third entry, I cannot write P&L to PBD. I will write P&L adjustment debited 1423 to PBD 1423. Now for this, you can pass compound entry. Can you see P&L adjustment debit, credit, debit is happening? You can pass compound entry in the exam. No issues. Is this clear, this one? Yes. Let's go further. This is one of the important adjustments which you need to know even in final accounts. Provision for bad debt. Now, eighth one. Tools bought for 1200 had been inadvertently debited to purchases. Instead of tools, you put into purchases. So these are the most common rectification entry. Remove from purchases, put into tools. So rectification entry will be tools account debited to purchases. How much is tools? 1200. Is this clear? What should be the rectification entry here? Same. Is there going to be any change? No. What is the rectification entry in the third stage? Tools account debited 1200 to P&L adjustment. Tools is an asset. It will go into balance sheet. So that will not be P&L adjustment. Clear? Next. Entry number 9. Proprietor had withdrawn for personal use goods worth rupees 1960. No entry has been made in the books. Oh, what is the entry? Drawings account debited to purchases. Drawings account debited to purchases. So 1960. 1960. What is the rectification entry in the second stage? Same. What is the rectification in the third stage? Not same. Drawings account debited 1960 to P&L adjustment 1960. Are you following this? Okay. Instead of doing many questions of some are different stages, we'll do one question of all stages covered in one place. Clear? Next. 10th question. The total of debit side of expense account has been casted in excess. Debit side of expense account is what? Expense only. It is casted in excess. That means you put extra expense. To remove extra expense, what will you do? Credit. You will write 2 expenses 50. Clear? Total of the debit side has been casted in excess means extra. If instead of credit, if you put debit, then it will become double. Okay, now what will be the rectification entry here? Suspense account debited 50 to expenses 50. What should be the rectification entry in the third stage? Suspense account debited 50 to P&L adjustment 50. Clear? Next, 11. The sales account has been totaled in short by 100. We have done it many times. So, sales account cast short. Okay, I think somewhere else also it was there. Sales account has been under added by 10,000. Okay, same as entry number 3. Amounts are different, but the rectification is same as 3. Okay. That was your 11th one. We'll go into 12. Now, 12th one, supplier account has been overcasted by 225. Who is supplier? Creditor. Creditor, you put more 225. So, what should you do? Less. So, you have to debit the creditor. Creditor should be debited for 225. When we go to the next stage, the rectification will be creditor should be debited 225 to suspense account 225. When we go to third stage, rectification entry will be same. Why same? Because there is no income or expense. It will be same thing. No nominal account. 13. Now, sales return of 100 from a party has not been posted to that account. So the party's account has been correctly credited. Sales return, what is the entry? Sales return to party. Okay, debtor. Party we have done. Sales return we have not done. So sales return account will be debited for 100. 100, right? 100. So what will be the rectification entry here? Sales return debited 100 to suspense account 100. What will be in the third stage? We cannot write sales return. It will be P&L adjustment debited 100 to suspense 100. Entry number 14. A check of 500 issued to the supplier's account shown under trade payable towards his dues has been wrongly debited to purchase account. Oh, wrongly debited to purchase. If I give check to creditor, what should be the entry? Creditor should be debited. Instead of debiting creditor, we have debited purchases. So now the rectification entry will be creditor account debited to purchases. How much is the check amount? 500. What should be the correct entry here? Rectification entry here, same. What will happen over here? Creditor account debited 500 to P&L adjustment account 500. Is this clear? Yes. Next. A credit sale of 50 has been credited to sales and also to trade receivable account. What is the error? They have done everything. Huh? Is there error or no error? Credit sale of 50 has been credited to sales and also to trade receivable. Trade receivable should have been debited. Instead of debiting trade receivable, you have credited it. So now what happens? You have to debit twice. So trade receivable debited 100. Are you following this? Okay. Yeah, I can. Should I? Yes. A credit sale of 50 has been credited to sales account. Correct? And also to trade receivable account. Trade receivable crediting is not correct. Trade receivable should have been debited. So instead of debit, you have credited. So what will you do? You will debit twice. So 100. Nothing, no this thing. So here what will happen? One-sided error. Trade receivable debited 2. Suspense 100. Do we have any income or expense in this entry? No. So in the third stage also rectification entry will be same. Is this clear? Yes. 16 now. 16th one. A sale of 2,300 to Mr. Lala has been posted to the credit of Mrs. Mala. Correct? Not only gender is wrong, name also is wrong. Yes. What is the situation here? Posted to the credit of Mala. Not only did you put to the wrong person, you put it to the wrong side also. Okay. So first we'll respect Lala. Lala account debited 2,300, right? 2,300. Mala has unnecessarily entered your story. So Mala's account is credited. To remove the credit, what will you do? Debit. Mala account debited 2,300. Over, done. That's it. Sales is correct. Sales is correct. So here what will be the rectification entry? Lala debited 2,300. Mala debited 2,300 to suspense account 4,600, and here it is going to be same. Why same? No income or expense here. Lala, Mala to suspense. Clear? Now when we see these kind of errors, no, you can tend to make a mistake. What is the mistake? When you see Lala and Mala, you will think, oh, instead of Lala, you put it to Mala. No. Yes, instead of Lala, you put it to Mala, but also you put to the wrong side. Clear? Next. Total of the returns inward book for July 2021 was not posted in the ledger. Returns inward means which return it is? Returns inward means sales return. Sales return is not posted. Sales return you will post. Sales return account debited for 1240. 1240. Sales return debited. Is it clear? Next. What will you do here? Sales return debited 1240 suspense. Now, where did they tell that debtor is correctly done? I am ignoring the debtor only completely. Why? Total of the returns inward book. Total will go to which ledger? The particular ledger. Line items only will go to debtors. They are not spoken about line items. They only spoke about the total. Now, in the next stage, what will happen? P&L adjustment debited 1240 to suspense 1240. That was 17. Let's go into 18. Freight paid on a machine 5,600 was not posted to freight account. Was posted to freight account as 6,500. 10% depreciation is charged on this machine. Oh. Wrong account, wrong amount, everything. Did you put the freight to machine? Tell me that much. Did you put the freight to machine? Did you put the freight? No, you have not put. Freight paid to machine was posted to freight account. You have not put only to machine. So do that first. Machine account debited 5,600 or 6,500. Put the correct amount, 5,600. You have to remove that freight. You have to remove that freight. What will you do? Credit to freight 6,500 and 10% depreciation is charged on this machine. If you see, understand, this is one common error. If you don't record the machine, no depreciation. So if you have not recorded the machine, you have not recorded depreciation also. So when you record the machine, you have to record the depreciation as well. By mistake, if you have recorded the machine, then when you remove if you have recorded machine by mistake, then by mistake you would have charged depreciation also. So when you remove the machine, you have to remove the depreciation as well. Here they have not taken machine, so they have missed depreciation as well. So what will be the entry for depreciation? Depreciation account debited 560 to machinery 560. Can you see the first entry is not tallying? It need not tally because we are in before preparation of trial balance. Clear? Only rectify what is required. When we go to second stage, it should tally. That time what we will pass? Machinery account debited 5,600. Suspense account debited 900 to freight account 6,500. Then depreciation entry will be same. You can club this and pass compound entry. You can club that and pass compound entry. When you go to the third stage, What will be the rectification entry? Machinery account debited 5,600. Suspense account debited 900. To P&L adjustment 6,500. What about depreciation entry? P&L adjustment 560 to machinery 560. 100% you can pass compound entry because machinery is debited and credited. You can take the net amount. P&L adjustment also debit and credit. You can take the net amount. Is that clear? So this one you have to remember. If you don't record machine, you have not recorded depreciation. So when you are rectifying, record the machine, record the depreciation. If you have put the machine by mistake, then you have by mistake calculated depreciation also. So when you remove the machine, you have to reverse the depreciation entry as well. Clear? That was 18. Now we go into 19. Along with rectification, you will learn Roman numbers also. That was there in school. I hope you remember. Indian numbers only, we are forgetting with ICI. What Roman numbers will remember? Yes. 19. While carrying forward the total in the purchase account to the next page, 65,590 was written instead of 56,950. What happened? Did you take more or did you take less? You took more. To remove the more, what should we do? Purchase, you should reduce it. Purchase is a debit item. To remove it, what should I do? Credit. Two purchases. Can you find the difference? 65,590, 8,640. Difference. I put more. Now here what will be the rectification entry? Suspense account debited 8,640 to purchases 8,640. What will be the rectification entry in the third stage? Suspense account debited 8,640 to P&L adjustment 8,640. Is this clear? 19 rectification entry is done. 20. Okay. Next. A sale of machine on credit to Mr. Mehta for 9,000 on 30th September 2021 was not entered in the books at all. The book value of the machine was 6,750. We'll do one thing. Depreciation rate is 10%. Depreciation rate also we will add. Depreciation rate is 10%. What happened? Imagine that we are following financial year. If I am following financial year, what will happen? I have sold the asset on what date? 30th September. Okay, for 9,000. Was not entered in the books at all. Book value of the machine is 6,750. Depreciation chapter, slight revision. Whenever we sell an asset, what should we do? We should calculate depreciation till the date of sale. So the first entry will be depreciation debited to machinery. It will be 6,750 into 10% into 6 by 12. 337.5 will make it 338. Is it clear? Depreciation till the date of sale. Then what we should compare? WDV on date of sale. What is the WDV? 6,750 minus 338. 6,412. This is the WDV on the date of sale. What is the sale value? 9,000. Are you selling at higher value or lower value? Higher value. So it is going to be profit on sale. Give me the difference. 2,588. This is the profit. Is this clear? So along with depreciation entry, what should be my next entry? Bank account debited 9,000 to machinery account 6,412 to P&L account 2,588. Is this clear? When you go into the next stage, this entry will be same. You can pass clubbed entry. Again, I'm telling you. And this entry will also be same. When we go to the third stage, that time it will not be same. You will write P&L adjustment debited 338 to machinery 338. Then what you are going to do? This entry will it be same? 100% no. You will write bank account debited 9,000 to machinery account 6,412 to P&L adjustment 2,588. Is it clear? The calculations you have to be careful. We do these calculations in rectification of errors usually. Can I go further? 20 done. Now it's going to be 21. 21. Yes. The total of the purchase book of one page 4539 was carried forward as 4593. This I am not doing because just now we did something like that. I think it is this one, no? 19. Same as 19. Clear? Amounts are different. Same means don't copy the same entry with the same number. Amounts are different. 22. Mohit. Do you want to come to first bench? Yes. A sale of 573 was entered in the sales book as 753 and posted to the credit of the customer. What did we do? Sale was 573. Entered in the sales book as 753 and posted to the credit of the customer. So what should I do? First I should remove the extra sale. Extra sale I should remove. So sale account will be debited 753 minus 573. How much? 180? 180. Extra sale removed. Okay. Then, and it is posted to the credit of the customer. So I should bring it to the debit of the customer. Debtor account debited. How much? How much I should put? It is not double entry. It is double but not the same amount. 573 is the sale, right? I put how much? 753 credit. 1326. Did you get this? Are you following this? See, just understand this. My debtor should have had 573 sitting over here. But instead of that, I put wrong amount. I put 753 over here. So to remove this 753, I should debit 753. It became 0. Now I should debit 573 to get my correct amount. Is this clear? That becomes 1326. Any credit? Any credit? No. Credit, no problem. Sales extra was there, that we removed. And the debtor was not there at all, that we have made the rectification. So next entry, what is the rectification in the next stage? Sale account debited 180. Debtor account debited 1326. 2. Suspense 1506. Clear? Only debit is there, no credit. And in the next stage, what will happen? I cannot write sale. I'll write P&L adjustment. Debited 180. Debtor debited 1326. 2. Suspense 1506. I hope it is clear. Yes. So the 10% is assumed or only if it is given in the question. Yeah. That 10% I have just assumed it to make the rectification more complicated. That's all. This question, 10%. If they don't tell depreciation in the question, don't take any depreciation rate. Just follow what is there. That's all. 23. Yes. A return to creditor of item was entered in the returns inward book. However, the creditor was correctly posted. Return to creditor is returns inward book or returns outward book? Returns outward book. Instead of that, what we did? We put in returns inward book by mistake. But creditor was correctly posted. If you put in the wrong book, it will be wrong entry altogether. But one side we did correctly. So we did not put in the which book? Returns outward or returns inward? Outward. Should I put? Yes. What is the entry for returns outward? Returns outward is what? Purchase return or sales return? Purchase return. So I'm supposed to write 2 purchase return 510. Wrongly you have put into which book? Returns inward, sales return. Sales return, when we put always sales return is debited. To remove the debit, what should I do? Credit. So I'll write 2 sales return 510. Creditor, no problem. They only told no problem. So ignore the creditor. Here what will happen? Suspense account debited 1020, 2 purchase return 510, 2 sales return 510. Is that clear? Any doubt with this? No. Now, next, when we go forward, what should be the rectification entry? Can I directly write the same thing? No. Suspense account debited 1020, 2 P&L adjustment 1020. Is that clear? Yes, 23 done. 24. 24th entry. Cash received from C Das was posted to the debit of G Das. We cannot come to the conclusion directly. Okay, what is the entry for cash received? Cash account debited to C Das. Put to the wrong person and also wrong side. Directly don't write the entry C Das to G Das and all that. Post it to the debit of G Das. Did you put it to C Das? No. So you'll write to C Das. 620. Correct? G Das wrongly debited. So to G Das 620. Done. Suspense account debited 1240 to C Das 620 to G Das 620. Rectification entry same. We don't have any income or expense over there, so it will be same. 25. Goods worth rupees 840 were dispatched to a customer before the close of the year, but no invoice was made out. Goods invoiced, dispatched means what? Sales, right? But we did not raise an invoice, so no entry is passed. What is the entry? Debtor account debited to sales. If you have not made the bill, that means entire entry is missed. No, complete omission, it is 840. Here also the entry will be same. Here also entry will not be same. Debtor account debited 840 to P&L adjustment 840. Be careful about nominal items in the next accounting period. Next we go into 26. Goods worth rupees 1000 were sent on. Oh, nice one. We have one small concept called as sale of goods on approval or return basis. Because it was small concept, when we moved from old scheme to new scheme, they removed the small concept. But wherever it is required to trouble you, there they have kept it. Correct? Where and all it is there. Rectification of errors, it is there. Inventory chapter, it is there. If they want, they can put it to final accounts also. If they want, they can put it to incomplete records also. Incomplete records, whatever they find, they can put it if they want to. Okay, now understand this. Sale of goods or approval or return basis quickly. different people have different names now. Because people are there from different batches. Now the Chennai people will be telling some other name. Yes, there is one guy. How many people can recognize this guy? Few people can recognize. Recently I started using whoever has specs and only 2 hair on his head. That is Narayan Murthy. Okay, Narayan Murthy looks somewhat like this only. Cartoon version, man. Huh? Only 2 hair, no. Little hair he has. He has lost all his hair. Huh? Okay, Narayan Murthy is there. Now imagine. He sells goods. This is one more new character I have started recently. Who is this? Yes, I call him Bambani. This is Narayan Murthy and that is Bambani. Directly we don't want to tell Mukesh Ambani, in videos. If he sues us, we have to, if we sell kidney also we can't repay that guy. Are you getting my point? We have literally go and stand in front of him, whichever body part you want to take. How much you can recover, you recover. Whatever you recover also, for you it will not even be pocket money. Correct? Okay, so Narayan Murthy is selling goods to Bambani. And he is selling goods on, let's say, with Bambani's name, it stopped working. 1st February. And I told I'm giving you 3 months time. 3 months time. 3 months time. Sale of goods on approval or return basis means what? I sell goods to you and I tell you, you have time to accept it or reject it. Till you accept or reject, you are only the, I am only the owner. Clear? So Narayan Murthy has sold goods on 1st February. That means Bambani has time till when? 1st March, 1st April and 1st May. 1/5. Till 1/5 he has time. Correct? But before that, on 31st of March, there is balance sheet date. There is balance sheet date. Now you have to remember one thing. In these cases, you have to remember one thing. when goods are sold on approval basis, you will pass the sale entry. You will pass the sale entry. Before 31st of March, if he accepts it, that means he wants it. Sale entry is already passed, ignore. Before 31st of March, if he rejects it, whatever sale entry you have passed, you will reverse it. You would have passed the entry debtor account debited to sale. You will pass the entry sale account debited to debtor. Clear? Now, after 31st of March, he still has time, no? So on 31st of March, he has not called you only because he still has 2 more months time. Not 2 more months, 1 more month time. Correct? So he has not called you. But what will you do? Even if he calls you, when will it be? In the next year. So what will you do? If he accepts also, it is in the next year. So if he accepts, it will go into it should go into next year's sale. You have already taken in this year's sale. So on balance sheet date, you will reverse the sale. You will reverse the sale. Reversing the sale, what will you do? Sale account debited to debtor. But once you reverse the sale, the goods should go into your closing stock. Why? It is sitting in Bambani's warehouse. Why is Narayan Murthy taking it as closing stock? Because owner is still Narayan Murthy only. So you will pass the entry closing stock on approval basis debited to trading account. All closing stock entries are this only. No, closing stock account debited to trading account. So this entry will be passed. Next year, if he accepts, you will pass the sale entry. Next year, if he rejects, you will not pass any entry because you have already reversed the sale. Is this clear? In brief, this is sale of goods on approval or return basis. Now we'll see what is the error. Goods worth ₹1,000 were sent on sale or return basis to a customer and entered in the sales book. That is what we do. Even if they don't accept today, we will enter it. Okay. At the close of the year, the customer still had the option to return the goods. The sale price is 25% above cost. So what we have to do? Entire sale we have to reverse and then we have to take it as closing stock. Correct? How much goods worth ₹1,000 were sent? Correct? Goods worth ₹1,000. Is it the cost? Is it the sale value? It's actually the cost. Actually the cost. Then they tell goods worth ₹1,000 were sent on sale or return basis. You can take it as cost. But still, you have the option to assume both ways. But in exam, that confusion won't be there. They will be very specific. They will not tell goods worth and all. They will just tell goods costing. They will use the words goods costing. Okay. To avoid the confusion, I'll also change it here. I am writing goods costing ₹1,000 was sent on sale or approval basis. Now, you should reverse the sale entry. What is the reversal? Sale account debited to customer or debtor. Should I take 1,000? Should I take 1,000? No, but I don't like 1,000. I'll write 1,250. After making the rectification, in the rectification question, you should not be making mistake. Are you getting my point? To avoid confusion, I wrote no goods costing 1,000. But when I sell, I will not sell it at cost. Goods are sale price is 25% above cost. So what I will do, sale account debited to debtor. Is this clear? And I also have to pass the closing stock entry. Closing stock on approval basis debited to trading account. Should I take 1,250 now? No. Closing stock is always valued at cost. I am taking 1,000. Is this clear? Now, when we go into the next stage, same no. When we go into the third stage, also same no. No. Here it will be P&L adjustment debited 1,250 to debtor 1,250. Clear? Then when we go into the second entry, what will be the entry? Closing stock debited 1,000 to P&L adjustment. If I put to trading, their profit will change. Clear? P&L adjustment. Next, that was 26. Now we go into 27. Next, repairs made during the year were wrongly debited to building account as 12,500. Oh, common entry. Repair is wrongly debited. So you will pass the entry repair account debited 12,500. Building is wrongly debited. So you will write to building 12,500. Any confusion? Instead of repair, you have put it into building. Here also it will be same. Here also it will not be same. P&L adjustment debited 12,500 to building 12,500. Is it clear? 27 done. Next, 28. Addition of freight column in the purchase journal was short by 15,000. Oh, what is it? Simple. Freight was there, did not put it. Freight was there, did not put it. But the entry will be freight account debited 15,000 to creditor 15,000. How did I decide this? Why didn't I write the entry freight account debited to cash? Because they said addition of freight in the purchase journal, that means purchase book. In purchase book, we put only credit items. We don't put cash items. If it was a cash item, it would have gone straight into cash book. Is this clear? Journal, subsidiary books, ledger, trial balance is not that important because from that they might not ask question. But those basic concepts are important in rectification of entries and many other places. Are you getting this? I think in subsidiary book chapter, we have one question. One question is there in subsidiary book where there is a purchase book along with freight column. That freight column, freight is debited. They asked you to prepare ledger also for that. Freight is debited and creditor is credited. Why? When he sent the goods, I did not pay the money. He paid for the truck also. That also I did not pay. Are you getting my point? So I have to record the goods as purchases and the freight which has paid, that is for me carriage inward. Carriage inward. Debited. Did I pay money? No, I have to pay money to creditor for that. Clear? Now when we go into the second stage, any change? Yeah, I can. Yes. The addition to freight column in the purchase journal. Purchase journal means purchase book. If I have put any amount into purchase book, that means it is a credit item. It is not a cash item. If it was a cash item, it would have been in the cash book. So what has happened over here? He has sent goods to me. I have not paid money. This is credit purchase. When he sent the goods, he put it on a truck and sent it to me. The truck amount also he only has paid. I have not paid. So this truck amount is freight inward for me. I mean carriage inward for me. Carriage inward I am supposed to pay. To whom? Creditor. That's why carriage inward account debited or freight account debited to creditor. Why did I pass that entry? Because they said freight column was cast short. Freight column 15,000 less I have put. So what should be the rectification entry? Freight account debited to creditor. And what about the next stage? P&L adjustment debited 15,000 to creditor 15,000. Is this clear? Yes. Let's go further. 29th journal entry. Goods to the value of 4,500 returned by a customer, Shiva and Company, had been posted to the debit of Shiva and Company and also to sales return. What is the entry? Sales return should be debited only, no? Is it debited? Is it debited? Look. Is it debited? Has been posted to the debit of Shiva and Company. It is debited only. I mean, sales return is debited only. But Shiva and Company should be credited. What have they done? Debited. So what will you do? Credit Shiva and Company once or twice? Once or twice? Twice. Why? Instead of debit, if you have done credit. Instead of credit, you have done debit. When you are rectifying that, you have to double it. Clear? Here the rectification entry will be suspense account debited 9,000 to Shiva and Company 9,000. Clear? Are you following this? See, goods to the value of 4,500 returned by customer. Returned by customer means for you sales return. Shiva and Company had been posted to the it has been posted to the debit of Shiva and Company. Wrong. And also to sales return. That is correct. Clear? Now, what about last stage? Same. Because we don't have any income or expense over there. 30th journal entry. Sundry items of furniture sold for 30,000 had been entered in the sales book. The total of which had been posted to the sales account. You sold what? You recorded it as what? Sales. So the rectification entry will be sales account debited to furniture account. They haven't spoken about depreciation and all. Otherwise, we have to calculate depreciation also till the date of sale. 30,000. What about here? Same entry. What about here? P&L adjustment debited 30,000 to furniture 30,000. Is this clear? Freight column is under cost. That means we have not recorded the freight. 31. 31. A bill of exchange received from Ms. Sapna for 75,000 had been returned by the bank as dishonored and had been credited to the bank and debited to bills receivable account. Credited to bank. What is the entry for bill dishonored? Debtors account debited to bills receivable account. What have they done? Credited to bank, debited to bills receivable. Sorry, the entry is wrong. It is actually debtors account debited to bank account, not bills receivable. Why? It is a discounted bill. Debtors account debited to bank account. This is done correctly. This is done correctly. And debited to bills receivable account. That is done wrongly. You should have passed what? Debtor account debited. Debtor account should be debited for 75,000. Okay. By mistake, you have put it to bills receivable. So you'll write to bills receivable 75,000. Here also it is going to be same. And here also it is going to be same. Oh. Why? Because there is no income or expense in that. Clear? This is the rectification entry. In detail, we'll be studying about bills of exchange today itself. So you don't have to worry about that. One confusion is there that freight. See, in the addition to the freight column in the purchase journal was cast short. Because the language is not complete, you can assume that only freight mistake is there. Okay, you can assume this as this way also. You can write only freight account debited 15,000. Assuming that creditor is done correctly. That time what will be the entry here? Freight account debited 15,000 to suspense 15,000. That time here the entry will be P&L adjustment debited 15,000 to suspense. Clear? In the exam, the language will be more clear. Okay. I've given both alternatives. If you take it as one-sided, if you take it as two-sided, what will happen? Is that clear? That is your small question on rectification. With that, we are done with rectification of errors. Almost everything is covered here. Okay, I don't think there is any other error which can happen unless they frame a new one. Okay, whatever is there in the database, that only. See, rectification of errors and BRS. If you cover the database, no, over. There cannot be something extra because there is a restriction or boundary on that. In practical life, rectification, any kind of error can happen, but they are not introducing at the foundation level. Okay, next we move into BRS. Bank reconciliation statement. Do you want to take a 2 minutes break? Yes. Huh? It is 9:41. I'm starting at 9:45 sharp. If you want to drink water, go to washroom and all, finish it and come. 9:41 it is. 9:45 sharp. I'm starting with BRS. 9:45. 4 minutes you have. Empty-handed, what you came? Where is Kakra? Why? Oh, till tomorrow you are there. How is it going? Where are you from?
Yeah.
You came all the way from there?
Yes.
Nice. Did you watch? I think Malayalam we have maths classes.
I watched your founding marathon.
Last time, is it?
Yes.
Okay. No, but did you see? There are some Malayalam
Never saw one.
maths classes. There is a Malayalam channel. I think you missed it.
Yeah.
There is a Malayalam channel in which the maths classes are. Nitin sir is putting maths videos.
Are you from Bangalore?
No, I'm from Mangalore. That is more closer to Kerala. So from Calicut to here, I think weather will be a huge change, right?
Yes.
There it is hot,
Humid.
humid. Why? I feel hot. Huh? We should. Hey, no, it's not that cold. See, this AC is still off, and this one is at 24 only. Today, one day, it's working. 20. See, this should have been at 16 actually.
Excuse me, sir.
Yeah. Excused.
Thank you. Where is my double, sir?
Huh? It is there. I'll give you. I'll give.
Yeah, that's it.
What happened?
No, no, it's just.
Those motivation videos work. Which is that? That results in thing. The student in result.
Yeah.
I'll play. I'll play that.
You want
It's good. Yeah. No, I'll do it. I'll do it. Somewhere in the middle, I'll play.
So, how many videos did you take in this class?
Not even one is completed. 142. Only when I give a break, like maybe more than 15 minutes, that I will stop the video. That's why I'm keeping it going. Only 4 minutes I give a break. Yes. Let's continue. Let's close the video. Okay. Yeah, so there is an online student asking one doubt. Purchase account debited to cash or purchase account debited to bank? Many places in the textbook they have used cash, bank instead of cash. See, many places. So what I say is some places they will use bank, some places they will use cash. In the exam, I feel there will be more clarity. If there is no clarity, you can write cash or bank. Okay, cash or bank, both will be right. Now, let's continue. We'll watch an motivational video. I don't know if it is working. Okay, we'll sort it later. You want motivation?
Yes, sir.
Jan 12th is the exam. That is the biggest motivation. Today we are on what day? 30th November. One day we have today. Okay, that is gone in marathon. So 31 days in December and 11 days in January. 42 days we have. Sirag, you're in a better position than last time. Last time it was 28 and 27. Now 42 is there. Close the door, close the door. So we are in good to go now. 2024 was not for you. 2025 is your year. Yes. Let's start BRS. Now, see what you have to do. Okay, everybody is motivated at one point of time or the other. That is the problem. You should be motivated always. That cannot happen by watching YouTube videos or anybody else motivating you. That can happen only with self-motivation. Chetan was motivated for different things that we don't want to discuss. Motive was different, yes. Because of that, now motivation is back.
That's a different one.
He spent on Pani Puri. No. See, you got the concept wrong. He spent on Pani Puri only on some days. Once his graph went up, then he didn't go out of the class itself. Even in break, he was sitting in class. Depends on which position of the graph you are. Now again, he is going to Pani Puri shops. Huh? Flowers. Which flower?
You don't know?
No, that I don't know.
He said that he added you to close friends.
No, he didn't add.
You saw?
He added. What flowers?
Rose.
I think by mistake he added one day. Then he removed me. Yes. I remember I was added to some group and then I was removed. See, he went in search of flower. Now the flower left him. What to do? No, flower is not dry. It is breezy in Bangalore. The flower flew away. So now he is all alone again. Yes, we will not worry about anything. We will focus on exams. At least at breakfast level, don't lose your motivation. At lunchtime, you have a lot of time, but there also you shouldn't lose your motivation. Then when you go to snack time, maybe you can get little diverted in life. What is snack? Article chip. Then when you come back to dinner time, you have to be motivated again. Okay, so consistency in motivation is very, very important. Studying 3 days, taking 2 days break will not work in CA. You have to study consistently every day. That should be a routine. Okay, every day whatever you do, routine, eating food and all you do without anyone telling you. Same way studies also you should do it. Is it clear? Activities in Jain College will keep coming and going, but we should still focus on studies. Yes, Jain College, even if you don't go, they'll make you pass. Why? Because it is autonomous. If it is autonomous and if their students are failing, it is bad for them, no? So when it's autonomous, come what may, they will still push you. So, but ICA doesn't do it. So we have to study. Yes, let's go further. Okay, for this I don't have a chart book yet. BRS. We'll discuss BRS quickly. What is the full form? Bank reconciliation statement. What do we do in bank reconciliation statement? We reconcile the difference between what? If I tell only cash book and passbook, then I am wrong actually. It is cash book, bank column. Cash book, cash column has nothing to do with BRS. Cash book, bank column and passbook. If there is a difference, that is going to be reconciled in BRS. Is it clear? Now, cash book, bank column means what? Cash book, bank column means what? You are recording records maintained by business about the transactions in our bank account. Whatever bank transactions you are making, you are entering it in cash book, bank column. Is it clear? What is passbook? Same transactions which we are doing, record of transactions done by us in our bank account maintained by bank. So we should get this clear. Passbook means our transactions only maintained by bank. Cash book, bank column means our transactions only maintained by us. Is this clear? So now if I am telling I put 100 rupees into the bank, bank is telling I got 100 rupees into this fellow's account. So both people should be telling that there is 100 rupees in the account. If both are not showing 100, then there is a problem. Some reason is there because of which difference is caused. Clear? For that we prepare BRS. Now, in our books, what happened? Doubt. Are you feeling hot? If you are feeling hot, please tell me. If you are feeling cold, do not tell me. Okay. Cold, we are not going to listen. If you are feeling hot, tell me. We will decrease the temperature. Huh? You are feeling hot? Yes, nice. Pass the remote. Where's the remote? Pass. That remote, that AC is not under my control. This AC only I am controlling. 16. Now it's at 25. Yeah, there are more people in class now. 20. I kept it at 20. Yeah, but inside more people are there. Fan speed I have kept very low. It's 1, almost 1. Okay, 21. We'll keep 21. Yes. But fan speed is very low. See, don't talk. Can you see any sound? Nothing. If I increase the fan speed, see how it feels. Keep quiet. Now see. Can you see the instant difference? We'll keep it low because we have to survive the entire day, no? Fan speed 1. And if people feel hot in future, I can increase the fan speed. Yes. Let's continue. In our books, what is bank for us? Bank is an asset. Because it is asset, we'll always have debit balance. In bank's books, we are customer. So we are a liability to the bank. We are liability to the bank. That means bank will have credit balance. Whenever you get message, when somebody sends money to you, it will come. Your account is credited. Your account is credited because for bank you are a liability. For bank you will become asset only when you take money from bank. When you take loan from the bank, that time you become asset for the bank. Because you have to pay money back to the bank and you will be giving interest to the bank. Okay, now normal balance means favorable balance. Favorable balance means what? There is money in your bank account. Overdraft balance means unfavorable balance. Unfavorable balance means what? There is no money in your bank account. You have taken more money than what was there. Is this clear? What does OD mean? Overdraft. Full form even I know. What does it mean? That means I had 500 rupees in my account. I used that 500 and I took 2000 rupees from bank. Can we do it?
Yes.
Yes. Today, when you go home, you go to an ATM, stand in front of the ATM. Clear? You saw the balance is showing 1000. If you put 3000 over there for withdrawal, what will happen? Only one Kali receipt will come out. Transaction cancelled. That means we cannot use the OD facility. If OD facility is given by bank, then only it is available to you. Clear? Usually if you are doing business and you apply for it, then you will get it. Now, in books, if it is favorable balance, it is asset, right? So debit. If it is unfavorable balance in books, it is liability, right? If it is OD, it's a liability. So there will be a credit balance. Clear? In books of bank, if you have favorable balance, that means you are a liability for the bank. So for bank, it will be credit balance. But when you take money from bank, for bank, you will become asset and asset will be debit balance. Is it clear? Are you following this? Now, BRS. Very important part in BRS is, obviously you are going to use the hand movement method and all. But the very important point in BRS is, you should understand, okay, where the transaction is happening. When they tell no, you should understand who has made the entry. If both have made the entry, we are not in BRS question itself. If both have made the entry, they will not tell you in the list of things that they are telling you. One person has done it, other person has not done it. So you should check who has done it, whether cash book or passbook. Then you will know whether the balance is increasing or decreasing. Is it clear? Now, tell me one thing. If it is normal balance, you have money in your account. When money comes in, what will happen to the balance? Balance will increase. See, money comes in, increase. In cash book, it is debit. In passbook, it is credit. Clear? Money goes out. What will happen? You go to the ATM and take money. What will happen to your balance? Decrease. In cash book, money goes out means credited. And in passbook, if money goes out, debited. Whenever you pay money to somebody else, you go and drink one tea, scan on your UPI, and that time you'll immediately get a message. Some amount is debited to your account. Can you see this? Money is going out. Bank is debiting your account. But if you are passing entry, you will pass T account debited to bank account. Are you getting my point? Now, if it is OD balance, now this is the most important thing. If it is OD balance, understand this. If it is OD balance, already you have to pay money to bank. If money comes in, balance reduces. Debit credit will remain same. Here also balance reduces. Why? I have to pay, imagine I have to pay bank 200 rupees. Somebody sent 100 rupees into my account. What will bank do? Adjust it immediately. Correct? So immediately my OD balance went from 200 to 100. But when you already have to pay 200 to the bank, if money goes out, that means if you take more money from the bank, balance increases. What balance? OD balance increases, credit debit, it will remain same. Is it clear? Are you following this? Is it clear? This movement of balance is very important for BRS. Okay, if it is OD, understand this. If it is normal, money comes in, balance increases. Money goes out, balance decreases. If it is OD, money comes in, balance decreases. If money goes out, balance increases. Clear? Causes for difference, some of them we have discussed. Okay. Check deposited, not credited. Check deposited, not credited. Very common one. Very common one. Check deposited means who deposited? You deposited or bank only put the money? We deposited. If you have deposited, cash book it is entered, passbook it is not entered. But I know students' mindset. You will, because you have done so many BRS questions and you have seen check deposited, not credited, not cleared, all that. In the exam, when you see check deposited, you will not read further. And there they will tell check deposited, not entered in cash book. Can you see how they threw bouncer at you? Correct? So read the sentence fully. Check deposited, not entered in cash book means cash book not entered, passbook entered. If they tell check deposited, not credited, then cash book entered, passbook not entered. Is it clear? Next, check deposited, not entered in cash book. We have written this also. So what happens? Cash book not entered, passbook it is entered. Can we assume that both the places it is entered? No. Why? Because your BRS question starts like this. Following are the items which are causing difference between cash book and passbook. So you cannot assume after that both the places it is entered. Because they only told you this is causing difference. Are you getting my point? So one place it will be different. Okay. Checks issued, not presented for payment. What does it mean? Check we have given. Okay. The person who has received the check has not put into his bank. If I give check to Stoner, okay, what will happen? I write one check and I give it to Stoner. His name is Stoner. Okay. You thought he came with some influence? No. He is normal only. His Insta name is Stoner. We don't know why. In 6th standard, somebody told him Stoner is a very fancy name. So in 6th standard, he kept. He didn't know the meaning that time. Now all the girls recognize his account as Stoner, so he doesn't want to change the name also. Yes. So I gave one check to Stoner. If I write one check and give, I put today's date only. He has some months of time. Anytime he can go and put it to the bank. Correct? Not anytime. 3 months time he has. So now he need not go to bank today only. No. But because I gave the check today, I have passed the entry in the cash book. When will it go from my bank account? When Stoner goes to his bank, deposits the check, then his bank will take money from my bank and put it into his account. That is why there is a time lag. That is why check issued, not presented for payment. Check deposited, why there is a time lag? I go and deposit the check, but bank will not credit it on the same day. Maybe next day or the day after that they will credit. Clear? That is the process time taken by the bank. Now, check issued, not recorded in cash book. Check is issued. You didn't record. That means who has recorded? Passbook it is entered. Clear? Bank charges charged. When bank has to charge bank charges, will they give you a call and tell, I am today deducting bank charges? Will they tell? No, they'll just take it, right? You will get to know when you see the statement. Correct? You will get to know when you see the statement. You will not see the statement every day. So if you have not seen the statement, you have not passed the entry. Clear? So cash book not entered, passbook entered. Along with this, some more I will discuss. Bank charges entered. They can also tell dividend collected by bank. That means bank has collected the money, put it into your account. You have not passed the entry. Interest charged by bank. That means bank has taken money, you have not passed the entry. Correct? Interest given. Can they give interest to you? Yes. They will not use the word charge that time. What will they use? Interest allowed. Interest allowed. That means they are giving you interest. Interest allowed by bank. That means bank has passed the entry, you have not passed the entry. Now, check dishonored. Check dishonored. What will happen? You had put one check that bounced. Now bank will not ask you. Bank will just take the money. That means bank has taken the money. You don't know about it. Bill dishonored. Bill discounted, dishonored. That means bank had given you money. When it dishonored, bank will take money. You don't know about it. Can you see? These are the types of things which can happen in bank. but it has not happened in cash book. Bank credited wrong amount. Yeah, you will not do the same mistake. So bank there is a mistake. Cash book there is no mistake.
Take the money out.
Yeah, but this period when we are reconciling, we have to consider that, no? They will take it in the next period. If they have put wrong amount and taken it, then there is no mistake only. Imagine 28th of March they put 10,000. 29th of March they took the 10,000. Then there is no difference, no? But 28th of March if they put 10,000, but they take it on 3rd April, then there is a problem.
Directly deposit the check to the bank account.
Yes, then and
Got dishonored due to the insufficient funds.
if it got dishonored this year only, then there is no entry. Then there is no problem. But customer deposited directly into bank on 30th of March, dishonored on 2nd, then there is a problem.
We written in the cash book.
No. We won't write it in the cash book. We will show it in the BRS. We won't write it in the cash book. If they make a mistake, we will not write it in the cash book. You are talking about adjusted cash book, no? No, BRS. We'll put it in BRS. BRS is not it's not a journal, it's not a ledger. BRS is just a statement showing all the differences between cash book, passbook. That's it. Yes, let's go further. Errors in cash book, errors in passbook. Anything can happen. Now, method. What method we follow? I think all are following hand movement method only. Okay. Now, understand this. Your right hand is always your starting point. It's like your starting point. Now, what is your starting point? That is not pre-decided. I know many questions in study material starts with cash book, but there are some questions which start with passbook also. So, right hand is the starting point. That's all I can tell you. What is the starting point? They will give in the question. They will tell passbook balance is so much. Prepare bank reconciliation statement. Now, you can't start with cash book. You have to start with passbook only. Right hand will always be starting point. Okay. Left hand will be the ending point. Remember, simple thing. Simple thing. You should know where the movement is happening. If right hand moves anytime, no. Reverse it. If right hand increases, less. Right hand reduces, add it back. Over. Right hand, if it moves, just do the opposite in the BRS. Clear? But if left hand moves, don't change the left hand. If left hand moves up, you move the right hand also. That means you have to add. If left hand goes down, that means you have to subtract. Are you following this? Right hand moves, what you will do? You will do the opposite. If left hand moves, what you will do? You will do the same thing. Clear? See over here, if right hand moves, reverse the movement. If left hand moves, move the right hand. Clear? This you are not going to write in the exam. Come back to class. I also can understand. Yes. Start point. If it is normal. Now, one more thing you have to remember. We have started with normal balance as per cash book. When you are doing plus minus in the calculator, finally you get a negative amount. You started with what? Normal. If you are getting negative, that means it is opposite of normal. It will become OD balance as per passbook. But you started with normal. You got a normal positive number only. Then it will be normal balance as per passbook. I hope it is clear. Yes. If your starting point is OD. OD as per cash book, OD as per passbook, anything. Your starting point is OD. If you get normal number, you started with OD, ending also will be normal only, so it is OD only. But you started with OD, if you get a negative number when you are doing plus and minus, that means it is opposite of OD. Opposite of OD is normal balance. Is this clear? Are you following this? Yes. Now this adjusted cash book concept is there, which is very important. Now, there are some confusions with a lot of students. They're like, when should we prepare adjusted cash book? According to me, only if they ask you in the question. I think some people in 11th and 12th, they prepare adjusted cash book if it is at the year end or something like that. Okay, usually year end only BRS is prepared. Most of the times they are telling year ended for the year ended only. So you follow one strategy in the exam. If they ask you to prepare adjusted cash book, then you prepare. Otherwise, just prepare BRS only. Is this clear? Now, what is adjusted cash book? Now, when you are seeing the differences, lot of differences are there because I did not enter it or I made a mistake, correct? Who is I? Cash book. Who is I? Cash book. So, lot of errors are there which are not done in the, lot of differences are there because bank has taken bank charges. I didn't enter it. If I enter, there is no difference. Bank has put money into my account. I didn't enter it. If I enter it, there is no difference. So it is under my control. So if I enter it, I don't need to put it into BRS only. To enter it, where will I enter? In the adjusted cash book. Clear? Now, if bank has made error, is that under my control? No, that I cannot do anything. I have to show it in BRS itself. And if I have done my job correctly, but bank has not entered, is it under my control? No, that will again go into BRS. See, pass entries to adjust cash book balance before reconciliation. Before reconciliation. Items entered in passbook, not entered in cash book. Items are entered in passbook, not entered in cash book. Where will you enter it? Enter it in the cash book. Clear? Error in cash book. What will you do? Rectify it. Both are under your control. Okay, both are under your control. What about items which are not under your control? Items entered in the cash book. Passbook has not entered. So what to do? Ignore in cash book. Directly put it into BRS. Items which bank has made mistake. What will you do? Not under your control. Directly put it into BRS. Is it clear? Are you following this? Yes. Again, we have only one question here. Yes.
If overdraft balance according to passbook is given, and then there is an adjustment check deposited into the bank that is dishonored rupees 1,60,000. Do we add it or do we reduce it and why?
What is the starting point?
And it's
Passbook. OD. Just right hand is passbook. So what they have done? Check is dishonored. If check is dishonored, the passbook balance, what will happen? OD balance. Dishonored. Balance will increase. OD balance. OD balance will increase. So what you will do? You will reduce it because right hand is passbook. Your starting point is OD. Is that confirmed? Is the starting point OD as per passbook? Is that confirmed? So right hand is passbook. If check dishonors, that means bank is taking money. Because first money came into your account. When it is dishonored, bank is taking money from you. Which question?
you said adding, right?
I told subtract. See, when I get check, what entry will you pass? We'll see it. Which question is that?
Balance will reduce in cash flow.
It is by CA Dhanushar, Bhagwan.
Maybe you have seen the different starting point. Depends on the starting point also. See, wait, I'll tell you. Now, if I get a check, what will be the entry? Bank account debited to whoever gave me. Okay. This will be the entry. First, I'll pass this entry. Now, if it is dishonored, what will happen? Yeah, but whatever happens, again, read that sentence.
Deposited into the bank dishonored rupees 1,60,000.
Okay, maybe with the language what they are using, maybe only entry is made in the cash book.
Insufficient information.
Yeah, insufficient information. I think why they have treated it like that is because check deposited into bank, it is dishonored. So cash book you have passed the entry. So cash book balance when you pass the entry, what will happen? It will reduce. So here also they are reducing. Maybe that correct answer would be reduced if you see from cash book angle. But in exam, don't worry about it. They'll give you clear information about where the entry is passed. Yes. Can we go further? But where was that question? RTP. Okay, fine. Yes. Let's go into question number 4. Now here I have given 4 alternatives, but I am not doing all 4 alternatives. Okay, 4 alternatives are given. That is starting point is cash book, starting point is passbook, starting point is OD cash book, starting point is OD passbook. So what we are doing is 2. Which 2 we will do? OD passbook. OD passbook starting point, because that is always irritating. First of all, starting point passbook you don't like it, and OD you don't like it anyways. And then we will take cash book. OD passbook and cash book. Or first we will do OD passbook, then we will decide about everything else. Is it clear? Now, again, BRS is a chapter with the boundary. They cannot have more errors or more differences. All types of errors are covered. Now, I am starting with what? Starting with what? OD balance as per passbook. How much? 1 lakh. Just a random number. 1 lakh. Clear? Now, obviously, you know, some things will be added and some things will be subtracted. Okay. Now, first one. Everybody keep your right hand ready. What is the right hand? OD starting point. Yes. What is the starting point? OD balance as per passbook. Now, what you should remember, it is OD balance. One thing, it is OD balance. If money comes in, balance goes down. If money goes out, balance goes up. Okay. Now, on 15th December 2021, payment side of the cash book was overcast by 10,000. Payment side of the cash book. Payment side of the cash book was overcast by 10,000. Does it mean that you have put more payment in cash book? You have put more payment in cash book. Left hand is what? Cash book. If you put more payment, what will happen? Cash book will increase. We are OD. We are OD. Cash book will increase. So what will you do when left hand has moved? You will also increase. Are you following this? No? Yes? Once again, see, all the complicated errors only I have taken. Simple ones I have not put much. Okay. Now, 15th December, payment side of the cash book. Payment side means what? Payment side only, obviously. Okay, was overcast. Overcast means what? Overcast means what? You have put extra payment. Extra payment you have put. Right hand is not cash book. Right hand is passbook. Left hand you have put extra payment. Extra payment means OD balance will increase. Left hand has moved. Right hand also will move. Is it clear? So what you will do? Add it. I'm just writing. I'm not writing the information. I'm just writing 1 and writing 10,000. Okay, you know to write the description, right? 1 and 10,000. Now 2. Check for 1,18,000 issued on 6th December was not taken in the bank column. When we see check issued, don't come to a conclusion in life. Check issued but not taken in bank column. Where is bank column? Cash book. In passbook, there is no bank column. Okay, cash book. So what happens? Check issued but not recorded in cash book. Passbook did the record. What is your right hand? Passbook. Check issued. What will happen to balance? Balance increases because it is OD. Because it is OD, balance increases. So what will you do? No, reduce. 1,18,000. We don't want to start with your comfort zone. I know your comfort zone is normal balance and cash book starting point. We want to go to OD balance and passbook starting point. Okay. Now, did you understand this? Again, I'm explaining. Check issued means, first of all, balance should go up because it is OD. OD balance will go up. If you have money in your account, then when check is issued, balance will decrease. And it is not taken in bank column. That means it is taken in passbook. Passbook is your starting point. Check issued, balance increases, right hand has moved, you will reduce it. Clear? Third, on 20th December 2021, debit balance of 8460 on the previous day was brought forward as credit balance in the cash book. What is this? In the cash book, you had debit balance. That means you had money. You had money. You took it as OD balance. Understand this simple. Understand this. You had money 8640. Where? Cash book. So cash book, we had balance. Okay, debit balance. What did we do? We took it as OD. Now what will happen? Cash book balance, what will happen? Increases twice. Increases twice. Why? You're taking money. When you take money, OD balance, what will happen? It will increase. 8640, for it to become 0, you have to increase once. 8640 to become negative 8640, you have to increase it again. Left hand has moved 2 times. What will you do? Move the right hand twice. So in this case, it will be 8640 into 2. Use your calculator. 16,920 will be added. Is that clear? Are you following this? Yes. What is this? Is it 8460? Sorry. Oh yeah, 8460 it is. Rectification of errors. 16,920. Clear? Next, fourth one. Did you understand that? It's a very common one. Okay. Simple. When instead of taking debit balance, if they have taken a credit balance, that means they have taken money 2 times for it to reach that stage. If they have taken money 2 times, then you see what movement has happened and you pass it accordingly. Now, of the total checks amounting to 12,370 drawn in the last week of drawn means what? Checks drawn means what? Checks issued. Checks drawn means checks issued. Drawing the check means taking a check and writing the person's name, signing and giving. That is called as drawing a check. Checks drawn means check issued. Checks aggregating to 9360 were encashed in December. Can you find the difference between the two numbers? 12,370 and 9360? 3010. I put 12,370 check, but only 9360 is encashed. That means remaining is check issued, not presented for payment. Where the entry is passed? Cash book. Which hand is your cash book? Left hand. What happens to cash book balance when you issue check? Because it is OD, it will increase. So right hand also will increase. So you'll write fourth one, 3010. I hope it is clear. Yes. Next, fifth one. Dividend of 35,000 collected by the bank and fire insurance premium of 7,900 paid by the bank, not recorded in cash book. What is your start point? Start point. What is your start point? Bank OD, passbook. Correct? So when dividend is collected, what will happen to passbook balance? It will decrease because it is OD. So what will you do? You will add it back. How much is dividend? 35,000. And when fire insurance premium is paid by the bank, what will happen? Passbook balance will increase. What will you do? Decrease. 7,900. Any doubts? Next. 6. A check issued to a creditor for 1,75,000 was recorded twice. Don't come to the conclusion when you see check issued, it is recorded twice. Check issued. Correct? What will happen to passbook balance? Increase. Once it increased, cash book also increased. But it is recorded twice in the cash book. So passbook, cash book has increased again. So what will you do? Left hand has moved. So right hand also will move. 1,75,000. 6. Anybody has any doubt with this one? Can we go further? Yes. 7. Bill for collection amounting to 53,000 credited by the bank on 21st December, but no advice was received by Mr. Karan till 31st of December. Bills for collection credited by the bank. Credited by the bank means what? Bank put money or bank removed money? Put money. So what will happen to the OD balance? Decrease. OD balance will decrease. Right hand has moved. So add it back. 53,000. 7. 53,000. Is this clear? 8th one. Customer who received a cash discount of 3% on his account of 60,000 paid by check on 10 December. Cashier erroneously entered the gross amount in the bank column of the cash book. First of all, 60,000 into 3%. 1,800. Now what will happen? What will happen? What did you do? What happened over here? I got a check of how much? I didn't get a check of 60,000. Customer gave me money. I gave customer discount. 3% discount. So 3% discount means customer has given only 58,200. But by mistake, when I recorded in the cash book, I have entered it at 60,000. I have entered it as 60,000. You remember cash book? You should put 58,800 in the bank column and you should put 1,800 in the discount column. But you put the entire amount in the bank column itself. So now in cash book, you received 1,800 more. When you receive money, what will happen to the cash book OD balance? Decreases. So what will you do? Left hand has moved. What will you do? You will also decrease. Clear? Are you following this? 1,800. 8, no? 8,800. Is it clear? Yes. 9. Checks amounting to 60,000 issued to creditor have not been presented for payment till date. Check issued to creditor has not been presented for payment. It's a normal thing. Check issued. What will happen to cash book balance? Increase. Left hand is cash book. This will also increase 960,000. Any doubts? You can solve more and more bank reconciliation statement questions when you are practicing because you don't have to write all this. Take a pencil, write plus minus, then you compare the answer, do the plus minus and see the answer. Okay, so you can solve more bank reconciliation questions in short period of time and you can finish that chapter quickly. Okay, question number 10. Checks paid into bank amounting to 1,10,500. Paid into bank means deposited or removed? Deposited. Out of which check amounting to 55,000 only collected. Only collected. That means remaining is not collected. What is the difference? 1,10,500 minus 55,000. 55,500. What will happen now? Check paid into bank. Check deposited. That means what will happen to cash book balance? Reduce. What will you do? Right hand also you will reduce because you started with passbook. 10. 55,500. Are you following this? Yes. 11. Rent amounting to 60,000 received by the bank and entered in the passbook but not entered in the cash book. What is your right hand? Passbook OD. When you received 60,000 rent, what will happen? Balance will decrease. So you will add it back. 11th one, 60,000. Okay, wait. Let's not create confusion there.
The presentation can be done anyhow.
What does anyhow mean? Like how I'm doing now? Huh? There is no multiple presentations, right?
And then less in one side, can add like according to the transaction.
No. You can't do that. You're telling that you'll just keep reading the question. If it is plus, you'll put plus. If it is minus, you'll put minus. So in the BRS, it will be like sum plus, minus, that, like that. No, don't do that. That is, I mean, it is correct only because BRS is not ledger or anything which should have a fixed format. It's correct, but problem is you will irritate the person who is correcting the paper. Are you getting my point? You'll irritate the person who is correcting the paper because in his answer key, all add would be together, all less will be together. Now he has to put extra effort to correct your paper. Are you getting my point? Yes.
Positive amount like 1 lakh. So if we start with minus 1 lakh,
That's fine.
we can,
Yeah.
so entries will reverse. Like minus will
No, it will be still same.
so
It will still be same.
three would minus.
Yeah. To minus, you will keep adding numbers. Okay. Don't do that. You write OD only. You will be writing balance as per cash book and writing minus.
Yeah, minus 1 lakh.
If you're comfortable with that, it's fine.
So
I would not prefer it because for a reason they said OD balance as per passbook. So you write OD only and write add minus. Yeah, but if you write OD and write minus 1 lakh, it becomes normal balance. So you're going wrong. See, if you want to write minus 1 lakh, you should write balance as per passbook and write minus 1 lakh. That is OD. If you write OD balance as per passbook and write minus, OD minus means normal. So this straight away you will be wrong. If you want to write minus, then you should write balance as per passbook. But I would not suggest it because anywhere institute is not doing it. They are writing OD only and doing the plus minus. Okay, yes. Let's go further. 12. Insurance premium up to 30th June paid by the bank 2,700 not entered in the cash book. Now, insurance premium up to 30th June, that means till next year you have paid insurance premium. That is actually prepaid insurance for you. For you, prepaid insurance. But money coming and going out, is there any difference? You got you paid 2,700, right? So, who has entered it? Bank has entered it. What happens to bank passbook OD balance? Increases. So, what will you do? Decrease it. 12. 2,700. Next, 13. Payment side of the cash book has been undercast by 500. Undercast means what? Undercast means what? You did not put one payment. You did not put one payment. Where? In the cash book. Will bank also not put that payment? No, bank will put that payment. When bank puts that payment, what will happen to the passbook OD balance? It will increase. So you will reduce it. 13. 500. 14. Bank charges 150 shown in the passbook has not been entered in the cash book. Not entered in the cash book. Passbook entered. Bank charges. What will happen to the balance? Increase because it is OD. So minus. 14. How much is the bank charges? 150. 15. Bills payable of 20,000 had been paid by the bank but was not entered in the cash book, and bills receivable of 6,000 had been discounted with the bank at a cost of 100, which has not been recorded in the cash book. What is it? We made one bills payable payment, we didn't record it. We discounted one bill, we did not record it. Bills payable, if it is paid, what will happen to the passbook balance? Increase, so you will reduce it. 20,000. Is this clear? OD. Next. Bills receivable 6,000 has been discounted with the bank. If you get money, what will happen to passbook balance? Passbook balance will reduce, so you will add back. But when you add back, it will be 5,900 and not 6,000. See, 6,000, but it is 100 rupees is discounting charges. Remember, bills of exchange, discounting charges. If it is 100 rupees, what will you do? Minus 100. Are you following this? Is this clear? Yes. Next, 16. Check received 10,000 entered twice in the cash book. Oh. Check received. What will happen to balance? Balance will decrease. OD balance decrease. Once it reduced in passbook, once it reduced in cash book. But in cash book it reduced again. So what will you do? Left hand mode, you will reduce it. 10,000. 16th question. Are you following this? Yes. 17. A bill of exchange of 26,200 which was discounted with the bank returned dishonored, but no entry was made in the cash book. Bill dishonored. Bank will take money. Passbook is your starting point. OD balance is your starting point. When they take money, balance will increase. So what will you do? Decrease. 26,200. What is the number? 17. Next, 18. Bank charges entered twice in the cash book. Once bank took money, passbook balance increased, cash book balance also increased. You entered again in the cash book, so cash book balance increased. So what will you do? You will add it. 18th. 18th will be add. How much? 2,000. Yes. Bank charges. Listen. Bank charges entered twice in the cash book. What will happen to passbook balance? Increase because it is OD. What will happen to cash book balance? Increase because it is OD. Entered twice in the cash book. In the cash book again you have entered. Cash book balance goes up. Left hand is your cash book. So what will you do? Right hand also increases. Did you get it? No. Didn't get it. What happens? Okay, tell me bank charges. What happens? Which method do you follow? What is the method? It's just a logical method. Okay. Bank charges entered. What happens to bank balance? In OD, bank balance increases. OD increases. Correct. But in cash book, you have put it again. So cash book OD increased. So what is your starting point? Starting point is passbook. You also increase it. That's the method you use, no? Okay, try it in your method. If you don't understand, you ask me in the break. 2,000. So 2,000 we have to add. Yes. 19. Interest allowed by bank. Interest allowed by bank means bank is giving you interest or bank is taking interest. Giving interest. Interest allowed by bank not entered in the cash book. Correct. Passbook balance reduces. You will add it back. What is happening? 3,000. Next. Interest on investment 83,800 collected and credited by the bank but the same has not been entered in the cash book. Passbook balance reduces. What will you do? Add it back. 83,800. No need to do plus minus and all. You know what to do. You do plus minus. If you get a positive number, that is also OD only. OD as per cash book. If you get a negative number, that means it is normal balance as per cash book. Now, out of all the complicated errors, one I have missed. Rent amount into 60,000 received by the bank and entered in the passbook but not entered in the cash book. Cash passbook balance reduces. You have to add it back. Where did we put 11th one? We didn't enter only. Rent amount into 60,000 received by the bank. So passbook balance reduces. So you will add back. How come we know? What is 9th one? 9th one is also 60,000. 11th one is also 60,000. Okay. 11th one 60,000. Huh? Yes, I think that should be it. Now, if you change the starting point, everything will change. If you change the starting point, everything will change. Your thinking only will change. Clear? Now, one more thing I want to tell you. If you change starting point, now you know what happens. Which hand moves, you will just make the opposite. That you will be able to handle. Now, the very important thing is, what if in this question they had told you to prepare adjusted cash book? So you should know what and all will go to adjusted cash book. What if they would have asked you adjusted cash book for 20 entries? Easy. Are you getting my point? It's easy. But you should tell me the entries also. What I'm going to do is, I'll give you the entries. If at all, you have to prepare adjusted cash book. Adjusted cash book. Whichever is your starting point, your entries will not change. Whichever is your starting point. Now, listen to one thing. Of all the complicated errors which are there in the ICI database, one thing I have missed. There is one error where they tell you that on 10th April, you told that hire purchase agreement, 3 lakh rupees you can take. And we are talking about June end. So 10th April, they have taken 3 lakhs. 10th May, they have taken 3 lakhs. And 10th June also, they have taken 3 lakhs. So 3 times they have made 3 lakh, 3 lakh, 3 lakh payment. Who is they? Passbook. Passbook, they have made payment. You have not entered in the cash book. So the whatever the plus minus will be for 9 lakhs. Is it clear? Plus minus will be dependent on your OD balance or normal balance and what is your starting point. That is one complicated error which is there. Other than that, all the things we have covered. Okay. Now, first one. Payment side of the cash book was under cast. What will happen? Is it under our control? Payment side we have under cast. What will we do? Payment side we did not put, sorry, not under cast, over cast. So what should we do? We put more payment. So what should we do to cash book? Debit. First one, debit bank account. Only debit bank account. Okay. Are you getting my point? What's the amount? Let's write the amount also. 10,000. Next, second, check of 1,18,000 issued was not taken in the bank column. Is it under our control? Yes, it's under our control only. Second one also. Check issued. What should happen? Reduce. Credit the bank account. 1,18,000. Debit whom? Creditor. Whoever you have given the check. You know the complete entry. Next. Third. On 20th December, a debit balance of 8460 on the previous day was brought forward as credit balance in the cash book. Is it under our control? Yes, debit balance was taken as credit balance. So what we should do? We should debit. Correct? Third, debit bank account. How much? 16,920. Double. Instead of debit, it was credit. So you have to bring it back. Next, of the total checks amounting to 12,370, checks aggregating 9,360 was encashed. Have you done your job? Yes, this will go to BRS only. This will go to BRS only. Note, nothing to be done in adjusted cash book. Next, dividend of 35,000 collected by the bank and fire insurance premium paid by the bank, not recorded in the cash book. Is it under your control? Yes. Debit bank account for 35,000 and credit bank account for 7,900. Is it clear? Are you following this? Yes. Now, if they ask only, you will do adjusted cash book. Otherwise, you are not going to do any circus. Clear? 6. A check issued to a creditor was recorded twice in the cash book. Again, your mistake. So, what will you do? Sixth one, recorded twice. So, debit once. Bank account 1,75,000. Any doubt with this? No. Next, 7th, bills for collection amounting to 53,000 credited by the bank, but no advice was received. That means you have not credited. What will you do? Debit bank account. How much is the amount? 53,000. Are you thinking, why are we not crediting here? Crediting will be done by bank. For bank, credit means for you it is debit. Next, 8. Customer who received cash discount. Is it your fault? Yes. What will you do? 8th one, credit bank account for 1,800. Why? You put more amount, you are going to remove that differential amount. You put more amount, you are supposed to put 58,200. You put 60,000 into the bank column. Now you will credit the bank column. Next, 9. Checks amount into 60,000 issued to creditors have not been presented for payment. No, it will go to BRS because you have already entered in the cash book. Checks paid into bank amounting to 1,10,500, of which checks amounting to 55,000 only collected. This will also go into BRS because you have already passed the entry. 11. Rent amounting to 60,000 received by the bank, entered in the passbook but not recorded in the cash book. So what will happen to the 11th one? Debit the bank account. 60,000, right? Next, insurance premium paid by bank not entered in the cash book. Is it under our control? Yes. Credit the bank account 2,700. Is it clear? Yes. Next, 13. Payment side of the cash book has been undercast. Payment side of the cash book has been undercast. That means you did not put one payment. Is it under your control? Yes. Credit the bank account 500 rupees. Next, 14. Bank charges 150 shown in the passbook has not been entered in the cash book. What will you do? Credit bank account 150. Next, 15. Bills payable 20,000 had been paid by the bank, not entered in the cash book. What will you do? Enter it. Credit bank account 20,000. And bills receivable discounted is not entered in the cash book. So you will debit bank account. How much? 5,900, not 6,000. Because for bill discounted, the entry is bank account debited, discounting charges debited to the bills receivable. Clear? Next, 16. Check received 10,000 entered twice in the cash book. Entered twice means what will you do? Credit the bank account for 10,000. Next, 17. Bill of exchange 26,200 which was discounted with the bank returned dishonored. No entry in the cash book. Again you are going to take money. Credit bank account 26,200. Next, 18. Bank charges entered twice in the cash book. What will you do? You have put extra payment. So debit bank account 2,000. 19. Interest allowed by the bank. How much is it? 3,000. What will you do? Debit. Interest allowed means bank has given you interest. You have not passed the entry. 3,000. 20. Interest on investment collected and credited but same has not been entered. Debit 83,800. So in case if at all they ask you adjusted cash book, also we have discussed all the things. Clear? Now you take any other starting point at home and do it, and don't see the existing solution. You take some passbook normal balance and do it, and then you should get the answers. Okay, just there only write plus minus, you will get the answers. All these what you said, errors or differences are already there in your study material. Study material, normal questions, practical questions, everything is covered. Is it clear? BRS, sure short question. We are done with BRS. That's it with BRS. Next we will move into depreciation. Do we need a break? It is 43. Okay. Come back at 11. Come back at 11 o'clock. 15, 17 minutes you have. Huh? Lunch break will be 12:30 to 1:30. Lunch break will be 12:30 to 1:30. Sir, we can follow logical method. No, sir. BRS, hand movement. Yes, yes. Which is better in exams? I was teaching logical method only, but then most are following hand movement, so I started following that. Okay, let's continue. Next, we have finished till BRS. Let's proceed further to depreciation. Hey, turn on the AC.
It's on.
Literally on. Yes, let's go into depreciation. Next chapter, depreciation. Shh. Yes, what is depreciation? Yes. Get back. Hey. Open it. Yeah. Let it swing. Better. It'll hit. It should hit. Okay. I'm beginning. Depreciation and amortization. Okay. Depreciation and amortization. Shh. Yes, what is depreciation? Decrease in the value of fixed asset or tangible asset, and decrease in the value of intangible asset is called as amortization. What are the causes for the depreciation? Passage of time passes, obviously asset value goes down, and wear and tear, you're using the asset, obviously asset value goes down. Technological changes, some technological changes there. Instead of petrol cars, now they said you have to use only EV. That time also the value of the asset will go down. BMW is here. Yeah, that is revaluation of asset. That is a topic of revaluation which we have to cover. Gold, BMW it is. Yes, why should depreciation be recorded in the books? You can get a true or false question. One of the reason is to get accurate financial position. Where do we show the asset in the balance sheet? Where do we show the asset? In the balance sheet, right? Balance sheet is the financial position. So when we are showing financial position, you should show the correct financial position. You cannot show the value of the asset which is not realistic. So to show correct financial position, one of the reasons for depreciation. To show correct profit. When you are calculating profit, depreciation is one of the expense. If you don't show that, only you will get the inaccurate profit. To save money to buy new asset in future. Every year, if you are passing a non-cash expense entry, that means money is kept aside. That money you will use at the end of useful life to purchase a new asset. Clear? Next, government regulations. What is government regulations? Income Tax Act, Companies Act has told that you have to charge depreciation. Therefore, you have to charge depreciation. You can't do anything. To show correct cost of manufacture. We have seen manufacturing account in final accounts. Why we prepare manufacturing account? To find the real cost of manufacture. How much did we spend for manufacture? For manufacturing, one of the things that we have used is machinery. Machinery ka depreciation is also an expense for manufacture. That's why we have to do depreciation. These are some of the reasons why depreciation is there. Clear? Now, methods to compute depreciation. What is the first method we have? Straight line method. In the question, they will tell you the method. You need to calculate depreciation as per the respective method. Now, depreciation under straight line method. What is the formula for straight line method? Depreciation is equal to cost minus scrap value divided by useful life. Okay, the most basic formula it is. You should know it. Different names are used for straight line method. It's also called fixed installment method, and it's also called original cost method. Sometimes when it is straight line method, they will give you the rate. When they give you the rate, what you should do, I think I have not written it. It will always be cost into depreciation rate. In WDV, you will apply the rate on WDV. But in straight line method, you will apply the rate on original cost. Every year it will be same. One of the features of depreciation method is that depreciation is same every single year. Is it clear? Now, what is cost? Amount that is spent to acquire the asset. Usually it will be given in the question only. What is scrap value? Amount that is receivable at the end of the useful life. When you finish using the asset, you will get something when you dispose it. That is scrap value, or it's also called as salvage value. Clear? What is useful life? Number of years expected. How many years? Anything? Can you guarantee the useful life? No, it is just an estimate. Cost is accurate. Salvage value and useful life is just an estimate. Is it clear? Now, example you can see. I think you don't need examples for this. We'll go into second method, WDV method, written down value method. Yes, written down value method. How do we calculate depreciation? First year it will always be cost into depreciation rate. From second year onwards, it will be WDV into depreciation rate. What is WDV? Written down value. Tell me, if I am following straight line method, will we have written down value?
No.
Yes, we will. Yes, we will. Written down value will always be there. You know what is written down value? In your machinery ledger, you write no buy balance carried down. That is written down value. Will you have written down value? 100%. Will you use written down value to calculate depreciation? No. Are you getting my point? Every method, written down value is there. Written down value is nothing but book value at the end of the year after depreciation. But in straight line method, we will not use that for calculating. In written down value method, we will use that itself for calculating. Is it clear? Yes, because whichever method it is, when we are selling an asset, we should calculate WDV on the date of sale. So now you can't get confused there. Oh, I'm following SLM. How am I having WDV on the date of sale? WDV will always be there. Clear? Now, WDV of any year will be cost minus depreciation till previous year. If you want WDV of this year, cost minus depreciation of all the years if you do, you'll get the WDV of this year. Okay, examples I'm not taking. Sum of digits method. Sum of digits method not there. Often not asked. 1 or 2 questions are there in study material. If they want to throw a bouncer, then this can be the thing. Are you getting my point? Sum of digits method, there is a formula. What is it? Number of years remaining divided by sum of digits of useful life into cost minus scrap value. Mistake where you can make is number of years remaining. Useful life is 5. I am in the second year. How many years are remaining? Automatically you will tell 3. That is wrong. It is 4. Why? Number of years remaining is including current year. If I don't include current year, then when I am in the 5th year, number of years remaining will be 0. Is it 0 in the 5th year? If it is 0, 0 divided by anything into anything will be 0 only. So are you telling me that in the last year there is no depreciation? No. Last year also there is depreciation. So when you are taking number of years remaining, including current year. Is it clear? Including current year. Sum of digits, basically if it is 5 years, you are supposed to do 5 plus 4 plus 3 plus 2 plus 1. But you can use the formula n into n plus 1 divided by 2. If it is 5, you will do 5 into 6 divided by 2. If it is 8 years useful life, you will do 8 into 9 divided by 2. Is it clear? Are you following this? Yes. This is your formula. So in this formula, you have to understand only numerator keeps changing. First year 5 by something. Second year 4 by something. Into something. All this will remain same. Only the numerator keeps changing every year to calculate depreciation. Okay. I think one question is there in your study material on sum of digits. Don't skip that at any cost. Next, let's go into machine hours method. There are 3 silly methods. Machine hours method, production units method and depletion method. All 3 methods are identical. Correct? Machine hours method, what you are going to do? Number of hours used divided by total hours into cost minus scrap value. Production units method, number of units produced divided by total units into cost minus scrap value. Depletion method, number of kgs or liters or whatever they tell in the question divided by total quantity into cost minus scrap value. All 3 methods will be same. Chances of them being asked is very low, but do not skip it. If they ask for 4 marks, it's easy 4 marks. But you should also feel bad if they ask this for 4 marks, they might not ask the regular question. So you don't know where to feel happy. Whether take the easy 4 marks or take little hard work but get 10 marks. We don't know. Yes, accounting. From here, the core of the chapter starts. Okay, accounting is very, very important. Now, method 1. There are 2 methods of accounting. In method 1, what we do? Depreciation is reduced from the asset value itself. Depreciation is reduced from the asset value itself because you pass the entry depreciation account debited to asset account. This is the most common method and this is the method with which you are comfortable. What you are not comfortable, that only we should target. Method 2, provision for depreciation. Here what we do, provision for depreciation is created. That means asset will always remain at cost. Asset will always remain at cost. So in the asset account, other than purchasing, there is no entry unless you sell the asset. Clear? Now let's try to understand how it works. See if I am following 10% SLM, no. 10% straight line method depreciation if I am following. And year 1 balance sheet asset will be showing 100. Year 2 it will become 90. Year 3 it will become 80. Because every year depreciation is reduced from the cost itself. In the second method, if I'm having provision, every year asset will be 100. Can you see? Asset is 100 only. Provision for depreciation, provision for bad debt, provision for doubtful debts, all are liabilities. When you take money and keep it aside for a particular purpose, it is a liability. Provision should be on the liability side. But for better presentation, what we do? We take the provision into the asset side, minus it and show 90 over here. We take it this side and show 80 over here. Now if I ask you, year 3, how much is the balance in asset account? How much is the balance in asset account? Asset account balance is 100 only. Because asset we are not touching, it will be 100. Provision balance is 20. That provision is brought this side. Better presentation, we are presenting like this. Is it clear? But asset account balance is 100 only. If you see the ledger, asset will have 100. But here asset will have 80. Can you see the two differences? In one method, depreciation is reduced from the asset. In the other method, depreciation is taken as provision for depreciation. Is it clear? Yes. Now, accounting method 1. If you purchase asset, what should be the entry? Asset account debited to bank account. Clear? Depreciation every year and entry will be depreciation account debited to asset account. Clear? Now, sale of asset. Whenever we sell the asset, first thing that should come to my mind is compute depreciation till the date of sale. Compute depreciation till the date of sale. Depreciation account debited to asset account. When you're computing depreciation till the date of sale, the months become very crucial. From the starting of the year till the date of sale, you will calculate depreciation. Clear? Sale entry. What will be the sale entry? Bank account debited to asset account. Pass the sale entry. Whatever amount you get, you put it into asset account. If it is profit or loss, when do you call it as profit? Sale value is higher or sale value is lower? Sale value is higher. If sale value is higher, it is called as profit. Then what you will do? Asset account debited to P&L. Transfer the profit to P&L. If sale value is lower, it's called as loss. Profit or loss account is debited to asset account. Is it clear? So you just have to worry about whether sale value is higher or lower. If it is higher, it is profit. If it is profit, it should be credited to P&L. So debit will be to asset account. If sale value is lower, it is loss. If it is loss, it will be debited to P&L. So credit will be to asset account. Is this clear? This is method 1. Method 2. Provision for depreciation. When I purchase the asset, entry is same. The method is for accounting for depreciation. Purchase will not change. No, purchase entry will be same. So asset account debited to bank account. Is it clear? Now, depreciation entry will be depreciation account debited to provision for depreciation. One separate provision is always created and kept. Clear with this? Now, P&L account debited to depreciation should happen in the previous entry also, which we didn't discuss. Because depreciation is an expense. Expense will always be transferred to P&L. Now, when we sell the asset, here it is very critical. When we sell asset only, we make mistakes when there is provision for depreciation. What I should do? I should open one new ledger called as disposal account. I'll open one new ledger called as disposal account. What I will do? First, you calculate depreciation up to the date of sale. That we are always doing. What is the depreciation entry? Depreciation account debited to provision for depreciation. Depreciation account debited to provision for depreciation. Is this clear? Next, disposal account is open. Disposal account is open. Disposal account is what? It is like one medium account we are using just to record the sale entry. So first thing what I should do, understand this. Whenever there is sale and there is provision for depreciation ledger, prepare one disposal account. Take the cost and put it to disposal account. Take the cost and put it to disposal account. Take the total provision on that asset. What is the total provision created till today? Take that and put it to disposal account. You get money, put it to disposal account. From there, remove profit or loss and transfer to P&L. Is it clear? Now, disposal account, transfer cost of the asset to disposal account. If I have to remove the asset has to be credited. So disposal account will be debited. Which one?
Like whatever you said.
Okay.
Only that's all with the.
Okay, now disposal account is created only when there is provision for depreciation. Okay, now understand this. If you are creating disposal account, when you sell the asset, take the cost, whatever asset you are selling, take the cost and put it to disposal account. On that asset till today, whatever provision you have created, take the provision and put it to disposal account. You will get money when you sell it. Take the amount and put it to disposal account. Then you will get profit or loss over there, transfer it to P&L. Okay, now we'll see the entries for that. Okay, transfer of cost to disposal account. Asset you are removing, no, and you are putting it to disposal account. Asset has debit balance. So when you are removing asset should be credited, disposal account will be debited. Is this clear? Transfer the provision also to disposal account. Provision has what balance? Credit balance, because it is liability. Provision is debited, disposal account is credited. Clear? When you get money, bank account should be debited because money is coming in. Credit disposal account. Put the money into disposal account. Profit or loss on sale. Where is the profit or loss now? Disposal account only. Profit means you should credit P&L. So debit disposal. Loss means you should debit P&L, credit disposal. Is it clear? Are you following this? Okay. Understand this chart kind of thing. Asset, if it is starting of the year, it is unsold. Asset is purchased somewhere during the year, and end of the year we have this situation. Now understand this. When you are talking about depreciation, if asset is purchased, depreciation will be there from the date of purchase till the end of the year. Is it clear? If asset is sold, we will calculate depreciation from the starting of the year till the date of sale. Is it clear? If you purchase the asset from here till the end of the year, you have to calculate depreciation. If you sell the asset from here till the date of sale, you have to calculate depreciation. Now, asset unsold. Very, very important adjustment. This is the area where people go wrong. When asset is unsold, end of the year. Now, what you have to do? What is sold, you know. You will calculate depreciation only till there. What is purchased, we know. You will calculate depreciation only from here. What is unsold is there for the entire year, no. What you will do? Use this formula or statement. Total WDV at the beginning of the year. Total WDV. Can I calculate depreciation on that? No. Why? In that, even the asset sold is there. Asset sold is there. Remove the WDV of the asset sold at the beginning of the year. Starting of the year, I had some WDV. From that, if I remove the WDV of the asset which is sold, what will remain? Asset which is unsold, right? On this, calculate depreciation. Are you following this? Very important, because people will do the purchase entry correctly, sale entry correctly. Finally, after doing all that, on 31st of March or 31st of December, you will have to pass one depreciation entry for the remaining. There, new asset also easily they will find out the depreciation, but old assets you will get stuck over there. So what you have to understand, WDV at the beginning of the year is given, will be given. In that WDV, even the asset sold ka WDV is also there. Remove the asset sold WDV. Then what will you get? Asset unsold WDV. On that, apply the depreciation for the full year, because that asset is there for the full year. Is it clear? Are you following this? We will apply this in the questions which we are going to discuss, but understand it theoretically. Now, what if depreciation method changes? There are some questions recently also asked in the exam. If depreciation method changes, what you have to do? Don't worry too much. When you change, no, From there follow new method. When they change the method, no, from there follow new method. That means if I'm changing the method on 1/1/2023, till 1/1/2023, I have to follow old method. And on 1/1/2023, whatever WDV you have, WDV means the balance what is there. For this balance, apply the new method. So if till 1/1/2023 I was following WDV, from here I will follow SLM. If I was following SLM, from here I'll follow WDV. Is it clear?
What will be the depreciation? Like what will be the amount which we calculate depreciation on? If it would be the initial amount or the written down value?
No, on the date of change. On 1/1/2023, I am changing the method. On 1/1/2020, I had purchased the asset. From here till here, I have depreciated under WDV. If you have depreciated under WDV, after removing depreciation for all these years, you have WDV on 1/1/2023. For this, you have to apply straight line method. If it is rate, apply the rate on this value every year, same thing. If it is not rate, then you divide this value by useful life, you will get the depreciation under SLM. Clear? If I was following 1/1/2020, from there till here I was following SLM. Now I have the WDV on 1/1/2023. First year you apply rate on this one, then continue on WDV. If it is from SLM to WDV, if you are following, first year on this you will apply rate, next year on the resultant figure you will apply rate, after that on the resultant figure you will apply rate, and so on and so forth. Is it clear? But you need the balance on the date of change. You need the balance on the date of change. Till that day, old method, after that day, new method. Clear? Yes. Retrospective effect means what? From beginning they are giving the effect. That is not there. Earlier it was there. Some 3-4 years back, they were following like that only. But now it is not there. Now it is only prospective effect. Prospective effect means what? From the date of change, you will follow new method. Just because you change the method today, you will not apply this method for all the previous years also. Yes. If method is changed, follow new method from the date of change. Clear? Recently they have been asking, once or twice they have asked also. Okay. Revaluation. Small topic. You should know it. Understand this. If asset value increases, see, one asset was there of 100, it is revalued to 120. That means asset value increased, right? If asset increases, what should I do? Asset should be debited. Credit will go to revaluation reserve. Do not write revaluation and come. They will write like this. Why? Revaluation account is different. In partnership, you use that revaluation account when admission or retirement or something happens. This is different. You got profit, no, because your asset increased. You're keeping this profit separate in a reserve called as revaluation reserve. Is this clear? Now, what if this asset in future goes down? That is loss, right? If it goes down, what will happen? From 120, it came to 70. That means I have 50 ka loss. Now, can I take this loss from revaluation reserve? Yes. But revaluation reserve has only 20 rupees. You can't take 50 rupees. So, take 20 from revaluation reserve. Remaining, your only hope is P&L. Is this clear? So, what did you understand with this? If asset value goes up, profit you put it to revaluation reserve. When it goes down, loss you take from revaluation reserve. What is there? Extra loss, take it from P&L. Is it clear? If asset is going down for the first time, then it's a loss, right? Loss will be debited to P&L. Loss will be debited to P&L. Now this asset which went down, in future if it is increasing, that time you got a profit. Did you get a profit of 40? Can you put the profit 40 to revaluation reserve? No. Why? Earlier you had a loss. That loss you had taken from P&L. Put that loss back to P&L. Then if you get extra profit, that you put it to revaluation reserve. Are you getting this? Small topic. They haven't asked in the recent past. That means there is always the chance of asking. Clear? So you should, because it's a very small topic, do not skip it. Revaluation. Okay. I'll just explain this again. If asset value increases, first time, put the profit to revaluation reserve. Put the profit to an account called as revaluation reserve. That same asset, if it decreases in future, when it decreases in future, You have a loss. Loss, you can take it from revaluation reserve. How much is there? That much you can take. Extra loss if you have, debit it to P&L. Debit it to P&L. If asset value goes down first time, it's a loss. Loss will be debited to P&L. This same asset which went down, in future if it is increasing, that time you have a profit. But don't take the full profit and put it to revaluation reserve. What you do, when you get profit, earlier loss you put it back to P&L, extra profit you put it to revaluation reserve. Is it clear? Yeah. First we credit P&L, and if you have extra profit, then you credit revaluation reserve. Yes, that should be it. Then there are some small topics like, what if you change the useful life? First you were thinking useful life is 10 years, then you change the useful life. When you change from that day, apply the new useful life. Clear? If you change the scrap value from that day, apply the new scrap value and correct the depreciation. Clear? All this you should be knowing. Now, we'll go into our questions that we have chosen. Here there is no master question at all. We have to follow ICA questions. First question that I have picked is this one. Change in method of depreciation, SM10. We'll go into SM. Few. 4, 5 I think. Question 10 I have chosen because it is unique. Okay, understand the question. Listen. Change in the method of depreciation. They can always ask. You are expecting regular question, they can ask irregular question. See, Anshul and company commenced business on 1st January 2017. When they purchased plant and equipment for 7 lakhs. How much did they purchase for? 7 lakhs. But when did they purchase? 1st January 2017, once upon a time. Clear? They adopted a policy of charging depreciation at 15% per annum under diminishing balance method, means WDV method. Over the years, their purchases have been, they are following WDV and they have purchased more assets. Can you see on 1/1/2018 they have purchased 1,50,000 and 1/1/21 they have purchased 2 lakhs. 2 assets. So totally 3 assets are purchased. 1/1/17, 1/1/18 and 1/1/21. On 1/1/21, when? On 1/1/21, it was decided to change the method and rate of depreciation to straight line basis. Earlier they were following WDV, now they are going to follow SLM. On this date, remaining useful life was reassessed at 6 years for all the assets purchased before 1/1/21. Before 1/1/21, whatever assets you have purchased, no, useful life you will take it as 6 years, but no scrap value. And 10 years for the asset purchased on 1/1/2021. What is purchased on 1/1/2021? We are taking useful life as 10 years. Other assets we are taking useful life as 6 years. Calculate the difference in depreciation. Now, understand this. When are we changing? 1/1/21. That means this asset, no problem. We have purchased on 1/1/21 only. But the other 2 assets we have purchased on 1/1/17 and 1/1/18. So we need to get the value on 1/1/21. See, purchased on 1/1/17, purchased on 1/1/18. What are we going to do? We are going to take the cost, subtract depreciation, you will get WDV. Okay. Yeah. You'll take the cost, you'll get subtract depreciation, you'll get WDV. For 17, you will remove the depreciation. 18, you will remove the depreciation. 19, you will remove the depreciation. And 20, you will remove the depreciation. So 4 years for these 2 assets, you have removed depreciation. This asset, there is no depreciation here. Why? Because it was purchased only on 1/1/2018. It was not there. So you have reduced depreciation and you got WDV. When you remove the depreciation, you will get WDV. Correct? Is that right? This asset anymore, which method you are going to follow? Written down value. This asset, which method you are going to follow? So not written value, SLM. Yes, we are going to follow SLM. And for SLM, I need scrap value. They said no scrap value. For SLM, I need useful life. They said useful life is 6 years. So you will do 304,504 divided by 6 years. How much will you get? 50,000? Okay, 50,000. Okay, this is the problem with ICA. They will just show the total amount only. We'll do the calculation. 304,504 divided by 6 years. and 76,666 divided by 6 years. 12,778. And here 304,504 divided by 6, 50751. Correct. This is the depreciation now. This is the depreciation now. Correct. New asset is there, no? What about this new asset? 2 lakh. For that, should we calculate old method, new method and all? No. When did we purchase this? On the date of change only we have purchased it. So what will happen? 2 lakh divided by 10 years. For this, the depreciation will be 20,000. This is 20,000. This is 50,751. And this is 12,778. Total depreciation is 83,529. She didn't know the way. Yeah?
Delivery boy called.
Delivery boy called you. Okay, now understand this. Why is the depreciation showing 96,253? Can you see? See what mistake we have done is we have taken these numbers. This is 2021 end number, no? We have to take these numbers 365,404. Are you getting my point? So this divided by 6 years, this divided by 6 years, and then 20,000. This was the end of 2021. Are you following this? Yes, 365,404 divided by 6 years. Are you getting 60,900? 901. Okay, they've rounded it off. 92,119 divided by 6 years. Are you getting 15,353? 92,119 divided by 6. Yes. And then finally 2 lakh divided by 10 years will be 20,000. So this and this, that is the depreciation. Can you see? No prospective, retrospective effect is given. Prospective effect only. From the date of change you have followed new method. But the problem is if you are following WDV or SLM before, till the date of change you have to calculate under old method so that you get the value. Otherwise you will not get the value only. See, they will ask you depreciation, machinery account only for 2021. When you want only for 2021, you need 2 balance brought down. You need 2 balance brought down. 2 balance brought down is nothing but return on value. How will you get it? You should calculate all the years depreciation and then only you will reach 2 balance brought down. Is it clear? This is a new asset which is purchased. This is depreciation. This is the balance. That's it. Clear? You can get this question. If it comes, it's very easy. Because most errors in depreciation chapter is made when there is a sale. When there is a sale, that time it becomes tricky. You will make mistake in sale situation also. And because of sale, the remaining depreciation also you might make mistake. Are you following this? Yes. Next question. We'll go into any doubt in this one. Anybody has any doubt? Yes. Question number 6 is with provision for depreciation, SM practical question number 1. Very, very nice question. Very, very nice question. Lot of people like this question very much. SM practical question number 1. Now, why lot of people like this question, I'll tell you. That is because, first, they have read this question. It has started in India and ended in Pakistan, so you have lost interest already. And another thing is, when you go to the solutions of the institute, they have not shown calculations properly for everything. So suddenly, things are coming clubbed, so you are in trouble. Okay? So, wherever calculations are required, we'll do the calculations and then you will check. Now, understand this. It's a very important question. Because whatever peak of trouble they can cause, they have already caused in this. They cannot cause more trouble than this. Now, understand this. A firm's plant and machinery account as at 31st December 2021 and corresponding depreciation provision broken down year by year is given. Clear? So they have told each asset how much is the cost, how much is the provision. How much is the cost, how much is the provision. Each asset they have told. Clear? Okay. This asset was purchased in 2005. Cost is 2 lakh. Provision is 2 lakh. What does it mean? That means, no. That is not already sold. It is still there, but it is fully depreciated. Tell me one thing. I purchased one asset in 2010. I thought useful life is 10 years. And I calculated depreciation in the books. 10 years are over in 2020. Will I sell the asset? Will I sell the asset? If it is in good condition, I'll use it, right? Are you getting my point? So just because you see cost is 2 lakhs, depreciation provision is 2 lakhs, you are not going to take it as sold. It is still there with zero value in the books. Book value is zero. Imagine somebody has purchased one Royal Enfield bike in 1986. That would have become zero value in the books long back. But still they are keeping it and still there is a value in the market. Are you getting my point? So book value 0 means already the cost is apportioned. But that doesn't mean that asset is sold. Now, tell me one thing. This asset is there, no? If I sell for 1 rupee also, profit. If I sell it for even 1 rupee, it is profit. Why? Because when I sell, I don't have to calculate depreciation till the date of sale. It is already depreciated fully. Okay, whatever value I get, that is profit. See 2011 asset. Purchased for 3 lakhs. Depreciation is 3 lakhs. So this also has become 0. This also, whatever value I get when I sell, it is profit. 2012 asset. 10 lakh, 9 lakh 50. That means this is not fully depreciated. This is not fully depreciated. 2013 asset, 20 asset and 21 assets are all not fully depreciated. So whenever you sell it, if you sell it, you have to calculate provision till the date, depreciation till the date of sale, and then you have to calculate profit or loss. Is it clear till here? Now, you know what is a game changer? This one. This paragraph, if you don't understand, you will not understand why what is done only. Now see over here. Depreciation is at the rate of 10% per annum on cost. That means it is SL. That is one thing you have to understand. It is company's policy, which is not right, but it is company's policy to assume that all purchases and sales or disposal of plant occurred on 30th June in the relevant year for the purpose of calculating depreciation, irrespective of the precise date on which events occurred. They are like, I purchased the asset on one day, I don't care. I will still take 30th June and calculate depreciation. Clear? Two things you have to understand. If at all depreciation rate is 10%, that means useful life is 10 years. Useful life is 10 years, which will be very crucial for our calculation. Why I took useful life as 10 years? 100% is the value of the asset, right? If you take 10% out of that every year under SLM, SLM means you are going to take 10% of the cost every year. If you take 10% every year, that means useful life is 10 years. Useful life 10 years is very important. Now one more thing. Here what happens? If I purchase, imagine I purchase the asset on 1st January only, but still depreciation will be from 30th June. Imagine I sold the asset on 31st December. Still depreciation will be only till 30th June. Only till 30th June, 6 months. Are you getting my point? So understand this. Understand this. In this question, otherwise you have to take the date and calculate. In this question, understand this. If I purchase an asset, first year, I will have only 6 months depreciation. First year, I will have only 6 months depreciation. And then year 2, year 3, year 4, year 5, year 6, year 7, year 8, year 9, year 10, 2 to 10, I will have full year depreciation. 2 to 10 I will have full year depreciation. And in year 11, I will have 6 months depreciation. Are you following this? In the middle, if you sell, that is different. No. If you sell in the middle, that is different. But if you don't sell, understand this. First year, I will have 6 months depreciation. Then remaining years, I will have 9 months depreciation. Then last year, I will have 6 months depreciation. Can you see? 2 to 10 will be how many years? 9 years. 2 to 10 will be 9 years. Year 1 will be half year. Year 11 will be half year. 9 plus half plus half. How many years useful life? 10 years. Did you understand this? This you should understand for the future calculations. Okay, are you getting my point? This I have done just to make you understand future calculations. Okay, now only 4 things have happened in this question. What are the 4 things? One plant which is purchased, see, one plant is purchased for 15 lakhs. Okay, good. purchase of plant and all, we don't worry much. What we will do, 6 months depreciation will calculate for this plant. Whenever they purchase, we are taking 30th June, no? Okay. Plant that had been bought in 2011 for 1,70,000 was scrapped. Plant that is brought in 2011 is fully depreciated. Plant that is bought in 2011 is fully depreciated. That means, is there any loss? Is there any profit? Nothing. No profit, no loss. No profit or loss. Why? Because it is fully depreciated. Whenever we sell, what we do? Whenever we sell. Okay, what I do? Disposal, yes. Okay, disposal. Only disposal account I am showing you. Okay, what happened in the study material is disposal account is given for all disposals together. So when you see the clubbed value, you don't know from where the numbers are coming. So I am showing one by one. So what is the cost of that asset which is sold? 170. Cost is 170. Plant that had been bought in 2011 for 170 was scrapped. Is that correct? 170. Tell me, what is the entry? You will remove the asset and put it to disposal account. Disposal account debited to asset account 170. This asset, is it fully depreciated? That means provision for depreciation also will be 170 only. So I'll write over here, by provision for depreciation 170. Did I sell it for 1 rupee at least? Did I sell it for 1 rupee at least? No. If I would sell it for 1 rupee, I would write by bank account 1 rupee, which would give me profit. I would write 2 P&L 1 rupee. But this asset is sold for nothing. It is just scrapped. Scrapped means what? We took it and threw it. Is this clear? The first one. Now, second one. Understand the second one. Plant that had been bought in 2012 for 90,000 was sold for 5,000. Plant that had been bought in 2012 for 90,000 is sold for 5,000. Now, understand the asset which is purchased in 2012. How many years are over? 2012, half year. 2012, half year. 2013, 2014, 2015, 2016, 2017. 2018, 2019, 2020, 2021. 9 years. 9 plus half, 9.5 years are over. Because 9.5 years are over, can you see the depreciation? 10 lakh, 9 lakh 50. 10 lakh, 9 lakh 50. 9.5 years are over. Is it clear? 9.5 years are over. Now this year we are selling it. So what should I do? How much did I sell? 90,000 was sold, correct? So first, 90,000 into 10% into 6 by 12 is 4,500, correct? This is depreciation for this year. This is depreciation for this year. Clear? Are you following this? Depreciation till the date of sale. Now, what is the WDV now? WDV on date of sale. What was the cost? 90,000 minus 85,500. What is 85,500? 9.5 years ka depreciation. 9.5 years ka depreciation minus 4,500. What is 4,500? This year's depreciation. So basically WDV on the date of sale is 0. WDV on the date of sale is 0. How did I get 85,500 from pocket? 90,000 into 10% into 9.5 years. How did I get 9.5? I calculated. 2012, half year, 13, 14, 15, 16, 17, 18, 19, 20, 21. 9 years, 9.5 years are over. So, 9.5 years depreciation is 85,500. Half year's depreciation, which we just calculated for this year, is 4,500. Therefore, WDV on the date of sale is 0. What is the sale value? What is the sale value? 5,000. Therefore, can we agree that the profit is 5,000?
Yes.
Profit is 5,000. Is it clear?
Yes, sir.
Okay. Now tell me, how will I enter things into my disposal account? Asset I have to remove and put it to disposal. How much is the asset value? Asset value is 90,000. Provision for depreciation I have to take and put it over here. How much is the provision for depreciation? It was 85,500, but I just made it 90,000. So that also will be 90,000. By selling, I got money. So I'll write by bank 5,000. And I'll write to P&L 5,000. Profit 5,000. Is this clear? Two disposals separately I have shown. Are you clear with this one? Now see the third one. Plant that had been bought in 2013 for 2,40,000 was sold for 15,000. Now you have to tell me, plant that has been bought in 2013, how many years are over? 2013 half, 8.5 years. 2013 half, 2014, 15, 16, 17, 18, 19, 20, 21. 8 years. 8 years plus half year, 8.5 years are over. Okay, keep that in mind. 8.5 years are over. Correct? Now, depreciation always we have to calculate till date of sale. Date of sale, how much we are taking? 6 months, because 30th June only always. What is the cost of the asset which is sold? 2,40,000. So see this, 2,40,000 into 10% into 6 by 12.
12,000.
Is it 12,000? Yes. Now what we have to do? WDV on date of sale. What was the cost of this asset? 2,40,000 minus. How many years were over when we calculated? 8.5 years. 8.5 years. So that is basically 2,40,000 into 10% into 8.5 years. Value
2,04,000.
2,04,000. Did you just calculate depreciation for half year? Yes, that is 12,000. That gives you WDV of, how did I put directly 24,000? You were calculating, but I put 24,000. How? 8.5 years were over. Half year we just calculated. That means 9 years are over. So how many years should be remaining? 1 year. 2,40,000. 1 year depreciation is 24,000. Are you getting this?
Yes,
Is it clear? Yes. What is the sale value? Sale value is 15,000. If I sell 24,000 ka asset at 15,000, I will have a huge loss. Loss. Is it clear? Now how will I record this in my disposal account? How will I record this? First I will write to asset, right? Cost of the asset. What is the cost of the asset? 2,40,000. Then I will write by provision for depreciation. What is the total depreciation on this? 2,16,000. How? 2,04,000 and 12,000. 2,16,000. And when I sold, what I got? I got 15,000. Correct? And what is the profit or loss? Loss 9,000. Is this clear? These are the three disposals done. These are the three disposals done. Now, whenever there is disposal, no, not only disposal that causes trouble. What causes trouble is to calculate depreciation at end of the year. We have to calculate depreciation at the end of the year. Are you following this? Because assets went, that we did. But assets which are still there, for that we have to calculate. Did we purchase a new asset during this year? Did we purchase a new asset during this year? Yes. First purchase of plant amounted to 15 lakhs. So new asset, no problem. We will do it directly. 15 lakh into 10% into 6 by 12. Why? Purchase is also taken as 30th June. Yes, value 75,000. Is it clear till here? Okay. Now, what about old assets?
10 years.
What about old assets? One by one. 2005 asset, nil. You don't have to calculate depreciation only because it is already gone, zero. 2011 asset, we don't have to worry. Out of the 2011 asset, some value is gone, but still remaining value is also zero only. 2012 asset. 2012 asset. Wait. Before you tell 50,000, 2012 asset, 10 lakh asset. Out of the 10 lakh is not there. How much did we sell? 90,000 is sold. Correct? So 10 lakh minus 90,000 will be basically 9,10,000. Correct? You know what is the mistake you can make? Into 10% and stopping over there. Into 10% and stopping over there. Into 6 by 12. Why? Did I use the asset for full year? Yes. What? No. Did I use the asset for full year? Yes. These are all the old assets which are remaining. Did I use the asset for full year? Yes. Will I calculate depreciation for full year? No. Why? Because the depreciation that was remaining only was for half year. Already 9.5 years depreciation was done. How much was remaining? Only half year. So how can I calculate for full year when only half year's value is remaining? Are you getting my point? This asset was purchased in 2012. 2012 half year. 13, 14, 15, 16, 17, 18, 19, 20, 21. 9 years. 9.5 years done. In 2022, even if you use the asset for full year, depreciation you can calculate only for half year. Are you getting my point? Depreciation you can calculate only for half year. There, that is why I did 6 by 12. Give me the value. 45,500. Do you remember? Difference was 50,000. 45,500 we calculated. Now, when we sold, remember depreciation was 4,500. 50. It is matching. 2012 asset done. After that, we have 2013 asset. 2013 asset. How much is there? 7 lakhs. Can I calculate depreciation on 7 lakhs? No, because out of the 2013 asset, one asset of 2 lakh 40 is sold. Correct? So 7 lakh minus 2 lakh 40,000 into 10%. Should I do 6 by 12 now? Should I do 6 by 12 for this one? No. Why? 2013 asset, 8.5 years were over. So this year, I can use it for full year because 9.5 years, it will only will be completed. 10 years won't be completed. Are you getting this? 2012 assets, 9.5 years were already over. So I can calculate depreciation only for half year. 2013 asset, 8.5 years were over. So I can calculate depreciation for the year. For the year is only full year. Yes, value. 46,000. Now, what about 2020 asset? Any problem? 2020 asset, we did not sell. It is there for the entire year. Can we take 5 lakh into 10%? 50,000. And 2021 asset. What should I do with the 2021 asset? 3 lakh into 10%, 30,000. Can you calculate this depreciation? 45,500 plus 46,000 plus 50,000 plus 30,000. 1,71,500. This is the depreciation on old assets plus 75,000 when we add.
Here we will be taking entire for 1 year.
Which one?
For the 20 and 21 will be taken for 1 year.
20 and 21, no. Even 2013 also we took 1 year.
But they are closing the books in December itself.
Yes, that is their 1 year. They are closing the books in December. They started the books in January. They are closing the books in December, but they started the books in January. So 1 year only it is. Why I took 6 months over here is, only reason is, this asset 9.5 years are already over. So you can depreciate it only for half year. All these assets, see 2005 asset, 11 asset, 12 asset, 13 asset, 20 asset, 21 assets. This one, this year we have used fully. Full year we have used. So we should calculate full year depreciation. These two I cannot calculate because they are already zero value. They have already become zero. This one, why I am taking 6 months? Because 9.5 years are over. I can only calculate for half year. This one, 8.5 years were over. So I can calculate for full year. This and this also I can calculate for full year. Is it clear? Yes. So your total depreciation will be 2,46,500 on the assets at the end of the year. Now, let's try to look into our study material. Okay. Can you see what they have done? Disposal all together. All the disposals together. What? All the disposals together. So what happens when you see this? No, you suddenly become confused. When you see this, you suddenly become confused. Now, if you, to make you understand, can you see they have put all the depreciations together?
Yes, sir.
So we don't know from where 263 is coming. All depreciations together. Now look into the solution. 246,500 is the depreciation. The depreciation on the new asset. 75,000. Okay, 246,500 is at the end of the year. Take 246,500 in your calculator. You will get 246,500. That is the depreciation we have charged. But when we sold a couple of assets, we calculated depreciation till the date of sale. Did we take 4,500 here? Add 4,500. Correct? Then when we sold one more asset, did we calculate depreciation till the date of sale? Yes. Add 12,000. What is the total you are getting? 2,63,000. Can you see your study material? Depreciation that they have charged is 263. Provision for depreciation account, they have put 263. This 263 comprises of depreciation on asset sold 2 times and depreciation on new asset and depreciation on all the old assets. That is why it's a little tough to understand this solution, and that's why it makes it tricky. Okay, then you got this depreciation. Can you see over here in the disposal account, they have put everything. Total cost. Okay, total cost 5 lakh. Can you see? How are we getting 5 lakh? First asset was sold for, cost was 90,000. Sorry, what is it? Not 90. First asset, it was 170, 90 and 240. Can you total all that? It is 5 lakhs only.
Yes, sir.
5 lakh only. Correct. You can see the disposal account. See, we wrote 2 asset, 2 asset, 2 asset 3 times. Is it 5 lakh? Yes. They just clubbed and put the total amount. And provision for depreciation, we wrote by provision and by provision. Can you please total this also? 170, 90 and 2,16,000. 2,81, no? 4,76,000. Can you see they took the total and put into disposal account 4,76,000. And in our disposal account, can you see 2 times you received money? By bank, 2 times 20,000. Total amount 20,000. And we once got profit and once we got loss. So net loss is what? 4,000. 4,000. Like this they have prepared disposal account without showing any workings. So you don't know from where these numbers are coming. Are you getting my point? That is why it becomes tricky or troublesome question. And obviously that half year, 9 years, 9.5 years, 8.5 years, that also makes it more trickier. Yes. Is this clear now? They might not give the entire question, but any portion of this question can be given. So the trickiness will still be there. Any doubts with this? Did you understand? Yes. I'll share the solution what we have done, disposal account. So you can keep that solution whenever you look at the study material for revision. Okay.
So what happens when we define open a provision account but open a disposal account? Like there is no provision account maintained. Directly disposal. There is an illustration right there.
Yeah. Then what happens? The WDV what is there? You transfer it to disposal account, put the money here, profit or loss you transfer to P&L.
So the depreciation will be in the mesh area.
Depreciation is already removed, right? Now, for example, 100 rupees ka asset, if you have removed 20 rupees, 80 rupees will be there in asset account. Transfer that 80 to disposal account. You got 60 rupees. Put that 60 to disposal account. Profit or loss you transfer to P&L. You can do that. Sir, how 9.5 years? Okay, you only understood. Okay. 11:47 she had asked. Then she only understood. Yes, is it clear? Okay, they have asked you all 3, but I showed you only disposal. Plant and machinery account is there, depreciation account is there, and also sale or disposal of plant and machinery is also there. Okay. Next question. Question number 7. Depreciation without provision. This was asked in June 2022 for 10 marks. Question number 2A. June 2022 they have asked. So let's try to get that. Question number 2A. Yes, this is 2A. See, when it comes to exam, how nicely every calculation they are showing. So you can't think that study material they did all club and we'll do like that only. Then we have to go to club itself. Yes, let's go further. June 2022 question. Why I have picked this question is because this question comprises of lot of things. This is without provision. Next we will do one more question which is with provision. That is June 2023. Clear? I think after that we are going into inventories. See, inventories I am not solving too many questions. What I am solving, practical question 4, 3, 2, 1. I know all your troubles are sitting in those 4 practical questions only. That will do. Whatever is asked in that, we will do it. Trading account, we should be able to do it. That is not a problem. But the problem is in practical question, some things are added, some mistakes are also there in the practical question. That's why it becomes more irritating. And the language is also there. And some Hanuman question and all is there over there. Yes, question number 7. Yes. Let's continue. Question number 7. Depreciation without provision for depreciation. Okay, how do we know that? Because end of the question they told prepare machinery account for the year ended 31st March 2021. They only asked machinery account. Also the same rate of depreciation as in the past and calculate depreciation to the nearest multiple of rupee. Why did they tell that? In the exam hall, don't sit and fight over paise. Round it off. Also show all the necessary working notes. They are going against their rule. In the exam, they are like, you follow correct rule. Show all the working notes. Is it clear? Now, understand this. For which year they asked you to prepare? 31st March 2021. Correct? Machinery account of a factory showed a balance of 95 lakhs on 1st April 2020. Where will you show it? Opening balance, to balance or by balance? To balance. Can you see to balance brought down 95 lakhs? Clear? Okay. Books of accounts of the factory are closed on 31st March every year. So 1st April to 31st March. Now depreciation is written off at 10% per annum under diminishing balance method. Which method is this? WDV method. Okay. On 1st September 2020, a new machine was acquired at a cost of 14 lakh and 44,600 was incurred on the same day as installation charges for erecting the machine. Should I take 14 lakhs or 44,600? Should I take 14 lakhs or 44,600? We should take both. Are you getting my point? Yes. Why? Capital and revenue expenditure is one small unit. Clear? When I purchase a machinery, whatever expenses incurred on that day to make that asset ready, that also will be added. So what is the total cost of the asset? 14 lakh 44,600. What will be the entry when you purchase the asset? Machinery account debited to bank account. Can you see 14 lakh 44,600 here? Okay. Purchase will not cost trouble. Sale only will cost trouble. Correct? Now, let's hope there is no sale in this question. Okay, let's hope there is no sale in this question. On 1st September 2020, machine which had cost 21,87,000 on 1st April was sold for 3,75,000. Everything that we hope in life will not come true. Correct? Especially with ICA. What we expect, that only they don't give. Yes, on 1st September 2020, machinery which had cost 21,87,000 is sold. But this was purchased on 1st April 2018. 1st April 2018 it is purchased. So what we should do? From 1st April 2018 till today, we have to calculate depreciation so that we can calculate depreciation from the starting of the year till the date of sale. Are you getting my point? Now, some people will be like, in the exam, 21,87,000, sir, what circus you are doing? 21,87,000 I will take and I will multiply into 10%. It is sold on 1st September. So April, May, June, July, August into 5 by 12 I will do. Done. Done. Are you getting my point? Done if this was SLM. If it was SLM, it would have been damn simple. But it is WDV. So for us to calculate depreciation for 5 months, we need the WDV at the starting of the year. Then people are like, sir, already WDV is given here, 95 lakhs. But that is for all the assets. So what we should do? We have no other option, but we have to make a working note. See here, cost on 1/4/2018. Remove the depreciation, you will get WDV of 31st March 2019. Then remove the depreciation again, you will get WDV of 31st March 2020. Now you can calculate for 5 months. Now you can calculate for 5 months. Is this clear? It was purchased on 1/4/2018. You have to remove the depreciation of 18/19, 19/20. Then you will get the situation over here. And the asset is sold on 1st September 2020. In between COVID, they have sold the asset. Okay. Maybe they were having shortage. So they have 73,811. Is this clear? What do I call this usually? Depreciation till date of sale. When I remove that, I'll get WDV on the date of sale. What is the sale value? 21,87,000. They sold for 3,75,000. 3,75,000 is the sale value. Can we have profit? No, we are having a huge loss. We are having a huge loss. 13,22,659. Is this calculation clear? Is it calculation clear? Did we understand why we can't do 21,87,000 into 10% into 5 by 12? Because it is WDV method. Clear? Now, when we have depreciation till the date of sale, should we calculate, should we pass an entry for that? Yes. What will be the entry? Depreciation account debited to asset account. Can you see over here? By depreciation 73,811. Then what we do? When we sell, we get money. Bank account debited to asset account. Can you see 375? Can you see 375? Then what we do? It is a loss. Loss should be debited to P&L. So it will be credited over here. 13,22,659. Is this clear? Sorted? Okay. You are happy in the exam telling that one sale was there. I have sorted it. Done. Another machine which had cost was scrapped. Whenever you see the word scrapped, you can think like this. It is sold for zero value. It is sold for zero value. It is scrapped means it is sold for zero value. Correct? But when was it purchased? 1st April 2019. So here also we have to calculate depreciation for 5 months. But to calculate depreciation for 5 months, we need the WDV. One more working note. 1/4/2019 it was purchased. Depreciation for 2019-20. Then you are calculating depreciation for 5 months. Is it clear? Is it clear? That time you will get the WDV on the date. We sold it for zero. That's why entire amount is lost. Entire amount is lost. For this depreciation till the date of scrapping the machine, what is the entry? Yes. What is the entry? Depreciation account debited to asset account. No disposal here. 81,938. Then I am selling for how much? Zero. So bank account entry is not there. So entire amount is loss. 18,84,562. By loss on scrapping the machine, you can write by P&L account. Is it clear? This is it. When we have sale, one more problem gets arised. What is that? We have to calculate depreciation on the remaining assets. Now remaining asset, there people will be like, sir, damn easy it is. I will tell you. How is it? 95 lakhs you had, no. From that, you remove 21,87,000. Then you will remove 21,85,000. Clear? On this, I will calculate remaining value. I will calculate full depreciation. Is that right? No. Why? This is the cost. This is the cost. Now, IC also will remove. Yes. Now, where is that? Here. Did I tell you that time that one calculation will be very important for us? This one. See, when we have a sale, this calculation becomes very important. What we are supposed to do? Total WDV at the beginning of the year minus WDV of assets sold at the beginning of the year. That time only you will get the WDV of the unsold assets. On that you can calculate depreciation. If I do this, this is total WDV at the beginning of the year minus cost of the asset minus cost of the asset. I don't want that. I want WDV of the assets at the beginning of the year. Now tell me 95 lakhs is the value, right? 95 lakhs. Correct? Now I am showing you the calculation of the first asset which is sold. Can you tell me which number I should pick now?
17,71,470.
Not 16,97,659. No, why? That is also WDV, but that is WDV on the date of sale. Is this one of the mistakes which you are doing? No. Some of you would have done it, no, in hurry. Oh, WDV, yes. Correct. We have to take WDV which? Opening date ka WDV. So 17,71,470. 17,71,470. One more asset is sold for zero value. Its working notice here. How much should I take? Should I take 18,84,562 or 19,66,500?
1966.
Starting of the year, 1966. Find it. Can you give me this value?
62,030.
030.
Yes, sir.
030. 57,62,030. Is that the WDV of the remaining assets? Correct. Can you calculate 10% of that? 5,76,203. That is the depreciation on the balance assets. But there is also a new asset. There is also a new asset, no, which you purchased on 1/9. For this asset, how much depreciation we have to calculate? How many months? How many months? 7 months. Because from 1st September, whenever we say September, it is not 6 months. September, October, November, December, January, February, March. Correct? 7 months. Because there it was 5 months, here it has to be 7 months. Now, 14,44,600 into 10% into 7 by 12. Tell me. 84,268. This is the depreciation on the new machine. And here we have calculated depreciation on the old machine. 576,203 was the depreciation on the old machine. 576,203. Is that correct? This is WDV. On this you have to apply 10%. You have to apply 10%. That is WDV. 576,203. Is that correct? Plus 84,268. Correct? 660, 471 is the depreciation for the balance assets. That is balance assets plus new asset. See, they have shown working note for that also. Don't worry. See, total WDV. WDV of the assets sold starting of the year. WDV of the assets scrapped starting of the year. You will get remaining WDV. On that, calculate 12 months depreciation. New asset, calculate 7 months depreciation. This is your answer. Is this clear? Are you following this? So, what you should do whenever you have written down value method and you are doing all this, just remember one thing. If at all you have to calculate depreciation for old assets at the end of the year, WDV at the starting of the year minus WDV of assets sold and assets scrapped at the starting of the year. That time you will get the remaining WDV. On that you apply the depreciation. Is it clear? Yes. I don't think there should be any problem apart from that. After that you are just going to calculate balance carried down. Okay, this is one of the questions. One more question we have to finish before we take break for lunch. Okay, that is the question with provision for depreciation. With provision for depreciation. So June 2022 is done. This one was asked in June 2023. Where are you? June 2023. Come here. Yes. Are you ready? But we will still continue. Yes. June 2023. June 2023 question is asked, and this is a question 2A, 10 marks. Two A, where are you? Yes, here it is. 2A. Clear? Now, understand this. Following balances appear in the books of Dheeraj Enterprises. Last question before lunch break. Focus, full focus. Okay? And have light lunch so that we'll have focus even in the afternoon. Don't have heavy lunch, then we'll be, we what? Sir, you go on talking whatever you want. We will watch it later. And here we will sleep. Okay? I will be in trouble, so have light lunch. The following balances appear in the books of Dheeraj Enterprises. Clear? Machinery account as on 1/4/2021, 12 lakhs. Okay. They have asked you to prepare everything for the year ended 31st March 2022. Machinery account will be at cost only because we have provision for depreciation. So go to the machinery account and write which balance brought down, 2 or by 2. Did you find 12 lakhs? 2 balance brought down. Clear? There is also provision for depreciation 465. By balance brought down, provision is a liability, remember? By balance brought down 4,65,000. Is this clear? Yes. 2 things sorted. Next. On 1st October 2021. Starting of the year, middle of the year, somewhere. Middle of the year, correct? Why? Because they wrote 1/4/2021, we know that they are following financial year. So on 1st October 2021, machinery which was purchased on 1st April 2018. Oh, once upon a time again story. When was it purchased? 2018 for 2 lakhs, was sold for 1,10,000 on the same date that we don't want to see now. Okay, when was it purchased? 2018. We have to search for one thing. Firm has been charging depreciation at the rate of 10% on written down value. SLM means what you would do? Directly on that 2 lakh only you would calculate depreciation and close the story. Now, working notes are obviously prepared. Original cost 2 lakhs. 2018. We are in which year? 2021, 18, 19, 19, 20, 2021. 3 years we have to calculate. Can you see 18, 19, 20%, 20,000, 19, 20, 18,000, and then we have 16,200. And this year we have sold it on 1st October. Is that correct? So 6 months. 6 months on what? On the WDV. Don't forget. Don't calculate on 2 lakh, on WDV. Use your calculator. 145,800 into 6 by 12 into 10%. Are you getting 7290? Are you getting 7290? Yes. This is the total depreciation till today. Total depreciation. So this is the WDV on the date of sale. Is it the WDV on the date of sale? Yes. What is the sale value? 110 given in the question. Can you see? Sold for 1,10,000. So sale value is 1,10,000. Are you selling it higher value or lower value? Lower value. Obviously, you're going to get loss on sale. You're going to get loss on sale. Now, from here, tell me the order what I have to follow. Whenever it is sold, first thing is depreciation till the date of sale. What is the depreciation till the date of sale? Shabash. 61,490 is from all the years. We are calculating only this year depreciation till the date of sale. This depreciation is already charged in that year. This is already done. This is already done. Only this we are supposed to do. 7290, not 61,490. Depreciation this year till the date of sale is 7290. Entry. Depreciation account debited to provision for depreciation. Go to provision for depreciation. Can you see 7290 here? Done. Now what we should do? Remove the cost, put it to disposal. Remove the cost of the asset and put it to disposal. What is the cost of the asset? What is the cost of the asset? 2 lakhs entry. Disposal account debited to asset account. See disposal account. To machinery. See machinery account. By disposal. Done. Yes. What next step? What we are supposed to do? Total provision. Total provision we have to remove and put it to disposal account. What is the number? 61,490. Now it is 61,490. From starting, whatever depreciation we have charged, 61,490, remove it and put it to disposal account. Entry. Provision for depreciation account debited to disposal account. Can you see 61,490 here? Can you see 61,490 from provision for depreciation? Yes. Now what you are supposed to do? Whatever money you get, you are supposed to put it to disposal account. Entry. Bank account debited to disposal account. 1,10,000. Profit and loss. Loss should be debited to P&L. So credited here by P&L. Can you see disposal account closed? Done, done or done? Only one sale. That's why. Okay. Is this clear? Now they have told you something else. On the same day, another machinery was purchased for 4,80,000. Good. No problem. Purchase and all, we are not bothered only. What is the entry for purchase? We should be bothered. Machinery account debited to bank account. 4 lakh, sorry, where is it? Here. 4,80,000. Can you see machinery account debited to bank 4,80,000? Do we have any other transaction in the question? No. We have to calculate depreciation at the end of the year. But here, understand this thing. Machinery account, nothing, no transaction. Why? Because depreciation is calculated in provision for depreciation ledger. So here you are just going to put buy balance carried on and end the story. Clear? Now, do we have to calculate depreciation for the remaining assets? Do we have to calculate for remaining asset? Yes. Is that correct? Yes. Now, how much is the remaining assets? First, new asset we know. New asset is 4,80,000 into 10% into 6 divided by 12. 24,000. Old assets, what we will do? Same logic. WDV minus WDV. WDV minus WDV. What is the WDV of the two assets at the starting of the year? WDV at the beginning is 12 lakhs is the cost minus provision for depreciation is 465 minus 465 will give you 7,35,000. Do you agree that this is the WDV of all the assets at the beginning of the year? Yes. From this, what you will remove? WDV of asset sold. I'll give you the working note. Tell me the number. 145,800. Don't take 138,510. 138,510 is on the date of sale. After removing 6 months depreciation of this year. Starting of the year, WDV was 145,800. Remove 145,800. 589, 200 into 10%, 58,920. 58,920. That plus this, what is the total depreciation? 82,920. Entry. Depreciation account debited to provision for depreciation account. 82,920. Is it clear? Now what you will do? Provision for depreciation, balance carried down. End of story. Is this clear? So very important thing, when you are calculating depreciation for the old remaining assets, WDV of all the assets at the beginning of the year minus WDV of the assets sold at the beginning of the year. That will give you WDV of the assets, remaining assets. On that you calculate depreciation. New asset is purchased, calculate depreciation. Is it clear? Yes, I think it would have revised all the concepts of depreciation. That is your question number 8. With that we are done with depreciation. Next chapter which we are going into will be inventories post lunch session. Yes, take a break, come back at 1:30. Yes, 1 hour lunch break. Okay, welcome back to the afternoon session. Shh. The target for the afternoon session is clear. Inventory, bills of exchange, final account. That's it. When we finish that, we go. Now, let's start with inventory. Rough weightage 4 to 5 marks, sometimes 8 marks. Asked from inventory. If you see September attempt, they have asked exact ditto question which was there in the study material. Exact same question they have asked. Okay, now we'll discuss inventories quickly. What is inventory? What is inventory? Stock. It is not closing stock. It is just stock. If it is at the end of the year, it is closing stock. If it is at the beginning of the year, it is opening stock. Yes, stock can be opening stock, that is stock leftover from previous year, and closing stock, that is stock leftover of current year. Clear? We have 3 types: raw material, work in progress, finished goods. What is raw material? Raw material. No. It is material used in production. Unfinished or semi-finished is called as work in progress. It is not you talking, the Hyderabadi combo. Yes. Now, finished goods. What are finished goods? Shh. You are delaying the end time by on your own. Okay? Yes. So, what is finished goods? Goods which are ready for sale, but we have not sold them. Unsold goods are finished goods. Semi-finished goods are work in progress. And raw material which you have purchased, which you can use in your production, that is raw material. Clear? All 3 are finished goods. All 3 are inventory only. Now, tell me one thing. If I am doing trading, will I have raw material? Will I have work in progress? No. Remember this in final accounts. If I am doing manufacturing, then I will have raw material, work in progress, and finished goods. Is this clear? Okay. Valuation of inventory will always be at cost or net realizable value, whichever is less. What is cost basically? What you have spent. What will you spend for? Cost of purchase. Then only purchase is not enough. You have to convert it into finished goods. So cost of conversion. Cost of conversion. If you are purchasing some cocoa and you want to make chocolate, this is cost of purchase. Then you will add lot of things to make chocolate. That is your cost of conversion. Clear? This will be a cost of the total cost of goods. NRV means what? Net realizable value. That means today if I take it to market, what can I get? Estimated selling price minus estimated cost of conversion minus estimated selling expense. This will be your NRV. There are no questions on NRV computation. Okay, but you never know. It is there in your syllabus, so you never know. Okay, now methods. First thing, FIFO method. What is FIFO method? First in, first out. So if at all I want to issue, when I want to issue goods, what will I do? The one which was purchased very beginning, that will be issued. So closing stock is usually the last in. Whatever comes last will remain. LIFO method is what? Last in, first out. It's eliminated. They don't follow LIFO method anymore, but just for your understanding. Last in, first out means whatever comes last will be going out first. So closing stock will be the first in. If closing stock is the first in, that means first in will be spoilt only. That is why people stopped using last in, first out. Imagine everything that came last, you keep selling. What came first, you keep like that only. That will get expired. For things like shoes and all, it will not make a difference. Last in, first out. For food items, this will create a trouble. Laddu. You are the laddu? What?
No. I got your mother. I changed. More than reducing.
He is laddu. Yes. Average price method. Average price method. Inventory will always be valued at average price. How to calculate average price? Total prices divided by number of prices. So if I have purchased first day, I have purchased for 20, second day for 30 and fourth day for 40. So how will I calculate average price? 20 plus 30 plus 40, the whole thing divided by 3. This is average price. You only focus on price. Weighted average price, how will I calculate? I need the quantity also. So here what I will do? I purchase 2 units at the rate of 20. So 2 into 20 will be 40. I purchase 3 units at the rate of 10. So 3 into 10 will be 30. I purchase 5 units at the rate of 20. So 5 into 20 will be 100. 100. So what will I do? 170 divided by number of units. 2 plus 3 plus 5, 10. So weighted average price will be 70. I hope you know the difference now. If it was average price, what we would have done? 20 plus 10 plus 20 divided by 3. Only prices will follow. If it is weighted average price, what we will do? Price into quantity will give you value. Total value divided by total quantity. Total value divided by total quantity. Is this clear? Yes. Cost of goods sold and gross profit computation. You can use formula as well as trading account. First we'll discuss the trading account. Opening stock. What is opening stock? Last year's closing stock. Purchases, total quantity into whatever we have paid. Sales. Okay. And what is closing stock? This year's remaining goods. Automatically you can get cost of goods sold over here. How? Opening stock plus purchases plus direct expenses minus closing stock is nothing but your cost of goods sold. Opening stock plus purchases plus direct expenses minus closing stock is your cost of goods sold. If you are using formulas, what is the formula for gross profit? Sales minus cost of goods sold. Gross profit means what? What is remaining? Correct? So what you sold minus what you spent. So basically what is your gross profit? Clear? This is not total cost. This is cost of goods sold. Clear? How to get cost of goods sold formula? Opening stock plus purchases plus direct expenses minus closing stock. Clear? This is your cost of goods sold, and this portion of the formula can be called cost of goods available for sale. Is this clear? Cost of goods available for sale. Now, if I have numbers in front of me, cost of goods sold is, okay, that is just example which we discussed. Now tell me one thing. If I tell you I have to find cost of goods sold, opening stock plus purchases plus direct expenses minus closing stock, correct? In this is not given. This is also not given. Which one can you find out now? Closing stock is also not given. Cost of goods sold is also not given. So in such cases, you can use cost of goods sold, this formula. Cost of goods sold is equal to sales minus gross profit. How will I get the gross profit? Gross profit ratio should be found out, or it will be given in the question. Sales minus gross profit will give you cost of goods sold. Now one missing figure will be closing stock. You will be able to find the closing stock. These formulas are very important in the kind of questions that are asked. Okay, formulas are very important. Cost of goods sold, how to find out? Sales, how to find out? Is there any alternative way to find the same thing? That you have to find. Clear? So cost of goods sold, you have one formula here, and cost of goods sold, you have one more formula over here. Whichever is convenient and whichever information is available, that is the one you are going to follow. Next. This is, this we usually do it in regular class, but I hope you know it in marathon. Gross profit percentage, what is given, what is required, you have to be careful. Gross profit percentage on cost, if it is 20%, then on sales it will be 20 by 120. And on cost, if it is 25%, on sales it will be 25 by 125. I hope you are aware of this, because they will not give you what percentage you need. Now, which percentage you need actually, gross profit? On cost you need or on sales you need? On cost you need or on sales you need? On cost or on sales? We don't know. Depends on the question. If cost is given in the question and they ask you to find out, then you need gross profit percentage on cost. Then in such cases, in the question, they might give gross profit percentage on sales. Now you have to convert it into gross profit percentage on cost, and then you have to calculate. We cannot decide which one is required based on the question. If cost is given, I need gross profit percentage on cost. If sales is given, then I need gross profit percentage on sales. Clear? Now, if gross profit percentage on cost is 50%, then it becomes 50 by 150. So you know how to go from cost to sales, how to go from sales to cost. If they give gross profit percentage on sales 20%, then on cost it will be 20 by 80. You're going backwards. 20 by 80. If it is 50% on sales, then it will be 50 by 50. 50 by 50. How from 100 you remove 20 and you got 20 by 80? Same way, from 100 you're going to remove 50 and you're going to get 50 by 50. Basically 100%. 50 by 50 is 100%. Gross profit percentage on sales 25%. Then on cost it will be 25 by 75, which is 33.33%. Clear? Yes. Inventory maintenance system. Inventory maintenance system. Have you heard of periodic inventory system, perpetual inventory system? What is periodic inventory system? Whenever I want to know the closing stock, I don't have books and all. Whenever I want to know the closing stock, I'll go to the godown, pull the shutter and start counting. Now your question should be, sir, why should you pull the shutter? If you pull the shutter, that day's business is gone. If I pull the shutter, nobody can come that day. Customers can't come. If I'm selling from godown only, I'll take from pocket. Gold and all sometimes we'll keep at home also. But other things, we are talking about normal things. Gold and all, extra gold, if income tax people come, problem. So you'll keep it at home. That means that he has a lot of gold which is hidden. After South Africa, he only. Next, gold reserves. Mandya. Likit's gold reserves. He's from Mandya. See that fellow, small guy, sitting at that. Yes, so if you have to purchase any gold and all, he will give it to you at very concessional rate. Okay, usually he will tell no making charges, but then somewhere they will recover. Correct, no? Making charges, no wastage. Nothing. Then why should we come to you? A discounted rate. Discounted rate in gold, higher making charges. Balancing, how you are doing BRS that time, like this. Yes, so periodic inventory system means usually this kind of method is followed by people who are having not too many staff. If one person, only owner is coming every day and working, then he cannot appoint one more guy. Okay, sometimes he will appoint his son. Now, periodic inventory system. That time, what is the connection? We know that he's appointing son. But what is the connection about your marital status?
You saw me and you I thought you're saying to me.
No. Not your son. Yes. Okay. Inventory maintenance system. Understand this periodic inventory system, what happens? Now, my question is, why should you close the shop and then count? If you keep the shop open and you count, transactions will keep happening, goods will keep coming in, goods will keep going out, and your count will never be true. Are you getting my point? Imagine your go down is like this, all these things are kept over here, you started counting from here, correct? And somebody has taken one box from here and gone after you counted. So you will think that it is there, but those boxes are gone. Correct? So periodic inventory system, always you have to close the shop and count. Now, what is the drawback? Goods not found are considered as sales. When I am counting, I found 20 boxes. I know I had purchased 100 boxes. That means 80 boxes I am considering it as sale. Even though 3-4 boxes would have been eaten by rat. Still, I will think it is sale. That means abnormal loss. Or somebody would have stolen. The worker would have taken 2 boxes and gone home. Correct? We would have never known. Correct? This is considered as sale. That is the drawback. Stock count can't be found whenever we want. Whenever we want, can I find the closing stock? No, because whenever I want, if I want closing stock, I have to close the shop and start counting. Correct? That is one drawback. Then business loss on counting day. On the day we are counting, that day we cannot have business. So we lose some turnover on that particular day. This is the drawback. Still, why people are doing it? Because the other method is more expensive. Other method is what? Perpetual inventory system. Perpetual inventory system. What happens over here? A person is appointed just to record the movement of stock. So imagine, that is consignment. Imagine you have a shop over here. If it is periodic inventory system, you close the door and then you start counting. If it is perpetual inventory system, you appoint one guy over here. Powerful guy you need, at the door. So he's built. You thought what? Vada pav is kept on his hands. No. It is his muscles. Okay, Andre Russell is standing at the door. So now you have this person. What this person will do? Only thing that person will do is count. Goods are coming in. He'll be like, show me how much is there. He'll write 5 boxes input. Goods are going out. He'll stop. He'll count 2 boxes output. This is what happens in perpetual inventory system. Is it good? Whenever I want, I can know the closing stock. But drawback is expensive. I have to pay that fellow's salary. And then books and actual may have mismatch. He is standing at the door. Inside what happens? From the back door, if someone takes something, through the window, if something is stolen, he will not know. No, he will be standing at the door and he'll be looking at the book and be like, this is the closing stock today, 80 boxes. When you go inside and count, there might be only 75 boxes. Are you getting my point? So whichever method you follow, it is always better for a business every year to do stock taking. What is stock taking? Counting stock. If you have done perpetual inventory also, count stock to check whether books and actuals are matching. Clear? This is going to be one of your ways to make money after you complete your CA. They will appoint chartered accountants just for stock taking. No work at all. Obviously, chartered accountants won't go. They'll send their articles. You know what we have to do in stock taking when we are doing articleship? One paper will be given. Okay, 20 items are there in that list. You have to hold that paper like this and stand. The staff of the business, they'll only come. They'll climb up and they'll count. They're like, sir, this 20 boxes are there. You see your paper. Is it showing 20 boxes? Okay, tick. Huh? Because the words of a chartered accountant is trusted. That's why. Huh? Who? Owner will spend because he wants to know whether his workers are loyal or not. Owner will spend. Okay. Now, chartered accountant, obviously, he will not go. He'll send articles. Now, he'll climb again and he'll climb and he'll tell, sir, this product, 8 boxes are there. In your list, you can see it is written 7. That means it is more over there. Next one, there is shortage. You will just write shortage, excess. You will make a report out of that and give it to the owner. Over. That's it. Finished.
Climb up to count the stock.
Yeah, he'll climb. If obviously he can't ask the article to climb up and count.
Amount of stock will be large,
Yeah, that is why their own staff will come and they'll help us count. We will just be monitoring the process. That's it. If they are having petroleum field and all, you think the article will dive and count and come out? They obviously they have to find a way, right? Article will be gone then. Yes. So this is the situation. Perpetual inventory system. Clear? Now both the systems have drawbacks. Both the systems have drawbacks. I want to discuss consignment, even though consignment is not there in a syllabus. Why? It can impact some questions. Whenever inventory calculation questions are there, it can impact us. Now here we have Chetan, who is the consigner. Okay, who is the consigner? Goods are sent. What is consignment situation? Consigner and consignee means what? If I am the consigner and I am giving goods to you, who is the owner? I am the owner. Consignee is nothing but one agent. Consignee is nothing but agent. So if one consigner sends goods to consignee, consignee's job is to sell it and give the money back to consigner. For this, what will consignee get? He will get commission. He will get commission. Now what's our job? Imagine I am the consigner. You are the consigner. Goods which are sitting over here will also be taken in your closing stock. Are you getting my point? On the balance sheet date, if goods are sitting here, that will also be taken as closing stock. Is this clear? Are you following this? Where are the goods? Mumbai. Correct. Where are you? Bangalore. Correct. Then why are you taking it as closing stock? Even though the goods are sitting here, owner is you only. Is it clear? That is why it will be considered as closing stock. What if you are the consignee and you have 10 boxes sitting here? We don't want to take it as closing stock. We'll have to remove it from closing stock because that will be the closing stock for consigner. Is it clear? Are you following this? So if you are consigner, even if goods are sitting there, take it in your closing stock. Even if you're consignee, even if goods are sitting here, remove it from your closing stock because you are not the owner. Is it clear? Closing stock of consigner is equal to closing stock at own factory plus closing stock at consignee's godown. Does it make sense? What is there in your factory plus what is there in consignee's factory belongs to you itself. That is your closing stock. Okay. On balance sheet date, goods unsold is owner is consigner. Even though it is there, owner is consigner. Sale of books on approval or return basis, we have already discussed. Now one method is there, adjusted selling price method. 2 questions are there in your study material for adjusted selling price method. If at all they ask, they also don't have more data. If at all they ask from adjusted selling price method, they don't have more data. And you know what is the good thing? It is not asked for a very long time. Very long time it is not asked in exams. That means it can be asked, right? They also know you are skipping those 2 questions which are there in the study material. Okay, so do not skip it. So what happens over here? Closing stock will be mentioned in the question at selling price. It will be mentioned in the question at selling price. So what you will do? Closing stock at selling price minus gross profit will give you closing stock at cost. Closing stock at selling price, remove the gross profit from that, it will give you the closing stock at cost. These questions you have to do it on your own. I am not covering it in the marathon. Clear? But do not skip. It's 2 easy questions which are there. If at all they ask for a change. Okay, 4-5 mark questions they are looking for and they found this adjusted selling price method. This can be the one. Okay, that's it. Now we have some easy questions from consignment. Inventory. Some easy questions are there. First question is practical question number 4, which you all love. Practical question number 4, which most of you love. Why we love it? Because we don't know what's happening only. Yes, now we'll try to understand. See, most of the common questions. Sir, can you show that conversion of GP on sales and cost? I'll take screenshot. Which all chapters have been covered up? That means you're coming in the afternoon session only. We have, we have already finished journals for GST journals. We have finished, and we have finished rectification of errors, BRS, and depreciation. Those are the chapters that are already covered. Some of them I've added. This I kept. Practical questions I kept. Yeah. It was asked in September attempt. Yes. That's what I told. September question, they just copy pasted with different numbers. That's it. I will just show that person the screenshot. Yeah, quickly you can take a screenshot of this. No, live classes you can take. I think live classes you can take. Recorded classes when you watch, you can't take screenshot. Because my live online students always take screenshot. Can you please share the slide? Sir, from inventories beginning. Hey, wait. Listen, I'll be sharing the material at the end of the day. Okay, I'll share all the material at the end of the day. Don't take screenshots. You just understand. I'll give this material only. Why do you want to take screenshot? Okay, let's start. Question number 9. Till 8 we have finished. What you have eaten, I don't care, but full focus. Okay. Yes, Chirag, can we continue? Okay, now these are the most common type of questions. What are the common type of questions in inventory? They could not do the closing stock count on 31st March. So they will do it on 15th April. So you have to do reverse calculation. Or they have done it on an earlier date. Then you have to do forward calculation. Clear? Now, physical verification of stock in business was done on 23rd June. When they want actually? 30th June, but they have done it on 23rd June. Value of stock was 48 lakhs. Following transactions took place. Now you are not going backwards, you are going forward. So 23rd June, what was the closing stock value? 48 lakhs. Is it clear? 48 lakhs. Okay. Out of the goods sent on consignment, goods costing 2,40,000 were unsold. Goods were sent on consignment. It is unsold. Whose stock is it? Our stock. So what we will do, unsold stock of goods sent on consignment, add. Goods are sitting there. It is not sitting here. It is sitting there. But it's still our stock only. Is it clear? Next. Purchase of 4 lakhs were made, out of which goods worth rupees 1,60,000 were delivered on 5th July. Now see the fun part. How much you purchased? 4 lakh. How much did you receive? You received only 2,40,000. 1,60,000 you did not receive only. You have received it on 5th July. But what will be added? Full 4 lakh will be added. Why? They have asked you the value of stock. You know, once upon a time you had one subject called as law. Yes. In that there is an act called as Sale of Goods Act. There, even if goods are not delivered, but if invoice is raised, ownership is transferred. Clear? So closing stock on 30th June, you have purchased the goods. It might not be delivered to you. Imagine the goods are in transit. Whose closing stock is it now? Your closing stock only. So can you see 240, that is purchases, and goods in transit, both are added. Basically this is 4 lakhs. Is that part clear? Why we have to add both? One has reached your go down, so it is your closing stock. Another is on the way to reaching your go down, that is also your closing stock only. Okay. Next, sales were 13,60,000. Okay. Which include goods worth rupees 3,20,000 sent on approval. You send goods on approval. Half of these goods were returned before 30th June. Half of these goods were returned before 30th June. If it is returned, it should be added to closing stock. Can you see over here? Cost of goods sent on approval basis. Half of the goods is 3,20,000 into half into 80%. Why 80%? Why 80%? Because 20% is the gross profit. Where have they told this? Over here. Goods are sold at cost plus 25%. Cost plus 25% means on sales it is going to be 20%. What percentage you require, they are not giving you that. They'll give the other one. You have to find out. Is it clear? Now, goods were sold at cost. However, goods costing 2,40,000 had been sold for 1,20,000. This is called as abnormal sales. This is called as abnormal sales. So when you're calculating your gross profit, you have to be careful. Now my question is, here, can you see they have added half the goods? What about the other half? Other half sold. If you consider it as not accepted or not rejected, then you have to add the other half also. This is why this question is always in conflict. See, actually understand this. Which include goods worth rupees 3,20,000 sent on approval basis. Half of these goods were returned. Correct? Other half. No information. But see over here. Can you see only half they are removing from sales? That means they are assuming that other half is accepted. If at all, see, you have to understand this because it might not trouble, it's already troubling you here. It might trouble you in other questions also. If I send goods, no, imagine 3,20,000 is sent, okay, and 1,60,000 is returned. This 1,60,000 which is returned, we are passing entries for that, correct? If 1,60,000 is still here, not accepted, not rejected, that means they have more time. If they have more time, this will be also reversed and it will be taken as closing stock. Because they have not reversed the entire thing, even though it is not mentioned clearly in the question, they are telling that other half is sold. Are you getting my point? Half which is rejected, it is coming back. Other half is accepted. If it is accepted, it is sale only, no? Are you getting my point? Did you get this? This is the most crucial part in this question. Because of which a lot of people are not understanding what's happening only. Why they have treated it this way is because half is considered as rejected, other half is considered as accepted. If you consider the other half as not accepted, not rejected, then you have to reverse the other half also. Why? Because on the balance sheet date, if sale of goods on approval or return basis is not accepted, not rejected, you will reverse the sale and take it as closing stock. Here, the fact that they have taken only half the goods means that only half is rejected, other half is accepted. They have taken the goods. Is this clear? Are you following this? Now,
Should we reduce it from the sales?
if it is not accepted, not rejected, then you have to reverse that also. Because then it is still in their go down. If they accept, they'll accept in the next year. Here, what they have assumed is it is accepted in this year itself. Okay, now the very important thing is, you can. For your understanding. Exam you are telling? No. I mean, we thought that in exam it will be more clear, but they copy pasted same question in exam also. Are you getting my point? We thought they'll make the language more clear in the exam, but they copy pasted the exact same question in the exam. Okay, so now did you understand the assumption? Why they have treated it this way is because half is accepted, half is rejected. Okay, now understand this. Till here we have reached no cost of goods we have added back. This is the closing stock right now. Now what we have to remove? We have sold, right? We have sales. Can we subtract the sales? No, we have to subtract what? Cost of goods sold. Now here you understand the very important thing is this adjustment. This adjustment is important. How much is my sales? See, I'll show you it in a different way. How much is the sales? 13,60,000. Do you agree? 13,60,000 is the sale. Half is reversed. 1,60,000 is reversed. So you have 12 lakh sales. Do you agree with this? 12 lakh sales. This 12 lakh sales, I am separating it into normal sales and abnormal sales. Abnormal sales. Why am I doing this? I cannot calculate profit directly on 12 lakh because entire 12 lakh I did not earn profit. Some part went different way and some part it is treated at a normal rate. So how much is the abnormal sales? See over here. Goods costing 240 had been sold for 120. So the abnormal sale is 1,20,000. Therefore normal sale is 10,80,000. 10,80,000 is normal sale. On normal sale, did I make normal profit? How much is the profit percentage? 25% on cost. So 20% on sales. Can you calculate this? 1,08,000, 2,16,000. Correct? But here, did I make profit? Abnormal? No. This was costing 2,40,000. I sold it at a loss of 1,20,000. That means net how much profit did I make? 96,000. 96,000 is the profit. Is it clear? Are you following this? Now see their calculation. Cost of goods sold. 12 lakh minus 96,000. 12 lakh is the sale minus 96,000. 11 lakh 4,000. Are you getting this? Now see, when you had opening stock, no, or whatever the stock on 23rd of June, what you did? You added this. Correct? Why you added these three directly? Because purchases are always at cost itself. Why did you subtract and add this? Because it was return of goods. When goods are returned from the sale value, you are supposed to remove the profit and take the goods at cost itself. Then when goods are going out, when goods are sold, I cannot take sales. I should take the cost of the goods sold. Cost of the goods sold. So what is the sales? 12 lakhs. Why did I take the sale as 12 lakh? Even though the sale is 13 lakh 60, because 160 is returned. So your sale is only 12 lakhs. But why can't I apply directly 20% on 12 lakhs? Because goods are not sold at the same rate. So I have done this calculation. Normal sales, abnormal sales. Clear? Abnormal sales, there is a loss. Normal sales, there is a profit. So on the net, you have a profit of 96,000. When you remove 96,000 from your sales, you will get the cost of goods sold. That time you will get the closing stock. Are you following this? Very, very important question. Did you understand all the confusions which was there? Why it was treated? Done? Any doubts? Okay, see, they have shown it like this. Gross profit on normal sales, gross profit less loss on abnormal sales. I just made a chart, that's all. That's the only difference. They have also calculated like that only. Yes, that was your fourth question. Now we'll go into third question. Hanuman question. Now what happened in Hanuman question? Exact same thing has happened in one examination question also. I don't remember the attempt, but this same question also was asked in one of the attempts. Hanuman, I think they made it Ram. I think so. I'm not too sure. They made it Ram. Same question is there. Okay. Now listen. Profit and loss account of Hanuman showed a net profit of 6 lakhs. Clear? In this question, there are no mistakes. This question is correctly solved by ICAI also. I mean, last one also was correctly solved, but we had to assume that they had assumed in a particular way. Now, after considering the closing stock of 3,75,000, what are they telling? What are they telling? That means they already calculated profit. When calculating profit, they took closing stock as 3,75,000. Closing stock has impact on profit or does not have impact on profit? Why? Why? Because closing stock is in trading account. From there, gross profit is calculated. From there, gross profit comes to P&L. From P&L, you get the net profit. So there, if you make a mistake, your total profit only is wrong. Are you getting this? Yes. Now, on 31st of March 2022, they did everything. Then why are they coming to us? Subsequently, the following information was obtained from the scrutiny of the books. Rectification of errors it is actually. But they have included that in inventory chapter. Clear? Now, let's go to the end of the question. Calculate the value of stock and adjust the net profit for the year ended. That means correct the profit and correct the closing stock calculation also. Clear? Now, where have they given us the profit percentage? 33.33% on cost. If it is 33.33% on cost, then it will be 25% on sales. 33.33 by 133.33 you can do, you'll get 25% on sales. Now, purchase for the year included 15,000 paid for new electrical fittings. What did they do? Rectification. Go back into rectification mode. They should have taken it as electrical fittings, but they took it as purchases. Now when you rectify it, purchases will reduce. If purchases reduce, what will happen to profit? What will happen to profit? Purchases reduces. What will happen to profit? Profit will increase. Expense reduces. Profit rate increases. So can you see over here? 15,000. By electrical fittings, they have put 15,000. Did your profit increase? Yes. Next, you can see their starting point is 6 lakhs because net profit is 6 lakhs. Now, Hanuman gave away goods valued 40,000 as free samples for which no entry has been made in the books of accounts. Can you please tell me what is the entry for free samples? Advertisement expense account debited to purchases, correct? Both are expenses only. Have you ever wondered? This is our trading account. Here I have my purchases. Here I have 100. If I give free samples, what I will do? I will remove this 100 and I will show it in P&L, advertisement expense. So basically expense is expense only. But when we pass this entry, what happens? We remove it from trading account and we put it into P&L account. We put it into P&L account, correct? Now we cannot go back to trading account because already they have finished everything. So you know what is the impact on the profit? Zero. What is the impact on the profit? Zero. Basically, instead of taking it as one expense, you have taken it as another expense. So if you look at the situation here, buy samples 40,000, to advertisement 40,000. Can you see net impact is zero? Just because net impact is zero, do not skip it in the exam. Are you getting my point? They will also cut marks because they want to see this entry. Your final answer will still be same. If you don't put this 40 and this 40, your final answer will still be same. But you still have to put it. Are you getting my point? Yes. Next, after that, invoices for goods amounting to 2,50,000 has been entered on 27th March, but the goods were not included in stock. We had some stock. We received some stock. We did not take it in closing stock. When we take it in closing stock, what will happen to profit? Profit will increase. Can you see 2,50,000 added to profit by closing stock? Next, in March 2022, goods of 2 lakhs sold and delivered were taken in the sales for April. When did you sell? March. When did you take it as sales? April. When should you take it as sale? March only. When you take it as sale, what will happen to profit? Increase. Can you see over here? By sales, 2 lakhs on the credit side. Next, goods costing 75,000 were sent on sale or return in March at a margin of 33.33% on cost. So approval was given in April. These were taken as sales in March. What are they telling? When did you get approval? April. When was it taken as sales? March. When goods are not approved on the balance sheet date, what should you do? Reverse the sale entry. Reverse the sale entry. Okay, what is the entry? Sales account debited to debtors. Correct? Okay. Should I put it on debit side of P&L or credit side of P&L now? Debit side. Because if I reverse the sale entry, profit will reduce. How much should I take? Should I take 75,000? No. Can you see goods costing 75,000? Remember that time we had discussed this point? Goods costing 75,000. So 75,000 plus what? 1 by 3. Yes, 33.33% is nothing but 1 by 3. So that makes it 1 lakh. 1 lakh. Now don't think, sir, don't we have to take 25%? Yes, if it is sale value. Here this is cost only. 33.33% on cost. And what is given to us is also cost. Clear? See this. 1 lakh. 2 sales, 1 lakh. When you reverse the sale, immediately what should you do? You should take it as closing stock. If you take it as closing stock, what will happen to profit? When you take closing stock, what will happen to profit? Profit will increase. Now closing stock should be 1 lakh or 75,000? 75,000. Can you see 75,000 here? Closing stock. Done. When you do all the balancing, you will get the new correct profit. New and corrected profit you will get. But they also told you to calculate the correct closing stock. How much was the closing stock in the question? 3,75,000. Plus, here one place they said they did not take closing stock only. Invoice of the goods amounting to 2,50,000 have been entered, but goods were not included in stock. So we should take it 2,50,000. Then finally, this closing stock on approval basis, we have to add that also, plus 75,000 value. 4,50,000, 6 lakhs. Sorry, 7 lakhs. 7 lakhs. Correct? You can check the closing stock. 375 was already there. Purchase was not included. Goods lying with customer on approval basis is also our closing stock only. So total closing stock is 7 lakhs. Is this clear? This same Hanuman question also was asked in one of the previous exams. They changed the name, changed the numbers. Order of the question was kept same. Second question from practical questions. Any doubt with this Hanuman question? Sir, can you please explain advertising part? Oh, see, if I am preparing trading account, this is my trading account. I have purchase over here 100. What will I do that time? I will take it from here and I will show it as advertisement 100. Is that correct? I will take it as 100. That time it will change my gross profit and it will change my net profit. Clear? Now, if I have not done this, it is sitting in purchases. So now, if I rectify this, it will have no impact. Why no impact? I am taking from one expense and I am treating it as another expense. Instead of taking it as purchases, I am taking it as advertisement. Both are expense only, no? So that is why in your solution, you can see this 40,000 is on the credit side as well as debit side. Clear? Because we can't go back to trading account now. We are already in the P&L account. Yes, I hope it's clear. Question number 11. Question number 11. From the following information, ascertain the value of stock as on 31st March 2022. Here there is nothing to go forward, come backward, nothing. But the abnormal loss thing is there. Abnormal sales thing is there. I think this question, now I have picked the practical question 1, including illustrations and practical question. 3 times this question is repeated in the study material. 3 times, same type of question, different numbers. 3 times they have given. So obviously importance is there. Okay, now what is the opening stock? 7 lakhs. What is the purchases? 34 lakh 60. What is the manufacturing expenses? 7 lakhs. What is sales during the year period? 52 lakh 20. What did they ask you? They asked you at the starting from the following information, ascertain the value of stock on 31st March. They asked you to calculate closing stock, correct? Closing stock, what is the formula? Opening stock plus purchases plus direct expenses minus closing stock formula. I will have closing stock in the equation only. Minus cost of goods sold. Minus cost of goods sold. Yes, what did you have in the afternoon? North Indian, what? You didn't have that North Indian thing, no? Masala dosa is not working. Yes. Now, okay, the formula is opening stock plus purchases plus direct expenses minus closing stock. This is the formula for cost of goods sold. If I want cost of goods sold, then what I will do? Opening stock plus purchases plus direct expenses minus cost of goods sold. I will get closing stock that time. I'm just modifying the formulas. Clear? Now here what did they ask you? They asked you closing stock. So you should be using this formula. You should be using this formula. Okay. 7 lakh plus 34 lakh 60,000 plus 7 lakhs. Till here everything is fine. Minus what? Cost of goods sold. Cost of goods sold. This is sales. Cost of goods sold. Okay. Is there any other way to find cost of goods sold? Sales minus gross profit. Sales minus gross profit. See, at the time of valuing stock on 31st March 2021, last year, sum of 60,000 was written off on a particular item which was originally purchased for 2 lakhs. Last year, they already have written it off and was sold for 1,60,000 this year. But for this transaction, that means except for this transaction, gross profit earned during the year was 25% on cost. Remember the chart we did? Normal sales, abnormal sales. Same thing we have to do again. Normal sales, abnormal sales, same thing we'll have to do again. Now, how much is the sale? 52 lakh. Yes. How much is the sale? 52 lakh 20,000. Normal and abnormal. Have they given you already what is abnormal? It was sold for 1,60,000. Remove 1,60,000. That is your abnormal sales. So remaining everything is normal sales. 52 lakh 20 minus 1,60,000. 50 lakh 60,000. 50 lakh 60,000 is normal sales. or normal sales did I make normally profit? Yes, into what is the profit percentage?
10 lakh per ton.
Wait, how much percentage did you take? 20%. 25% on cost. So 25 by 125 is 20% on sales. 10 lakh, 12,000. Here what happened? 1,60,000. But what was the cost of that? 1 lakh, no, 2 lakh was last year minus 60,000. They have already removed 60,000. So this was 1,40,000. That means 20,000 profit over here. So totally I have made 10,32,000 profit. 10,32,000 profit. Is this clear? Okay. Now 52,20,000 minus 10,32,000 will give you cost of goods sold. 41,88,000. What was your formula again? Opening stock plus purchases plus direct expenses minus cost of goods sold. What are you getting? Use your calculator. 6 lakh. Question number 2. 672 is sitting here. Same thing they have done here. Opening stock plus purchases plus manufacturing expenses minus cost of goods sold. Cost of goods sold, what is the alternative formula to find cost of goods sold? Sales minus gross profit. Sales is 52,20,000 minus gross profit 10,32. How did I get 10,32? See here. Gross profit on normal sales, gross profit on abnormal sales. Any changes? Easy question. Three times they are repeating in the study material. I don't know why, but if they are repeating so many times, once they will pick no and put in the exam. You never know.
I know.
Maybe y'all in January. Okay, but these days inventory weightage has gone down because there are so many things they can't ask so many questions. So inventory around 5 marks, 6 marks only they are asking. But easy 5 marks. It's easy 5 marks. Is this clear? This one? Yes. Question number 1 from practical questions. Question number 1 from practical questions. Yes. Can we continue? Okay. Inventories SM practical question number 1. X who was closing his books on 31st March failed to take the actual stock which he did only on 9th April and that day the stock was 2,50,000. What happens now? What happens now? What happens?
Stop taking.
When did they calculate the stock? 9th April. When do you need the stock? 31st March. What will you do? Come backwards. Ulta. See, 9th April is the stock. We have to reach 31st March. Is this clear? Any doubt with this? No. Let's continue then. It was found that sales are entered in the sales book on the same day of dispatch and return inwards in the return inward book when the goods are received back. Purchases are entered in the purchase day book once the invoice are received. Why are they telling this story? For a reason. For a reason. All the questions they have told calculate the value of stock. In this question they have told ascertain the value of physical stock. We only want to know what is there in my go down. I don't want to know what you will take in the books. Remember, you will take in the books according to Sale of Goods Act, like what we did that time. Even in transit, you took it as closing stock. In this question, unique and different, they did not ask you value of stock. They asked you value of physical stock. What is there in your go down? So now you have to understand this sentence, very important. What did they tell? It was found that sales are entered in the sales book on the same day of dispatch. That means sales you are recording as soon as the goods are going out. Clear? Returns inwards in the returns inward book when the goods are received back. Not when they send, not when it is in transit, you are taking into books when it comes back. Clear? Purchases are entered in the purchase book once the invoices are received. Purchase when you are entering, not when the purchase goods have reached here. Imagine I purchase goods. Goods have come and it is in my hand. But I am not recording only. When will I record it? When I get the bill of these goods. When I get the bill, that time I am recording it. Sales, when am I recording? I made the bill. That time I am not recording sales. When the goods are going out, that time I am recording. Sales return, when am I recording? When he calls and tells me I have sent the goods, I am not recording. When the goods reach my go down, that time I am recording. Purchases, when am I recording? I got the goods. Still I am not recording. I am waiting for the bill. Did you understand this process? Yes. Now, it was found that sales between 31st of March and 9th April as per sales day book are 17,200. That means goods have gone out or goods have come in. Goods have gone out or goods have come in. Gone out. So should we add or should we minus? Normally we should minus, but we are coming backwards. So we should add back. We should add back 17,200. Can I take 17,200? No, that is sales. I need what? Cost of goods sold. They are told rate of gross profit is 33, 1/3% on cost. That means on sales it is 25%. So you can see over here 17,200 minus gross profit 12,900 is taken. Is this clear? Are you following this? Goods came, goods went out, but it is backward situation. So you are adding back. Next, purchase between the period as per purchase day book was 1,200. Out of these goods amounting to 500 were not received until after the stock was taken. How much is received then? Your purchase is 1,200, but you didn't receive 700. You are calculating physical stock, not as per books. So what you will do? Minus 700. Array, less. 1,200 minus 500, 700 is subtracted. Outer column. Okay. Next. Goods invoiced during the month of March, but goods received only on 4th April. Amounted to 1,000. When did you invoice the goods? March. When did you receive the goods? April. What should you do? Minus. Because you didn't receive it in March. We want to know what is there in my go down. When you do all this, you will get the answer. Is this clear? Done. That's it. Done.
Goods invoiced at delivered at 4th April.
Still we will use. Because we didn't get it in March. No. No break and all. Is that my mistake? No. I told you eat light. I specifically told you eat light. You saw masala dosa, you attacked it. I told that everyone to eat light. This guy went there and ordered Hyderabadi combo. What is there in that? So much biryani, then French fries. How can he keep his eyes open after eating all that? See, set dosa, I am teaching. After that again he ate set dosa. Set dosa, Hyderabadi combo, French fries. So much area is there. Food has to reach now everywhere. Yes, you can take a 5 minutes break. Exact 5 minutes, then I'm starting bills of exchange. And bills of exchange, there are few questions to solve. Few nice questions. Only 5 minutes. Once again, point number 3 in SM. Point number 3 in SM4. See, 13,60,000 goods were sold. Out of that, 1,60,000 is returned. 12 lakh is remaining. On that, we have to calculate normal sales, abnormal sales separately, and calculate the profit. Okay. Even though goods worth rupees 3,20,000, only half is returned. So they are assuming that half is accepted. In that, one of the questions was this. Yeah. That was the illustration question. That was one of the illustration questions. There also it is not wrong actually. They are assuming it in a wrong way. We'll hope that they give correctly in the exam. Laddu Mutya. Done na? I see you guys. See, that fellow is our Laddu Mutya.
Gold man.
He's our Laddu Mutya. Yeah, he was called Gold Man. No, not of India and all, of Mandya. Because he has the gold business, they used to call him Gold Man. That's it. We had even Big Boss in class. Now Big Boss is absent.
Boss is absent now.
Big Boss.
Big boss, big boss, big boss.
SM4 flowchart. This is the flowchart.
Take a lot of
Can you please do the last question, practical question 4? Like with the trading account, can you please show us that method?
With the trading account. What we have shown here. What we have shown over here, no? This is practical question 4. See, we can do this with the trading account. And we can do this with the trading account. Whatever you are seeing as add, right? That will be on the debit side. Whatever you are seeing as less, that will be on the credit side. That's it. Instead of trading account, this is better actually. Instead of trading account, this is better for these kind of questions. And for loss, profit or loss calculation, you do this separation, normal sales and normal sales.
Instead of doing this method, can we just deduct sale value of abnormal sale from our sale and the actual value of abnormal from our opening stock?
We can do that. But see, earlier there was a chapter called as fire insurance. In that they used to do it. But now IC is not following that method. Because if you do that, you are completely ignoring the abnormal goods. No, abnormal goods are also there. You are just ignoring them. So instead of that, include them also in your calculation. Show the normal profit, show the abnormal profit, and then calculate it. You will get the same answer if you do like how you told. Goldman, you're creating a lot of noise. Just like how you did in the previous batch. With Chirag. You created noise and went back. Chirag couldn't create noise. If he was not with you, maybe he would have cleared.
Sir, see, now he is not with me. Let's see.
Now he'll clear in Jan.
But I will not clear now.
Only person who is very confident before writing the exam is you. Of not clearing. You are simply demotivating others also. Why are you here then?
No. Yeah. That is the reason.
You are here to eat Hyderabadi combo.
Conducting marathon. I want to run and lose my race.
How much weight you lost after eating Hyderabadi combo?
1 kg.
Arnav, close the door.
Hey, pani.
Bills of exchange is a small and sweet chapter. Now, let's go further. How many people cleared from September batch? Actually, only 3 wrote, I think. In that one passed. That is 33.33%. That's good.
2.3, 4 wrote. Risha also. Risha, we go.
See, this is exactly what happens with ICAA numbers. This is exactly what happens with ICAA numbers. You will see that ICAA is telling 20% pass percentage and you will panic. You'll be like, oh, 20%. 20% is basically 20 by 100. Correct? Out of this 100, how many people are there who have thought that by studying for 20 days we can clear CA foundation exam? Correct? And there are some more like Lisha who have continued to go to college till the previous day of the exam. And is it possible? So obviously this denominator is not giving a fair number, no? So if you're calculating percentage, you should calculate on people who have studied seriously with the denominator of people who have written seriously. That time, obviously, it will be a huge number. It will be a huger number, not 20%. It will be much bigger than that.
Give 20 days. What about 23 days?
If you have studied before, revision 40 days is enough. People are studying for 2.5 months and clearing inter. Yeah. Provided you have attended classes. If you are opening the book fresh, not possible. If you study 8 hours a day, you can clear. Can you study 8 hours a day? That's the question. Actually, easily you can. If you have full day for yourself, 8 hours a day is not a problem. Yeah, that's what. If you don't have any other activities and you have only full day to study, 8 hours a day easily you will finish without sleeping late, without getting up early. Huh? See, if you are writing in May, you will come for the next marathon also, no? They will discuss. Yeah, I think next marathon won't be in Bangalore. It might be in Chennai.
6.
They are online. They're just talking.
Karthik.
Sir, in exam, do they give step marking? Yes, they do give step marking. I mean, step-based marking is there, but that doesn't mean that you will get good marks just with steps. If your first step is wrong and other steps are correct, your total is 0.
Like I just
Shh.
cancel all of
No, see, if your first step answer is wrong, when you go to the second step, the answer will be wrong, no? Even though your calculation methodology is correct. Journals, you'll score some marks. Yes, but you think of, forget about step-based marking. You have to get accuracy. Yes, there are some interesting questions which we have to cover from bills of exchange. Katrak, Don, George, and one examination question, Bob and all those people. Nice people they are. They always tortured you in bills of exchange. And we will also see the previous examination question. September question, at one point of time, everyone got stuck. Some people spent 1 hour on that question.
You spent 1 hour.
Yes. Bills of exchange, that September question. Huh? It was tricky, yes. It was tricky, but other than that question, in your entire paper, there was nothing tricky. Let me tell you. Other than that question, everything was simple. Paper will be lengthy. I told you, go to the exam with thinking that paper will be lengthy. Yes. Shh. Get back. Next chapter, bills of exchange. After that, we have final accounts. Only 2 chapters for the day remaining.
He will leave.
Yes. Shh. Now, let's go into bills of exchange. We'll go into bills of exchange. What is bills of exchange? Shh. What is bills of exchange? Negotiable instrument. Right in front of your face, it is there. Shh. We have Arnav here and we have Bambani. Arnav and Bambani. Here. Shh. Arnav is this guy sitting here. Silence. I'm going to throw you out. It will be difficult for me to throw you out. I'll ask you to go out. Because throwing you out would be 130 kgs I have to lift like this. 126, 4 kgs water weight you lost. Now Hyderabadi biryani would have brought it back to 130. Yes. Now listen. Focus. We'll take these 2 characters and try to understand the entire situation. Arnav. Shh. Arnav is the person, okay, who has sold goods. On credit. Whenever goods are sold on credit, there is always a doubt whether you'll get the money back. That is why we use negotiable instrument to safeguard ourselves. So what do? In this case, Arnav will draw a bill on Bambani. Is that enough? Can I draw a bill on anyone and tell that yes, I have to get money now? No, that person has to accept it. Only then it is valid. Okay. Your bill will look basically like a check only. You will have all the information written in the bill. sign will be there. Sign will be there of the other person also. Who is accepting, that person also will sign. Who is making it, that person also will sign. Did I tell you that check drawn means writing the check? Here bill drawn means preparing the bill. Same thing, writing the bill. Clear? Now who is a drawer? Person who prepares the bill. Usually the person who sells the goods. Who sells the goods will only prepare the bill, no? So this person will be the drawer. Who is the drawee or acceptor? Who accepts? In whose name we prepare the bill, that person is the drawee or acceptor. Clear? Who is the payer? The person who is supposed to make the payment. Correct? Are these two people same? Can be. Can be. Drawee can tell, I accept that my mother will make the payment. So now mother becomes the payer. Possible. Who is the payee? Person who is to receive the payment. Is drawer only the payee? Can be. Drawer also can tell, don't give the money into my account, put it into my mother's account. Possible. So that person will become the payee. Is this clear? And if drawer discounts the bill, bank becomes the payee. Drawer endorses the bill, then that endorsee will become the payee. Whoever is supposed to get the payment will become the payee. Tenure of the bill means duration of the bill. Clear? When are we supposed to make the payment? Due date or maturity date? When are you supposed to make the payment? Due date or maturity date? Due date only. You are supposed to make the payment due date. But just for your comfort, 3 days extra is given to you. That is maturity date. Sir, in exam, how should our presentation be as it appears in the module, or we can present as we solve in regular class? No. We can see presentation is fine. Working notes you present however you want. But your main solution should be like that only. Okay, if ledger is there, ledger only you have to prepare. You can't write something else over there. Yes. Now, understand this. Duration of the bill. There are two types of bill. Bill drawn after date, bill drawn after sight. Bill drawn after date means I send the bill to you today. I write today's date and send the bill to you. But your 3 months time has started from today only. Bill drawn after sight means the time doesn't start today. When you accept the bill and give it to me, from that day it starts. Can you see tenure starts from the date of acceptance? Tenure starts from the date of bill. Is this clear, both of this? Any doubts with this? No. Now, due date, how will you calculate? Date of payment. But maturity date will be due date plus 3 days grace. Okay, due date plus 3 days grace. Can you see 3 days? What is this grace period given for? Sometimes on the due date you might not be well. On that day you might have forgotten. So we should not punish you for that immediately. So we are giving you 3 days extra, which is called as grace period. Clear? Now examples, how we calculate, you see. 1/1/2023 plus 3 months. If duration is given in months, what we will do? We will add the months to the month column. If it is given in months, we will add the month to the month column. Can you see that you are getting the due date? Okay. What about if it is given in days? Is 30 days and 1 month same thing? No. If it is given in days, you will add it to the days column. So it becomes 31st of January. 31st of January, add grace. Can you see it's both are same 1 month and 30 days, but still you are getting different maturity dates. Is this clear? Yes. Now, 1/1/2024 plus 60 days. 1/1/2024 plus 60 days. Can you see 1/3/2024 and it's 4th March. 60 days means you have to add 60 days. When you are adding 60 days, if February comes in between, be careful. If February comes in between, in February, you should know whether there is 28 or 29 days. If it is leap year, it will be 29 days. You remember COVID 2020, correct? That was a leap year, plus 4 minus 4. All are leap years. Or if you don't remember COVID, then just remember, take the year, divide it by 4. If it gets divided, it is leap year, otherwise not leap year. 2020 divided by 4, it will get completely divisible. Huh? One guy was there. He got married to one girl. His father sent him to forest. Huh? They will give you the year, no? What is there to assume? They will tell you 2024, 2023. No assuming, nothing. Now, 23rd of December. I have taken this. Can you see why I didn't take 26th of January and I'm taking 25th of January?
National holiday.
National holiday. What are the national holidays? Independence Day, Republic Day, Gandhi Jayanti. Correct? National holidays. I don't think you have to note it down. Okay, you will remember the national holidays. Independence Day is on 15th of August. Republic Day is on 26th of January. Gandhi Jayanti is on 2nd October. Clear? Before I should not tell this in class. I should just tell Independence Day, Republic Day and Gandhi Jayanti. But in the recent batch which is going on, one guy actually asked me, can you tell me the dates? I want to note it down. So then I realized that, okay, not everybody remembers GK. Okay, what if it is emergency holiday? Next day. Emergency holiday next day. Why? National holiday previous day. Emergency holiday next day. Why? Yes, this is certain. You know, starting of the year only when is the national holiday, and you don't know this. It suddenly is announced at 8 o'clock in the night that tomorrow is a band or something like that. So that time what do? You can't do anything. So next day will be considered. Clear? Yes. Let's go into accounting. It's easy, but I know you make a lot of mistakes. Okay. It's about thinking from one person's angle. If they tell, prepare journal entries in the books of X, that means entire question you should read from X angle only. That means you should think that you are X and you should think about the journal entries. Are you getting my point? Yes. Don't take your mind somewhere else when we are telling X. Come back. Yes. Accounting. We have Arnav and we have Bambani. Arnav is drawer and Bambani is drawee. Is this clear? Okay. The transaction I have written in between in the books of drawer, in the books of drawee, both we have seen. Arnav sold goods. So what will be the entry? Arnav is selling goods. Bambani account debited to sales. Is this clear? For the other person it is purchases. Purchase account debited to Arnav. Clear? Arnav draws a bill. No entry, no entry. Why? Only if it is accepted, it is valid. Bill accepted by Bambani. Now for Arnav what happens? It is bills receivable. For Bambani it is bills payable. If it is bills receivable, it is asset. So bills receivable account debited. Who gave you this bill? Bambani. For you, for the other person, Arnav account debited to bills payable. Is this clear? Yes. Now bill accepted by Bambani done during the tenure. Tell me, during the tenure, what can happen? I can keep the bill in my pocket. I can discount the bill and I can endorse the bill. Bambani is there, no? The drawee is not bothered about anything. Why? I told you, come back after 3 months, I'll give you the money. In these 3 months, you do whatever you want with this bill. You want to keep it in your pocket, keep it. You want to discount it. You want to endorse it. You want to make paper boat and leave it in water, leave it, no problem. Bambani is not bothered about it. Are you getting my point? Bambani is not concerned only. Bambani is like, come back to me after 3 months. So if you see here, during the tenure of the bill, Arnav holds the bill, no entry. Arnav is also waiting, no entry. But if Arnav discounts the bill is discounted with the bank for 48,000. What happens? Bank account debited because you are getting money. Did you get full amount? No. Why bank didn't give you full amount? Because bank is giving you money early. Bank will get money later. So discounting charges debited to bills receivable. Is this clear? Entire situation here it is no entry only. Whatever you want to do, you do. But Bambani will not be bothered. He will not pass any entry. Arnav endorses the bill to Chetan. What should be the entry that time? Chetan's account debited to bills receivable. Why is Arnav giving the bill to somebody? Because if Arnav has to pay money to somebody, instead of giving money, he is endorsing the bill and closing the story. Is this clear? Yes. Now, Arnav endorses, Chetan becomes endorsee. Endorser, endorsee. Just for the terminologies. Now, on maturity date, what can happen? Bambani can pay. Why dishonor first? First, positive things you think in life. Okay, first, honor. Bambani can pay. Then what can happen? Dishonor. Bambani can't pay. Okay, on maturity date, bill is honored. Bambani paid. Now understand this. If the bill was in your pocket, you got money. You got money. If bill was discounted, who got money? Bank got money. If bill was endorsed, who got money? Chetan got money. That endorsee got money. Correct? So if bank is getting money and if Chetan or endorsee is getting money, should you pass entry? No. You will not pass entry if somebody is paying to somebody. You are not part of the transaction only. So can you see over here? If bill was held, bank account debited to bills receivable. If bill was discounted, no entry. If bill was endorsed, no entry. Is this clear? Why no entry? No entry? Clear? Yes. Now for Bambani, whether Arnav comes and asks money, bank comes and asks money, Chetan comes and asks money, whoever comes and asks money, he is paying, right? For him, the entry is simple. Bills payable account debited to bank. Bills payable account debited to bank. Whom he is paying to doesn't matter. Now, bill dishonored. This is also easy. Bill dishonored. Tell me one thing. If bill is held, who will ask Bambani the money? Arnavali will ask. Drawer will ask Bambani the money. If bill was discounted, bank will ask. Bank did not get. Bank will take from you. And you will only go and ask. If bill is endorsed, Chetan will ask. Chetan did not get. Then Chetan will come and ask you. So if you see bill dishonored, no. All the cases, debit is drawee only. All the cases, debit is drawee only. If the bill was in your pocket, credit bills receivable. If bill was discounted, credit bank. If bill was endorsed, credit the endorsee. Are you following this? So when you see bill dishonored entry, no, in your transaction, if you see bill dishonored, drawee is debit. Fixed. Drawee is debit. Then you have to see whether the bill was in your pocket. Okay, 2 bills receivable. Whether the bill was discounted, to bank. Whether the bill was endorsed, to endorsee. Is this clear? And for the other person, whoever comes and asks you, you are not going to make payment. So for you entry is bills payable account debited to Arnav. Bills payable is gone. You have to make payment to Arnav because Arnav is the person who is supposed to get money from you. Is this clear? This is bill endorsed. See, debit always to drawee. Debit will be to drawee only. All the 3 cases you can see Bambani, Bambani and Bambani. Is this clear? Now, next topic. Noting charges. What is noting charges? Yes, good morning. What is noting charges? What is noting charges? Charges charged by notary public. For what? Noting the bill. Noting the fact that the bill is dishonored. Are you getting my point? See, listen. Shh. Bill is dishonored. I take this bill to court. Then again somebody has to do verification. So first only I am supposed to go to a notary public. Notary public is lawyer. Lawyer will check. Okay. Lawyer will call and ask. Lawyer will tell, give your bank statement. Let me see whether money has actually come to your account. He will check all that and he will note the fact. He will note the fact that bill is dishonored and he will sign. Now with this you can go to court because lawyer has authorized that it is dishonored. It becomes easy to prove in court. Clear? Now understand this. If bill was held, is it free noting charges? No, you have to pay money, right? If bill was in your pocket, who will pay the noting charges? You will only pay the noting charges. Entry, noting charges account debited to bank or cash. Clear? Noting charges account debited to cash or bank. Noting charges is an expense. Expense will end up going to P&L. Can you put this noting charges into your P&L? No. Why? If you put it into your P&L, it is like your expense. It is your expense. No. You should collect this money also from the drawee. He did not pay on time, so I had to pay extra money. So the next entry will be Bambani account debited to noting charges. Bambani is debited. That means you are making him debtor for more money. Clear? Now, what if the bill was discounted? Who will pay the noting charges? Bank will pay the noting charges, but bank will not wait. They'll just take from your account. So here the entry will be Bambani account debited to bank. That means you're going to ask Bambani, bank took money from your account. If Chetan has paid from his pocket, Chetan will ask you, you will ask Bambani. So the entry is Bambani account debited to Chetan. Is this clear? Are you following this? Very, very important. Okay, noting charges. All the cases, the drawee only has to pay you. If you paid from your pocket, credit will be noting charges. If bank paid, credit will be bank because they'll take money. If endorsee paid, credit will be endorsee. In the other side, whoever paid noting charges for you, noting charges account debited to Arnav. Why I didn't write noting charges account debited to cash? Why I wrote noting charges account debited to drawer? Why I didn't write noting charges account debited to cash? Because this fellow has not paid bill money only. Do you think he has paid noting charges? He has not paid the bill money only. Are you getting my point? So you have to pay the noting charges. So noting charges account debited to Arnav. Now, always things can not go bad. Sometimes things can go good also. But first we'll talk about the bad thing here. Renewal of bill. What is renewal of bill? The renewal of bill is person is good, time is bad. Possible. Person is good, time is bad. He knows he can't pay, so he came and asked. More time is asked by drawee. He is not waiting for it to dishonor, then filing case, all that. He knows he cannot pay. He comes and asks, I cannot pay you now. We'll cancel the old bill. Can you give me more time? With interest. Now, once I waited and I failed to get money. So again, if I am giving you time, what will I tell? I will give you time, but I will charge you interest. Possible? Yes. So more time is asked by drawee. Okay, old bill is cancelled. Old bill is cancelled. You have to pass dishonor entry. You know the dishonor entry. Drawee account debited to bills receivable, bank or endorsee, depending on where it is. Here it is bills payable account debited to drawer. Is this clear? Bill is cancelled. Now new bill is accepted. When new bill is accepted, you have to be very careful about one fact. What is that? Interest is paid now or interest is added to the bill. Is it possible I can tell, okay, I will give you 2 more months time, but I can't wait for 2 more months to get the interest. Interest you give me today only. Is it possible? Possible? Yes. So now, if interest is paid now, understand this. Entry will be cash account debited to interest. You're getting money and interest is an income. For the other person, interest account debited to cash. He is paying money and money is going out. Is this clear? And after paying interest, is that the end of the story? No, new bill should be accepted. So bills receivable to drawee, drawer to bills payable. Is this clear? Are you following this? Okay, interest is paid. We are getting interest. They are paying interest. Then we are going to draw the new bill. Now, what about if interest is added to the bill amount? If interest is added to the new bill amount, are you getting interest today? No. So first you pass the due entry. Drawee account debited to interest. Drawee has to give you money. Interest is income. You did not get interest, but still why you are taking it as interest?
You will be getting.
Yeah, but when I get, I should record. No, why I am recording it today only? Due entry. Why due entry? Why can't I pass directly when I get the money? Can we do it? What is this? We are following accrual concept when we are doing accounting. So transaction has happened, didn't get the money, no problem. I have to still record it. So drawee account debited to interest account. Is this clear? Yes. Here, what is this person going to do? Did he pay the interest? Did he pay the interest? No. Interest account debited to drawer. Interest account debited to drawer. Expense, creditor. Income, debtor. Expense, debited, creditor, credited. Debtor is debited and income is credited. Is this clear?
Like, are we supposed to record accrued profit? Like, it's a profit, right? The interest
No, it's an income.
accrued income, are we supposed to
We are supposed to record if the transaction has taken place. Future sale I will not record. But today's sale I'll record even if I don't get money. Credit sales are recorded.
Interest is added to the bill amount.
Hmm.
Again, he fails to pay the bill amount.
Nothing. Again, it will dishonor. Then you will file the case. You will not give him more time. Anything can happen, no? If he convinces you, then you are the bakra. That's it. If he convinces you to give more time, if you have given, then that's up to you, right? Possible, it can happen. Exams, no, but in real life, it can happen. Yes. Now, interest is added to new bill. So when you're passing the entry, this will be the entry. Bills receivable account debited to drawee. Bills receivable will be old bill plus interest. Here it will be drawer account debited to bills payable. It will be old bill plus interest. Are you following this? Yes. It's very cold. Putting down and all, you have to do it over there. No, I'm not offing it. I just made it from 16 to 22. It makes. Can you feel the difference? Can you explain what is interest added to bill? Afan? Oh, he got up at his regular class timings and he has joined now. Yes, interest is added to new bill. If you pay late, if the person is asking for more time, interest will be there. Now, if he does not pay, what will happen? He has to pay interest in future. So the new bill which is coming in, can you see it is old bill plus interest? And new bill which is accepted is also old bill plus interest. Is that clear? For you to pass this entry, first you have to pass the due entry for interest. Otherwise, you can't pass the second entry. Is this clear? Now, always things are not bad in your life. Sometimes things go good also. Retirement of bill. This is good or bad for Arnav? Bad. This is actually bad for Arnav. Why? If somebody is paying early, he will not get full amount. If somebody is paying early, he will not get full amount. But it is better losing little than losing everything. Are you getting my point? It is better losing the rebate amount than losing the entire bill amount only. Are you getting my point? Retirement of bill means the person is going to pay early. If the person pays early, if I am receiving money, what will I give? I will give discount, correct? Discount allowed is called as rebate and it is debited. Discount received is called as rebate and it is credited. Is this clear?
It is mandatory.
Writing it as rebate?
No. Pay
No. It is not mandatory. It's between two people. If he pays early and if he comes to you and tells, I'm going to pay early, what will you give me? If you offer something, that is rebate. If you are just taking the money, if he also didn't ask for discount, lesser. It is lesser, much less than before. Because there are other instruments like LC and all, letter of credit and all is used, bank guarantee and all is used. It is little less, but still there. Yes. Shh. This is the one which is important as well. Bills for accommodation. What is this? What is bills for accommodation? Somebody heard this story, like how you heard this story, no, from starting till now. Somebody heard this story and got one immediate thing in their brain. I can use this as a loophole. I can use this as a loophole. What did they do? See, two people, Chetan and Mohit. Two people are there. Both of them have not sold goods to each other. What did Chetan do? Chetan told, I will draw a bill on you. You accept it and give it to me back. I will take that bill and go to bank. I will discount it. I will get money. We will do sharing. Sharing is caring. 3 months. At the end of 3 months, who has to pay to bank? Mohit has to pay to bank. That time what Chetan has to do? Give his share of money back to Mohit. Mohit will make it 50,000 and he'll go and give it to bank. Possible? Yes. Here, on due date, Mohit has to pay 50,000 to bank. Do you agree?
Yes, sir.
Before due date, Chetan has to pay 24,000 plus 1,000. Why 1,000? His share of discounting charges also. Can you see bank gave only 48,000, 2,000 loss. This loss also has to be shared by the two parties. Now you have to be very careful. The very important thing, I think I have written it already. Yeah. Note, discounting charges must be shared in the same ratio as the amount is shared. This is the most crucial point. You might get in the same story 3 bills. Still, first bill in what ratio you have shared the money, discounting charges will be shared in the same ratio for all the bills. Is this clear? Yes. Now note, at the end of the bills for accommodation question, prepare a ledger to find how much is to be received or paid. How will you prepare this ledger? Journal entries you are only going to pass. Prepare a ledger, see all the journal entries and make the posting into the ledger. When you post, you will get to know whether you have to pay money, whether you have to receive money. Is this clear? Bills for collection. Do we have any questions on bills for collection in your study material? Absolutely no. Bills for collection, there is not a single question in your study material. But there is one past examination question where they have asked bills for collection. Are you getting my point? Now, tell me, what is bills for collection? What is bills for collection?
Bill to the bank and the bank will collect the amount.
Yes, we will give the bill to the bank and they will collect the amount. Now imagine I am having every day 5 sale entries. 5 sale entries. Out of 5, 2 times I am drawing bill of exchange. So 365 days. Let's say 300 days only I am working. 300 into 2. 600 bills are there. 600 due dates I have to keep track of. It becomes headache for me. So what I will do, I'll take all the bills and go and give it to bank. And I'll tell bank, your job. Follow up on these dates, collect the amount and put into my account. What is bank getting for this? Charges. They will not get interest. They will not get interest, they will get charges. In bill discounting case, they will get interest. Because they are giving us money early, they will get money later, so they are getting interest. But in this, they are not getting interest. Is it clear? Now, note, at the end of the bills for accommodation, we have to prepare ledger. Now, bills for collection, what we are supposed to do? Bill is handed over to bank. What is the entry? My bills receivable went. So the entry will be bills for collection account debited to bills receivable. Bills receivable went. One new item came into your books called as bills for collection. If bill is honored, what will happen? Bank account debited to bills for collection account. Arnav, he was also doing same thing. He's still doing the same thing. You have started doing the same thing. You are supposed to look here. That's, you just proved my point. Yes, bill honored. If bill is honored, what will happen? You will get money. Bank account debited to bills for collection. If bill is dishonored, what will happen? Bank will tell I couldn't collect. You will ask whom? Drawee. Drawee account debited to bills for collection. Is it clear? Now, that's it. After that, it's BRS. Done. Nothing you heard, but you can clap. What did you hear? What is the name of the chapter? What is the name of the chapter? What is the name of the chapter? Yes. He is writing in May. You focus, you are writing in January. Huh? Yes. Question number 13. I see you guys, you have focused till yesterday. Don't look at these guys and lose your focus. Yes. I know you are also not focused. From the war room, they keep shouting at you through the mic. Again and again. Up there is one room called as war room. In that they can see whatever you are doing. And they turn on the mic and they shout at you sometimes. Yes. Now, shh. Let's continue. Question number 13. Few. 13, 14, 15, 16 and the examination question where you got stuck for 1 hour. Yeah, that one I think we should solve that because there is one key point there where everybody got stuck. Okay, we'll see that. We'll have a look at that question.
The 1 hour part.
Old wounds should never be forgotten. If you forget old wounds, then you'll keep falling again. Make new wounds. Yes. Shh. See, so many people are there in the class with so many stories. If you don't study, you'll be sitting in gold shop forever in your life. If you don't study, you will get married. Huh? No. It's not like that. I'm not generalizing the statement for girls. She had told a story that they were planning to get her married. So her escape route from... You told it on the road. Few people only. These are few friends. No, it's a good thing. It's a good thing. See, she wanted to come out of that, so she's studying CA. Imagine the tougher route she took. If I had to think in my life, go back and do CA all over again, or get married, I would have chosen getting married only. Okay, that time I didn't have the option. No, in in real life for guys, actually there is no option. They have to study. But at least one option is there. That is not really an option, no? Yes. Now, what I suggest is to study. Because these days, more than guys, girls need it. Studying.
दिमाग नहीं है दिमाग
That door you will not cross. All these people will attack you and you will not cross. You will become laddu. The other half you fill it. Yeah, out of the 4 people who wrote in September, only 1 person cleared. That was girl. Shame on you guys. Yes, question number 13. Okay, there are some questions. Okay, listen. Get back. There are some questions. Boys have only option, do or die. Sir, what is meant by laddu mutia? If you really don't know this, no, that means you are actually studying hard.
Yeah.
Because there is one Instagram trend which you have not heard of, that means you are studying hard. Huh? No. This is our Chennai students. Yes. Shh. Let's continue. I think Laddu Mutia was popular only in Karnataka, right? Laddu Mutia. You don't know, right? She's from Kerala. She has no idea. She's from Kerala. She has no idea what Laddu Mutia is. You don't know. That's one stupid Instagram trend. Yeah. They're writing in Jam. They are not in the batch. They are in the ICU batch. ICU batch is like they have class starting at 7 o'clock in the morning and it ends at 9 o'clock in the night. Yes, really, that's their timings. So much fun, right? It started few days back. Posters were there all over Instagram. I don't know when. November 15. Yes, November 15 we started. Yes. Shh. No. They have written before. Few of them. Question number 13. Yes. Get back. Shh. Journalize the following transactions in K. Katrak's books. This question without solving, we shouldn't go to exam. K. Katrak. Guess what? This also they have asked in the exam and they changed it from Katrak to Karthik. That's it. Too much effort is put by ICA to make new questions. Now, Katrak's acceptance to Basu for 2,500, discharged by cash payment of 1,000 and a new bill for the balance 50 rupees for interest. Clear? Now first you have to understand who are you? Katrak. Who is the other person? Basu. Katrak's acceptance to Basu means no, you have bills payable, Basu has bills receivable, and it is discharged by cash payment of 1,000 and a new bill for the balance. Correct? That means you are going to pay 1,000 rupees, but for remaining amount you are going to accept a new bill with interest. Look at the entry. Bills payable account debited, old bill gone. Compound entry they have passed, you can pass separate entries also. Old bill gone, this is the old bill. You are going to pay interest 50 rupees, so interest is an expense. To cash 1,000 rupees and the new bill is 1,500 plus 50. Is this clear? Katrak Basu situation. Did you get it? Next. G. Gupta's acceptance for 4,000, which was endorsed by Katrak to Mehta, was dishonored. Who are you? Katrak. Who is the other person? G. Gupta. And then you also have Mehta. Gupta's acceptance, which was endorsed by Katrak. Gupta had given acceptance to Katrak. So for Gupta it was bills payable and for Katrak it was bills receivable. And Katrak had endorsed it to Mehta. Okay, Mehta paid 20 noting charges. Bill is withdrawn against check. Bill bounced. If bill bounced, Mehta will ask money with Katrak and Katrak will ask money with Gupta. Is that clear? Mehta is the person who has the bill. He asked Gupta, spent even 20 rupees noting charges, did not get the money. Mehta will ask Katrak, Katrak will ask Gupta. Is this clear? So what should be the entry? Gupta's account debited to Mehta. Gupta has to give money to us. Mehta, we have to pay money. So the entry you can see over here, Gupta's account debited to Mehta 4020. This bank entry also they have passed because they said it is withdrawn against check. That means we are making payment. We are not keeping the money pending. We are making payment. Now, third, Dalal retires a bill 2000 drawn on him by Katrak at 10 rupees discount. Simple it is. Retires a bill means what? Paid early or paid late? Paid early, correct? Dalal retires a bill drawn on him. That means your Katrak, other person is Dalal, you have bills receivable, Dalal has bills payable. Are you getting money or are you paying money? Getting money because you are Katrak, correct? So what should be the entry? Bank account debited. Will you get full amount? No. So can you see bank account debited 1990, 10 rupees they have written discount. Some places they have used the word rebate. So use rebate only consistently. Rebate account debited to bills receivable. Is this clear? Yes. Next. Katrak's acceptance to Patel and Modi's acceptance to Katrak for similar amount were duly discharged. What is this? Katrak, Patel. Katrak's acceptance to Patel. That means Katrak has bills payable and Patel has bills receivable. And Modi's acceptance to Katrak. Modi's acceptance to Katrak. That means Modi has bills receivable and Katrak has bills receivable and Modi has bills payable. They were duly discharged, they said. What did I do? I have one bills payable, I have one bills receivable. What did I do? I just adjusted the two. So what is the entry? Bills payable to bills receivable. 5,000. Is it clear? Exact same question was asked in the exam. They changed the name and they made it Karthik. Katrak is a little difficult in the exam. No, already exam is only Katrak. Okay, so they made it Karthik. Now, other than Katrak, the other question that can trouble you is SM9, George, where accommodation starts, but there is no, discounting. This is an accommodation situation, but there is no bill discounting happening. I am giving bill to somebody, that fellow is purchasing goods, that fellow is selling goods, what and all is happening. Now, understand this. Question number, what was it? 9. Now, give necessary journal entries in the books of Harry, George, and Jack. Clear? Now, first you think from whose angle? Harry's angle. Entire question, who are you? Harry. Who are you? Harry. Clear? Which Harry are you? Harry Potter. Harry Brook, cricketer. Yes. Now, on 1st July, George drew a bill on Harry for mutual accommodation. Harry accepted the bill. Who are you? Harry. You accepted a bill. Tell me what is the entry? George account debited to bills payable. George account debited to bills payable 1,80,000. Can you see this entry? Yes. George purchased goods worth rupees 1,81,000 from Jack on the same day. What should be the entry? What should be the entry? No entry. Why? Who purchased goods? George. From whom? Jack. Who are you? Harry. Why will you pass entry? Clear? George endorsed Harry's acceptance to Jack in full settlement. George endorsed Harry's acceptance. My acceptance is endorsed to me only.
Jackson.
Oh, sorry. George endorsed to Jack, so you are Harry, nothing. Again, here also no entry. Okay, on 1st September, Jack purchased goods worth rupees 1,90,000 from Harry. Somebody purchased goods from you. For you, it is sales. So, Jack account debited to sales account. Clear? Dates, be careful. Now, Jack endorsed the bill of exchange received from George to Harry and paid 9,000 in full settlement. Who endorsed the bill? Jack endorsed the bill. To whom? To Harry. Bill is how much? 180. You have to get how much? 190. What they are doing? 9,000 they are paying cash. That means remaining is discount. Can you see? Bills receivable account debited, bank account debited, discount account debited, Jack account. Usually I don't write bills receivable over here. I write bills payable because it is my own bill that is coming back to me. What they have done, one additional entry. Wrote bills receivable, then they passed bills payable to bills receivable. Are you getting my point? Your own bill it is. Why? You gave the bill to George. George endorsed it to Jack. Jack endorsed it back to you. So it is not a new bill that is coming in. Your own bill is taken one full circle in the world and it has come back to you. Are you getting my point? So you can write directly bills payable over here. Next, after that, what happens? On 1st October 2022, Harry purchased goods worth rupees 2 lakh from George. Who are you? Harry. What should be the entry? Purchase account debited to George. Clear? Finally, Harry paid the amount due. Harry paid the amount due. How will you find out? It is better to prepare ledger. George's account. See the first entry. Is George there in the first entry? George is debited or credited? Debited. 180. 180. Second entry, is there George? No. Third entry, is there George? No. Fourth entry, is there George? No. Fifth entry, is there George? Yes. George is credited 20,000. If credit is more, debit is less. That means should we pay or should we get? Should we pay or should we get? Credit is more. That means the person is creditor. No. So we have to pay money. No. George account debited to bank. We have paid 20,000. Is this clear? Are you following this? Now, this story can be seen from three people's angle. George's angle, Jack's angle also. You should be able to pass journal entries for all the three angles. I hope it is clear. Yes. Next. Creditors to debtors. Yes, that's right. Next, I'm going into 15th question. Practice question number 3. This is advanced level question of Katrak. Following journal entries in the books of Dawn. Who are you? Dawn. Okay. Practical question number 3. Yes. Let's begin. Let's start. Now, see, once upon a time they have asked one 15-mark question also. December 2022. They can still ask. Recently they asked what? 10-mark question? 10-mark question it was. So they can ask 15 marks also. Clear? When they ask 10 marks, they'll ask only in the books of one person. If they make it 15, they'll make it books of both the persons. Okay, now first we'll finish this. Actually, this question will clear concepts. When you are solving at home, if you solve this question, no, it will make all your bills of exchange concept absolutely clear. First, who are you? Dawn. Entire question, you have to remember that you are Dawn. Clear? Shah Rukh Khan, you are. Dawn movie is there in some other language also, right? Huh? Telugu also Dawn, there is a movie. Not Dawn number 1, that old Telugu movie, not that. Dawn number 1, there is an old Telugu movie. One more Dawn movie is there. Huh? Is it Tamil? In Hindi also there is a Don movie. That's Don number 1, right? Old movie. Don number 1. It used to always keep coming on TV. Yes. Journalize the following in the books of Don. You are Don for this entire question. Bob informs Don that Ray's acceptance of 3,000 has been dishonored and noting charges of 40. Bob accepts 1,000 cash and balance at a bill of 3 months plus 10% interest. Don accepts from Ray's acceptance at 2 months plus 12% interest. Oh, ho, ho, ho. What and all has happened in your life after you became Don? What and all has happened in your life? Understand. Who are you? You are Don. Correct? Who has informed you? Bob informs you that Ray's acceptance has been dishonored. Bob has informed that Ray's acceptance is dishonored. That means Ray had accepted a bill from Don. For Ray it was bills payable. For Don it was bills receivable. This fellow has quietly endorsed it. He has endorsed it. So on the due date, Bob tried to collect the money but did not get the money. So Bob informed Don that Ray's acceptance is dishonored. Ray's acceptance is dishonored. What should be the entry? Bob account debited to Ray. Bob has to pay me money. Sorry. Isn't it Ray's account debited to Bob? Ray has to pay me money and I have to pay money to Bob. Ray has to pay me money and I have to pay money to Bob. Now, have a look at this. Ray's account debited to Bob 3040. Why did it become 3040? 40 rupees was noting charges. That fellow spent 40. He will not keep quiet. He'll ask you 40. Now you will not keep quiet. You will ask the next person. Is this clear? 3040. Now what happens? You have to pay money to whom? Ray, no. You have to pay money to whom? Bob, no. And Ray has to give you money, no. Both of them, we came to a settlement. What is the settlement here? Bob accepts 1,000 rupees cash. Bob told you, give me 1,000 rupees and balance, I will accept a bill with 3 months interest. Is it clear? Balance will be with 3 months interest. 10%. And then to whom I have to pay, I will accept from Ray's acceptance at 2 months plus interest at the rate of 12%. Are you getting this? Both the cases it is a bill. Did you understand this? Okay, old bill gone. We got one bill, we endorsed it, we did not get money, we have already passed the dishonor entry. Now, understand this. Bob accepts cash. That means Bob is taking cash and a bill, 3 months, 10% interest. Okay. Now, what should be the entry for that? Bob account debited 3040. Bob is not giving 3040. Bob will give extra. So, it will be 2040 into 10% into 3 divided by 12. You will get 51. Are you getting 51? Why did I take 2040 and not 3040? Because 1,000 rupees is paid now only. Extra time is asked for only 2040. Is this clear? Now, understand this. Bob, you are paying 1,000 rupees and remaining will become bills payable. See Bob here. Can you see Bob here? Bob was a creditor. You asked the creditor 3 months time and you told 10% is the interest. Is this clear? See how smart you are. Whom you are supposed to pay money, you asked 3 months time and 10% interest. Whom you are supposed to get money, you gave only 2 months time and collected 12% interest. Profit. Okay, Don accepts Ray from Ray his acceptance at 2 months. So now what is going to happen? Understand this. Bills receivable account debited to Ray to interest. How are you getting the 60.8? You can round it off in exam. Okay, 3040 into 12% into 2 divided by 12. Are you getting 60.8 or 61? 60.8. Is it clear? You are collecting interest. Okay, you are asking interest for 2 months. You are supposed to pay interest for 3 months. Is this clear? Even though it is, see, you are making a profit. Interest 60.8 collecting, giving only 51. Is this clear? You are not, your business is not this, but it happened. That's all. Now, did you understand this? Is it clear? Yes, let's go further. James owes Don 3,200. James has to give Don. Who is Don? Who is Don? Us. He sends Don's own acceptance in favor of Ralph for 3160 in full settlement. Who are you? Don. Who is the other person? James. Who is the other person? Ralph. What is happening? James owes Don 3200. James owes Don 3200. That means you are supposed to get 3200 from James. What has James done? He sends Don's own acceptance in favor of Ralph. Don had accepted some bill with Ralph. For Don it was bills payable. For Ralph it was bills receivable. What happened? Ralph has endorsed it to James. And now James is endorsing it back to Don. And that bill amount is 3160. Did your own bill come back to your pocket? Did your own bill come back to your pocket? Yes. So now the entry is bills payable account debited, discount account debited to James. Can you see when we had a similar question in the illustration, these guys didn't take it as bills payable. They took it as bills receivable. Then they cancelled the two. Coming into practical questions, here they didn't take it as bills receivable. Are you getting my point? So that's why there I struck it out and wrote you can take directly bills payable because it is your own bill which is taking a circle and coming back to your pocket. Clear? Yes. Next. Third one. Don meets his acceptance in favor of Singh for 4500 by endorsing John's acceptance of 4450 in full settlement. Oh. What is the situation? Who are the three people? Who are you? Don. And who is the other person? Singh. And who is the third person? John. Now what has Don done? Meets his acceptance in favor of Singh. Meets his acceptance means Don had bills payable, Singh had bills receivable. Correct? How did he meet this acceptance of 4500? By endorsing John's acceptance. John had given him one bills receivable and for John it was bills payable. But the problem is this is 4500 but this is 4450. When you are supposed to pay somebody 4500, if you give 4450, is it good or bad? Is it good or bad? Good, right? Discount. Discount. See over here. Bills payable account debited to bills receivable to discount account. Why am I not using the word rebate here? Rebate is only in case of retirement of a bill. Rebate is only in case of retirement of a bill. Don't use the word rebate wherever you find discount. This is somebody paying early, somebody paying late. Are you getting my point? No retirement is happening over here. 4. Raise acceptance in favor of Don. Retired 1 month before due date. Interest taken at the rate of 6%. Where are the amounts for this? Up. Over here. Raise acceptance in favor of Don. Retired 1 month early. You have to go up and see. What was raise acceptance? 3100.8. How much early did he pay? 1 month early. So 3100.8 into 6% into 1 divided by 12. 15.50. Can you see? 15.50. Here also they have used the word discount, but here you can use the word rebate. It is better to use the word rebate because rebate is the correct word. What I see is doing, some places they are using rebate, some places they are using the word discount. So you consistently use one thing, right? Rebate for retirement. Can you see bank account debited, rebate account debited, to bills receivable? Is this clear? Ray has paid you money early. This is your question of Don and Bob and Ray and so many other people. Yes. What next? What next? We have one question. We have one question that is 15-mark question, which is bill for accommodation. Bills for accommodation. Okay. They have asked in the books of T and J. One book I'll do, other book you have to look at it. Okay. In the books of T I will do. J will be like, have a look at it. It's just the mirror image. Now, this is bills for accommodation. Clear? Question number 3A. Okay. December 2022. Yes, here you go. We will first think from T's angle. Who are you in this question? You are T. Correct? In this question, you are T. Now, T draws on J a bill of exchange for 1,80,000 on 1st April. J accepts the bill and sends it to T. Okay. What is the entry? For you, what is it? Bills receivable or bills payable? Bills receivable, because you have drawn the bill and the other person has accepted the bill. Bills receivable account debited to J. Is it clear? Yes. Next, what did you do? Who gets it discounted from his banker for 170 to 800? Did you get it discounted? Did you get 180? No, you got only 170 to 800. So bank account debited, discount account debited to bills receivable. Is this clear? Bank account debited, discount account debited to bills receivable. Any doubt about this? Again, here the correct thing to write is discounting charges. Instead of writing discount, write the word discounting charges. Next, after that, T immediately remits 57,600 to J. How much is sending? 57,600. Understand this. How much did you get? 170 to 800. How much are you giving to J? 57,600. 600. So out of 170 to 800, if you have given 57,600, how much is it? 1,15,200. Is it in the ratio of 2:1? Are these two amounts in the ratio of 2:1? So do you agree that the amount is shared in the ratio of 2:1? If amount is shared in the ratio of 2:1, discounting charges should also be shared in the ratio of 2:1. How much is the discounting charges? 7,200. This also should be shared in the ratio of 2:1. Can you find it? 4,800 and 2,400. Is it clear? Now I am sending money. When I am sending money, I am also telling him your discounting charges is 2,400. See this entry. J's account debited 60,000. How did we get 60,000? 57,600 plus 2,400. So I am telling J, take 57,600, but you have to pay me 60,000 because your share of charges is 2,400. To bank 57,600. To discount 2,400. To discount 2,400. Is this clear? 57,600. Can you see why discount is credited? Because for me expense is reducing. I am putting the expense on his head. So for me expense is reducing. That's why expense is credited. Is this clear? Next, after this, on the due date, T being unable to remit the amount due. On the due date, who is supposed to make the payment?
T.
No, J is supposed to make the payment to bank. But I am supposed to give my share. I am supposed to give my share. So I did not give my share. So what will J do? J will still make the payment. J is still making the payment. Are you getting my point? So in J's books, no, entry will be there. Bills payable account debited to bank. Let's see it. I am not giving my share. But in J's books, can you see there is an entry on 4th July, bills payable account debited to bank. Even though I did not pay the money to him, what I am supposed to give, he has made the payment to bank. Clear? Now, let's go further. But what will J do? J will be like, boss, you are supposed to give me money. Entire amount I did not enjoy. You also enjoyed some amount. I also enjoyed some amount. So your share you did not give. So what is happening? Accepts a bill for 2,52,000 for 3 months, which is discounted by J. Now simple. See, this will become like a chain activity. I draw bill on you. You accept and give it to me. I will go to bank and discount. We will share the money. On the due date, I will not give the money. So I will tell, you draw bill on me. I will accept. You take the bill. You discount it with the bank. And we will share the money. Can you see it will go on forever like a chain activity? Correct? Okay. So here what happens now? Last time T had drawn the bill. This time T is accepting the bill. How much? 2,52,000. What should be the entry? J account debited to bills payable. Can you see J account debited to bills payable 2,52,000? Any doubt with this? No. Next, after that what happens? Gets it discounted with his banker for 2,40,660. Who got it discounted? J. Should you pass entry? J got it discounted. Should you pass entry? No. J sends 40,440. Should we pass entry? Yes. Now tell me one thing. 2,52,000 bill, 2,40,660 is received. What is the difference? Can you give me the difference? 11,340. 11,340. Is that correct? This much is the discounting charges. It will be shared in what ratio? 2:1. That means how much will be for T, how much will be for J?
For the K.
7560 for T and 3780 for J. Correct? Now tell me one thing. I am getting money or I am giving money. I am getting money or giving money. Getting money because he has discounted the bill and I am getting money. How much am I getting? 40,440. But not only 40,440, I have to put this expense also into my pocket. So now you can see the entry. Bank account debited, discounting charges debited to J's account. Forget about this calculation. You know how to calculate it. Bank account debited, discounting charges debited to J's account. 48,000 round figure. Clear? Now see what happens. Before the maturity of the bill, T becomes insolvent. First bill, I was supposed to give the money to J. J made the payment. Second bill, I am supposed to make payment to bank. I became insolvent. Who will make the payment now? J. In this case, both the bills, payment is made by J only. If you see, no? If you see over here, T's account debited to bank. Can you see second bill also he only made the payment. Why is this happening? In both the bills, he is not the drawer, no? Or the drawee, no? First bill, he was drawee. I didn't give my share, but still he made the payment to bank. Second bill, he was drawer who got it discounted because I did not pay. Bank took the money from him. Are you getting my point? Both the bills. Before maturity, T becomes bankrupt. Who are you? T. You became bankrupt. So what is the entry? What is the entry? That bill should be dishonored. No. Bill dishonor entry will be there. Wait, yeah, we are here. Bills payable account debited to J. Finally, this entry you have to find. Okay. Finally, they said T becomes bankrupt and is estate paying 50 paise in a rupee. That means T could give only 50%. Remaining 50% he could not give. So how will you find this? See, in the question, in the solution, they are not giving any ledger, but it's for you. It is better to prepare a ledger. What will you do? Whose ledger will you prepare? You will prepare T's account. First journal entry. Do you have T in this? I'm sorry. What T's account you'll prepare? You'll prepare J's account. Your only T. Your only T. No. In your books, you will not prepare your ledger. So you'll write J's account. J's account first entry. Do you have any debit or credit? Debit or credit is there? Credit. What will you do? 1,80,000. Is this clear? Okay. Yeah. By T you will write. I mean by J you will write. I mean by bills receivable you will write. Yes. Next. Second entry. Do you have J? No. Third entry. Do you have J? Yes. 60,000, right? You will not write 60,000 actually. 2 bills receivable and 2 discount. Both you will write. Now, then do you have J? Yes. Debit for 2,52,000. After that, do you have J? Yes. Credit for 48,000. After that, do you have J? Yes. Credit for 2,52,000. Use your calculator and find out and tell me, should you pay money or should you get money? TTT in the books of T. Should you pay money or should you get money? How much? 1,68,000. Are you going to pay anything? Are you going to pay anything? 50%. Other 50% you won't be paying. What is this called? What is it called? What is it called? It is called deficiency. Bad debt is for the other person who is not getting money. For me, it is good debt. How is it bad debt? For me, it is good debt. I don't have to pay money only. Are you getting my point? So we won't call it good debt. You have shortage to pay money. So you will call it as deficiency. You can see the entry here. Good day, good day. J's account debited to bank to deficiency account. Is this clear? No. 1,68,000 you got, no? Divide by 2. How are you getting 100? What did you have for lunch? Did you also have masala dosa with these people? Masala dosa is not working. The oil, it's not working well. What happened to you? How come mask after lunch? Hey, what did you do? She thought she couldn't take this. Yeah. When we all returned, there was some smell in class. I don't know what it is. Yes. Okay. Now listen. Did you call it deficiency here? Shh. Did you call it deficiency here? For the other person, it is. Can you see the opposite entry there? Bad debt. Is this clear? This is your accommodation of bill situation. Actually, with this, bills of exchange is done. Done. That exam question we have to see. Because a lot of people have been telling that exam question is difficult. So just for their satisfaction, we will see that examination question. Lot of people, including Chirag. Okay, we'll just have a look at that question. We'll go to your friend's website. Your best friend's website, we'll go to ICAI. Not study material, we need BOS knowledge portal. When you go to BOS knowledge portal, you will see the photos of your friends. These people are solely responsible for the results. Remember, previous question papers. Yeah. Jab Harry met Sejal. There was this movie called Jab Harry Met Sejal. It is happening in exam. 10 marks. Now, I'll tell you examination mindset. Examination mindset. You will see true or false. You'll attempt it. Obviously, people will attempt true or false because it's quick. Then you will see one dummy theory question is there. You will write some bakwas for that also. Okay. Because bookkeeping and accounting from PUC you are seeing this. Then past necessary journal entries, errors, easy errors, whether you'll solve that. You are like 20 in my pocket. Okay, 20 in my pocket. You'll feel happy. Then you'll go to this question. BRS, easy BRS question. Nothing is there. 10, 30 in your pocket. Then you will be thinking, 3 questions, easy it was there. Why don't I attend this 10 mark question also, bills of exchange? 40 marks I can put into my pocket before even I go to partnership and other things. And you start attempting this question. Clear? Jab Harry met Sejal. Now, Harry draws bill on Sejal for 60,000. You're like, what is this? First you have to go to the end of the question. Journal entries in the books of Sejal. Do you want me to solve fully or just tell? I'll just tell. Okay. I think it's better I solve. A lot of people are having confusion in that. Till now? Till now what? Yes. Let's continue. Okay. In the books of Sejal. Who are you, boss? Sejal. Correct? Yeah, draw it. Theory part was only 4 marks. Yes. Okay. Shh. Who are you? Sejal. Think from Sejal's angle. Correct. Harry draws bill on Sejal on 1/1/2023. Sejal accepts the bill and sends it back to Harry. What is the entry? 1/1/2023. Harry account debited to bills payable. How much? Shh. How much? Oh, you don't have the question. What I'm asking you? 60,000. 60,000. No problem till here. There is no problem at all. Now, after that, Harry gets it discounted for 56,000. Who gets it discounted? Harry. Who are you? Sejal. Ignore. Harry remits 1/4 of the amount to Sejal. 1/4 of the amount. Correct? Now, 1/1/2023. Bank account debited. 56,000 into 1/4. 14,000. How much was the discount?
4,000.
4,000. So discount account debited. 4,000 into 1/4. This will be 1,002. You are only Sejal, man. To Harry. In the books of Sejal. So to Harry. Is this clear? I got money. I will put the share of my charges also into my head and I will pass the entry. Next. Till here, no problem. Till here, there is no problem. On the due date, Harry was unable to remit his share to Sejal. Boss, this is the question you are stuck in and you are asking him which attempt. Yes, on the due date, Harry was unable to remit his share to Sejal. Harry was unable to remit his share to Sejal. Who are you? Sejal. Even though Harry doesn't give you money, you will pay the money to bank. Correct? You will pay the money to bank. What is the due date? 1/1/2023. Can I take it as 4/4/2023? Correct? Entry. Harry account debited to bank account. How much will I pay? Sorry, not Harry. Bills payable account debited to bank account. How much will I pay? 60,000. Is this clear? Shh. Is it clear? Yeah. So what? When I pay money, I'll pay full money only back. If I took 56,000 from bank and gave 56,000 to bank, then 4,000 is profit for me. Bill is not dishonored. Bill is not dishonored. I am paying the money. I am having bills payable over here. I am making the payment. No debtor. I am the debtor. For me, it is creditor. I had accepted a bill. I am making the payment. In their book, no entry. In their book, what entry will be there? You have made the payment to bank. There is no entry in their books. Is it clear? Shh. Yes. Now, after this, silence. Now we'll see what happens. Okay, remit is share to Sejal. Rather accept a bill for 80,000 for a period of 3 months. Who accepted a bill?
Harry.
Harry accepted a bill. So what will be the entry? 4/4/2023. Bills receivable account debited to Harry's account. How much?
80,000.
80,000 bill. Can you see over here? 80,000 bill. Now, understand this. This bill was discounted by Sejal for 74,600. Are you Sejal? Okay. 4/4/2023. You will write bank account debited 74,600. Discount account debited 5,400 to bills receivable 80,000. Any problem till here? No problem. Till here there is no problem. Okay. After that, Sejal, after making payment of the first bill, sent 3/4 of the amount remaining to Harry. Here everyone got stuck. Okay. Sejal, after making payment of first bill, sent 3/4 of the amount remaining to Harry. How much did you get from bank?
80,000.
No, you didn't get 80. You got 74,600. You use this money to make the payment of the first bill. What was the payment of the first bill? 60,000.
14,600.
You have 14,600. What will you do?
3/4.
In that 3/4, after making payment of the first bill, send 3/4 of the amount to Harry. 10,950. Send 10,950.
Yes, sir.
Sure?
Yes, sir.
Yes. To whom?
Harry.
So you'll write over here, Harry account debited to bank 10,950. But when I'm sending money, yes, when I'm sending money, I have to put the discount also onto his head. How much is the discount? The discount is 5,400. How do we know it is 5,400? 80,000 minus 74,600, 5,400. Is that correct?
Yes, sir.
5,400 discount. How much will I put on Harry's head? How much will I put on Harry's head? Are you sure? Last time also 1/4. This time also 1/4. If the ratio changes here also, the ratio will still remain same. So how much did I get last time money? 1/4. That means 3/4 I have to put onto his head. 5,400 into 3/4. 4050. Add these two.
15,000. 15,000.
15,000. Is this clear? 15,000 rupees you have put onto Harry's head. After that, what has happened? After that, what has happened? On maturity of the bill, Harry became bankrupt and his estate paying 40 paise in a rupee. Who became bankrupt? Harry. How much will he pay? 40 paise. But what has happened? The second bill was for how many months? 3 months again. 7/7/2023. You only have to pay the bill. You will pass the entry. Harry account debited to bank account 80,000. Can you see both the bills you only paid? First bill you paid because you were drawee. Second bill you were paid because you were drawer and you had discounted the bill. And when the bill dishonored, bank took the money from you. Is it clear? So in the T and J question, what we had ignored in the books of J has happened over here in the books of Sejal. Clear? Finally, what you are supposed to do? Prepare a ledger. Prepare a ledger. You'll get to know how much you are supposed to get. First entry, how much? Harry is debited for 60,000. Second entry, Harry is credited for 15,000. Third entry, Harry is not there. Fourth entry, Harry is credited for 80,000. Fifth entry, not there. Then sixth entry, Harry is debited for 15,000. And the last entry, Harry is debited for 80,000. Which side is more? Debit side is more. 80, 15. 15 gone. 60,000 is there. 60,000 who has to give to whom? Harry has to give to Sejal. Who is Sejal? You only. How much is he giving? 40 paise. So the entry will be on 7/7/2023. Bank account debited 60,000 into 40%. 24,000. Remaining, are you getting or not getting? Bad debts debited 60,000 into 60%. 2. Huh? Bills receivable and all gone. Harry account. This was the question. It was tough. It was not simple. It was tough. But what was tough? Only this point, no. We had it in a different question like this. But this language, see, I keep telling in class, concept you have to study, obviously. And it also becomes a language game in the exam. You have to understand what they are trying to tell you. Concept you know. Now you know, right? If I tell the amount, you know how to pass the entry for amount sent. But most of the people were stuck to find out what is the amount. I know the entry, but what is the amount? Are you getting my point? So this one entry, I agree, it is new and like a small twisted thing they put in the exam. Rest of the things are all normal accommodation situation only. What we saw in T and J, that only was there here also. Clear? Yes, 10 mark question was asked in the exam, I think. 45,000. No, that's not right. Yeah, that is not right. Because that is on the day of the exam, right? Then when we analyze the question properly, we get a better picture. But this is better. Still we don't know because ICA has not released suggested answers. What approach they have taken, we still don't know. But I feel according to the language in the question, 3/4 of the amount remaining. That means whatever is remaining, 3/4 is distributed. Yes. With this, we have finally finished bills of exchange. After we finish bills of exchange, we go into final accounts. And we have just touched 4 o'clock. Sir, can we change the order of questions in the exam? Yes, you can. And can it be at random order based on what we are thorough with? Yes, you can. But all the sub questions you write together. Sub questions you write together. Don't put the sub questions there. Final accounts 1 or 2 full-fledged questions are there. We can push it to tomorrow, no issues. But tomorrow will be lengthy. I'll give you 12 minutes break. 12 minutes break. It is 4:03. We'll start at 4:15. Final accounts. Final accounts. Now. No, do you want to skip the good part? Yes. Now, understand this. This is my analysis. I don't think ICA can ask final accounts and incomplete records big question. If they ask, you should be very happy because in both the places you are doing the same thing. Trading P&L balance sheet. Here, information is given on the plate. From that, you are preparing trading P&L balance sheet. In that, information is hidden in the kitchen. You are searching it and then preparing trading P&L balance sheet. In incomplete records. That's the only difference. But both the places you will be preparing pulao. Clear? How you prepare, that is left to you. One, it might become fully charcoal. Other one, it might be proper pulao. Okay, so out of the two, both are same functions. So they might ask one of them. Final accounts. You have manufacturing as well as non-manufacturing. If it is manufacturing, what are the things that you are supposed to prepare? Manufacturing account, trading account, P&L account and balance sheet. Why do you prepare manufacturing account? To find the cost of the manufacture. Why do you prepare trading account? To find gross profit or loss. And P&L account is to find net profit or loss. And balance sheet is always to see the position of the business. Clear? Yes. Trading account, we know. Just quickly we'll glance through what and all will be their opening stock. Purchases, less returns. Purchases, less returns. Sales, less returns. That means purchase return has to be subtracted. Sales return has to be subtracted. And we have to show the net amount. Closing stock will always be there. And then you have direct expenses and gross profit carried down or gross loss carried down. Journal entries for preparation of trading account. I'm not discussing that. You know that. You can see the trading account and same journal entries you will pass. Then we go into P&L. In P&L, what happens? All the indirect incomes and all the indirect expenses will be there. All indirect incomes and all indirect expenses. Whom are you searching for? No. That means even you are not focusing. Then why did you react? Done? No, you are searching inside your pouch. I thought someone is hidden inside that. No one is hidden, no? Yes, we'll search. We'll look into this one now. Yes, this is your briefing of P&L. I don't think at marathon level you should have any trouble in P&L. How it P&L looks. Balance sheet, position statement. Okay, for better presentation, always keep fixed assets in the first half of your balance sheet and current assets in your second half of your balance sheet. Better presentation. They can cut 1 mark if they want to. Always capital will be in the first half, long-term liabilities after that. Then you will show the current liabilities. Clear? Now we'll go into adjustments. These are the ones which cause trouble. Correct? Before we go into adjustments, adjustments are always given after the trial balance. So you know by default what is given in trial balance I have to put into 2 places.
One place, inside trial balance, one place.
One place. What is given outside trial balance we have to put into 2 places. Why this 1 2? Why this 1 2? How does an item come into the trial balance? Because a journal is passed or subsidiary books is prepared. From that it goes into ledger. From ledger it goes into trial balance. Because you have recorded the transaction, it is sitting in the trial balance. That means double entry system of accounting is followed. You just put into your final accounts. If you see something in the additional information, that means it is not in your trial balance. That means entry is not passed. If you pass the entry, what will happen? Double entry system of accounting. That is why it affects 2 places. That is why it affects 2 places. Clear? Yes. First adjustment, depreciation. See how I have presented it here. If it's given in trial balance, what you will do. If it's given in adjustment, what you will do. Now, first we'll discuss. If anything you find in the trial balance, no. You just have to decide, is it an income, expense, asset, liability? If it's income or expense, directly into trading or P&L. If it's asset or liability, directly into balance sheet. Clear? What is depreciation? Expense. Therefore, if it is there in the trial balance, directly it will go to P&L debit side. If it is given in the adjustment, it will go to P&L debit side and it will also be subtracted from the asset. Is this clear? Yes. What if provision for depreciation is there? In the trial balance, if it is there, provision for depreciation is not an expense, it's a liability. Take it to balance sheet and subtract it from the asset. If it is there in adjustments, if it's in the adjustments, P&L debit because entry for depreciation, remember morning, depreciation account debited to provision for depreciation and in balance sheet you will subtract from the asset. Clear? Yes. Drawings. If it's given in trial balance, don't worry anything, just subtract it from capital. If it's given in adjustments, then you have to worry whether it is in cash or it is in goods. If it is in cash, subtract it from capital and also subtract it from cash because the entry is drawings account debited to cash. If it is in goods, subtract it from capital and also subtract it from purchases because the entry is drawings account debited to purchases. Is this clear? Veg biryani. Outstanding expenses. Some non-veg person making fun of vegetarians. Veg biryani it seems. Hey, veg biryani is also there. It's very tasty. Do you know that? Always non-vegetarians, they always tell that biryani cannot be veg. Huh? Why? No, but veg biryani is also there in the menu and it's very tasty. It's there. Huh? What? See, go to this place called Rameshwaram Cafe. Too much hyped place. Okay, go there and check. In the menu there is veg biryani. Huh? They'll give biryani instead of? What is there to satisfy? We are happy. You think they are unhappy? We are happy about eating veg. Few animals survive. Yes. Let's continue. Huh? Chirag is also vegetarian only. Who eats giraffe? Yeah.
Some animals like
I still haven't found the person who eats elephant. Okay, and giraffe.
people can survive without non-vegetarian.
Sorry, that was out of syllabus for me. Let's continue. Okay. Next, outstanding expense. If outstanding expense is given in the trial balance, what will you do? It's a liability. Straight to balance sheet liability side. If it's given in adjustments, then what will you do? Add it to the expense and then you show it in the balance sheet liability side. Prepaid expense. If it is given in the trial balance, prepaid expense is an asset. So directly into balance sheet asset side. And if it's given in adjustments, then subtract it from expense because it is next year's expense and then show in the balance sheet asset side. Income accrued means income receivable. Income receivable is asset or liability? Asset. So show in the balance sheet asset side. But if it's given in adjustments, then add it to income and then show in the balance sheet asset side. Is this clear? Then you have income received in advance. Liability. Take it into balance sheet liability side. But in case it is there in adjustments, which will happen many times in NPO chapter, if it is there in adjustments, reduce it from income and show it in balance sheet liability side. Why are you reducing it from income? Income received in advance means it is next year's income. Remove next year's income and put it into next year only. Bad debts. Bad debts. If it's given in the trial balance, debit P&L directly. If it is given in adjustments, debit P&L and you have to subtract from debtors because the entry for bad debts is bad debt account debited to debtors. Clear? Provision for bad debt. Amount kept aside for expected losses in future. We know that what is provision for bad debt. Okay, if it's given in trial balance, directly in the balance sheet, debtors minus. If it's given in adjustment, you have to pass the entry. What is the entry for provision for bad debt? P&L account debited to provision for bad debt. So P&L account will be debited and balance sheet you will subtract debtors. Provision is a liability. For better presentation, you bring it to the asset side and you subtract it from debtors. Clear? Examples. In trial balance, I have debtors 5 lakhs. We'll go through all these examples because provision is one adjustment where people make a lot of mistakes. Okay, in trial balance, debtor is 5 lakhs. Bad debts 5,000 in trial balance only. In trial balance only. So what will I do? Directly that 5,000 will go to P&L, profit and loss, and balance sheet will have 5 lakh only as debtors. Is this clear? Because already bad debt is subtracted. Bad debt, in case it is given in adjustment, then what will you do? You will show it in P&L and see debtors has become 495. Debtor has become 495 because you will subtract from debtors as well. What if there is PBD and PBD is shown in the trial balance? If it is shown in the trial balance, directly it should go to balance sheet. In balance sheet, debtors minus PBD will be shown like this. Is this clear? Debtors 5 lakh. Liability, you bring it to the asset side and subtract it and show it over here. Next, if PBD is given in trial balance 10,000. PBD is given in trial balance 10,000. What will happen that time? And they tell you maintain 5% in adjustments. So you will calculate 5 lakh into 5% is 25,000. How much did they ask you to create? 25,000. How much do you already have? 10,000. That means extra what you are creating? 15,000. What you create extra, that goes into P&L. That will go into P&L. The total provision will be subtracted in the balance sheet. Total provision is 25,000. 15,000 was already there. 10,000 was already there. 15,000 you created. Is this clear, this example? Now, PBD is 30,000 in trial balance. Maintain PBD 5% in adjustments. Debtor 5 lakh into 5% is how much? 25,000. How much do we require provision? 25,000. How much do I have here? 30,000. Do I have more? So I have to reverse the provision. When I reverse the provision, what will happen? P&L will get credited. P&L will get credited. In balance sheet, I will remove only 25,000 because I want only 25,000. Is this clear? Now, in trial balance, you have PBD 25,000. Already 25,000 is there in trial balance. In adjustments, they have told bad debts. In adjustments, they have told bad debts. What will you do? P&L, nothing. Why nothing? Why will you do nothing? Because you already have provision. Remove 6,000 from the provision. Remove 6,000 from the provision. So now what happens? Debtors 494. How it became 494? After bad debt, debtor became 494. 5 lakh minus 6,000. That makes it 494. Provision is not 25,000. Provision, you have removed 6,000 from the provision because there was bad debt. minus 19. You'll get result of 475. Clear? Now, look at this note. If PBD exists, then bad debt to be reduced from PBD. If PBD is not there, then bad debt to be debited to P&L. Is it clear? What is PBD? You take money and keep it aside. If at all there is bad debt, you take from PBD. If there is no money kept aside, then there is bad debt. Take from P&L itself. Is this clear? Yes. Last one in the examples. PBD is 25,000. Okay. In adjustment, in trial balance. In adjustments, they have told bad debt 6,000. And they also told maintain PBD at 8%. 8%. Clear? Now debtors minus bad debt, you are reaching 494. You are reaching 494 after bad debt. On that, you are calculating 8%. When you calculate that, you'll get 39,520. This is the provision required. Do you already have some provision? How much? 25,000. But out of 25,000, 6,000 went. 6,000 went. So you have only 19,000. So 20,520 will be provision to be created. Did you understand this example? Very important example. All things are covered in this example. We just escalated slowly and include everything in this. So now in P&L, expense provision will be 20,520 because the created amount is 20,520. In balance sheet, what will subtract? Total provision, not 20,520. Entire provision will be subtracted and you'll get the result. Is it clear?
Yes, sir.
After this, closing stock, one of the most common one. Closing stock. If it is there in adjustment, most of the time closing stock is there in adjustment only. If closing stock is there in adjustment, what will happen? Trading account, credit side, balance sheet, asset side. Clear? Now, important. If closing stock is there in trial balance, does it happen? Yes. That time in the trial balance, what you see is adjusted purchases. Adjusted purchases means they have done this. Opening stock plus purchases minus closing stock. They have done that. That is why closing stock is coming into trial balance. If at all closing stock you find in the trial balance, directly to balance sheet as asset. Directly to balance sheet. You will not put that closing stock in trading account because the trading account effect is already done. See over here. If I have purchase of 100 and closing stock of 20, this will give me a net result of 80 in trading account. If they have already subtracted, that means they have done this subtraction. Are you getting this? Okay, this is one important thing. Very rarely, some places they have put these things. So you have to remember it. Oh, that's what. Closing stock, you will directly put it into balance sheet asset side because it is there in the trial balance. If closing stock is outside the trial balance, then trading account, credit side and balance sheet asset side. Yes, because closing stock is asset. No, so directly to balance sheet. Now, opening entry, closing entry. 4 marks questions can be asked. What is opening entry? What is opening entry? Entry passed to open the books of a particular year. All assets will be debited, liabilities will be credited and capital will be credited. Closing entry to remove everything. So opposite, liabilities will be debited, capital will be debited and assets will be credited. Is this clear? Okay. Provision means amount set aside for a particular purpose. Reserves means amount set aside for future. One question is there in your study material where they ask you to tell whether it is transferred to provision or transferred to reserves. So provision means what? You're keeping money for a particular purpose. Reserve means what? You're just keeping money aside. You can use it for anything in the future. Is this clear?
Yes.
Now, what if it is manufacturing concern? Manufacturing account has to be prepared, correct? Manufacturing account is extra. Everything else what we discussed is same. Now, what you have to do? Look at the manufacturing account. Most common items. Opening stock of WIP and closing stock of WIP. Now, what you have to understand here is, see, in stock you have 3 types of stock. Today only we did inventory. What are the 3 types of stock, Arnav? What are the 3 types of stock? Raw material, work in progress and finished goods. Now, when we have 3 types of stock, raw material and work in progress will go into manufacturing account because they are directly related to manufacture. Finished goods is related to trading. Once the goods are finished, then the manufacturing process is completed. What will you do with those goods? You will trade in those goods. So that will go into trading account. Is it clear? So, carriage inwards always to manufacturing. Usually you used to put it to trading account. But here manufacturing. Why did you purchase goods? So that you can manufacture. correct carriage outwards will go to P&L account. Is this clear? So many things have been asked. Sir, insurance and LIC proceeds are sometimes confusing. Could you explain how to treat this in P&L and balance sheet? Insurance and LIC proceeds. If they tell insurance of proprietor paid, then it is drawings. Remove it from the expense and subtract from capital. If they tell LIC proceeds received, whose LIC proceeds? Owners, right? Yes. Then it is additional capital. Add it to capital. Sir, how important is chapter 2? Because there are many units to cover, and which part is mostly important? Actually, chapter 2, rectification of errors, is the most important thing. But we have discussed in the morning, you can't do rectification without studying journal, ledger, subsidiary books, trial balance, and cash book. So study all. They might not ask question, but it will help you in some or the other place. Yes. Supervisor's salary. One supervisor is sitting and seeing the people who are doing work. People are eating and supervisor is standing and seeing. So, that supervisor's salary, will it go to manufacturing account or trading account? Manufacturing. Because if the supervisor is not there, they will not work. Are you getting my point? Next, rent. Rent. If the rent is for factory building, manufacturing account. Rent is for go down, manufacturing account. Rent is for office building, P&L. Is it clear? Depreciation on machinery used for manufacture, manufacturing account. Depreciation on factory building, manufacturing account. Depreciation on office building, P&L. Depreciation on vehicle. If the vehicle is used for factory vehicle, manufacturing account. Truck will be manufacturing account, motor car will be P&L. Is this clear? Heating and lighting. Divided on the basis of floor area. Heating and lighting divided on the basis of floor area. Is it clear? They will only give in the question the floor area. You will just divide it. One guy was there. He got married. Then his father sent him to 14 years. Okay. Then finally he fought and all and he got his wife back. Then someone asked what is the relationship between them. Because when we were discussing carriage inwards and outwards, you were having some food inwards. That is why you didn't remember that we have already discussed this. Yes. Carriage inwards manufacturing. Yeah. Discount on debtors, just like provision for output debts, you will subtract it. That's it. No, in P&L you will debit it and in balance sheet you will subtract. Yes, that is it with the concepts of final accounts. There are few questions which we have to discuss. No, we are doing it today. No, we are doing it today. We'll do it today. Final accounts SM12. Small question. And 18 SM. See, basically, on the previous day of the exam, you don't have to sit and solve all the questions of final account. See, one question is there, Gavaskar. Solve that. Most things are covered in that. I remember. Gavaskar. You're from Maharashtra. We should respect that. Next. Ganguly. Yes. The two questions actually covers almost all kinds of adjustments. Okay, if you do these two things, you will be done with final accounts. One exam question I have picked not to solve it, just to show you that same type of adjustments are asked. Clear? After that you have one question, examination question, where you have manufacturing account, trading account, P&L account and balance sheet. That's it for the day. Let's start. Yes, full focus. Okay, I think if you focus fully, in half an hour we'll finish. In half an hour we'll finish, yes. Huh? Wait, what? You thought it is completed. That is because you are searching in your pouch. You didn't know what was completed. Yes. Huh? Either we do all or we do none. We do all or we do none. I'm fine with anything. See, tomorrow you have no end time. We have to finish the syllabus tomorrow. So either you go early today or stay back late tomorrow. Tomorrow it's starting at 8:30, it seems, by the way, not 8 o'clock.
Okay.
That's what I heard. Today it was 8. Okay. One question we'll do today and the rest we will do tomorrow. What was? Yeah, we can finish all 4. No, 3 I'll do. Okay, fine. We'll do it tomorrow. Huh? No, tomorrow we have lesser number of chapters. Okay, we'll do it tomorrow. Thank you. See you tomorrow. See the online guys, full strength from morning. Okay guys, see you tomorrow. Bye bye. Yes, good morning everyone. Let's begin. Day 2 is a smaller day because we have lesser number of chapters. We only have final accounts ka problems. Then we have NPO or partnership. We'll start with partnership only. After partnership, we have NPO. After NPO, we have company accounts. I don't know the order of in which order I put the questions. I forgot. Okay, but we have this. But morning session is partnership. After we finish final accounts problems, we are going for partnership. 20 marks weightage. Company accounts, 25 marks weightage. NPO roughly around 8 to 10 marks weightage. All these are sure shots. They surely will ask questions from these chapters. And finally, incomplete records, the last thing. Okay, incomplete records. You cannot study that chapter and tell that exclusively I have covered everything because anything can be incomplete. So for you to be strong in incomplete records, you need to be strong in all chapters. Okay, you need to know everything because anywhere it is incomplete, you should be able to do it. But at the foundation level, unlike the inter level, it was at inter stage before, they used to ask a lot of complicated questions. They have reduced that level of toughness in that chapter because they just want you to get introduced to that chapter. Okay, so let's start. Yesterday we were done with final accounts concepts. We'll start with first question. Question number 17, SM12. I told you that Gavaskar question and that Ganguly question. 2 important questions in final accounts. Question number 12. You're late. Food is late. For your food only from 8 o'clock, we made it to 8:30. You should have taken the food and come walking, eating. On the way, yeah. Yes. This is question. This is the question. Okay. The Gavaskar question. Now, let's start. What we have to understand always, we need to have an eye on the adjustments. Whenever we do final accounts questions, we need to have an eye on the adjustments. If the adjustments are sorted, then the trial balance is basically fill in the blanks. It's fill in the blanks because what is there in the trial balance, you're going to put it somewhere in the financial statements. Now, first, have a look at this. Prepare trading account and P&L account for the year ended and the balance sheet as at that date after making the provision for the following. See how nicely they have introduced even rectification in this question. Depreciate building used for business by 10%. Building 10%. So, 5%. So what will you do? 2 effects. We already know the 2 effects. Reduce the building and put the depreciation in P&L, profit and loss. Okay. Furniture and fixtures by 10%. Okay, this we also know. Same treatment. One steel table purchased during the year for 14,000 was sold for same price, but the sale proceeds were wrongly credited to sale account. What was sold? Steel table. Furniture was sold. What did they do? They put it into sales. So you have to remove from sales and you have to remove from furniture also. Furniture sales. You have to remove from sales and you have to remove it from furniture also. Let's see if they have a working note for it. No, they don't have a working note, but You can see they have shown it over here itself. What is the furniture value? 2 lakhs. Correct? It is not 2 lakhs, it's actually 2 lakh 40. You can check the question. Furniture is at 2 lakh 40. Where is furniture? Here. Sorry, 2 lakh 14. After removing that 14,000 for that whatever it is, that time it has reached 2 lakh. Clear? So this will be 2 lakh minus 14,000. And where is the other effect of this 14,000? Sales. So what is our sale value? 23 lakhs. Can you see? So 23 lakh minus 14,000, and if there is sales written also, it will be subtracted from sales. Clear? Did you understand that adjustment? So after you reduce that 14,000, then only you are able to calculate depreciation. Clear? Next. I will go back into the question. Now, office furniture, office equipment by 15%. You know depreciation, same treatment. Depreciation will be shown in P&L and you will subtract it from office equipment. But here also there is a rectification. Purchase of a typewriter during the year for 40,000 has been wrongly debited to purchases. What did you purchase? Typewriter. It is wrongly debited to purchases. So now what happens? Remove it from purchases, add it to typewriter. Remove it from purchases and add it to typewriter. Correct? So what we will do? Where is our purchases? Over here. 14 lakhs. So you will subtract from 14 lakhs 40,000, and to office equipment you will add 40,000. So this will become 160 plus 40,000. So that time it becomes 2 lakh. On that value you will calculate depreciation. You cannot calculate on 160, you will go wrong. Clear? Next, after that what happens? Motor car by 20%. Direct. What will you do? Calculate depreciation, remove the depreciation from the car and put it into P&L. Clear? Value of stock at the close of the year. This is closing stock. What are the two effects for closing stock? Putting into trading account and showing in balance sheet as asset. Clear? 2 months rent for go down is outstanding. This is a little important adjustment. They usually when they tell outstanding, they tell you outstanding rent 5,000. Outstanding salary 2,000. They tell that. What is the treatment? We'll find the amount. But what is the treatment? Add it to rent and then you show it in the balance sheet as liability. Now here what has happened? 2 months rent is outstanding. So you have to go and find where is rent. Can you see rent for go down over here? 55,000. 2 months is outstanding. That means what is there over here? 10 months rent. That means 55,000 divided by 10 is basically 5,500 per month. Correct? That means outstanding rent is 5,500 into 2, 11,000. Outstanding rent is 11,000. So 11,000 will be added to rent, and then what are you going to do? You're going to show in the balance sheet as liability. Clear? Next. Interest on loan from Vishwanath is payable at the rate of 12% per annum. This loan was taken on 1/5/2021. When did they take the interest? When did they take the loan? When did they take the loan? 1/5/2021. Now have a look at the loan. Loan from Vishwanath. It is showing 3 lakhs. Correct? So 3 lakh into what percentage? 12% into 11 by 12. That gives you 33,000. So 33,000 is your interest. Find in the question interest paid. Can you find interest on loan from Vishwanath? How much is this? 27,000. That means what? You are supposed to pay 33,000 interest. You paid only 27,000 interest. 6,000 interest is outstanding. Same treatment. What will you do? Add it to interest in the P&L and show it in the balance sheet as outstanding liability. Okay. Then provision for bad debts is to be maintained at 5% of sundry debtors. Provision for bad debt 5% of sundry debtors. What is the debtor balance? Find the debtor balance. Sundry debtors. Can you see over here? 8,60,000. Correct? So you need 8,60,000 into 5%. Basically 43,000. You need 43,000. Do we have existing provision? Yes. How much? 30,000. But we can't come to the conclusion yet. Do we have bad debts in this trial balance? Can you see bad debts here? 20,000. We have seen the adjustment yesterday. 30,000 provision. Provision for bad debt is 30,000. Correct? Minus bad debt. Bad debt is 20,000. That means I'm left with a provision of only 10,000. But how much provision do I require? 43. That means I have to create provision of 33,000. Important adjustment. Provision is always an important adjustment. Let's check it out. Can you find here? 33,000 over here. Provision for bad debt, 33,000. No, the other 33,000 is also there. That is interest on loan. Okay, provision for bad debt, 33,000. But did you understand the calculation? Yes. But in the balance sheet, how much will you subtract from debtors? 43,000. See here, 43,000. Entire provision is subtracted. What you created only will go to P&L. Clear? Next, after that you have insurance premium includes 40,000 paid towards life insurance policy of the owner, and then insurance charges cover the period 1/4/2021 to 36/2022. Can you see? How much is the insurance premium? How much is the insurance premium? 55,000. So now what will happen? 55,000. From that you are going to remove 40,000 because it's not related to business. It's related to the proprietor. So you're left with 15,000. And this 15,000 is paid for what period? 1/4/2021 to 36/2022. That means it is paid for a period of 15 months. So what will you do? This is for 15 months. So for 12 months it is going to be 12,000. And for 3 months it's going to be 3,000. For 3 months it's going to be 3,000. So what will you do? 12,000 you will show it in P&L. You can see the P&L, 12,000 insurance premium. Can you see 12,000? And 3,000 will be shown in the balance sheet as prepaid insurance, and 40,000 should be subtracted from capital. Can you see 40,000 is subtracted from capital? Yes, sorted. After that we don't have any adjustments. After that what you're going to do? Directly fill in the blanks. Okay, one by one. Cash in hand, you'll put it to balance sheet. How much is cash in hand? 14,000. Can you find 14,000 in the balance sheet? 14,000. Sorted. Fill in the blanks only you're doing. Cash at bank, 26,000. 26,000 in the balance sheet. Sundry debtors obviously has adjustment, and which we have already discussed. 8,60,000 minus 43, 8,17,000. Then after that you have stock. Which stock is this? Opening stock, closing stock. You have to see the date. Opening stock 1/4/2021. Directly you will put it into trading account. 6,20,000. Furniture and fixtures. Furniture and fixtures 2 lakh. It is not 2,14,000. It is 2 lakhs. So if you see the balance sheet, you can see furniture and fixtures at 2 lakhs minus the depreciation, and that depreciation will go to P&L, but they have put the total depreciation here. You know the depreciation, total depreciation, all depreciations together. If at all in the exam you don't want to do one more working note and go on writing depreciation on furniture, depreciation on motor car, depreciation on equipment, fine, no issues. Clear? Instead of making a working note later and bringing the total here, you can just directly keep on writing to depreciation, to depreciation, to depreciation. But when you're writing to depreciation, to depreciation, to depreciation, don't just write depreciation. When you're writing 3 depreciation entries, now you have to specify depreciation on what, depreciation on what, and depreciation on what. Is this clear? So now, next, after that, what do we have? Office equipment. Is it 160? No, rectification is there. It has become 2 lakhs. You have added that 40,000. So can you see office equipment is 2 lakhs minus whatever depreciation at the respective rate. Clear? Next, after that you have buildings. Buildings, was there any rectification? No. Directly you're going to take 6 lakhs minus the depreciation. 5% it was. So it becomes 5,70,000. After that you have motor car. Motor car, did it have a rectification? No. Can you see motor car directly taken at 2 lakh and remove the depreciation? Clear? So if there is rectification, first you have to do the rectification, then the rectified value has to be depreciated. Next, sundry creditors. Was there any adjustment? No. Fill in the blanks. Next, loan from Vishwanath. Was there any adjustment? No. Loan, there was no adjustment. Interest on loan only, there was adjustment. Loan was 3 lakhs only. Can you see? Loan from Vishwanath is 3 lakhs and the outstanding they have added over here 3 lakh 6. If you don't want to add, you can write loan 3 lakh, outstanding interest 6,000. Still it's fine. Okay. After that, you have provision for bad debts taken care of. Purchases, is it 14 lakhs? No, you have to remove the typewriter or something that purchased. That will go and this will also go. What is this? Purchase returns. So you can see the trading account effect. 40,000 is removed, 26,000 is removed, and then you get the purchases. Clear? Yes.
The next year they will pay on 3 lakhs or 3 lakhs.
No, 3 lakh, 3 lakh. They'll pay on 3 lakh.
Then where did
They just wanted to show whatever is related to Vishwanath together. That's why I told. I don't do it in regular class. I show loan in the balance sheet and outstanding interest separately, 6,000. That's why I told. You can show separately also, no problem. Because they can get confusion like this. Now they'll see the loan at 3 lakh 6. Are you going to calculate interest on 3 lakh 6? No. Banks usually do, but these kind of loans, no. Bank, if you don't pay interest, interest will get added to the loan and on that interest will be calculated. But here, not in final accounts. Yes. Now, after that you have sales. Is sales 23 lakhs? No. From that rectification has happened. 14,000 gone. And there is a sales return of 42,000. Can you see? Sales 14,000 removed, 42,000 removed, then you get the sale value. Clear? Finally, salaries. Did you have any outstanding salary? No outstanding salary, nothing. We didn't have any outstanding salary, so directly you can put salary 55,000. Next, you have rent of go down. Did you have any outstanding rent? Yes, 2 months rent was outstanding. So remember, you calculated 11,000. 55 plus 11 becomes 66. And this 11 has to go somewhere else also. Outstanding rent in the liability side of the balance sheet. Next, interest on loan. We just saw that. Okay, interest on loan 27,000 is there. In P&L you will show it as 27 plus 6, 33,000. And in balance sheet that 6,000 outstanding interest is also taken. Clear? Next you have rates and taxes. Any adjustment? No. Directly you are going to put rates and rent and taxes. They missed the spelling here. I mean, instead of rate they have written rent. Rent was already done. Now after that, what do we have? Discount allowed on debtors, direct item 24,000. Discount received from creditors, direct item 16,000. Then see, what I'm trying to tell you is if the trial balance looks big in the exam, it doesn't mean that everything is complicated. 80% of the trial balance is just take and put it into rightful place. Small adjustments will be there that you have to first look at. Always look at the adjustments first so that you're sorted. So when you read the trial balance, you know what has an adjustment. Okay, if you read the trial balance first, then come to adjustment, then you'll go back to the trial balance to search for the amount. So first read the adjustment, keep that in your head, then you read the trial balance. Okay, freight on purchases. Freight on purchases, carriage inward or carriage outward? Carriage inward, it should go to trading account. You can see freight on purchases over here. Then you have carriage outward also given. Carriage outward will go into P&L. If it was manufacturing account also in the question, then carriage inward would have gone into manufacturing account. Then you have drawings. Where will you reduce it? Reduce it from balance sheet. Can you see drawings is reduced? Then you have 18,000 printing and stationery, direct item 18,000. Then you have electricity charges, no free electricity here, 22,000. Only Bangalore people will get this joke. Free electricity. Insurance premium, is it 55? From 55, 40 is removed. 15 remains. From 15, 3 is removed. Only 12 remains. Where was that? Insurance premium, we had already checked that time. It was 12,000. Yes. And prepaid is also there in the balance sheet. General office expenses, nothing. Directly put 30,000. Then you have bank charges, nothing. Fill in the blanks. Then you have motor car expense. Now some people make mistake here. When they see motor car, they put this 36,000 into balance sheet. No, it is motor car expense. Car is in the balance sheet, but the petrol that you put will go into P&L only. Clear? 36,000. Next you have 16 lakh 20. What will you do? Directly put it to balance sheet. Whatever net profit you got over here, that you have added over here. Rest of the items are just totaling. Any doubt or any adjustment here? This is one of the complex questions which is there in your study material, which they have included everything, all the adjustments they have included. Next, one more is there, Ganguly question. In that they have added some more adjustments. So if you see these two, most of the things are covered. Sir, purchase entry once again, please. What is this, Purti? Sitting at home also you're feeling cold. Yes, purchase. See over here, it is 14 lakhs. Okay, which is given in the trial balance. Typewriter was included in purchase. You remove that. Then you remove purchase returns. That time you get this value. And this 40,000 has to be added to office equipment. Then you have to calculate the depreciation of office equipment. Can you please explain interest on loan again? The loan from Vishwanath was 3 lakhs. Was it 3 lakhs? 3 lakhs. 11% is the rate of interest. And they had borrowed this loan on 1st May. 1st May means 11 months interest. That comes up to 33,000. You can check the trial balance. It is showing interest on loan from Vishwanath as 27,000. Therefore, 6,000 is not paid. 6,000 is not paid. I hope it is clear now. Yes, let's go further. That was the question which was important. One more question is there, which is there in your practical questions. Practical question number 1, Ganguly. 11% given in the question. Any doubts? Yes. Let's go into this question. This is little more complex than the question which we just saw. But if you see these adjustments, you can crack anything that comes in the exam. Now, see over here, practical question. In the books of Ganguly, they have asked, prepare trading P&L and balance sheet. Straight away, we'll go into adjustments. Value of stock as on 31st March 2022 is 3,93,000. Important adjustments, all of these. Pay attention. Value of stock is 3,93,000. Sorted. Closing stock, you know. Put it to trading account. Put it to balance sheet asset side. Done. Correct. Now see. This includes goods returned by the customer to the value of 15,000. Imagine. Now you don't have to bother. They are telling 3,93,000. In that, what is returned is also there. If it is also there, what to do? Okay, let it be there. Are you getting my point? Other half of the sentence has some work to do. But here, done. But what you have to remember, if at all in the exam they tell, this excludes goods returned by customer, then you will have to add this also to closing stock. Are you getting my point? Here they told it's included, so we'll directly take 393. If they tell it excludes, then you have to add this 15,000 to closing stock and the other thing what they have asked you to do. Other thing is for which no entry has been passed in the books. No entry has been passed in the books means what? They have not passed the sales return entry. What is the sales return entry? Sales return account debited to debtors. So debtor has to be subtracted. Debtor has to be subtracted and sales return has to be subtracted from sales. Sales return has to be subtracted from sales. So now understand this. Very important thing is your sales return is 43, no? So 43 plus 15. Now your sales return will stand at 58. Is it clear? Then your debtor, what is the debtor balance? 1,20,000, right? What if they are cash sales? Then they'll specify. Then they are cash. Then you will subtract it from, you will add it to, what add? You will subtract it from cash if it is cash sale because the entry would have been sales return account debited to cash account. But when they have debtors in the question and they just tell sales return, it's always assumed that it is credit sale which is written because debtors are there in the question, but we don't have any evidence that cash sale is made. Are you getting my point? So if it is cash sale returned, they have to tell you. Okay. Yes, debtor is 120. What we are supposed to do? Minus 15,000. Is that clear? Why minus 15,000? Because when we pass the sales return entry, debtor will go down. Okay, that will impact your other calculations also. So whatever happens to debtor in a final accounts question, you have to be very aware of it because when you go to provision for bad debts, that will impact you. So you can't make all the rectifications and then when you go to provision for bad debt, take 120 and do the calculation. Are you getting my point? Yes. After that, purchase includes furniture purchase on 1st January, rupees 10,000. Can you see furniture is purchased on 1st January? Same kind of question was there. Adjustment was there, but there they are not given date. Here they have told furniture purchased included in purchases, but it is purchased on 1st January. So now what happens? See, from purchases you are removing the 10,000. and add it to furniture, but I think it's better for you to have a look at if they have done the working note. Unfortunately, they have not done. Okay, then in balance sheet have they shown? Yes. So furniture is 9,000 in the question. Addition is 10,000. Now when you're calculating depreciation rate is 10% per annum. Correct? On this you will calculate 10%. This is becoming 900. On this you will not calculate 10% for the full year. This will be 10% for only 3 months because it is purchased in Jan. So 3 by 12, that gives you 250. So this becomes 1150. Can you see 1150 here? Depreciation. Is this clear? Okay, that depreciation obviously will be shown even in the P&L account. 1150. Clear? Same adjustment was there in the previous question, but there what they did, they have not subtracted. I mean, they have not given the date. So you cannot do anything. You will consider it for full year only. Clear? Yes. Next, depreciation should be charged. That is done. Loan account of Dena Bank in the books of Ganguly appears as follows. Now, if you see the trial balance, there is one loan from Dena Bank. And here they have given 12% interest. If they would not give that ledger, what you would have done? 1 lakh into 12%. 1 lakh into 12%. But here, specifically they gave you ledger. Can you see the loan ledger? By balance brought down. That means they had this loan from before. Then they wrote by bank. That means they borrowed more loan. But when did they borrow this more loan? On the last day of the year. If they have borrowed on the last day of the year, on this there is no interest. Correct? And this loan is carried down to next year. So when you're calculating interest, it will only be on 50,000. 50,000 into, what was the rate of interest? 12%. That makes it 6,000. Clear? Now, after that, what did they tell? Sundry debtors include 20,000 due from Robert and sundry creditors include 10,000 due to him. Common item. If I have to give you 100 rupees and you have to give me 40 rupees, what will we do? Will I give you 100 rupees and then tell, okay, now give me 40? Will we do that? We will just remove that 40. So I am also removing 40, you are also removing 40. Correct? Now here, what is a common item? Will you subtract 20,000 from both places? Will you subtract 20,000 in one place and 10,000 in another place? Or will you subtract 10,000 in both places? You will remove 10,000 in both places. What is common here? 10,000. I was supposed to pay him 20 and he was supposed to pay me 20 and I was supposed to pay him 10,000. So I'll remove 10,000 from creditors. I'll remove 10,000 from debtors. Is this clear? So with that, from your debtors, one more 10,000 will go. So when you're calculating provision for doubtful debts, you have to be careful. One more 10,000 has gone from your debtors. 15,000 went because there was sales return which was not recorded, and 10,000 is going because of the adjustment which we have to do now for Robert. Is this clear? Okay. Now, after that, the next adjustment tells interest paid includes 3,000 paid to Dena Bank. Can you see interest paid here? 4,500. So they are telling what? Out of 4,500, 3,000 is paid to Dena Bank. 1,500 is paid for something else. That's not our concern. Our concern is, boss, we have to pay 6,000 to Dena Bank. We have to pay 6,000 to Dena Bank. That means 6,000 minus 3,000. 3,000 is outstanding interest. So tell me, what is my total interest in my balance? I mean, in my P&L now? No, it is 7,500. It is 7,500. Why? 4,500 plus the outstanding. The other interest is also there. Don't forget that. So, if you look at the P&L, you will find interest sitting at 7,500. Clear? How much is outstanding interest? 3,000. Go to balance sheet. Have a look at it. Interest on loan, 3,000. Clear? Now, next. Interest received represents 1,000 received from sundry debtors due to delay on their part and the balance on investment and deposit. Clear? We received interest 1,000 from debtors. Okay, no problem. Now go to the question. Go to the question. Can you see over here we have an investment? which is purchased on 1/4/2021 starting of the year. On that 25,000, 5% interest means, is it 1250? 1250 interest I have to get. And there is one deposit over here which is also from 1/4/2021. On that deposit 10% interest, that means I have to get 15,000. Total interest that I'm supposed to get is 16,250 plus 1,000 from debtors. So total interest I'm supposed to get is 17,250. Do you agree? But how much interest did I get? Interest received. Where are you? 7,250. How much I was supposed to get? 17,250. I got only 7,250. That means 10,000 is interest receivable. Interest receivable. Clear? Now you can see 17,250. Where is it? Okay, yeah. 17,250. Clear? And you should find 10,000 interest accrued or interest receivable. Clear? Yeah. Now see. First you have to read this. Here they have told interest received represents 1,000 from sundry debtors. So we have received 1,000 from sundry debtors. And in the trial balance, can you see investment at 5%? Date is important. Here it is luckily 1/4 for you. But date is very, very important. Okay. If it was 1/9, we would have calculated from there only. So now 25,000 into 5% into 6/12, full year, 1250. And we have a deposit. Deposit also we are supposed to get interest. 10% on 1,50,000 is 15,000. Total interest is 16,250. Plus that 1,000 I'm supposed to get from debtors. So 17,250. Out of 17,250, 7,250 we have received. Interest received. That means 10,000 is receivable. So what happens in your P&L, in your balance sheet you will show 10,000 and in your P&L you will show 17,250 as income. Yes. Next we have provide for interest payable to Dena Bank and interest receivable on investment. They are telling show the outstanding and show the receivable. That we have already done. Okay. Make provision for doubtful debts at 9% and balance under sundry debtors. On the balance under sundry debtors. No such provision need to be made on deposits. Okay. Provision for doubtful debts you have to be careful. How much is your debtor? Not 120. Two things are subtracted. What are the two things? 15,000 and 10,000. So 1,20,000 minus 15,000 minus 10,000. How much are you getting? 95,000. Correct? On this, they have asked you to create provision of 5%. 4,750. Correct?
Yes, sir.
Do we have any provision for doubtful debts? Check the entire trial balance. Do we have any existing provision? No. That means we have to create full 4,750. Now if you go into the solution, 4,750 has to be taken from P&L. Correct? And 4,750 has to be subtracted from debtors as well. Can you see it is not showing 120, it is showing 95,000 after removing the 15 and after removing the 10. Is this clear? Next, after that, we're done. After that, we are starting with fill in the blanks. What are we doing? Fill in the blanks. Ganguly's capital. Where are we going to put? Balance sheet. Can you see 540, 500? Yes. Stock. Opening stock. Go to trading account and put opening stock. Then you have sales. Where are you going to put the sales? Trading account. But remember, there is sales return. Sales return is not 43. Sales return has become 58 because we have added one more sales return there. Sales return. Clear? Then you have purchases. Did you have adjustment for purchases? Yes. Remember that adjustment 10,000 you added? Furniture. So purchases plus that. And the returns which are given. Purchase returns 29,000. In the study material, nicely near only they are giving purchase and purchase returns. In the exam, they'll give purchase in one corner and they'll give purchase return in another corner. So now what happens? If you see purchase return, put nothing. When you reach below in the trial balance, you'll find purchase return. You come back and strike it and make it shabby. Are you getting my point? So whenever you see purchases, always look for purchase returns. Because otherwise your paper will look untidy, you know. That also creates an impact. If he has to put effort to search the number, then he will not put effort. Simple. Simple logic. See, for example, you have this habit. if this is your page, you will start writing nicely. This is your font size. When you reach this area of your page, you feel that 2 lines are required to complete the answer. And suddenly you feel very concerned and caring about environment. You're like, I should not waste pages. So many trees were cut to make these pages. So here you'll write like this. And you'll go to the edge of the page also. And you write like this. Correct? Instead of this, go to the next page. 2 lines only required. Cancel it and go to the next. Clear? After the exam, take 2 saplings from the nursery, plant it. If you are so much concerned. Are you getting my point? Don't do this in the exam because they don't know who you are. They will not put any effort to search what is your, they will not do zoom in there. Are you getting my point? So don't do all those circus. Keep it very simple and clear. Yes. Carriage inward. Where will it go? Trading account. Then you have rent. Where will it go? No outstanding, nothing. Where will it go? P&L account. Where is rent in P&L account? Here. 28,500. Then salaries. Any outstanding? No. Directly to P&L account. 46,500. Can you see? 90% of the solution is always fill in the blanks. Next. Sundry debtors we have already done. Sundry creditors. Can I take 74,000 sundry creditors? Can I take 74,000? No, I should take 64. Because the 10,000 of Robert we have subtracted from both places. Yes. After that, you have loan from Dena Bank that we have seen. 1 lakh. Interest paid that we have seen. Interest paid, what we have to do? Show 7,500 as the interest and show in the outstanding 3,000. Then interest, printing and stationery. What will happen? Direct fill in the blanks. P&L account. Advertisement also, direct fill in the blanks. You can see advertisement over here. Then you have interest received. We have discussed this interest received. It will not be 7250. It will be 17,250. And respective thing will be there in the balance sheet as well. Cash with traders bank. Whichever bank, no problem. It will be in balance sheet only. Okay, cash at bank 40,000. Then you have discount received. Where will it go? P&L account credit side. Can you see discount received? Then you have furniture. Opening balance. We have seen the furniture, no? To this 9,000, we have added the 10,000, which was the rectification. Then we calculated depreciation and showed the net figure. Discount allowed. P&L account. General expenses. P&L account. Nothing. No adjustments at all. Audit fees. 3,500 audit fees. Oh, ho, ho. So sad. Okay, P&L account. Fire insurance premium. P&L account. No prepaid insurance and all in this case. Traveling expense. P&L account. Basically what you're doing is you're just entering everything. Postage. P&L account. Cash in hand. Not P&L account. It will go to balance sheet. 1,900. Drawings. Reduced it from debtors. Loan from Dena Bank is the thing which we have already seen. Then remember deposits and investment was there. That will also come into the balance sheet. Basically what you're going to do after that. Calculate the net profit. Add this net profit to capital. Is this clear? So in this question, major adjustments were this sales return. You have to understand whether it is there in the closing stock or not there in the closing stock. Then you have to understand this purchases. That is a repetitive adjustment. It has come from many places. So that is not new. Okay. And you know that if date is given, how to calculate depreciation. We have learned it in depreciation chapter. Then this Dena Bank is a new thing. Why they gave the ledger? There is a purpose to tell you that this loan was borrowed on the last day. So don't calculate interest on that. Then sundry debtors include this common item. This is also a new thing. Correct? This you have to subtract. Now in the exam, don't get confused what to subtract. Always, if you are confused, remember, you have to subtract the lower number. You have to subtract the lower number. 20,000 here, 10,000 here. Only 10,000 is common now. 10,000 you have to subtract. Are you getting my point? Then interest paid and interest received are the major adjustments here. Provision for doubtful debts, you know, it is a common adjustment that you should expect. Luckily, for this provision for doubtful debt adjustment, there was no existing provision. There was no bad debt. Otherwise, it would have gotten little more trickier. Clear? If there is existing provision, what you will do? You will not create provision for 4750. You will create provision only for the difference. Clear? Yes, that should be it with that question. So Gavaskar and Ganguly question, almost everything it is covered. Why I put this is not to solve. This question is not to solve. To show you the adjustments which came in the exam. Value of stock on 31st of March was 4,10,000. This includes goods returned by customer 22,000 for which no entry has been made. Purchase includes furniture purchased on 110, not 110. So 6 months depreciation. Depreciate. Little more depreciation in this question. Building, furniture, vehicles. Sunday debtors include 35,000 due from Goku. They didn't like Robert in the exam. So they made one Goku over there. Okay, and Sunday creditors include 25,000 due to him. Provision for bad debt should be maintained at 4%. Insurance premium include 42,000. This was not there in the Ganguly question. This was there in the Gavaskar question. They took that and put it over here. Proprietor's life insurance policy and charges cover 1/5/2022 to 34/2023. There it was 15 months. Here it is not 15 months. Here it is 12 months. But out of 12 months, 1 month is prepaid because it is going into next year. Just because they are 15 months, they won't give 15 months. Ditto question doesn't mean like that. Small variations they will do. Are you getting my point? So, ditto means you understand the concept there. You should be able to do it over here. Yes, that shouldn't bother you. So, the last question from final accounts is this. Why did I keep it? Because manufacturing account is there. Okay. Now, understand. Okay. Hypothecation, I think in my RTP question it is there, right? Old RTP question. See, hypothecation of stock means, imagine I have stock of 1 lakh. Okay, I have stock of 1 lakh. If I pledge my building and take loan, does it mean that I'm giving building to the bank? No, I'm giving the paper of the building to the bank. If I don't pay, then they'll take my building. Otherwise, I'll only stay in the building. Correct? So, stock also same thing. Stock belongs to me itself. Hypothecation means I have given the rights to the bank. So now what happens if 1 lakh is the stock, then they in that question they have told 80% is bank OD, overdraft. So in such cases what happens? Bank when they are giving OD, 80% they will give you, but there also they will remove one margin. Imagine they remove 10% and they give you only remaining. So if 80%, if at all I go and give gold and tell I want loan, do you think today's gold value only I'll get as loan? No, they'll give a little lesser only because they want to protect their risk also. So same way, if they tell hypothecation of stock 80%, okay, now your OD is 80,000. But will you get 80,000? They will remove another margin, something called as margin, and they'll give the remaining. So you will have a OD of only 72,000. Now, what is the problem here? They will not give you like this. They will give you like this. They will give you OD and they'll tell you to calculate the closing stock. So now if 72,000 OD is given and they have told that the margin is 10%, what will you do? 72,000 is 90. How much is 100? So you got 80,000. So you got 80,000 was the actual limit and that was 80% of the stock. So 80,000 is 80%. How much is 100? Then you will reach the closing stock. Is this clear? So this is what you need to know. No, they'll give. They'll give. No percentage is assumed. If they don't give percentage, you don't have this adjustment only. Clear? So they'll give. That you don't worry. Next, manager's commission you said. Manager's commission, if they tell before charging, after charging, if they use these words, before charging, after charging. If it is before charging, calculate the net profit into commission rate, whatever rate is there, divided by 100. If they tell after charging, then it will be net profit into rate divided by 100 plus rate. If I take the example as 5%, here it will be net profit into 5 by 100. Here it will be net profit into 5 by 105. Is this clear? Yes. Why is it like this? Here it is before charging. Before charging means now what is there, on that you give 5%. After charging means after you give what is remaining, on that you should have given 5%. That is why it is 5 by 105. Clear? That also adjustment, it's been a very long time since they have asked. If it is very long time, then it can be asked. We should know that. Yes, here Why I took this question is just to discuss the manufacturing account, December 2021. Okay. CA Foundation, December 2021, they asked one question. See what and all is there in this manufacturing account, trading account, P&L account. But they can also ask balance sheet. Then it becomes a 20-mark question. Okay, there they have asked in the past 20-mark questions also, but lesser adjustments were there. So I picked this one. Now understand this. First, always we'll go into the adjustments. Raw material, where will it go? Manufacturing account. In manufacturing account, where will you show it? You have a place called raw material consumed. Raw material consumed. That is opening stock plus purchases minus closing stock. There you will put this. This is closing stock. You will put it over there in that calculation. Now, what is the question? 5B. By the way, institute suggested answers also not final. Huh? I hope you know that. Because someone wrote a complaint that I wrote the same answer as in the suggested answers, but you didn't give me full, not at foundation level, at final level. So institute replied, as the name suggests, suggested answer is suggested. We never told it is the final answer. Just like institute's definitions. What is equity share? Anything that is not preference share. Okay, that is not institute's definition, that is Companies Act. But who drafted Companies Act? Government would have consulted ICAI only. Okay, so there they only will, oh, so many definitions I drafted, this one. Let it be. Anything other than that is this. Yes, so 5B. Question number 5B, we'll just go through that so that we are thorough with the manufacturing account. Now, by the way, on 31st of March 2021, trial balance of Mr. Black. Full racism in the exam by ICAI. They are like, we don't care about your racism and all. Mr. Black only will choose. Okay. Now, understand this. Where will raw material go? Manufacturing account 162. You can check the manufacturing account. Raw material consumed. You can see closing stock is taken over here minus. Clear? Where will finished goods go? You don't do manufacturing of finished goods. Finished goods are manufactured. After it's manufactured, you don't need it in manufacturing account. You have to just trade in it and make money. So it will go into trading account. Can you see in trading account, you can see the closing stock? Yes. Then work in progress, where will it go? It is related to manufacturing. You can see in manufacturing account. Where is it? At the top, 78,000. Clear? All three are called closing stock. So all three should go to balance sheet. But in this question, they have not asked balance sheet, so I can't show it to you. Is it clear? But all three should go to balance sheet. Now, apart from that, salary and wages unpaid for the year were respectively 9,000 and 20,000. Outstanding is not a problem. But what is the problem? Outstanding salary will go to P&L and outstanding wages will go to manufacturing. No, it will go to manufacturing. You can see wages here. Can you see they have added outstanding wages? And can you see in P&L account salary they have added outstanding? Both will go to balance sheet. That we know. Liability. Both are liability only. Machinery is to be depreciated at 10%. Okay, this is a very easy thing. But the depreciation will go to manufacturing account. Can you see depreciation on machinery or plant is sitting over here? It will go to manufacturing account. And office furniture 7.5%. That will go to P&L account. Where are you? Where are you? Ah, here. Clear? Now, after that, a provision for doubtful debts should be maintained at 1% of sales. Now, just because they told 1% of sales, students are totally messing it up. Provision is how much? 1% of sales. How much is your sales? 16 lakhs, 72,000. On that 1% you're going to calculate. Boss, they just told calculate 1% of sales. That doesn't mean that you now go and subtract it from sales. Are you getting my point? Provision will be subtracted from where? Debtors only. Provision for doubtful debts. Can you see? 16720. This will be subtracted from debtors only in the balance sheet. After subtracting sales return, you will calculate. And if there is sales return, in the question also they would have told net sales. They would have told net sales. Or they would have told gross sales. Then now you have to choose. Okay. Rent is to be charged as at 3/4 to factory and 1/4 to office. So what will happen? Part of the rent will go to manufacturing account. Can you see rent 3/4 is sitting here, and part of the rent 1/4 will go to P&L account. Clear? Then you have lighting. Light is there everywhere. Lighting is to be charged 2/3 to factory and 1/3 to office. So 2/3 will go to manufacturing account. 1/3 is over here. 2/3 will go to manufacturing account. Okay. Next, after that, nothing. Fill in the blanks. After that, it's just fill in the blanks. But by filling the blanks, now you have more blanks. Because manufacturing account is also there. So we have to be a little careful. This stock or opening stock, raw material will go to manufacturing account. Work in progress will go to manufacturing account. Finished goods will go into trading account. Clear? Then you have sundry debtors. You know what will happen. Balance sheet item. They didn't even ask you to prepare balance sheet in this question. Carriage on purchases. Carriage on purchases, manufacturing account. Bills receivable is an asset. Wages will go to manufacturing account. Salary will go to trading account. P&L account. Postage and telephone will go into P&L. Repairs to office furniture. P&L. Cash at bank. Asset. Office furniture. Asset. Repairs to plant. Manufacturing account. Plant is used for manufacture. If it is repaired, it will go to manufacturing account. Furniture is used in the office. If it is repaired, it will go into P&L account. Clear? Purchases will go into manufacturing account. When you're calculating cost of material consumed, you'll add the purchases. Plant and machinery, asset, rent will go into. They have already shown the divide. They have shown the divide. Little in manufacturing, little in this thing. Lighting also, they have shown the separation. General expense will go into P&L. Asset, liabilities, credit items, sundry creditors liability, bills payable liability, sale of scrap. It's a byproduct sale. It will go to manufacturing account. You can check in the manufacturing account. They have put credit side 25,000. If you're manufacturing something, by default you got one extra waste product. You actually put that waste product into dustbin. But if somebody is ready to buy that waste product, you sell it, you get money. Your manufacturing cost has reduced. It is like the most common example is buttermilk. When they are manufacturing milk, they are not manufacturing milk. Cow gives milk. When they are manufacturing ghee or butter, that time by default you will get buttermilk. You have to just throw that liquid actually. But there is a market. You put it in packet and sell it. Good, no? Their manufacturing cost of other things reduced. Yes, extra effort. They are not putting anything to manufacture byproducts. Now, after that, you have commission received, P&L income, provision for doubtful debts, not P&L. This will be subtracted from asset in the balance sheet. But you have to see what is the existing. You have to see what is the existing. See, provision for doubtful debts. 16,720. Where is that? Provision. See, 16,720 minus 16,500. Only 220 goes into the outer column. Create. Correct. If you prepared balance sheet in this question, 16,720 only will be subtracted from debtors. There is no balance sheet though. Capital, we know. Okay, bank OD, liability side of the balance sheet. Done. Done. Only thing, if manufacturing account comes, no, you should be happy. You know why? If they ask manufacturing, trading, P&L, now they know you have more work. So there will be lesser adjustments. There will be lesser adjustments. They can't put all those Ganguly and Gavaskar adjustments over here. Are you getting my point? Then it becomes a 30-mark question. So they don't want to do it. So if the trial balance is bigger, adjustments will always be lesser. So don't see the big trial balance and panic. They're like, oh, gone. Okay, if a big trial balance is there, you saw just now, 90% is fill in the blanks. 2-3 major adjustments you have to think. Other than that, you take and put it into the rightful place. Yes. We are done with final accounts. With that, then we will start a nice and small chapter. Okay. That is partnership. What will happen if furniture is purchased on 31st of March? Then there is no depreciation on that. Can you please explain interest on that we have done? Arnav is sitting on online class. Oh. Yes, take a 2 minutes break. We'll start partnership. Huh? No. 2 minutes. Just 2 minutes. 9:28 I'm starting. I like that. Numerically it is nice. Yeah, that because in the washroom he fights with others.
He said to say this. He said to say no way.
I was like, I asked if you were trying. I
You
know.
know.
Oh,
What is that? What is it? He's telling him, he's telling okay. He said, no, don't worry at all.
I knew this guy was lying. That's why I what did he say?
Now you want to run that.
You went in between transport, you don't talk about.
Then we need to.
Tell us what happened.
What happened was, this fellow wanted to go to Nexus Mall, and we were agreed to go to Justification. And yeah.
Oh. We can talk somewhere else. You know how many places whatever you spoke got captured? One in my brain. Another, the recording is still on. Another, in the CCTV, they can hear you. Just because,
I'm hearing what?
yes,
Not that my. Daily that hearing us.
they can hear from that. Every CC camera can hear what you talk. Huh? They can just go and play it back, no?
You'll say them to play back.
No. Unless something very serious happens, they will not go and play that. How many CC cameras are running every day? But you go into Nexus Mall is serious. So, that can be played.
Even. Hey, who said that?
That boy.
This boy only the text.
No, I didn't say anything. I just said that he was crying. But no, that was. Mom. Oh, she got. You want to? Thank you so much. Thank you so much.
Yes.
In trial balance, if bad debt exists in trial balance, whether we have to subtract that from Sunday data and then find the position of.
No. If trial balance there is bad debt directly to P&L.
Just credit the new line.
No. If trial balance bad debt is existing and there is provision also, then you have to remove from provision. Bill? What do you want?
Off, no.
Off or on?
Off. 16 don't off.
How will you?
Also. It's a 10 minutes.
Sir, I'm off it, sir.
No. When you are at a powerful position, you should not take majority. You should do whatever you want. Huh? No raise of hands and all. Yeah, dictator. We should be dictator. Yes, let's begin. Oh, this I didn't share yesterday. We'll share it. It's not completed. Only 2-3 chapters are there. Yeah. NPO. When we go to NPO, everything started. Sir, if both provision for doubtful debts and provision for discount is there, then which to treat first? Provision for doubtful debts. Then provision for discount. Yes, your favorite chapter is here. Your life's wish is heard. Let's begin. Partnership. Okay, partnership. So I am not doing basics, goodwill, and solving problems. We'll discuss all the concepts. Then we'll go into all the problems. One by one, we'll see everything. Clear? Now, we'll spend time and understand the concepts of partnership properly. Introduction chapter is also important. Why? They are asking questions from that also in the exam. Now, not true or false. 4 mark questions, solving ones are also coming. Now, meaning, what is partnership, guys? 2 or more people coming together to conduct business with an intention to earn profits. From PUC, you are seeing this definition. Correct? Yes. Partnership agreement. What is partnership agreement? Mutually agreed terms and conditions between the partners. Later, there should not be any fight. So what they have done, first only they'll get everything in writing. When partnership agreement is registered, it becomes partnership deed. All these are basic points. Now, this is important. If not mentioned in the partnership deed, what happens? Remember 5 points. 1. Profit sharing ratio will be equal. No interest on capital. No interest to be charged on drawings. No interest to partners. Interest on capital is not there. Interest on drawings is not there. Salary is not there. Salary is not there. And interest on loan will be there 6%. Now, if you borrow loan from HDFC, will you give them 6%? They will kick you out. Okay, this is only interest on loan given by partners. So, this is only for partners. None of these things will bind the outsider. Is this clear? Yes. Now, in the question, what they will tell? They will not tell no partnership deed and all. If you don't find the information of profit sharing ratio, equal. If you don't find the information of profit sharing ratio, equal. Clear? If you don't find the information about interest and all, then no interest, no salary, no interest on drawings, no interest on loan. Is it clear? I mean, no interest on loan, 6% you can take. But this is maximum. Don't get confused. If they don't tell also, don't take 6% interest. This is maximum. Maximum or minimum? This is actually maximum. But if they agree, then there is nothing. If they agree, there is nothing. Are you getting my point? Now note, interest on capital and salary to partners to be paid only if there is profit. Interest on capital and salary to partners only if there is profit, unless mentioned otherwise. What does it mean? We will give you interest on capital and salary only if there is profit. But if you have agreed, even if there is no profit, I want interest. Even if there is no profit, I want salary. Then okay. Who is going to lose? You only. If there is no profit and I'm still giving you salary, that means I'm borrowing from somewhere and giving you. So you only have to pay that money back later. Clear? So that is the situation. And if there is inadequate profit means what? We don't have sufficient profit. Then the available profit should be distributed in capital ratio. This you have to remember. Available profit will be distributed in capital ratio, not profit sharing ratio. Because you are not sharing profit here, you are giving interest on capital. When you are giving interest on capital, don't use profit sharing ratio. Now, capital account maintenance system. This also creates trouble. In our bigger questions also, we have 2 methods, fixed capital method and fluctuating capital method. Fixed capital method means what? Capital will be fixed. Fixed means how can capital change? Only capital introduced and capital withdrawn. I put 100 rupees, I remove 20 rupees, that will be entered in the capital account. All the other transactions to be entered in current account. What are the other transactions? Interest on capital, interest on drawings, drawings itself, salary to partners, profit or loss share, etc. to be entered in partners current account. Is this clear? Are you following this? If they tell fixed capital, okay, you have to do this. You have to open a current account. Now, what if it is fluctuating capital? All the transactions related to partner, dump it in partner's capital account. Clear? All the transactions will be in partner's capital account. Note, if question is silent, it is always fluctuating capital method. If question is silent, don't prepare fixed capital method. You'll just mess up the solution. So if question is silent, it's always fluctuating capital method. Is this clear? Yes. Now, difference between drawings and capital withdrawn. What is drawings? You feel that it's same, right? Here I have written capital withdrawn in capital account, but drawings in current account. Is it the same? 100% no. What is drawings? Drawings is you taking money which is earned by the business for your personal purpose. Capital withdrawn is you taking your own money which you put into the business out. Clear? See this. Drawings is amount taken by partner in anticipation of profit. Now, end of the year, I know I have to get my profit share. End of the year. So what I will do? Month by month, I have my own expenses. I can't wait till the end of the year. So I know end of the year, I'll get profit. I'll take money for my personal purpose. This is drawings. End of the year, when I get profit, these two will get adjusted automatically. Clear? In anticipation of profit, interest may be charged. Interest may be charged if they agree. Clear? What is capital withdrawn? Amount taken by partner out of capital introduced by partner. No interest is charged. You cannot have interest on this because you are taking your own money out. Now, interest on capital. How to calculate? Capital will be given, multiply into the rate. Remember the months. Clear? Capital into interest rate into time duration. Examples you see. If partner A has a capital of 1 lakh on 1/1/2022 and he has introduced more capital on 1/4/2022. For this you will give full interest and for this you will give interest only from 1/4/2022. Is this clear? Interest on capital will be 1 lakh into 10% into 12/12 and 50,000 into 10% into 9/12. I hope there shouldn't be any confusion regarding these things. Okay, interest on drawings. Here we have many scenarios. Interest on drawings, different situations are there. Drawings on different dates and different amount. You're taking 500 on one day, you're taking 1000 on some other day. Now what will you do? You will calculate it separately. Imagine 20,000 is taken on 1/1 and 30,000 is taken on 1/7. So what you will do? For 20,000 you will charge full year's interest and for 30,000 you will charge 6 months interest. Clear? Different date, different amount. But what if it is same amount every month at the beginning? Same amount every month at the beginning. You can use the formula. What is the formula? Total drawings into interest rate into 6.5 divided by 12. I hope you remember it. Okay. If it is, inadequate profit, we distribute in capital ratio. Yes. Now, total drawings into interest rate into 6.5 divided by 12. If it is at the beginning of the year, beginning of the month. If it is at the middle of the month, you will use the formula 6/12. If it's at the end of the month, what you will do? 5.5 divided by 12. Is this clear? Are you following this? Now, what mistake you can make? If they tell 1000 per month, when you're calculating interest, don't take 1000 into interest rate. You should take 1000 into 12. Total drawings, it says. It doesn't tell individual drawing. Total drawing in the year into interest rate into 6.5 or 6 or 5.5 depending on the time. Clear? This can be applied only if it is same amount every month, same time every month. If you are borrowing different amount on different dates, you can't do it. Imagine first month starting I took 1000, second month starting I took 2000, third month starting I took 500. Then you can't do anything. With the formula, you have to come back to this only. Individually, you have to calculate. Clear? Now, last situation. They just tell in the question, total drawings mentioned in the question. Date of drawings not mentioned. Total drawings they tell. That time, will you apply only the rate? No, you will multiply into 6/12. Why? Then you are assuming that it is evenly drawn during the year. Little early you came. You are assuming that it is drawn closer to. It is assuming that it is drawn evenly during the year. Is it clear? Now, any doubts with this? Next, minimum guaranteed profit. What is minimum guaranteed profit? Sit. You have time to fill and come. Sit. Now don't get up and go. Full view will get blocked. Yes. Now, minimum guaranteed profit. What is minimum guaranteed profit? Imagine there are two people, Akarsh and Manju. Two people are there. If they are starting business and they introduce this guy as partner, who is this guy? Narayan Murthy. Okay. Do you think Narayan Murthy will be ready to bear losses? Do you think he'll be agree to become your partner and tell that, okay, I will also be part of the partnership. Any amount of profit you earn, I will also take share. No, he will ask for minimum guaranteed profit. Minimum guaranteed profit. Now what will happen? Three situations are there. If guarantee is given by firm, then what you will do, whenever you make profit, give that money to Narayan Murthy first. Because who gave the guarantee? Firm gave the guarantee. Firm gave the guarantee means all the partners have agreed to give the guarantee. So whenever you make profit, give it first to Narayan Murthy. The remaining profit is there, no, share among other partners. Whenever you make profit, first you give the guaranteed profit to Narayan Murthy, then you give it to other partners in their profit sharing ratio. Now if guarantee is given by partner, one partner has given the guarantee, then what you do? Firm has nothing to do with this. What you do? Distribute the profit in profit sharing ratio. Distribute it. Then can you see there is shortage for Narayan Murthy? Who gave the guarantee? Akarsh gave the guarantee. Remove from his share and give it to Narayan Murthy. Remove from his share and give it to Narayan Murthy. Is it clear? Are you following this? Okay. Next.
Just got minimum guarantee profit by Manju.
By?
Manju.
Then you'll take from Manju's share and give it to Akarsh. You're telling that there are two people who are getting minimum guarantee. That cannot usually happen. But if it happens, Manju will give if Akarsh has shortage. Akarsh will give if Narayan Murthy has shortage. It becomes a loop. Are you getting my point? It can go on forever, that loop. Here I have shortage, I take it. That fellow has shortage, I give it. Okay. But usually it doesn't happen. One person only. Usually guaranteed partner means what? Somebody who has some reputation, you brought him in. Now he is not ready to bear the loss. So we promised him that this much we will give you. Clear? What if guarantee is given by partners in a different ratio, not profit sharing ratio? Guarantee is given by partners in a ratio 2:1. Is this clear? Now what happens? Is the guarantee given by the firm? No. Partners. So first you distribute the profit. Distribute the profit. Is there a shortage for Narayan Murthy? Yes. So what you will do? Remove it from Akarsh and Manju in the ratio of 2:1. Not in their profit sharing ratio, in their agreed ratio. So three things we have seen over here. If guarantee is given by firm, just give it to Narayan Murthy, then you distribute to others. If guarantee is given by one partner, distribute to all the partners, then remove the whatever shortage is there, remove that and give it to the guaranteed partner. If guarantee is given by the partners in a particular ratio, distribute it, then the shortage you remove from the partners in that particular ratio. Is this clear? Yes, this is the partnership intro, the basic chapter. Now we go into goodwill. What is goodwill? No, he will not. He has to get 5 lakh. If 5 lakh is promised, he has to get 5 lakhs. Now, goodwill. Goodwill means reputation of the business. We already know that. What are the factors affecting goodwill? What can trouble goodwill? I mean, how can your goodwill change? See, you have Soyam here, one guy selling ice cream. You have one more guy here, Bambani, selling ice cream. Both are selling ice cream. Same type of ice cream. Same taste of ice cream. Same rate of ice cream also. Location can be your goodwill. How? This guy is selling next to school. Bambani is selling somewhere outside the city. Clear? Same ice cream, but who will have better reputation? Soyam. Just because of location. Imagine he also comes next to school. Now, customer satisfaction can be a thing. If you ask Soyam, you give him 500 rupees note and tell him, give me ice cream. Soyam will give you ice cream and give you change with a smile. With a smile on his face, he'll give the change. If you go to Bambani and give 20 rupees note and tell him, give me ice cream, 10 rupees, he will shout at you for not giving change. Not giving exact 10 rupees. Yeah. Now in that case, you as a consumer, whom will you go to? Soyam only. Same ice cream, same price, everything same location also. But still this fellow got goodwill because of customer satisfaction. Clear? Reputation of owner. Both are selling same ice cream. you got to know that Bambani is actually the owner of Baskin Robbins. So what you will do? Automatically you will go to Bambani. Even though taste is same, you will be like Bambani has something special there. Is it clear? Yes. Uniqueness of product. Uniqueness of product. Soyam has manufactured some ice cream which nobody else can manufacture. And he got it patented also. That taste is unique. You are not getting it anywhere else. Wherever you stand. Wherever Soyam is standing. Location doesn't matter. However he treats his customer. Correct? If he has reputation, no reputation. Last 2 years he was in jail. Still, people will go to Soyam and eat that ice cream. Are you getting my point? So, these are the factors that are affecting goodwill. Now, goodwill becomes like the very important part of your entire partnership. If you are in admission, retirement, death, anywhere, goodwill will come and play a crucial role and go. Are you getting my point? Okay. Computation of goodwill. First method, average profit method. If you are following simple average. What is goodwill formula? Goodwill formula. Average profit into number of years of purchase. Number of years of purchase is usually given in the question itself. Average profit, what is the formula? Total profit divided by number of years. Clear? Number of years of purchase means how many years you are expecting your reputation to continue. That is number of years of purchase. Okay. This and this are not same. It need not be same. Are you getting my point? Don't get confused. Oh, number of years of purchase only here divided by number of years. No. They might tell in the question, goodwill is to be calculated 4 years purchase of the average profit of last 3 years. So average profit is 3 year, 4 years purchase. These are not same. One is past, one is future. Clear? But some questions it can be same also. They might tell 3 years purchase of the average profit of last 3 years. So it can be same as well. Now, weighted average profit. What is the formula for goodwill? Goodwill is weighted average profit into number of years of purchase. Will be given in the question. How to calculate weighted average profit? Total product divided by total weights. Total product divided by total weights. How to get the product? Profit into weightage. What is this weightage? Highest weightage will be given to the most recent year. Weightage has nothing to do with whether it is increasing or decreasing. Weighted average profit method will be used only if there is increasing trend or decreasing trend. See, used when there is a trend in profit. Trend means what? It can be increasing or decreasing. But when you are assigning weights, don't think that, oh, if it is increasing, my weightage is 1, 2, 3. If it is decreasing, my weightage is 3, 2, 1. No, it has nothing to do with it. Weightage will always be, highest weightage will be given to the most recent year. If it is 2022, 23, 24, 2024 will get 3. 2000 earlier year will get 2 and the earlier year will get 1. Is it clear? Highest weightage will always be given to the most recent year. Did you understand the weighted average profit method? Okay. Next, super profit method. What is the formula? Goodwill is equal to super profit into number of years of purchase. This again will be given in the question. Super profit is equal to average profit minus normal profit. Till now we learned what is average profit. That is learned. So how to calculate normal profit? Capital employed into NRR, normal rate of return. Normal rate of return will be given in the question. Capital employed also will be given in the question. Capital employed means what? Partner's capital. NRR should be given in the question. But some questions are there where they will tell you risk-free rate of return is 8%. Risk. By taking risk, you are getting risk reward of 2%. So now your NRR becomes 10%. Are you getting my point? They are telling if you don't do business, if I keep the money in FD, I'll get 8%. By doing business, I should get extra 2%. So now my NRR becomes 10%. Such questions are also there in your material. Okay, capitalization method. Here there is no number of years of purchase and all. Goodwill is equal to normal value of the business minus actual capital employed. Actual capital employed again given in the question. Normal value of business, how will you get it? Average profit divided by NRR into 100. But they can tell you sometimes capitalized goodwill of super profit. They may tell capitalized goodwill of super profit. Then in this formula, instead of average profit, you will write super profit divided by NRR into 100. Is this clear? Are you following this? Yes. Accounting for goodwill. This is the most important thing. Clear? What will you do? Golden rule of goodwill. You remember this. Golden rule of goodwill. Always sacrificing partner to be compensated by gaining partner. That means gaining partner will always have to give money to sacrificing partner. Gaining partner has to always give money to sacrificing partner. How do you know which method to use for goodwill? Simple average or weighted average? Either they'll tell you in the question, or you should see if there is a trend. Sometimes some questions are there where there is a trend, but they have told you use simple average. You use simple average only. Okay. Now, sacrificing partner will be compensated by gaining partner. Now, I know in the study material there are two ratios. Sacrificing ratio, gain ratio. I follow only one because then we'll get totally confused. So, sacrificing ratio is old ratio minus new ratio. Old ratio minus new ratio. When you are doing this and when you get a resultant figure, if the answer is positive, that means it is sacrificing because you are calculating sacrificing ratio. If the answer is negative, then that partner is gaining. Is this clear? Use this formula only consistently over the period of time. All the chapters you use this formula. Old ratio minus new ratio. If you got a positive number, that means that partner is sacrificing. If you got a negative number, that means that partner is gaining. Is it clear? Yes. Now, note. When computing profits for computation of goodwill, profit or loss not expected in future must be eliminated. Very, very important note. What is this? They will tell, in the past, there was one loss. Are you expecting that loss in future also? No, you eliminate. There are questions where they'll tell you, in the past, there was one fire accident. Because of the fire, there is an abnormal loss. Are you expecting this in future also? No, eliminate that. Reverse that. Why? Because goodwill means what? You are keeping past as the base and telling in future this will be my value. That means I'm continuing my reputation for this much time. So if there is any abnormal items, they will only tell you abnormal items in the question. If it is there, you have to reverse it. That means if it is income, you have to remove it. If it is expense, you have to add it back. Such questions are also there for goodwill. Are you getting my point? After learning everything, this point becomes very, very critical. Now, they will tell you goodwill and they'll tell you past 3 years profit you take. But in those 3 years, no, they have made errors. So first you have to rectify those errors. Then you have to calculate goodwill. Is it clear? Yes. Next. Accounting for goodwill in different circumstances. What will happen in admission? What will happen in admission? Now understand. New partner brings in money for capital and goodwill share. Possible? New partner will bring money for capital also, for goodwill also. What is the entry? Bank account debited to new partner's capital account. Goodwill also, capital also. You will put it over there. Then what you will do? You will remove the share of goodwill and put it to the partners. Gaining partner's capital account debited to sacrificing partner's capital account, adjustment of goodwill. This will be always the entry for adjustment of goodwill. Gaining partner debited to sacrificing partner. How to know who is gaining, who is sacrificing? You have to use the formula old profit sharing ratio minus new profit sharing ratio. Is this clear? Now, if new partner brings in money only for capital, he's like, boss, I am not giving you goodwill share and all. I will get only capital. Now what will happen? Only capital if he brings, what will happen? What he brings, we'll put it into his capital account. Bank account debited to new partner's capital account. Even though he did not bring goodwill share, we will still take it. We will still take it. Are you getting my point? Imagine I told this guy, new partner, you have to bring 80,000 for capital and 20,000 is your goodwill share. If he brings 1 lakh, then what I will do, 80,000 will be in his capital account only. 20,000 I'll remove and I'll give it to the sacrificing partners. Clear? But if he doesn't listen to me and he brings only 80,000 for capital. Now your question is, sir, what if he doesn't bring 80,000 also? Then he will not enter the door only. Are you getting my point? If the person is not bringing capital itself, will you make him partner? No. So capital is bare minimum. He has to get it. So he brought 80,000 as capital. He didn't bring the goodwill. What will I do? From this 80,000, I'll remove 20,000. Now his balance is only 60,000. This 20,000 I'll give it to these partners. Is this clear? Are you following this? Yes. So whether he brings or doesn't bring, goodwill will always be distributed. And the entry is always gaining partner debited to sacrificing partner. Is it clear? Next. Amount of share of goodwill of sacrificing partner. If withdrawn by the partner. Now we are giving the goodwill to the partner and they have told partner has withdrawn the money. For withdrawing the capital, what should be the entry? Partner's capital account debited to bank. Partner's capital account debited because capital is going out and bank is credited because money is also going out. Is this clear? If they tell partner has withdrawn their share of goodwill, then you will pass this entry. If they tell new partner pays sacrificing partner's share of goodwill privately, they said 20,000 I have to pay. New partner told I am not giving goodwill and all. Every day I'll come to your house and I'll give you head massage and I'll go. Consider that for goodwill. Possible. Or he will tell I'll come and give you bitcoins. Privately I'll give you bitcoins. Okay, that you consider as a goodwill share. Then what to do? Partner got no. Partner got no. If partner gets, why will partner talk in the firm? No entry. Partner got what he wanted, right? If he got what he wanted, will he come and tell goodwill entry has to be passed or adjustment has to be done for gaining and sacrificing? No, then there is no entry. Are you getting my point? Yes. Accounting for goodwill in different circumstances. Now we go into retirement, death or change in profit sharing ratio. If it is retirement, if it is death, if there is a change in profit sharing ratio. Now you feel, listen, you feel that goodwill calculation has to be done only if there is admission, retirement or death. You know what? Same partners, before profit sharing ratio is 1:1:1. Now it is 5:3:2. Goodwill will be calculated. Goodwill will be calculated. Why? Because somebody is gaining, somebody is sacrificing. Reconstitution. Somebody is gaining, somebody is sacrificing. So basically you remember one thing. If people are gaining and sacrificing, goodwill will always be there. And you will always give the goodwill share to sacrificing partner from the gaining partner. Clear? So entry is always fixed. Gaining partner's capital account debited to sacrificing partner's capital account. Is this clear? Let's go further. Third unit is called as admission. Admission of a partner. Questions can be asked in the exam and also asked very frequently. Correct? Now, what is admission? Somebody standing at the door. Correct? Waiting to get in. New partner being admitted into an existing partnership firm is called admission of a partner. Now, steps to be followed in case of admission. Remember these steps, that time you will not miss anything. Now, first thing what you need. New profit sharing ratio. New partner is coming in. I need to know the new profit sharing ratio. 80% of the time, new profit sharing ratio might be given in the question. If it is not given, you have to compute it. You have to compute the new profit sharing ratio. They'll tell you how to compute it. Clear? Then what you will do? Okay, new profit sharing ratio. That means some people are losing money. Compute sacrificing ratio. When you compute sacrificing ratio, then why is sacrificing ratio computed? Because I have to use that to distribute goodwill. Correct? Compute goodwill. Compute goodwill. When you compute goodwill, then what you're going to do? Revaluation of assets and liabilities. So a new partner is coming in. All the assets and liabilities are getting revalued because old partners deserve the profit on revaluation. That's why before he enters, we revalue the assets and liabilities, share the profit, then we open the door. Clear? If asset increases, what will happen? Asset account should be debited to revaluation account. If asset decreases, what will happen? Revaluation account debited to asset account. Is this clear? If liability increases, liability should be credited. Therefore, revaluation account will be debited. If liability decreases, liability should be debited. So, revaluation account will be credited. Is this clear? After doing revaluation, what can happen? You will get profit or loss. Correct? If it is revaluation profit, revaluation account debited to partners, capital account in old profit sharing ratio. Because only old partners will get this. Then if it is, okay, I wrote profit only here. If it is revaluation loss, then partners capital account debited to revaluation account in old profit sharing ratio. New partner will not get it. Now, this is simple. Some questions are there where they will tell you 4-5 points of revaluation. Then they will tell you assets and liabilities are to be shown at their book value. Why did you tell me those 4 points then? Are you getting my point? In such cases, we will prepare memorandum revaluation account. Memorandum revaluation account. That means do the increase and decrease, share the profit and loss between the old partners. Then reverse everything and share the profit or loss between all partners, including new partner. Clear? Now, note, if assets and liabilities are to be shown at original values after revaluation. If they tell you this, then you will do it. Otherwise, you will just stop at revaluation. Memorandum revaluation account to be prepared. All revaluations done to be reversed. Did we just do some revaluations? Yes, it should be reversed. And profit or loss to be shared by all partners. When it is all partners, it should be including new partner in new profit sharing ratio. Is this clear? Not old profit sharing ratio in new profit sharing ratio. Next, reserves. Next point, we were just discussing all this. See, everything was about revaluation. After revaluation, next point in admission is reserves. What is reserves? Earlier you kept money aside. If you kept money aside, do you want somebody to come in and enjoy that money? No. So what you will do? Distribute the reserves among old partners. Reserve is a liability we will only enjoy. Yes. Reserves account debited to partners capital account in old profit sharing ratio. Why old profit sharing ratio? Because it is only between old partners. Clear? Admission of a partner. Now you did everything, keeping him outside the door. Inside all these adjustments you did and put into your pockets. Correct? Like how if income tax is standing near the gate, we will hide everything underground. Then we'll stand on that area only so that he doesn't understand there is underground over there. You're telling some gold business people what and all they do. Yes. Now admission of a partner. Now we are like, okay, you can come in. When he comes in, what he will bring? Money. Bank account debited to new partner's capital account. Amount brought by new partner. We have just discussed. New partner can bring capital and goodwill or only capital. Clear? Next, goodwill distribution. Whether he brings or not, what we will do? Gaining partner's capital account debited to sacrificing partner's capital account. Clear? Next, making capitals proportionate. Have you seen this at the end of the partnership question? They will tell capitals need to be made proportionate in their profit sharing ratio. Did they tell that? Yes, but there are different situations there. How it works? First situation is they will tell make capital proportionate keeping new partner's capital as base. That and what you will do? New partner's capital is 5 lakhs and he is getting 1/6 share. So how much is 1? So 5 lakh into 6 will become 30 lakhs. This 30 lakh will be in profit sharing ratio. Are you following this? This is one of the common adjustments which is given for making capitals proportionate. There is one more where they will just tell make capital proportionate. That's it. We don't know how much is the capital only. That time we go back into chapter number 2. Journal. In that you have learnt one small equation. Accounting equation. Asset is equal to liability plus capital. Use that equation. Assets you know because you only did the revaluation. Liabilities you know because you only did the revaluation. So if you know asset and liability, capital you will get. If you get the capital, distribute that capital in the profit sharing ratio. Now you know how much each partner has to have. Then if you go to capital account, you will find how much capital is there in each partner's capital account. If partner has more, that means it is surplus. You give him the money. If partner has less, that means it is deficit. You take money from the partner. Are you getting my point? Whenever capital has to be made proportionate, some or the other partner will have surplus or deficit. If there is surplus or deficit, what will you do? If there is surplus, he has extra, we don't want that much in his capital account, give him money. If he has deficit, you take money from him. Some questions are there where they will tell you, if there is surplus or deficit, adjust it through partner's current account. So if there is surplus, what will you do? Remove from capital account and put it to current account. If there is deficit, what will you do? Take from current account and put it to capital account. These questions are also there in your study material only, not even past examination. Clear? New capital is given. Third situation, new capital is given. There are questions in retirement where they'll tell you new capital after retirement should be 3 lakhs. 3 lakhs. So now you know the capital, distribute in new profit sharing ratio, see if there is any surplus or deficit and continue. Is this clear? So making capital proportionate, there can be 3 situations. What is that? They will tell to keep one partner's capital as the base. They will just tell it should be proportionate. Then you have to calculate asset is equal to liabilities plus capital. You will find the capital. Then third situation is new capital is given. Distribute it and make it proportionate. If there is surplus or deficit, give the entry for that. Is it clear? Yes. Next. Partner came in. We all had a fight. One partner is retiring. Possible. Correct? First we checked our reputation and all in goodwill. Then because of our reputation, one partner came in. Then forget about reputation. Mental health only went. Okay, so we are sending that person out now. Retirement of partner. Retirement of partner. Is it forced or voluntary? Voluntary. Existing partner leaving the partnership firm voluntarily. Clear? Steps to be followed. 90% of the steps will be same. Okay, little extra will be there. What you do in adjust admission, same things you will do again. Now see, new profit sharing ratio usually given in the question. If it's not given, you have to compute. But here, you know what the fun part is? Wait. Okay, now you have partners. Little water is there, no? Drink that and save it like a camel. Okay. Okay, now you have partners A, B, C. Their profit sharing ratio is 3:2:1. They just told that B retired. They didn't tell you about new profit sharing ratio. Now new profit sharing ratio will be 3:1. Clear? If they tell you to compute in a particular way, you will compute. If they don't tell you to compute in a particular way, you'll just eliminate that person who went, and that will be the new profit sharing ratio. If you have a situation like this, I'm giving you a shortcut. Just to remember, if you have 3:2:1, and in that this person goes, and new profit sharing ratio is 3:1, in this case, gain ratio will also be 3:1 only. If you calculate and see also, it will be 3:1 only. Clear? Yes. But if it is 3:2:1, and the new ratio is 1:2, then it will not be automatic gaining ratio. You have to calculate old profit sharing ratio minus new profit sharing ratio. If it is positive, that means it is sacrifice. If it is negative, that means it is gain. Clear? Now, retirement of partner. What will you give? Steps to be followed in case of retirement of partner. NPSR, usually given in the question. Clear? Compute sacrificing or gain ratio. That we have discussed what to do. Prepare revaluation account, profit or loss shared between all partners. Whoever is inside. Whoever is inside. Including retiring partner. Because he also has a share in it. Next. Reserves shared between all partners, including retiring partner. Goodwill computation you have to do. You know the methods. If they have not given the goodwill, you have to compute using one of the methods. Next, goodwill distribution. Goodwill distribution. What happens? Gaining partner to sacrificing partner. At least 4 or 5 times we saw this entry already. Now, new topic is joint life policy. Joint life policy can be introduced when we talk about retirement or death. Now, what is joint life policy? Life insurance policy taken by the firm on the life of all the partners jointly. What is separate life policy? Life insurance policy again taken by the firm only on individual partner. Don't think separate life policy means he has taken it separately. No. If he has taken it separately, it is his personal. We are not bothered only about it. Clear? Joint life policy means policy taken by the firm on life of all partners. Separate life policy means policy taken by the firm itself on individual partners. Is this clear? Yes. Policy amount is received if partner dies. Policy amount is received if partner dies. Are you getting my point? But if partner retires, surrender value is received. Both the policies, joint life, separate life. If a partner dies, now if it's joint life policy, 3 partners are there. If one partner dies, you get the policy amount. You get the policy amount. If it is separate life policy, 3 partners are there. And if this partner has died, but there was no policy on his life, then what will happen? Nothing. Are you getting my point? Why is it taken, by the way, joint life policy, separate life policy? Why do we take joint life policy, separate life policy? Yes, to satisfy the loss for the remaining period. See, if there are 3 partners, it's a partnership firm, it's not a company. Smaller unit, correct? If there are 3 partners, each partner has a specialization. One person knows all the customers. Another person knows all the suppliers. Third person knows how to manufacture. Are you getting my point? The person knows the customer died. Now what happens? Again, these people have to go and build a relationship with all the customers. It will take some time. In that there is some loss of profit. That is why just joint life policy is taken. So that money comes, it will compensate for the loss. Are you getting my point? Yes. Now, if partner dies, you get policy amount. If partner retired, you'll get surrender value. What is surrender value? Yeah, some value, not at a profit. That value is not profitable only for us. It is at a loss only. But why we are surrendering? We are like 3 partners are there. One went. Now what we have to do? We don't want this policy because it is on the life of all the partners. Partner has left the firm. And when he was there, he was also part of this policy. And he also has given his share for the premium. Why? Because joint life policy is taken or separate life policy is taken by the firm. If it is taken by the firm, who is paying the premium? Partners. That means each partner has a share in it. So if he retires, surrender value will be received. Okay, whatever amount is received, whether it is surrender value in case of retirement or the policy amount in case of death, it is shared between all the partners in old profit sharing ratio. Is it clear? Because everybody has a share. Don't come to the conclusion if there is a separate life policy on the life of A, B, C. If C dies, you will get the policy amount. Doesn't mean that you have to give it only to C's executors. You have to give it to A, B and C. It is given to A, B and C. Is this clear? Now, next, accounting for JLP. How do we do accounting? When you pay premium, there are two cases. Third case is there, which is eliminated now. They don't follow it anymore. Joint life policy reserve and all. We'll focus only on the two cases. What are the two cases? Premium paid by firm treated as expense. Premium paid by firm is treated as asset. If it is treated as expense, then you'll pass this entry. Joint life policy premium account debited to bank like any other expense. Expense like any other expense should go to P&L. P&L account debited to joint life policy premium. Is this clear till here? But if it is treated as asset, then you will pass the entry joint life policy account debited to bank. Not premium, joint life policy account debited to bank. And this will be shown in the balance sheet as asset. Are you clear till here? Is this clear? Now, at the end of the financial year, joint life policy account must match with the surrender value. Imagine I paid 2000 rupees premium. Surrender value is only 500. So what I should do? I should reduce this 2000 and make it 500 in the balance sheet. So when I reduce, when asset reduces, what will happen? Loss, right? That loss will be taken and put into P&L. That loss will be put into P&L. There are, I think, 2 or 3 questions in your study material about joint life policy. In that, both this, I think not even 3. 2 questions are there. One, they have taken it as expense. One, they have taken it as asset. Clear? If at all smaller question comes, they can always ask that joint life policy premium treatment. Now, when amount is received in each case, both these cases, if amount is received, what will happen? Bank account debited to JLP, then distribute to all partners in old profit sharing ratio. Is this clear? After that, in retirement, what can happen? Can you see in retirement, the only new thing that got introduced is JLP. Other things remain same. Now, if you go into the continuation, make capital proportionate. We have already learned how to make capital proportionate. It can be keeping one partner's capital as the base. It can be taking asset is equal to liabilities plus capital, or it can be amount given, you just distribute and make it proportionate. Clear? Settlement of retiring partner. If retiring partner is going, we have to give him money. How to give it? Should I give today only? Should I give it in future? Anything can happen. Pay it immediately. If you're paying immediately, retiring partner's capital account debited to bank account. If you're transferring it to loan, retiring partner's capital account debited to retiring partner's loan account, and this loan will be shown in the balance sheet on the liability side. Clear? And on that loan, if you're giving him some interest, that interest will be an expense for the firm. Till you repay the loan, you'll have to pay the interest. Is this clear? Yes. Death of a partner. Is it voluntary? No. Is it voluntary? Obviously no. Uncertain. Partner leaving the firm due to death. Clear? Or amount payable to deceased partner. Partner who died, there is some amount that is payable to him. So many things are there which are payable to him to be paid to legal heirs. Legal heirs are called as executors here. Executors. All legal heirs. Not all. Depends on who is the person who is getting it. Okay, if there are like multiple kids and if there is wife, legal heir will be wife. Not even the kids. Are you getting my point? But if there are multiple kids and wife is also not there. Wife was there. Don't think from where the kids came. Okay. Wife was there, but there are kids only remaining now. Then it will be kids. All three will be legal heirs. Now they have to decide how to share whatever it is. Yes, computation of amount payable to executors. Everything remains same. If you have to do accounting, same thing, revaluation account you'll have to prepare, partners capital account you'll have to prepare, all that remains same. Now, they might ask you, compute the amount payable to executor. Tell me what and all we have to give. What is there in his capital account? Don't you think we have to give that? What is there in his current account? Don't you think we have to give that? Yes, but if current account has debit balance, then we have to take it. Are you getting my point? Same logic like that Robert example. If I have to give you 100 and you have to give me 20, we will not pass two transactions. I have to give you 100, you have to give me 20, 20 will be set off. Clear? Same thing. If current account has credit balance, that means we have to pay money add it. If current account has debit balance, that means he has to pay us money, subtract. Clear? Interest on capital, if there is anything pending, give. Interest or remuneration, if there is anything pending, give. This was not there in retirement. Why? This was not there in retirement. Why? Why it was not there? End of the year, if he is going, if there is full year's interest pending, he'll take the interest in. Basically, it is voluntary and involuntary. He knew that if he stays till the end of the year, he'll get all that. But he went in the middle. We are not going to calculate anything. Are you getting my point? So profit share till the date of retirement is not there. But profit share till the date of death is there. Clear? Now, profit share till the date of death. If there is any profit, if there is no, there will be profit till the date of death, we have to calculate and give. But there are some questions where the other partners are very, considerate towards the person who has died. So they will tell, don't worry till the date of death and all, we'll give profit share till the end of the year. Possible? Imagine the person has put effort in the first 5 months. That reward is reaped by others in the next 7 months. Correct? If he has died, so he also has to get the benefit for the next 7 months. So if they tell, then full year. If they don't tell, only till the date of death. Is this clear? Entry for this is P&L suspense account debited to partners capital or current account. P&L suspense account debited. If you're preparing balance sheet after that, this P&L suspense will be shown on the balance sheet asset side. P&L suspense will be shown on the balance sheet asset side. What is this P&L suspense? It's a loss basically. This loss will be later adjusted with the profit which will come into the balance sheet liability side. Is this clear? Yes. Next, if there is any drawings, what we will do? Subtract. If there is interest on drawings, what we will do? Subtract. If his goodwill share, what we will do? Give it to him. His JLP and SLP share, what we will do? Give it to him. His reserve share, what will we do? Give it to him. Revaluation profit, we will give. Loss, we will take. Is this clear? All this is what is supposed to be payable to executor. This is what is supposed to be payable to executor. Is this clear? Now, amount payable to executor, what you can do? Same thing. Pay it immediately or transfer to executor's loan account. But this transfer to executor's loan account has a different adjustment in Partnership Act. What is it now? If you transfer to executor's loan account and you're telling the legal heir, boss, I'm not paying you now, I'll pay you later. Now the ball is in legal heir's court. He can decide what he wants. If at all a retiring partner is there who is going out voluntarily and I'm telling I'll pay you later, both of us agree, okay, 8% interest, okay, cool, go. Correct? But if it is if it is death of a partner, you are actually supposed to pay immediately. Partner has died, settle the amount to the family. But in case it is not done, now who will decide is partner. What he wants, he will decide. He can choose two things. Two options he has. What are the two options? Give me 6% interest per annum. Give me 6% interest per annum. Otherwise, second option is give me share in profit. Share in profit means not in profit sharing ratio. My amount which you are supposed to give me, that also you are using in the business, no? Because you have not cleared my balance, you are using it in the business. See, profit will be calculated like this. Whatever profit is earned into amount payable to the executor divided by capital of the remaining partner and the amount payable to executor. Imagine I have to pay 1 lakh to the executor. I have to pay 1 lakh to the executor. And the other partners are X and Y. They have capital of 2 lakhs and 2 lakhs each. Don't you think now actually the total capital they are using is 5 lakhs? Because the deceased partner's money they have not given, that is still being used in the business only. So now in such case, if I earn a profit of 10,000, what I will do? 10,000 into how much I am supposed to pay to the deceased partner? 1 lakh divided by total 5 lakhs. So 2,000 will be his profit share. Are you getting my point? When I tell profit share to the executor, that does not mean in profit sharing ratio. It is based on this formula. Is this clear? Proportionate profit of what money is used in the business. Now, who will choose which he wants? At the option of the executor. Yes, he can. Yes, he can do that. He can change the option. Unless his money is paid, no, option is with him only at the option of the executor. What will executor do? He will just calculate under both the methods. Oh, this method 3,000 is coming. This method 5,000 is coming. What will I choose? 5,000. Give me. Are you getting my point? Whichever is higher, whichever is beneficial to him, that only he'll choose. No. This method 3,000, this method 5,000. Will he tell, give me this one? I like 3,000. That's my lucky number. Will he do that? Are you getting my point? Okay, so he will choose what is beneficial to him only. So what you have to remember, if at all they want, they can frame a question for 4 marks on this. It is not there in the ICA material at all. It is there in the ICA material in the example. Starting of death of a partner, there is one example question where they have shown this. From there they can ask. I know when you go to death of a partner, you are going directly to illustration 1. So you'll miss this part. That's why I'm telling you. When you go to a chapter, you're going directly to illustration 1. You're like, I know, let's start with first question. This is there in example. If they want, they can frame a 4-mark question on this. Clear? So have a look at it. Next, partner came. Partner fought. One partner got killed also. Okay. Now, remaining partners are scared of each other. We don't know when they're sleeping, they'll put pillow and they'll kill us. So they're scared of each other. So what they did? Dissolution of partnership firm. Dissolving, closing the partnership firm. What is dissolution? Just shutting down the partnership firm. If we are shutting down the partnership firm, what we have to do? What we have to do? We are in accounting subject. What we have to do? Only closing of books. Our job is what? Accounting. Oh, you are closing, you are fighting. Okay, I will pass entries only. You are coming in, I will still pass entries only. You are going out, I will still pass entries only. Somebody died, I will still pass journal entries only. If you are closing the firm, okay, you do all the pulling the shutter and all that, but I will sit and pass entries only. Are you getting my point? So our job is accounting. Now, dissolution of partnership firm. Shutting down. Accounting for dissolution. What's our intention? Closing everything. Now, transfer assets and liabilities except cash or bank. Keep cash or bank separately because it will be required. To realization account. Which account? Realization account. There, some students are like, sir, can I use revaluation over here? You can use. Result will be same, but you will not get the full marks. Revaluation account is used to revalue the assets and liabilities. Realization account is used to sell the asset and pay the liability. That means to realize the asset values. Are you getting my point? So therefore, you cannot interchange the names. It is not the same. So you have to use realization account. When you are transferring, even if you are selling 10,000 ka asset at 50,000, you will transfer at book value only. You transfer at book value only. Why at book value? Why at book value? Because we want assets and liabilities to go from the books. In the books, assets and liabilities are sitting at what value? Book value. You want it to go from the book. That means you have to remove at book value only. If I have to remove asset has to be, if I have to remove the asset has to be credited. So realization account will be debited. If I have to remove liability has to be debited. So realization account will be credited. Is this clear till here? Yes. Asset taken over by partner. Partner is taking the asset at agreed value. If you are a partner of a closing firm, you can see the TV over here. TV is showing 25,000 in the books. Won't you tell? Anyways, we are going to sell it. I will take it at 20,000. Possible. At agreed value. So if it is at agreed value, what is the entry? Partner's capital account debited. Why? He is taking. That means his balance should reduce. Partner's capital account debited to realization account. All assets and liabilities are now sitting in realization account. Correct? Next, liability is taken over by partner. That means he is paying some liability from his pocket. So we have to pay him. So partner's capital account credited. Realization account debited. Is this clear? Next, sale of assets. If I sell assets, what will I get? Money. Bank account debited to realization. Bank account debited to realization. Liabilities settled. If I pay the liabilities, what will happen? Money will go. So realization account debited to bank. Are you following all this? Yes. Realization expense paid. If you pay the realization expenses, what will happen? Money will go again. Realization account debited to bank. Realization account debited to bank. Close the realization account. When I close the realization account, what can happen? Only two things can happen. Okay, third thing can also happen. It can balance also. No profit, no loss. If there is a profit, what will we do? Realization account debited to partner's capital account in old profit sharing ratio. If there is loss, what we will do? Partner's capital account debited to realization account in old profit sharing ratio. How you should distribute the loss or profit from revaluation account? Same thing over here. Okay, next, settlement of partners. Only two things are remaining now: partners capital account and bank account. Whatever money is there, don't think that you have to distribute that money in profit sharing ratio. It is not profit. So what you have to do when final step of dissolution, you have to go into each partner's capital account and check. If partner has credit balance, that means partner has money. We have to pay the partner. Partner's capital account debited to bank account. We have to pay the partner. Remove it from capital and pay the money. If partner has debit balance, that means we have to give money to, partner has to give money to us. So bank account debited to partner's capital account. You know, right? One of the features of company is limited liability, which is not there in partnership. So when dissolution and all happens, if there is shortage, partner has to bring money.
Yes, sir.
If there is excess, we'll give him money. Are you getting my point? This is the settlement of partners. Insolvency of partner. This here our friend Garner versus Murray will come into picture. Insolvency of partner. That means one partner is insolvent. What is insolvent? Doesn't have any money. Doesn't have any money. Now his loss, can we let it go? No, it will come and fall into our head. Other partners head. Solvent partners. Oh, it is written off here. It's actually if partner is unable to pay the debit balance in his capital or current account due to insolvency, he is not able to pay. There is debit balance. Debit balance means partner has to give money, but he is not able to pay. If he is not able to pay, what will happen? His loss will be borne by other solvent partners in capital ratio. His loss will be borne by whom? Other solvent partners. That means others who have money in what ratio? Capital ratio, not profit sharing ratio, capital ratio. This is Ghana versus Murray. This is Ghana versus Murray. Which story? The story. There was Garner. There was Murray. Tell him, we'll just change it. Something he told for you. Yes. Now listen. Ghana versus Murray means what? Two people had a fight. Okay. Ghana versus Murray. One person was solvent, one person was insolvent. They went to court. They went to court and they told, now if in case partner is insolvent, what has to happen? Court could have quietly told all the others will bear this loss in profit sharing ratio. But court, we don't know for what reason, they said capital ratio. Now because of this capital ratio, you know what problem is caused? We have A, B, C partners. Who is insolvent? Let's say balance is there. There is 40,000 in A's account. In B's account, there is 20,000 deficit, and C's account, there is 10,000 deficit. What does it mean? What does it mean? A has to get 40,000, B and C has to pay 20,000 and 10,000. Does it mean that B and C are insolvent? Whoever has to pay you money doesn't mean that they are insolvent. Are you getting my point? B and C are not insolvent, but I'm telling you now B is insolvent. If they tell B is insolvent, now B is 20,000 has to be borne by whom? Other solvent partners. Who are the other solvent partners? A and C. In which ratio? C doesn't have capital only. C doesn't have capital only. No, he doesn't have to bring. Because of this case law, C does not have capital. No, C will not bear the loss. Only A will bear the loss. What happened now? Person who was good, we hit one hammer on his head. Person who was bad, who had debit balance in his capital account, survived. Because they gave the case law judgment partners in capital ratio. Are you getting my point? This is one thing that you have to remember. One person was very good over here. He had money kept in the business. When the one person became insolvent, took from only that guy. Even though other partner is proper, he did not have money, so it will not bother him. That's why I told the correct judgment would have been, it should have been distributed in profit sharing ratio. But they have already given capital ratio, so we have to follow that. Is this clear? They will tell specifically in the questions, follow Ghana versus Murray rule. Clear? Now, note, in questions related to insolvency, solvent partners should bring money for their share of realization loss. What does it mean? Realization loss, what is the entry? Realization loss, what is the entry? Partner's capital account debited to realization account. Moment this happens, reflex action in the exam. Moment this happens, you know who is the insolvent partner, no? Other partners will write bank account debited to partner's capital account. Immediately. Again, an illogical thing which is practiced in books. In practical situation, what I will do? I have realization loss. Anyways, you have to give me money. We'll adjust these two things. Realization loss is there. That realization loss means what? Asset value was less than the liability value. So now I have a loss. Okay, I have to pay money. But already there is money sitting in bank account which you have to give me. So now we'll adjust these two. That will be the practical situation. ICA also has told that that is the practical situation. But in one box they told in practical situation this won't be followed. But in books we will follow this. Are you getting my point? They have given one nice box is there in your study material. If you go into the theory part of partnership, they have written in the box. But we are following this. So what you have to do, very important note. In questions related to insolvency, okay, solvent partners bring money for their share of realization loss. So when you pass the realization loss entry, automatically you will write by bank and pass the money bringing entry also. Is this clear? Note. Non-applicability of Garner versus Murray. Why I have put this is some attempts back, 2-3 attempts back, they put one theory question. Tell when Garner versus Murray is not applicable. One you can write Garner versus Murray is not applicable when all partners are solvent. All partners are solvent. If I have not written that over here, but if all partners are solvent, then 100% mean Garner versus Murray is not there. Or if all partners are insolvent. If all partners are insolvent, where is the solvent partner to bear the loss? If all partners are insolvent, who will bear the loss? Creditor will bear the loss. Outsider sitting and waiting for money will never get money only. He'll keep waiting forever. You know that meme is there where one person is waiting and then finally one skeleton will be sitting like this. On Instagram and all there is this meme. Okay, one skeleton photo and they're like, this guy was waiting for this. And he waited and waited and he died. Like that it will happen. If all partners are insolvent, creditor will bear the loss. Clear? Even if one partner is solvent, creditor will not bear the loss because that one solvent partner will bring money and pay it to creditor. Are you getting my point? Yes. Second situation, if in that is not enough means he is insolvent. If what he can bring is not enough, that means he is insolvent. Yes. If insolvent partner has credit balance in his capital account, insolvent partner has credit balance, then is there Garner versus Murray? Is there Garner versus Murray? Garner versus Murray is what? When insolvent partner has debit balance. That means, now tell me one thing. I have to pay you money. I have to pay you money. Correct? Now you will be concerned if I am insolvent. You will be concerned. You have to pay me money. I am insolvent. You have to pay me money. I am insolvent. Now, are you bothered whether I am insolvent or solvent? Are you getting my point? I don't have to pay money. See, insolvent partner has credit balance. That means insolvent partner has to get money. When he has to get money, now do you bother whether it is insolvent or solvent? Nothing. No Garner versus Murray. Garner versus Murray is when partner is insolvent and he has to give money. If he has to give money, what will happen? You will follow Garner versus Murray. Is this clear? Next, if solvent partner has debit balance in his capital account. If solvent partner has debit balance in his capital account, what does it mean? Just now what we saw. Partner is solvent. Partner is solvent. Like we saw this ABC example. Partner is solvent. No credit balance. So he is out of it as losses are to be borne in the capital ratio. Is this clear? Only thing that is remaining in partnership is this. Piecemeal distribution. What is piecemeal distribution? You decided, okay, you finished your CA foundation exam. So let's go and eat one pizza. So one pizza is served to you like this. Okay, like that it won't be served. It is served to you like this. Pizza is a circle thing served in a square box eaten in a triangle. It's a triangle, right? Yes. Now, you decided to go eat pizza. Will you take the full pizza like this, like how they do in cartoon and all, and just pour it into your mouth? Will you do it? No, right? Okay, so you will eat piece by piece. That is how the name came, piecemeal distribution. That is how the name came, piecemeal distribution. Are you getting my point? Now, piecemeal distribution, understand this. When you dissolve the partnership firm, you have so many things in the partnership firm. When you dissolve the partnership firm, will you sell everything at once? It is not possible only to get buyer. Correct? Somebody will walk in, he will see the AC. He'll be like, this is nice, I'll take it. Somebody else will walk in, he will like the TV. He'll take the TV and go. Possible. Somebody will walk in, he will want desks and benches, but he doesn't want so many. He'll take 10. Possible. Shh. So now, in piecemeal distribution, what happens? In dissolution, when amount is received in parts, distribution to be done in parts. Amount is received in parts, distribution to be done in parts. Now you have two methods, maximum loss method and you have higher relative capital method. Two methods only. Okay, now understand this. If it is maximum loss method, no, I am a very negative person. What does it mean? Each installment is considered as last installment. Every time somebody is coming and taking one tube light and going, I'm like, oh, anymore nobody will come. If anymore nobody comes, then there is a loss. Distribute maximum loss to partners in profit sharing ratio. How to calculate maximum loss? What I am supposed to pay to partner minus what is the amount available. I have to give 50,000 to partners, but I have only 10,000 right now. So 40,000 is loss. Distributed to partners. In case of deficit, follow Ghana versus Murray. You will get to know how much amount is distributed. Is it clear? This is maximum loss method. Can be asked in the exam. Easy. One of the easiest areas of partnership. Even not only dissolution, partnership itself. Because you have to make one table and show distribution of cash. Clear? What if it is higher relative capital method? As the name suggests, higher relative capital. That means whoever has higher capital should get money first. Higher capital doesn't mean in value. Higher capital means in your profit sharing ratio. You are getting some profit share, you are getting this capital. I am getting the same profit share, but I have lesser capital. That means you have higher capital. Are you getting my point? So, method to higher relative capital method, stage 1. What you will do? Divide the partner's capital by profit sharing ratio. Then what you will do? Keeping the capital of the partner who has the least resultant figure as the base, calculate required capital. When you divide it, you got one person having resultant figure less. So, you will take his capital as the base and calculate the total capital. Then you will distribute that total capital in profit sharing ratio. Now you know, okay, existing capital was something, required capital is something else. Somebody has extra. This is called as higher relative capital method. Higher relative capital. You will keep repeating the steps till you find the last man standing. Till you find the last person standing, you will keep repeating the steps because you want to know who is that partner who has to be paid first. Whoever has higher relative capital, that partner will be paid first. Repeat steps till you find one partner who has higher relative capital. Is this clear? When we see the piecemeal distribution questions, we will go through these steps again. Last note, if all partners are insolvent, do not transfer creditors to realization account because we can't realize them only. Correct? Prepare creditors account separately, deficiency account also to be prepared. If all partners are insolvent, no, I'll tell you what will happen. What debit balance is there in partner's capital account, they are not going to bring it. That will be the loss of the creditor. If all partners are insolvent, debit balance in the partner's capital account is the amount to be brought by partner which is not going to bring. That will be borne by whom? Creditor. Creditor will bear that loss. Is this clear? This is the last thing that you have to remember. I think related to this, there is only one question in the study material where all partners become insolvent. You have to see that because if they ask you, it's easy. That is it. That should be it with partnership. We are done with the concepts of partnership. Now we start with the questions of partnership. Only few questions are there. Few. 21 we start. Sixteen questions are there in partnership which we have to have a look at. Only. 16 questions in partnership which we have to have a look at. Obviously, we are not solving. We are just seeing the important areas of those questions.
So in case of dissolution, since keeping the cheap weight classes.
He knows people in Chickpete. Yes, it's 10:41. You can take a 10-minute break. Take a 10-minute break. Chirag, you know what happened, right? Still you are telling no. You should tell yes, yes, no. Okay, let's start. Some important questions I have picked. Okay, in this, most of the concepts are covered, whatever we have discussed. Partnership intro question. Partnership intro question. SM practice question 1. From study material, it is the first practice question that we have. Okay, why I am taking this intro level question also is because that also has adjustments which can trouble you in other places. Weak, able and lazy. Weak, able and lazy. Yes. Who are you, Chirag? Weak, able or lazy? You'll be lazy? Yes. Okay. Now, understand this. Weak, able and lazy are in partnership sharing profits and losses in the ratio of 2:1:1. It is agreed that interest on capital will be allowed at the rate of 10% per annum and interest on drawings to be charged at 8% per annum. No interest will be allowed on current accounts. Okay. Now, the following are the particulars of capital and drawing accounts of partners. Can you see the capital account and drawings is given? Okay. Now, the draft accounts for 2022 showed a net profit of 60,000. The problem in this question which we have to address is this. Before taking into account interest on capitals and drawings and subject to following rectification of errors. Anywhere, anytime, rectification of errors can pop up in your life. Okay. Now, 60,000 is there. Interest on capital we know to calculate. Interest on drawings we know to calculate. But rectification of errors is also there. So now what we will do is understand this working note. 60,000 is a profit. Clear? Now see over here. Life insurance premium of week amounting to 750 paid by the firm on 30th June has been charged to miscellaneous expenditure account. Whose life insurance premium it is? Week. It is drawings basically. Partners. It is drawings. So what we are going to do? Add the expense back. When you add the expense back, profit will increase. Then repair of machinery amounting to 10,000 has been debited to plant account and depreciation thereon charged at 20%. It is debited to plant account. So what you will do? You will remove it from plant. Okay. Now if you remove it from plant, you have to treat it as repair. When you treat it as expense, less. But when it was treated as asset, I told you yesterday in rectification. If I told you in rectification yesterday, if you take the asset by mistake, you will take the depreciation by mistake. So if you remove the asset, you have to remove the depreciation as well. Are you getting my point? They have taken the asset by mistake, wrongly capitalized. When you remove that, okay, expense is taken, expense will reduce the profit. But if you remove the depreciation, depreciation is good. So net impact is 8,000. Basically, are you following this? Repair will be taken. So 10,000 expense. Depreciation will be removed. So 2,000 income. So net expense is 8,000. Is it clear? Next, what you have to understand, traveling expense of 3,000 of able for a pleasure trip to UK. Paid by the firm on 30th June has been debited to traveling expenses account. If he is going on a pleasure trip, that means it is personal. That means drawings. They have taken it in what? Traveling expenses. If you remove it from traveling expenses, it is income. Income will be added back. Income will be added back. Is this clear? So now you get this values. This is your correct profit. This correct profit should be distributed to partners. Now what you have to remember, one thing. Two places you have drawings. Can you see this is the drawing of week. So week's drawings you have to add 750. And this is the drawing of able. So able's drawings you have to add 3,000. So their drawings also will change when you are making the rectification. If the drawings is going to change, then interest on drawings also will be calculated on the changed value. Clear? Now, see interest on drawings. Can you see they did the rectification? Then they calculated interest of the partners. Okay. Now they have asked you to prepare P&L appropriation account. Huh? P&L appropriation account. Can you see the profit? Not the profit given in the question 60,000. Adjusted profit after correction. Now, interest on drawings is income. You know how to calculate. Drawings is there. You have to just multiply the percentage. Interest on drawings is income. Now, interest on capital is expense for the firm. Basically, it is appropriation. You're giving off. After that, whatever remains is distributed between partners in their profit sharing ratio, which is 2:1:1. How did I get it? They are told in the first line. Is this clear?
Yes.
Are you following this? This question is from intro chapter, but it's important. If they ask a intro level question, this can be the one. Is it clear? Yes. Next, you have question number 22. Intro. Practice question 2. One more question from intro only. Practice question 2. Now, understand this. Ram and Rahim, the most common partners, are in partnership sharing profits and losses in the ratio of 3:2. Their profit sharing ratio is 3:2. As Ram, on account of his advancing years. What does it mean? Ram is growing old. Okay, feels he cannot work hard as before. The chief clerk of the firm, Ratan, there was one clerk, is admitted as partner with effect from 1st January 2022. Ram and Rahim were partners. Ram is planning to retire or Ram is planning to reduce his work. So they take Ratan as the partner. Third partner comes in. Now, and becomes entitled to 1/10 share in the net profits. How much profit is getting? 1/10 and nothing else. He's getting 1/10. What more is there? And mutual ratio between Ram and Rahim remain unaltered. That means what Ram and Rahim had between themselves, it is going to be the same. Okay, 3:2 only. Before becoming partner, Ratan was getting salary of 500 per month. 500 into 12 is 6,000. Together with commission of 4% on the net profits after deducting his salary and commission. So he was getting commission of 4%. These were the things he was getting when he was the clerk. It is provided in the partnership deed that share of Ratan's profit as a partner in excess of amount to which he would have been entitled if he had continued as chief clerk should be taken out of Ram's share of profit. What is it? What does it mean? They're telling, boss, you were clerk, no? When you're clerk, you are getting something. Now you became partner, you are getting something. So if you're getting something extra, that should not bother Rahim. It should be taken from Ram. Are you getting my point? Before this fellow was clerk, he was getting something. What was he getting? He was getting salary and he was getting interest. Sorry, what is that? Commission. He was getting commission. Whatever this amount is, if when you become partner, if you are getting more than that, that more will be taken from Ram. Did you understand this entire story? Now see. How much is the salary? 6,000. Remember the profit is given in the question. How much is the profit? 1,10,000. If out of 1,10,000 you remove 6,000, you are left with only 1,04,000. Commission was 4% after charging commission. 4% after charging commission into 4/104 is equal to 4,000. So 6,000 plus 4,000 when he was a clerk, he was getting 10,000. Do you agree?
Yes, sir.
He was getting clerk was getting 10,000. Now, if he is not the clerk, we don't have to pay this.
Yes, sir.
If he is not the clerk, we don't have to pay this. So our profit will be 1,10,000 only. If it is 1,10,000, his share of profit is what? 1/10. When he becomes partner, he becomes 1/10 share. So into 1/10, he will now get 11,000. Can you see when he was clerk, he was getting 10,000. Now he will get 11,000. That extra 1,000 will be taken from Ram's profit. Extra 1,000 will be taken from Ram's profit. This is the solution. See over here. 1,10,000. Can you see Ram? Earlier it was 60,000. If you see, no, earlier Ram was getting 1 lakh into 3/5, 60,000. And Rahim was getting 1 lakh into 2/5, 40,000. Your question should be, sir, why are you taking 1 lakh and why are you not taking 1,10,000? Because when that fellow clerk was there, to the partners only 1 lakh would remain. In that 1 lakh, 60,000 to Ram and 40,000 to Rahim. Rahim should still get 40,000 only. What extra you are paying to Ratan, you are going to remove from Ram. So this will become 59,000 from Ram. Can you see 59,000 from Ram? This fellow is still getting 40 only and Ratan is now getting 11. This is the question. This is what you need to understand. This can be asked as a question or can take and put it into one bigger question as an adjustment. That is it with the intro. Now we'll go into the goodwill chapters. Goodwill chapter, illustration 11 from goodwill. And one more practice question from goodwill. Then we go into admission. Is it clear? We have discussed all the concepts of goodwill. Illustration 11. Yes, here we are. Nice, small, sweet question. Okay. If they ask something from goodwill, this can be the one because this is the most complicated. Before this, only calculation is there. Okay, now understand this. CU and AU. Chetan, see here. CU and AU were in partnership sharing profits and losses in the ratio of 5:3. On 1st April 2022, they decided to admit AG into the partnership on the following terms. Two partners are there. New partner is being admitted. AG will bring 2 lakh as capital for 1/4 share. How much is AG's capital? 2 lakh, and he is going to get 1/4 share. Okay. New profit sharing ratio is given 2:1:1. After the new partner comes, new profit sharing ratio is 2:1:1. Okay. CU was entitled to salary of 2,000 per month. It was revised to 3,000 per month from 1st October. That means till 1st October it was 2,000 per month. After that it was 3,000 per month. Interest on capital 8% per annum. Capital as on 31st March 2022 was 4 lakh, 3 lakh and which had remained unchanged since last 4 years. Since last 4 years the capital is 4 lakh and 3 lakh only. Goodwill was to be valued on the basis of 3 years purchase of average, okay, but average adjusted profit. Average adjusted weighted average profit for the past 4 years. That means what? If they are telling adjusted, that means there is something to be adjusted. Some mistake, something that will not repeat in future, we have to do the adjustment. The profit for the previous 4 years is given below. They told you weighted average profit, right? They told you weighted average profit. Did they tell you weighted average profit? Yes. Weighted average profit is always calculated when there is a trend. No given trend is there over here. No given trend is there over here. That means after you do all the adjustment, there will get a trend created. Are you getting my point? But till now they didn't tell us what to adjust. Don't worry. These profits were subject to following rectifications. Here you are again. Rectification, my dear friend. Yes, these are the rectifications. So first what you do? You take the profits. What are given? 210, 260, 210, 305. Salary is there. Easy thing. You can subtract the salary. Because can you see the profit which they gave? These are the profits before charging interest on capital and salary to CU. Salary to CU till 1st October was something 2000. So first year 18-19 will be 2000 into 12. Next year will be 2000 into 12. The next year will be 2000 for 6 months and 3000 for 6 months. 2000 for 6 months and 3000 for 6 months, you will get 30,000. The last year, full year, it is 3,000 only, 36,000. Is this clear? And they told capital has not changed only since last few years. 7 lakh is the capital. On 7 lakh, 8% is the interest on capital. So 56,000 is the interest. So now if you check 56,000, 56,000, 56,000, 56,000. Now your question should be, sir, why have they not taken interest on capital for that new partner also? Because in the last 4 years, new partner was not there. Only for old partners, we have calculated interest. Clear? Now we go into rectification. Machine costing 40,000. Purchased on 1st October 2020. 1st October 2020 means this falls into the year 2021. 2021 was wrongly charged to revenue. Wrongly charged to revenue means what? It was taken as expense. So now you will remove from expense. If you remove from expense, it will get added to profit. If you remove from expense, it will get added to profit. Instead of asset, you have taken as expense. Now you take the asset. That time expense will go. Now, but if you take the asset, remember I told you, you miss the asset, you miss the depreciation. When you take the asset, you should take the depreciation also. So now, machinery was depreciated at 20% per annum written down value basis. Will you take 20% for 2021? Will you take 20% for 2021? No. Why? 2021 it was purchased on 1st October. So 40,000 into 20% into 6 by 12 will be 4,000. Will be 4,000. Which method of depreciation are we following? WDV. If out of 40,000, 4,000 is removed, you are having only 36,000. So next year it is going to be 36,000 into 20% full year, because next year full year. So 7,200. Did you understand till here? Clear? Next, stock on 31st March 2020 was overvalued by 20,000. That means by mistake, 31st March 2020 means 1920 is the year. 1920 is the year. By mistake, they have taken 20,000 extra stock. If they have taken extra stock, what we should do? We should remove that. If we remove the stock, profit will reduce. But remember, if they have taken extra stock on 31st of March 2020, that stock only becomes the opening stock of next year. So next year opening stock is also more. So opening stock reduces, profit increases, closing stock reduces, profit decreases. If you are not aware of this equation, prepare trading account, put dummy numbers, change the stock and see, you will understand what will happen to profit. Clear? Now you can see this. Closing stock reduces, profit decreases, opening stock reduces, profit increases. Is this clear? Next, there was a loss by fire amounting to 10,000 in the year 2018, which was not considered in trading account but correctly debited to P&L account. Okay, debited to P&L account means they have taken the loss. No problem. Now there was a loss in which year? 18-19. Are you expecting the loss to happen again and again in future? That means if it is happening, you are only giving fire. Correct? Now, loss by fire, add back. You will add the loss back. Is this clear? Yes. Remember, I wrote one note in Goodwill chapter where I told unexpected things or things not expected to recur in future, you are going to reverse that. Loss by fire is one of them. Till now, whatever you did is not that. Till now, whatever you did is rectification of errors. Now, debtors as on 31st March 2022 included bad debt of 500. Bad debt is there. Bad debt is a loss. Bad debt will reduce the profit, 5,800. No provision is there, so it will be taken from P&L only, 5,800. When you do all this, you will get the adjusted profit. Can you see, miraculously, the adjusted profit has come into a trend. Can you see it has come into a trend, increasing trend. Increasing trend, so you will give weightage. Weightage will be 1, 2, 3, 4. Why? Because it is increasing trend. No, because it is highest weightage for recent year. Even if this was written like this, 2 lakh, 1 lakh 80, 1 lakh 60 and 1 lakh 40. Even if it was like this, weightage will be 1, 2, 3, 4 only. Because highest weightage for the most recent year. Are you getting my point? Again, I am repeating what we discussed in theory. Weightage has nothing to do with the increasing or decreasing. If it is increasing also, highest weightage for most recent year. If it is decreasing also, highest weightage for most recent year. Is it clear? Yes. When you do that, you will get the product. When you multiply, you will get the product. After that, you will get the goodwill. There is nothing after that. You will get the goodwill. Goodwill distribution has to be done between whom? Gaining partner will give it to sacrificing partner. Gaining partner and sacrificing partner you will get to know only if you calculate old ratio minus new ratio. They have done new ratio minus old ratio. You do old ratio minus new ratio. Whoever gets negative, gain. Whoever gets positive, sacrifice. Clear? This is the entry. That fellow got money, bank account debited. They have directly put the money into that partner's capital account. That should be it with that goodwill question. If they ask only goodwill, that can be the one. Or that goodwill adjustment can be in any admission, retirement, death question. Clear? Next. 24. Wise, clever and dull. Chirag, who are you? You are clever. Okay. We're trading in partnership, sharing profits and loss in the ratio 4:3:3 respectively. Accounts of the firm were made up to 31st December every year. That means they are following calendar year. Partnership provided that on the death of a partner, goodwill was to be valued at 3 years purchase of average profit of 3 years up to the date of death after deducting interest at 8% per annum on capital employed and a fair remuneration of each partner. That means what? When you're calculating goodwill, remove interest on capital, remove remuneration, then whatever profit you have, you use it. Profits are assumed to be evenly throughout the year. Okay, good. On 30th June, Weiss died. Just to survive. Okay, and it was agreed that on his death to adjust goodwill in the capital accounts without showing any account of goodwill in the balance sheet. Unnecessary information. If there is goodwill, we will always adjust in capital account only. We will never show it in balance sheet. Clear? It was agreed for the purpose of valuation of goodwill, fair remuneration of work done by each partner should be taken 15,000 per annum. 15,000 per annum is for each partner. So this will become 15,000 into 3, 45,000. And that capital employed would be 1,56,000. Clever and dull were to continue the partnership, sharing profits and losses equally after the death of Weiss. That means 1:1 is the new ratio. Following were the amounts of profits of earlier years before charging interest on capital. These are the profits. What you have to do? You have to remove the interest. But the thing is, this one, very, very important. This one, understand this. On the death of a partner, goodwill was to be valued at 3 years purchase of average profit of 3 years up to the date of death. Not last 3 years average profit, up to the date of death. When did this person die? 30th June. Till 30th June, you have to calculate 3 years. So what happens? In 2022, you have only half year. You have only half year. Here you have 1 year. Here you have 1 year. It becomes 2.5 years. You'll take half year of 2019. That time you will get the 3 years what you are looking for. 2019 half, because he died on 30th June. 2019 half, 20 full, 21 full, and 22 half. That is how you will get the profits. Clear? Now understand this. That was what? Practice question number 1. No? Yes, here 2019 half, 2020 half makes 1 year. Makes 1 year. 2020 half, 2021 half makes second year. 2021 half, 2022 half makes third year. 3 years. This is how you get 3 years over here. Are you getting my point? This is the total. Take the average. You're getting the average. But this, whatever profit you have taken, it is before interest, before remuneration. So what you will do? Remove the interest. Remove the interest and remove the remuneration. Interest is 8% on capital employed. What is the capital employed? They only have told here. Where is it? No, 1,50,000. That is previous question. 1,56,000 is the capital. On this, what is the interest they said? Interest on capital is supposed to be 8%. Can you see 12,480 here? Yes. Partners remuneration 15,000 per partner per year. 3 partners, 45,000. This will be your profit. Multiply into number of years of purchase. How many years of purchase they told in the question? You can see over here. Goodwill should be valued at 3 years purchase. So multiply into 3. You will get 39,960. That is your goodwill. Is this clear? Now this goodwill you have to distribute. Obviously sit and calculate the sacrificing ratio. You will know who is sacrificing, who is gaining. In that ratio only you will pass the entry. Gaining partner's capital account debited to sacrificing partner's capital account. If a partner has died, that person is 100% sacrificing. So you can see his account is credited. Is it clear? We thought that this question is sitting in practice questions. We can ignore it. But when you go to death of a partner, you'll understand the same point they put into one death of a partner question, which was asked for only 20 marks. Which is asked for only 20 marks. One question from death of a partner came, which was asked for 20 marks. I think it was June 2023. June 2023 attempt, there is a question which is asked for 20 marks, death of a partner. Possible from anywhere to anywhere? Yes. Next, after that, we go into admission questions. Every question which I have put here is for a reason. Okay, every question is for a reason. There is a reason. I saw that this adjustment has to be discussed. I have put there. So if you have solved all these questions of partnership also, last moment preparation, that's more than enough. Are you getting my point? But that doesn't mean, sir, I'll skip all the other questions. Concepts you need to know to come to these questions. Are you getting my point? Anything I can't tell, then you will be like, these questions are enough. Every time I put last time marathon, someone else, there are the most common comments on marathon videos are, is this, if I study this, is it enough? It might be sometimes, but I can't promise you that, no. Here we are discussing concepts. I am not telling these questions will come. We are discussing concepts. If you understood these concepts, then surely you can clear. And accounts exam, you have to go with what mindset? Paper will be lengthy. Top gear from starting. Top gear means speed. When we are going to the exam hall, don't go in top gear. Yeah, then it is. Then we might not reach the exam hall only. Exam hall, aram se you go. Okay, exam hall tips. I can't tell you because you are all from different cities. Okay, because most of you have a lot of traveling time to reach the exam center. For me, I was in a city where there is no traffic concept. There is no concept of traffic. So I used to stay 10 kilometers away from the exam center, but I used to leave home at 1:15 for 2 o'clock exam. I used to reach the exam center at 1:35. I used to keep the bag outside and directly go inside. I know. You are thinking, sir, outside the exam hall, we have to flip the pages, no, like this. Yes. Don't carry book only to the exam hall. What you could not do in 3 months, what you will do in 5 minutes? What you could not do in 3 months, what will you do in 5 minutes? Are you getting my point? You are like, sir, some important things I'll revise. Those things what you see in 5 minutes notes sometimes can create a lot of confusion. You saw something, you are getting confused, bell rang. Now you can't complete seeing that also. You are going into exam with a very confused mindset, which is not good. Are you getting my point? If you have 1 hour, 1.5 hour of travel time, then you have to carry books because when traveling, you can just flip through last minute. But otherwise, I don't suggest taking books to the exam hall. And you don't leave 1:15, you might not reach the exam center only in Bangalore. Okay. Or even in Chennai with all the metro construction, you might not reach only the exam center. You might reach exam center at 3 o'clock. Okay. You leave according to what time is required. For you, there is traffic. Which is your exam center? Oh, you're writing here only. Okay. Let's go into admission. Somebody is waiting at the door. Let's go into, not literally. Okay, admission. Actually looking at the door. Yes. Question number 25. SM practice question number 2. SM practice question number 2. Is this a fish market?
No, come on,
I have to use the dialogue which my teachers used on me. So I feel the circle of life is complete. Is it a fish market? Yes. Let's start. Question number 2. Practice. Admission. Gopal and Govind. Actually, both are same. Some mythological jokes also we have to crack now. If you know, you know. I can't explain the jokes. Gopal and Govind are partners sharing profits and losses in the ratio of 60:40. Just to irritate us, 3:2. Clear? The firm's balance sheet as at 31st March 2022 was as follows. See the balance sheet. There is no reserves also. Normal assets only are given. Clear? Due to financial difficulties. Okay. They have decided to admit Guru. Gopal and Govind have gone to Guru. I actually can't explain it to you. But there is a logic behind my joke. Okay. Gopal and Govind have gone to Guru. So finally, Guru is bigger than Gopal and Govind. As partner in the firm from 1/4/2022 on the following terms. Now don't get curious about what I'm trying to tell. Okay. Clear your exams. Then you will see Gopal and Govind. Yes. Guru will be paid 40% of the profits. Guru will be paid 40% of the profits. That means 60% will still be between Gopal and Govind only. Guru will bring in cash of 1 lakh as capital. It is agreed that goodwill of the firm is valued at 2 years purchase of 3 years. Normal means what? Normal means what? Simple. Average profits of the firm, and Guru will bring in cash his share of goodwill. Guru is like, I don't know what the goodwill is. You calculate, tell my share. I will bring it. I will bring that. Clear? So he will bring 1 lakh as capital and he will bring goodwill share also. Clear? It was also decided that partners will not withdraw their share of goodwill, nor will the goodwill appear in the books of accounts. Goodwill never appears in the books of accounts. It is adjusted through partner's capital account. But if you put it to partner's capital account, we saw no partner can withdraw that amount. That they are not doing. Profit for the previous 3 years were as follows. See. For the year ended, profit 20,000 includes insurance claim received 40,000. What should we do with abnormal items? Abnormal items, what should we do? We should reverse. Not only loss, even profit, we should reverse. Profit is 20,000. It includes insurance claim received 40,000. That means if we would not get this insurance claim, our profit would have been not there only. We would have a loss. Can you see? Loss 20,000. Clear? Next. Loss was 80,000, but this was after voluntary retirement compensation paid of 1,10,000. If I would not pay that, my normal profit would have been 30,000. Is this clear? Next. What? 1,05,000 includes a profit of 25,000 on the sale of asset. Correct? 80,000. Now you are like, sir, there is a trend. Can I use weighted average profit? No, because they specifically told use normal average profits. Normal average profit. Divide, you will get the profit. Multiply into number of years of purchase, you will get the goodwill. And 40% is the share of profit of the new partner. Into 40%, you will get the goodwill share. Is it clear? Yes. Now what you have to do? In the sacrificing ratio, it has to be given to Gopal and Govind. You have to find the sacrificing ratio. Okay. Now, it is decided to revalue the assets and liabilities as follows. Pass the remote here. Where is the battery? Where? Where is the other one? Pass the battery and get out of class. Pass fast. Anyways, you are not listening. You are writing in May, right? Then pass the battery. Stoner. Crazy reflex. No, display is not there. No. Yes, let's continue. You do it manually. Yes, there is fixed assets 4 lakh. If 4 lakh of fixed asset is there, they said assets and liabilities are to be revalued as under. Now, what is the fixed asset value earlier? 3 lakh. So, asset value is going up. They have revaluation account. Can you see 1 lakh profit? Okay. Next, you have investment nil. How much was the investment? 50,000. Does it mean investment is going down? Yes, 50,000. Then after that you have current assets 180. How much was the current assets? 2 lakhs. So 20,000 is loss. Then next thing is loans and advances 1 lakh. How much was the loan and advances before? Also it was 1 lakh only. No profit, no loss. Okay, so you have profit of 30,000 that will be distributed between Gopal and Govind, the old partners. Remember, revaluation and admission will always be between old partners in old profit sharing ratio. What else have they asked you? New profit sharing ratio is given 35:25:40. Basically, you can take it as 7:5:8. Using the new ratio, using the old ratio, you will be able to calculate the sacrificing ratio on which ratio that goodwill is distributed. Clear? Past journal entries on admission show goodwill calculation, prepare revaluation account. There shouldn't be any problem apart from this. The main problem is this only. Getting the correct goodwill. Are you getting my point? Any more in any questions? Revaluation also I am not discussing because revaluation is the most common thing. You should be able to handle that. Okay, next. After that, we go into question number 26. Admission, December 21 question. There is an admission question which is asked in December 21. We'll just have a look at that. Where is December 21? Yes. Yes, let's continue. December 21, A and B are partners. Where is that question? I forgot to put the question reference. Here it is. Yes, A and B are partners. Shh. Let's continue. Okay. A and B are partners sharing profits and losses in the ratio of 3:1. 3/4 and 1/4 means 3:1 as at 31st March 2021. Following is the balance sheet given. Look at the balance sheet. General reserve is there. It will be distributed between partners. Okay. Then regular items only on the asset side. Clear? They agreed to take C into partnership on 1st April on the following terms. Goodwill is to be valued at 2 lakhs. They only told goodwill. Goodwill, whenever they tell goodwill is valued at 2 lakhs, this is the goodwill of the firm. Entire firm's goodwill is 2 lakhs. You have to see what is C's share. Okay, C is unable to bring in cash for his share of goodwill. No problem. We will still take it from whatever he brings. So it was decided that due credit for goodwill is to be given to A and B for their sacrifice in favor of C through C's current account. Through C's current account. Now see, what is C's share? C 1/5 share in the future profits. So 2 lakh is the capital into 1 by 5 will be C's share of goodwill is 40,000. This will be given through his current account. It will be distributed in their sacrificing ratio. Now see this very important part. I have to show it to you over here. Can you see when you write the goodwill entry, gaining partner to sacrificing partner, can you see they have written by C's current account. Whatever we gave to these people is through C's current account. Clear? But they never told the people who are getting, we are giving it to their current account. People who are getting, they are getting in their capital account only. Are you getting my point? Usually goodwill adjustments in these cases will always have one to over here and by over here. Gaining partner will be debited here only and sacrificing partner will be credited here only. In this question, you won't find this 30 and 10 on this side. Why? Because it is in current account. It is given from C's current account, but it is given into other partner's capital account. Did you understand the language? For that reason only this question is there in marathon. Clear? Now understand this. Stock and furniture to be reduced by 10%. You will handle revaluation. You will handle revaluation. Stock and furniture reduced. Provision for doubtful debts to be created. You know what to do. Revaluation, loss. Land and building to be appreciated. Revaluation, profit. Capital account of partners to be readjusted on the basis of their profit sharing arrangement. And any excess or deficiency to be transferred to their current account. Profit sharing arrangement. That means you are keeping new partner as the base. Are you getting my point? Because new partner has already brought 1,40,000. Again, you cannot ask him to bring any money. So new partner is the base for you in this question. So understand the capital calculation. Have they even done it? Oh, sorry, I'm looking at the wrong thing only. Yeah, it is done. See, C's capital contribution is 140 and his share was 1 by 5. So for 140, 1/5 shares, so total capital is 7 lakhs. So what you will do, this 7 lakh will be distributed between themselves in their profit sharing ratio. What is their profit sharing ratio? New profit sharing ratio we have to calculate. I think it will be 3:1:1. It will be 3:1:1. Earlier person was 3:1. New person is 1 by 5. So 3:1:1. You can see here. 3:1:1 is the new profit sharing ratio. So now what will happen? This 7 lakh will be in the ratio of 3:1:1. So it will be 140, 140, 280, 4. Chirag. 420,000. I thought by mistake Chirag 1,000. Yes. Is it clear? This should be their capital. This should be their capital. If there is extra, they will take it. If there is shortage, they will bring it. See the partner's capital account. Can you see balance carried down is what is calculated? Some partner had extra. So B took the money. Balancing figure. A had to give money. How will you get this 44,250 and 45,250? You have to carry the balancing figure in the partner's capital account. If they have extra, they will take money like this. If they have shortage, they'll bring money like this. Then the capital will change and the capital will be different when you're calculating capital proportion. Yeah. If it was told that the goodwill is not given through current account, then you would have 140,000 here. Then your capital wouldn't be 1 lakh. Then you'll keep 1 lakh as the base and you'll calculate. Are you getting my point? They want 1,40,000 to be the capital. That is why they said goodwill is given through current account so that it doesn't get debited over here. Is this clear? Yes. This is your solution. Did you understand? What are the key areas from this question we have taken? 1. Goodwill adjustment is happening through current account. Another very important thing, capital proportionate, keeping C's capital as the base. Yes. Let's go further. 27. Retirement, illustration 5. Admission done. Where is retirement? Entire partnership, yes. 20 marks in the exam can be the difference between Jan and May. Can be the difference between Jan and May. You know what I'm telling. Do not ignore partnership. ICA also knows that you are ignoring partnership. That is, What? Not at all. No, but there are the number of people who are skipping partnership is very high in CA foundation exams. So now ICA knows that partnership is skipped. So now ICA from partnership, they are giving very easy questions. They are giving very easy questions. They are not asking tough questions from partnership at all. Just see the last 3 attempts. Nothing. They are giving easy questions only. June 2023, death of a partner, one question was little lengthy. Other than that, in last 5 years, if you see partnership questions, all are simple only in the exam. Because they know students are skipping. They are like, okay, we'll give, why to put effort? Students are anyway skipping. We'll give easy question. If at all student doesn't clear, next time student will study partnership. When they study partnership, first thing they will do is see last time's paper. When they see last time's paper, they will regret skipping it. ICA mindset. Are you getting my point? Okay, people who have not cleared before, you have 100% gone and studied the chapters which you have not studied. After studying, first thing you have done is gone and seen last time's paper which I skipped. What question was that? It was simple. Are you getting my point? If ICI knows that people are skipping a particular chapter, they will not put too much effort into making any complicated questions. They'll just throw easy questions. Yes, so do not skip. Anyways, weightage is 20. 20 marks weightage. In fact, in June it was 22, not 20. 22 it was asked. Yes. That's why do not go to skip anything. You don't know what is going to save your life. Why did they remove? Average due date. It was one large put thing which was there. See, average due date, no. Now, you put the date in Excel, it will only calculate and tell. So they thought, why to give you 4 marks to calculate average due date?
Consignment was interesting.
Consignment is interesting, but people following consignment is little less these days. That's why they have. Sale or return, yeah, that should have been there. But again, easy concept. They thought we will not keep consignment and sale or return, but we'll include it in inventory chapter and other places. So you still study it, so you have the knowledge now. No, if you write, they'll give marks. If you write, they'll give marks. If sometimes people spend 1 hour on bills of exchange question, then how to give marks? Yes, I'll send the answer PDF. Sir, for previous year questions in institute answer, Guru's capital, shouldn't it be 124? No. It is not 124, 1 lakh only. What is shown in institute is correct. Yes. Shh. Let's continue. Retirement. Illustration number 5. Why I have put illustration number 5? There should be a reason. What is that? Where is it? Yes. Okay. Now you understand why I have put this question. Shh. Yes. Do well, guys. Do well. LLP with partners A, B and C. Motivation by institute in middle of partnership chapter. They know after studying introduction, goodwill, admission, when you come to retirement, you are little tired of this partnership. Suddenly they're like, do well. LLP. Here, A, B and C, sharing profits and losses in the ratio of 10:6:4. This can 100% be simplified and write 5:3:2. The balance sheet of the firm as on 31st March 2022 is as under. Retirement is not much different from admission. The process is same. Why did I put it here? It was mutually agreed that B will retire from the partnership firm and in his place, D will be admitted as partner with effect from 1st April 2022. Now, what will happen? I'll tell you. In the study material, there is a previous question. Question number 4. Question number 4. It's a different question. No, there is some other question. I can't remember where exactly it is. Yeah, illustration 5 is what we picked, no? Okay, forget it. Yeah, what I was trying to tell you was, there is one question somewhere in the study material, I can't exactly figure out where it is, where they have told this person will retire and in his place, his son will be admitted. Clear? In that question, whatever is there in his capital account, it is just quietly transferred to son's capital account. Every time there is retirement and admission, don't create relationship between them. In this question, it is not father and son. Clear? B is going and D is admitted. So retirement come admission, both are clubbed in one question. Goodwill is valued at 1 lakh, but the same will not appear as an asset in the books of the firm. We know that already. Goodwill is 1 lakh. 1 lakh is the goodwill of A, B, C or D. Is 1 lakh the goodwill of A, B, C or D? It is goodwill of the firm, not anybody's. Goodwill of the firm. Building and plant and machinery are to be depreciated by 5%. Okay, revaluation we are not discussing. And 20%. Investment are to be taken over by the retiring partner at 15,000. Investment is taken by retiring partner at 15,000. This is one unique adjustment we have seen. Okay, how much is investment here? 12,000. For him to take it at 15, first we should make it 15. Revaluation account you will find 3,000 increase. 3,000 increase. Now did it become 15? Now what you will do? Who is taking? B. So can you see B's capital account debited to investment account? He took investment, his capital will reduce, investment went out. Is this clear? Okay. Next, after that, 20% you have to make provision for doubtful debts. All these revaluation points you know. Now, listen. In the reconstituted firm is B went, D came, A, C, D.
Yes.
Correct? A, C, D, their new profit sharing ratio is 2:2:1 and they told, please make the capital proportionate. How much is the capital? 2 lakhs. And they told you to make the capital proportionate. Clear? Remember 3 cases where they're in capital proportionate. One, keeping somebody's capital as a base. Another, just doing asset is equal to liabilities plus capital. Third one, they only give you the money. This is the capital, 2 lakh. So it should be in the 2:2:1 ratio, 80 and 40. 80 and 40 is the capital. Clear? Now understand the situation here. Who is going? B is going. Can you see when you put balance brought down, reserve share, and then goodwill adjustment? Only 3 things: balance, reserve share, and goodwill adjustment. Then revaluation is having a loss. Okay. Now whatever is there, did they tell anywhere in the question that B we are going to pay now?
No, sir.
No. So what we are going to do? Loan account. Transfer to B's loan account. Is this clear? Okay. Now what will happen in D? D is going to bring 60,000. How did we get 60,000? How did we get 60,000? Remember his share of capital was 40,000 here. And 1 lakh is the capital. 1 lakh into his share, 1/5. He has to bring 20,000 for goodwill. So totally 20 plus 40, he has to bring 60,000. Is this clear? That is where you can see by bank 60,000 and 2A and B. Why 2A and B? He is giving goodwill share. Okay. Why C is not there in this? Because when you calculate sacrificing ratio, I think C will have no sacrifice or gain. Is this clear? That is it. When you prepare balance sheet, what you do? See the old figures, see the revaluation that you only have done, you will get the new figures. You will get the new figures. Clear? And can you see, don't forget, when you prepare balance sheet after retirement, one common thing that we might miss is B's loan account. If you miss that also, you will still identify it. Why? When you total the balance sheet, if you have made only this mistake, then you will get that difference. If you have made multiple mistakes, you will not get it. Then you will have to search. Clear? That's why. I mean, balance sheet tallying in partnership is not even a big deal. Reaching that stage is the deal. Balance sheet tallying, what is that? Look at the old balance sheet. You have done the revaluation. Do the plus minus. You'll get the new values. Clear? Yes. After that, we go into question number 28. Question number 28, retirement SM practice question number 1. Always I like practice questions only in marathon. Why? Because the ICAI also knows a lot of people stop studying at illustrations. Test your knowledge. We will test. We already have knowledge. What test your knowledge you are telling? They'll go to next question. ICAI, the number of adjustments they are picking from practical questions, no, high, very high. See, illustrations are not that tricky actually. What are they doing in illustration? Teaching you the concept. What are they doing in practical question? Testing the concept. What do they do in the exam? Teach you or test? So what questions can appear more? Practical questions. So do not skip any practical question. Okay, this is practical question number 1. Okay. On 31st March 2022, Ram, Rahul and Rohit are sharing profits and losses in proportion to their capital. Did you see something new? Yes. Did they tell you the profit sharing ratio? No. In proportion to their capital. This is 3:2:1. Is this clear? Next. Go directly below. On 31st March 2022, Ram desired to retire from the firm and remaining partners decided to carry on. Ram, Rahul and Rohit were there. Ram decided to retire. Okay, Rahul and Rohit will continue. It was agreed to revalue the assets and liabilities on the date as follows. Land and building appreciated. Okay, you know what to do. I'm not discussing this. Machinery depreciated. Closing stock to be revalued at 80,000. Provision to be created. First 4 points are all about revaluation. Okay. Old credit balance of sundry creditors 10,000 to be written off. This also is revaluation. Sundry creditors written off. That means creditor is reducing. If creditors reduce, that means it is a profit. Revaluation account will be credited. Joint life policy of the partners surrendered and cash obtained 60,000. Is joint life policy there in the balance sheet?
No, sir.
Two treatments are there. Is it there in the balance sheet? No. 60,000. 60,000 is profit. Distribute to partners. Practical question. What they have done is they have put the joint life policy over here directly to revaluation account. If you don't put it there and you distribute it to partners, still effect is same. Why? If you put it here, it will get shared between partners. From here, it will come to partners. Instead of that, if you put it here, if you put it here, it will also come to partners. Only Ram and Rahul, only 2 partners are there. Are you getting my point? If you have treated either ways, it is fine.
Revaluation profit or loss will be get affected.
It's okay. Ultimately, capital of account of partners, right? It is fine, no problem. Okay, IC has done alternative treatment in different places. So here they have put some other solution they might have not put. They would have directly written here by bank or by JLP. Are you getting my point? So in case if you are looking at this and panicking, no problem. If you have learned it that way, do it that way only. If you put it here also, no issues, because from here profit gets generated, profit goes to partners. If you put directly here, it comes to partners. Ultimately, what amount goes to partners will be same. Is this clear? Yes. Now, that is one thing. Now my question is, what if on the asset side, there was JLP written and it was showing 20,000. How much did we receive? 60,000. For 20,000 is there in the balance sheet. In this case, only difference 40,000 would have gone to partners. Clear? Already JLP is there in the balance sheet as I said. Difference will go. So what you have to remember, if JLP is not there in the balance sheet, whatever you get distribute to partners. If JLP is there in the balance sheet, difference you distribute to partners. Clear? Yes. Now, 7th one. Goodwill of the entire firm is valued at 1,80,000. Good. They only told you. And Ram's share of goodwill is to be adjusted in the account of Rahul and Rohit, who share the profits and losses equally. No goodwill account to be raised. That if they tell to raise also, we will not raise it. Okay. And goodwill account, profit sharing ratio is equal. See the ratio, old ratio, new ratio. Distribute in sacrificing and gaining ratio. 180 is not to be distributed. Only Ram's share. Ram's share is what? 3/6. So 180 into 1/2 or 3/6 will be 90,000. 90,000 will be distributed in their profit sharing ratio. Not through current account, in capital account only. Only where they tell current account, in previous question we did that. Clear? The total capital of the firm is to be same as before retirement. Individual partners, individual capital is to be in their profit sharing ratio. Now this is the making capital proportionate. Clear? What did they tell? Total capital should be same. That means capital should still be 6 lakhs. And this 6 lakhs should be in what ratio? What? Who are the partners now? Ram decided to retire. Rohit, Rahul and Rohit. Yes. So 6 lakhs and their profit sharing ratio is equal. So it should be in the ratio 1:1. 3 lakh, 3 lakh. If there is shortage or excess, you know what to do. Clear? Now have a look at this. 3 lakh, 3 lakh. 3 lakh, 3 lakh. Are you seeing this? Both had shortage. That's why they brought money over here. Both had shortage. That's why they brought money. Is this clear? Okay. Now, next. Amount due to Ram is to be settled at 50% on retirement and balance 50% within 1 year. So, in Ram's capital account, what you will do? Where is Ram's capital account? They have shown. They have not shown only. Where are you, Ram? Ram is everywhere. Yes. So Ram's capital account, whatever balance you get, see 2 lakh 10 they have gotten the balance here. Okay. How did they get 2 lakh 10? Because 4 lakh 20 is there in Ram's capital account actually. 4 lakh 20, half is paid, half is transferred to loan account. How will you get 4 lakh 20? C is capital, C is revaluation profit share, C is goodwill share, C is reserve share. Add it, you will get it. That is it. Okay, see goodwill share and all is there over here. Oh, they have shown Ram's capital account. Ram's capital account is there over here. See, balance brought down, revaluation profit, goodwill share. Both the partners are giving. It is 4 lakh 20. Half is paid, half is transferred to loan account. Half is paid and half is transferred to loan account. What did we learn new in this question? GLP when it comes, how to treat it. Okay, and capital account is profit sharing ratio is in capital ratio. And then making capital proportionate, they said capital should be same as before. So before it was 6 lakhs, now also 6 lakhs. But before 6 lakhs between 3 partners, now 6 lakhs between 2 partners. Distributed new ratio, you will get the surplus or deficit. End the question. When any of the existing partners are also gaining on admission, do we take old partners and new partners goodwill? How the distribution is done? See, the question is, if admission is happening and one of the old partner is also gaining, what to do? She is asking. That is why I never told in admission, new partners capital account debited to old partners. I specifically told gaining partner to sacrificing partner. Always check who is the gaining partner. If one of the gaining partner is the old partner, then you debit that person also. Clear? And you know the share. Calculate what is his share. Goodwill will be given. Goodwill into whatever the gain share is there. Multiply, you will get the value. Clear? So never old partner, new partner concept in goodwill. It's always gaining partner to sacrificing partner. Yes. Next question. Retirement. Practice question number 2. There should be something in it for us to check it. Okay, now ABC in partnership sharing profits and losses in the ratio of 3:2:1. Nothing. No problem. Let them share. We will do accounting only. Capital, sundry creditors, normal assets, fixtures, stock, debtors and cash. No issues. A on account of his ill health gave notice that he wished to retire from the firm. A's retirement agreement was therefore entered into on 31st March 2022. Okay, A is retiring. Profit and loss account of for the year ended, which showed net profit of 42,000, was to be reopened. Oh, why reopened and all? They made mistakes. Reopen the profit and loss account. 42,000 profit is there. Reopen. B was to be credited with 6,000 as bonus. You didn't give bonus to B. Bring the profit back. Give the bonus to B. Then redistribute the profit. They nicely told us 3:2:1 is the profit sharing ratio. But in consideration of extra work, they are giving bonus. Okay. Which has devolved upon him during their okay. The profit sharing basis was to be revised, and revised ratio is 2:3:1 as and from 1st April. 1st April 2021. Starting of the year, we should have changed the ratio. We have not changed. So what we will do? We have made 2 mistakes. What is that? Distributing the profit in wrong ratio. Bring the profit back. Give the bonus. Distribute the profit in correct ratio. Okay. Have a look at this. P&L adjustment. P&L adjustment. How much was the profit? 42,000. 12, 18, oh, sorry. Here, 21, 14 and 7. Why? 42,000 is removed from the partners. In what ratio? If you notice, this ratio is 3:2:1. Remove the profit. After removing profit, what you are going to do? Give bonus to B. Give bonus to B. After that, what you are going to do? Remaining profit is 36,000. Distribute in the new ratio, that is 2:3:1. Did you understand this? Okay, P&L adjustment would have been done in working note somewhere. Not done? Okay, but I hope you got it. Okay, bring the profit back. Bring the profit means remove it from the partners, give the bonus to the person, and then redistribute the profit in the correct ratio. Clear? Next, goodwill is to be valued at 2 years purchase of simple average profit of last 5 years. Profit for the last 5 years is given here. This is the profit. Divide, you will get the goodwill. Okay, no problem there. Fixtures are to be revalued at 39,800. One revaluation fixtures. Provision for doubtful debt 2% is to be made. Okay, you know this also. And remaining assets are to be taken over at book value. Oh, should we do memorandum revaluation? No. Remaining They didn't tell all the assets and liabilities at book value remaining other than these two. Clear? Don't hurry and prepare memorandum revaluation. Amount payable to A shall be paid by B. A is the retiring partner, will be paid by B. So what will happen? What will you do here? Whatever you find in A's capital account, you will just transfer that to B's capital account. Here usually if I am paying money, I will write to bank. Or if I am transferring to loan, I will write to B's loan account. To A's loan account. It is not loan here. What is going to happen? Whatever money is there, this will be paid by B. It will be paid by B. Is this clear? Yes. After that, what happens? Over, no? Retirement done, no? Retirement done, no? See revaluation profit. Fixtures they have put and provision they have put. They have put it separately. Fixtures and provision. Now you prepare revaluation account only, how you prepare, and you will get the profit. But very important point is this. B and C agreed between themselves to continue the business. They are continuing the business, sharing profits and losses in the ratio of 3:1. That's their new ratio. And decided to retain the fixtures in the books at revised value. Fixtures value we change, we'll continue with that value only. And increase the provision for doubtful debts to 6%. How much was the sundry debtors? 90,000. 90,000. Already 2% is done before retirement. They want it to be 6%. So another 4% they have to create. So 90,000 into 4% will be 2,000. Sorry, 3,600. This 3,600, will it be borne by A, B, C? A is gone. Only BC is there. Now BC will share it in the ratio of 3:1. If there is provision for doubtful debts to be created, for partner it is a loss or a profit. It's a loss. See their partner's capital account. 2,700 and 900 is debited. 2,700 and 900 is debited. Clear? That is one extra adjustment in this question. So all the questions till retirement or till admission. In this question, what's happening? After retirement, one extra entry, creating provision for doubtful debts. Is this clear? Yes, that should be it. They ask you to pass journal entries, whether it's journal entries or ledger accounts, it's the same. If you know journals, you'll be able to prepare ledger as well. Yes, that should be it. Question number 30. That should be, it means we are continuing. Okay, question number 30. December 2023 exams. It is asked in December 2023 exams.
Excuse me, sir.
Yeah. I could.
Will you please She is very cold.
It's sitting directly. You can change the temperature. I mean, you can change the angle also actually. We'll turn it off for some time. Stoner. Huh? Ninge biltitta. Now you are stoned. Yes. December 2023. Question. Yes. 30th question, December 2023. Something should be different. We'll see what is different. XYZ where partners sharing profits and loss in the ratio of 5:3:2. Their balance sheet is given. Okay, you know you can see the balance sheet. Regular balance sheet only, nothing. Huh? What? Let's go in. Wait, we'll go to death. Yes. Appreciate building by 20%, depreciate machinery. Nothing. Provision for doubtful debts created. Nothing. Goodwill of the firm is to be valued at 1,60,000 and goodwill is not raised in the books of the firm. New profit sharing ratio, we know 5:3. Old profit sharing ratio is 5:3:2. Who is the person retiring? Why? Middle person. Don't think it will be 5:3:2. One person is going. Automatic you are not getting. You have to calculate the sacrificing ratio. Okay. Then what will happen? New profit sharing ratio is given. So calculate sacrificing ratio 5:3:2. 5:3. Calculate sacrificing ratio. You'll get something. Entire sum payable to Y should be brought by X and Z in such a way to make their capital according to new profit sharing ratio. Balance of Y to be paid immediately. Can you see? This is the adjustment what we need to understand. Entire sum payable to Y should be brought by X and Z in such a way bring the money in such a way to pay him, but after you bring the money, your capital should become proportionate. We cannot keep anybody's capital as base here. Capital is not given to me also directly. Asset is equal to liability plus capital. Asset is equal to liability plus capital. That is what you are supposed to do. X, Y, and Z. Where are you? Spot your X. Why Chetan? Many are there sitting quietly. But now entire thing is on, the spotlight is on Chetan, that's all. Recent case, yes. Like media. Recently what happens, that will remain in our memory. Yes. This is the case. Yeah, directly I am going into capital proportionate. But unfortunately, capital proportionate, they have not shown only in working notes. They have directly done everything. Now, capital proportionate, what we are supposed to do? Asset is equal to liability plus capital. See over here. How they did the capital proportionate? Asset is equal to liability plus capital. Assets, liabilities. See, capital balancing figure. Capital balancing figure. And that should be in the ratio of 5:3. When you distribute that, you will get this. 5:3. So this should be the capital. Go to the balance sheet. Can you see the capital is 530 and 318? Shortage or excess, you have to bring money. There is shortage, both are bringing money. One partner is going and they told we are going to pay that partner today only to bank. In case we are not paying the retiring partner, that retiring partner also will be there in the balance sheet as loan. So when you calculate balancing figure, your balancing figure will change. Are you getting my point? Basically, after retirement assets, after retirement liabilities will give you after retirement capital. After retirement capital has to be in the new ratio, proportionate, 5:3. Put that as balance carried down for partners. You will get the difference. If there is shortage, they'll bring money. Both of them are bringing money. Is this clear? Are you following this? Yes. This is the point I wanted to discuss from that question. Other than that, normal revaluation and all. Death. You have arrived at death of a partner. In this, we are going to see one practice question. Small one, and then we are going to see one past examination question, smaller one. Piecemeal distribution, no need? No, we'll see the solution. At least one maximum loss and one higher relative capital we have to see. What? Somebody has died, you want to have lunch. We'll only?
They will give even if you don't want.
Okay. Let's continue. Death of a partner. Practice question. Peter, Paul, Prince. Peter, Paul, and Prince. None. Where is that? Here. I will become Paul. Jake Paul. He just defeated Muhammad Ali in a fixed match. Mike Tyson. In a fixed match. 100% fixed match it was. Otherwise, one punch is enough for Mike Tyson. And he's not even punching. He's just defending. He did it just for money.
Showed his skill.
Little bit is short.
I saw it, sir. He was just skipping.
He was eating.
He was eating
It's scripted.
Sad it is. I thought Mike Tyson will beat him.
Two punches for our satisfaction.
I think Jake Paul has now challenged Conor McGregor for a MMA match. Yes, and if it is not fixed match, Jake Paul can be killed in that.
But he will fight in the same weight and he has to be less than his.
Who?
Though he
Conor McGregor has to be?
Less than his weight. He will fight with the same.
Yeah, he has the weight advantage, but that is if he can hold Conor McGregor, no? Before that, if he
He
kicks.
lands on him.
Yeah, Mike Tyson just wants to make good money in his old age. That's it.
He said, I will see.
Yes. Okay, in that just solved question, one person has asked a doubt. Shh. They are like, sir, they are bringing cash just for retiring partner, right? No, they said bringing cash to pay the retiring partner and make capital proportionate. Can you see here? Entire sum payable to Y should be brought by X and Z in such a way to make their capital proportionate. So that means in one shot, both the things should happen. Money should also come and the capital also should get proportionate. How much capital we don't know. That's why we use asset is equal to liabilities plus capital. It will solve all the cases. Yes. Now we'll go into death of a partner. Practice question. Peter, Paul and Prince. See this question. Small one. Okay, don't worry. Small question it is. Peter, Paul and Prince were partners sharing profits and losses in the ratio of 2:1:1. Things were going good. It was provided in the partnership deed that in the event of retirement or death of a partner, he or his legal representatives would be paid something. What is that? The balance in the capital account. Whatever balance is there in the capital account, that has to be paid. Yes. His share of goodwill of the firm valued at 2 years purchase of normal average profit after charging interest on fixed capital. What we are going to give 2 years purchase on normal average, that means simple average, after charging interest on fixed capital. That means profit given to you is before interest. Remove the interest, calculate the average for the last 3 years preceding the retirement or death. Last 3 years preceding the retirement or death. Remember, this only we had done in one place earlier. Okay, in goodwill calculation also we had done this. His share of profits from the beginning of the accounting year to the date of retirement or death, which shall be taken on proportionate basis of profits of the previous year, are increased by 25%. His share of profit has to be increased by 25%. Why? He died this year. No. We are taking last year as the base. No. This year we are doing good. So increase 25% and give it to him. Interest on fixed capital 10%. Payable to partners will not be payable in the event of retirement or death. Oh. Simply we don't have to worry only about interest on capital. Interest will not be paid to the retiring partner or the partner who died in the year of death. But when you are calculating goodwill from the profit you have to remove and then calculate average. Remember that. We are not going to pay, but goodwill calculation is there. Now all the assets are to be revalued on the date of retirement or death, and the profit or loss to be debited or credited to capital account in the profit sharing ratio. They explained to us revaluation concept. They said revalue, after that whatever profit or loss put to partners in profit sharing ratio. That we are already doing. Clear? Next, Peter died on 30th September. Books of accounts are closed on calendar year basis from 1st January to 31st December. Now, balance in the fixed capital account as on 1st January 2022. Peter 10,000, Paul 5,000, Prince 5,000. Should we give Peter this 10,000? Should we give Peter this 10,000? Arey, his capital will give, no. That's his capital. Should we give 10,000 to him?
Yes.
Of course, that is his capital. Sorry? Yeah, we cannot give Peter. We have to give Peter means we'll give legal representatives only, correct? Now, what is this? Peter's balance is 20,000 in current account and Peter's capital account balance is executors are getting by Peter's current account, Peter's capital account. Okay, they have not shown the capital account only. Capital account 10,000 he is getting. Okay, 10,000 he is getting. Next, the balance in the current account on 1st January was 20,000 of Peter. Others you don't bother. Peter is 20,000. Can you see Peter's current account here? 20,000. 20,000. After putting everything will be given to partner only. Executor only. Next, drawings of Peter was 10,000. If Peter has taken money, should we subtract that? Yes. Can you see two drawings here? Two drawings 10,000. Next, the profit of the firm before charging interest on capital for the calendar years is given to you 1 lakh, 1,20,000 and 1,50,000 respectively. No problem. Profit includes the following abnormal items. Profit on sale is there. So we'll reduce the profit. Insurance claim received is there. We will reduce the profit. When we reduce the profit, we'll get different profits altogether. See, interest we have to remove anyways, and these two abnormal items we remove, and one more thing is there which we will see further. Okay, that time you will get the correct profit. Is that clear? Now, firm has taken out a joint life policy of 1 lakh. Peter died. Joint life policy 1 lakh. Peter's share is how much? 2:1:1. That means Peter will get half of the amount. Half of the amount Peter has to get. Can you see Peter's account? Okay, there is separate life policy. That's why you are not finding it. Okay, there is separate life policy also. 1,50,000, and besides that, partners have severally taken insured life of 50,000. That means there is separate life policy. Joint life policy is 1 lakh. Separate life policy is 50, 50, 50. All three partners, did they die? So will we get 50, 50, 50? No, but one partner's 50 we will get. Other partners, can you see their surrender value is 30%. So other partners out of 50, we will get only 30%, that is 15,000 and 15,000. Totally, we will get 1,80,000. Out of that, 1/4, 2/4 is for Peter. So Peter should get 90,000. Can you see over here? 75,000 and 15,000. Peter is getting 90,000. Peter is getting 90,000. Is it clear? No, it's not personal insurance. It is not personal insurance. The firm had taken out the policy.
Then all them will come.
Yeah, but one is, we are getting 1 lakh, no, here. All the amount came, 1 lakh. But others are separate life policy. Joint life policy, separate life policy, both are there.
Then separate policy by year they including the firm account.
Because firm has taken it.
Firm has taken 1 lakh.
No. Firm has taken out a joint life policy. Besides, the partners had severally insured their lives. 50,000 each. Premium in respect of thereof being charged to the profit and loss account. They have taken all these policies. Who is paying the premium? P&L, firm. If they had taken personal, we would not talk about it also. It is taken by the firm. That means it is going from the pockets of the partners. When anybody dies or retires, we have to close all the policies and that amount has to be shared. Did you get it? This line, see. Premium in respect of thereof charged to the P&L account. That means it's taken by firm only. Now, this is full amount because it's joint life policy. This is all three are separate life policies. 3 policies are there, 50, 50, 50. You will get 50, but other 2 partners did not die, so you will get the surrender value. Total amount which you got.
My doubt is when joint share policy is taken by all the 3 on the name of firm, one dies means the whole amount comes, or otherwise surrender value they take in between. In the middle of the term only if they take means surrender value.
No, it doesn't work like that. It is simple. It is taken on the life of all the partners. If partner dies, we'll get full amount. If partner retires, we'll get surrender value. Middle, starting, ending, nothing. You have taken a policy. Next day, partner died. You'll get policy amount. Next day, partner retires. You'll surrender the policy. You'll get surrender value.
They surrender their value. He died, he got his 50,000.
He didn't get the 50,000. That is where you're going wrong. He died. He is not getting his 50,000. He is getting only share in that. He died. 50,000 came. It is going to all partners. Wait. He died. 50,000 came. It is going to all partners. It is not only to him. And other 2 partners, whatever policy is there on their life, that also premium was paid by that person who died. Even he has a share in the premium because premium was paid by the firm. So other 2 policies also, he has the right in that. So we are surrendering that policy and giving that share as well.
There are 2 partners are going for a trip. They died in a car accident. At that time, what will happen?
We will get the policy amount and we'll give it to whoever their family is there. And then other 2 partners policy, if it is there, we'll surrender that. We'll share everything. What happened over here, that only will happen. That means the other 2 have planned that accident to get the policy amount. Yes, it can happen. Yes. So 90,000 we have to give to that partner. Can you see 90,000? Yes. Business will continue. 90,000. Can you see over here? 75 joint life, separate life policy, share of life policy 75 and 15 together they have put 90. Clear? Now what we have to understand after that, you see. 30th June 2022, firm received a notice from the insurance company that insurance premium in respect of the fire policy has been undercharged to the extent of 6,000. Last year, fire insurance policy was there. We have paid less. So now it has to be paid. If it has to be paid, it will affect our goodwill calculation because profit will change. Can you see in profit 6,000 is put over here, subtracted. If you have missed something in the past, now you are going to pay that. That will affect the profit. Yes. Then they have also told revaluation of assets indicates an upward revision in the value of assets to the extent of 20,000. Now 20,000 revaluation profit. How much is Peter's share? 10,000. Can you see 10 plus 10? Total amount is 20,000 over here by Peter's capital account. Working note number 6. They have shown over here. Peter's capital account was 10,000. Profit on revaluation was 10,000. Total amount which we have to give to executor is 20,000. Is this clear? Are you following this? Now what happens? Nothing. Now what happens? Nothing. See over here. We got the correct profit. When we get the correct profit, you total the profit. Divide it, you will get the average profit. Multiply, you will get the goodwill share. You will get the goodwill share. In that half is Peter's, give it to Peter. Half is Peter, give it to Peter. Then profit share also we have to give in death. Profit share till the date of death we have to give. Correct? 1,50,000 was the profit last year. Remove the insurance which you didn't remove. You got 1,44,000. Increase that profit. Increase that profit. 25%. They told in the question. I am not increasing it just like that. They told in the question 25% increase. That time you get new profit of 180. Can I distribute 180? No. These profits are before interest on capital. Before interest on capital. Now when you are removing interest on capital, you are not going to remove for all the partners. You are going to remove for only except Peter. Paul and Prince only. Why? They told in the year of death, the partner will not get interest. So you are going to remove only for, see, since Peter was not entitled to interest on capital in the year of death, interest is payable only to remaining two partners. Take their capital, calculate, you will get the interest. So estimated profit is 179. In that you will give Peter's share. How did we get this number? 134,250. 1,79,000. In that Peter's share is 2 by 4. Correct? Half. Into Peter died on 39. So 9 by 12. That time you will get 134,250. Are you getting 134,250? Yes. That is what we are giving to Peter. Peter's share of profit. Peter's share of revaluation. Insurance premium which is undercharged. Peter's share. 6,000 we have not charged. Now we are charging. Peter also has to pay 3,000 in that. Clear? Joint life policy we have done already the calculation. Can you see? Insurance premium 3,000 we are removing from his current account. Then 1,07,000 we are giving share of goodwill. Then 67,125 which we just calculated we are giving him share of profit. All this we are giving. This we are subtracting. This amount will go to executor. From his capital account 20,000 will go to executor. Done. That's it. Death of a partner will not, they will not ask all the ledgers and all. They will only ask executor. They'll focus on executor if it's death of a partner. Because asking you to prepare partner's capital account and other things they have already done. Is it clear? Yes, that is it. That should be it with that question. June 2023 question, I don't think we have time now to finish it. So what we will do is we'll prepare the dissolution part. We'll go into dissolution question 33, dissolution practice question 3. Okay. Why I have taken it is because it's a simple dissolution only. It's simple dissolution, but so many calculations. Nothing comes straightforward in this question. Simple dissolution, but so many calculations. Prepare realization account, bank account, partner's capital account in the books of the partnership firm. Is it clear? Yes. Are we ready? Yes, we are. Jan 12th is the exam. We are ready. Yes. We'll do that death of a partner question later. Practice question 3. Yes, practice question number 3. Shh. Yes. What should we do first thing in this thing in dissolution? Empty the balance sheet. Correct. Empty the balance sheet. First thing you do is empty the balance sheet. Transfer all assets and liabilities to realization account except cash and bank. See land and building. How much is it? 135. Book value is 135. Correct? See the realization account. 135 transferred. Next item is 45 transferred 45. Next item is 25,500 transferred 25,500. Next item is 15,000 transferred 15,000. Everything went to realization account. Debtors, how much I should transfer?
60.
Not 54, 60. 60,000 and 6,000 will be provision for doubtful debts. Asset is different, liability is different. Then after that, 36,000 is stock, transfer to realization account. 13,500 is bank. Do not transfer to realization account. Keep that separate in bank account opening balance. Clear? Next, after that you have capital withdrawn. Kumar, basically debit balance in Kumar's account. Debit balance. Go to partner's capital account. Can you see? Kumar is having debit balance. 2 balance brought down. Now go into liability side. Amit and Sumit, they are having capital. Credit balance 55,200, 55,200. Clear? Then if you see general reserve, what will we do with this general reserve? Business only is coming to an end. What will you do with general reserve? Nothing. Distribute in the profit sharing ratio of 2:2:1. Can you see in the partner's capital account by general reserve 2:2:1? Is it clear? Then there is one Kumar's loan. Kumar's loan. Who is Kumar? One of the partner itself. They have told anything? Nothing. Nothing is told. So what will happen? You just transfer to his capital account. Kumar's loan, transfer to his capital account. We have to pay Kumar, put it in his capital account. Next, what happens? Loan from D. Will we put it into D's capital account? D is not even there in this question. Loan from D, what you have to do? It will go into realization account. Loan from D. Just like any other liability. Then what we are going to do? Trade creditor, bills payable, outstanding salary. All the things will go into realization account. Balance sheet is empty. Balance sheet is empty. Again, we don't have to look at the balance sheet. Read the adjustment one by one and you will be able to pass the entries. Now, from the following information given to you, realization expenses amounted to 18,000, out of which 3,000 are borne by Amit. How much is realization expense? 18,000. What is the entry for realization expense? Realization account debited to bank. Correct? So only 15,000. 15,000 goes from your bank account. This is the 15,000. They have totaled all the things. 15,000. Then 3,000. Who is paying? Amit. Put it into his capital account. Can you see 3,000 in Amit's capital account? He is bearing that. Okay. Next. A creditor agreed to take over furniture at a book value of 12,000 and 10,800. Creditor is taking a furniture. What should be the entry? Nothing. What should be the entry? Nothing. Why? Realization account debited to realization account. Asset is also in realization account. Liability is also in realization account. No entry to be passed. The rest of the creditors were to be paid off at a discount. Rest of the creditors are to be paid off at a discount. How much is the creditor here? 30,000. I'm sure they have shown the calculation. I can directly explain from there. See, 30,000 creditor. Okay. Minus what? 12,000 or 10,800. He took the furniture which was 12,000, but he agreed to take it at 10,800 only. Minus 10,800, you're getting 19,200. Are we paying 19,200 at least to him now? No. We are getting 6.25% discount. So remaining value is 18,000 that we will pay. Remaining value is 18,000 that we will pay. Entry for this will be realization account debited to bank account. Can you see in your realization account? Can we find creditor 18,000 we are paying? Amit is done. 18,000 we are paying, and in bank account 18,000 is there on the credit side. Are you following each of this? Every item they have given adjustment in this, so you have to be careful. Next, after that, other assets realized as follows: furniture, remaining furniture taken by Kumar. Remaining furniture taken by Kumar. Now from furniture, how much went? 12,000 went or 10,800 went? 12,000 went. Furniture 12,000 went, but he agreed to adjust only 10,800. Creditor. Clear? So they see the calculation for furniture. Where are you, furniture? Here. Okay, this much is the furniture which is there in the balance sheet. 12,000 went, no. Who is taking this? Kumar is taking. But Kumar is smart. He is not taking at book value. He is taking it at 90% less. Okay, when you remove 10%, you will get the 90%. 12,150. Kumar is taking the furniture. Entry should be Kumar's capital account debited to realization account. Can you see 12,750 here? Sorry, 12,150 here. Kumar's capital account debited to realization account 12,150. Sorted? Yes. Next, we have stock realized 120% of book value. We got 120%. What is the entry? Bank account debited to stock account. 120% we got. Bank account debited to stock account. Can you see bank account? Okay. Assets realized, they have made all together they have put 256,200. And for which they have not shown working note also. Shabash. Okay. Stock. How much is the stock? See the question. How much is the stock? Stock is 36,000. We are getting how much? 120% of book value. So 36,000 plus 20%. It becomes 43,200. This is the amount I'm getting from stock. Okay. Then, can you see? I think they have shown the calculation in the realization account at least. Yes. Stock realized 43,200. Can you see 43,200 over there? Bank account, they have put the total of all the assets. All the assets total is over here. We'll arrive at the total. Okay, bank account debited to realization. Next, what they are selling? Book debts, 12,000 of book debts proved bad. Okay, forget it. Gone. Okay, remaining fully realized. How much is book debts here? Are we going to do 54 minus 12? No, 60 minus 12. 60 was the debtors. You'll get 48,000. And you got 48,000. You got 48,000? Okay. Next, they told land and building realized 165. Oh, direct. One thing at least directly they have told. 165, 165. Total of this is 256, 200. That is the amount that you're getting. That is the amount you're getting. Can you see realization account debited to? Bank account debited to realization account 256, 200. Is this sorted? Now, investments taken over by Amit at 15% discount. How much is investment? 15,000. Remove 15%. 12,000. 12,750. Amit will take it at lesser value. Amit is taking Amit's capital account debited to realization account. No, not to investment because all the things are sitting in realization account. You can't write to investment. Okay. Next, after that, you have for half of his loan, D accepted plant and machinery and 7,500 cash. Now, if he is taking plant and machinery, no entry. Why? Loan is in realization account, plant and machinery in realization account, no entry. Realization to realization. But he's taking cash, 7,500. For that, there should be an entry. Okay. For that, what is entry? Realization account debited to cash account or bank account. 7,500. Can you see cash here? 7,500. Now, D's loan, working note. If they have not done, we'll do it. Otherwise, it's there. Yes. 1,20,000. Half is gone. What is half? 60,000. But for that 60,000, he's taking machinery and he's getting 7,500 cash from us. Remaining half, what they told, remaining half was paid off at a discount of 10%. So remaining half is how much? 60,000. Can you see? He's getting only 54 there. He's getting only 54 there. Entry for this realization account debited to bank account. Realization, see, we are giving D how much? 7,500 plus 54,000. So total amount we are giving D is 61,500. 61,500. 61,500 you are going to write over here. Can you see? 54,000 and 7,500 is 61,500 only. Is that clear? Next, what we are going to do? Bills payable were due on average basis 1 month after 31st March, but they were paid immediately. Discount. This is called as rebate. Remember yesterday, retirement of bill. We are paying 1 month early because 1 month later our firm only is not there. Today we are closing everything. So we will pay them 1 month early. So bills payable, can you see 12,000? So 12,000 into, they said rebate of 6% into 1 by 12. How much will you get? 60 rupees. That means you have to pay 11,940. That means we'll pay 11,940. Clear? Actually, question ends over there. But don't end your question also there. See the liabilities. Loan from D is paid, trade creditor is paid, bills payable is paid. When you are paying all those people, do you think that person who was working for you, who is having outstanding salary, will sit quietly? No. You have to pay them also. See, salary also is paid. Realization account debited to bank. One more 7,500 over here. Okay, 11,940 is also there. Basically, debit credit, you can check. Clear? Now what to do? Close the realization account. You're getting profit only. Transfer the profit to partner's capital account in their old profit sharing ratio. If there was loss, we could think about it. If there was insolvency, but there is no loss here, profit. Then what is happening? Both the partners have to get money because their capital credit side is more. So it will be paid to the partners. Is this clear? Yes, this is your dissolution question. We have still dissolution, one more question. Piecemeal, one question. Piecemeal, one more question. Done. And the death of a partner question. Yes, that's it for the morning session. You can go for lunch, have light lunch, and come back. Okay, let's start. Let's continue. Question number 34. They'll be late, they'll join. Shh. Yes. Question number 34. Hello. Jan is the exam. 42 days left. Dissolution. Practice question 2. Okay, dissolution practice question 2. Dissolution practice question earlier question which we saw was about simple dissolution. This one we will see one question about Ghana versus More, and then we will go into piecemeal, and with that we should be done with partnership. Okay, thin, short and fat, wherein partnership sharing profits and losses in the ratio of 2:1. Yes, who are you? Fat. On 30th September 2022, the balance sheet was as follows. Clear? The balance sheet is given. Now, Thin decides to retire on 30th September 2022 and Fat appears to be short of private assets. Short decides that he wishes to take over Thin's share of profit, does not wish to take over the share of profit. So, all three partners decided to dissolve the firm. Ultimately, all three partners are dissolving. Simply, they told all that story. Okay, from 30th September 2022, it then transpires that Fat has no private assets whatsoever. Fat is bankrupt. Okay. Now this is practice question number 2. What? Hidden black money. That they will not show. They will keep it pending. Yes. Okay. Now, current account, capital account. Understand. First, what we are supposed to do? Empty the balance sheet. Shh. Empty the balance sheet. Premises 50,000. Where will you put it? Did we pick the wrong question?
Yes.
Yeah, it's here. Premises 50,000. Next, then we have fixtures 1,25,000. So 1,25,000. Plant 32,500. I think it's got interchanged over there. 32,500. Stock 43,200. That is also transferred to realization account. And debtors 54,780. That is also transferred to realization account. All assets are transferred. What about liabilities? Liabilities, if you see, first thing you have capital account of partners. Capital account of partner 80, 50 and 20 will be transferred to partners capital account. Can you see partners capital account 80, 50 and 20? Is it clear? Next, current account of partners, thin and short positive, Fat is having negative. Okay, that means it is debit balance. Can you see? Here it is to balance brought down. Here it is by balance brought down. Sorted? Okay, then after that you have sundry creditors. Sundry creditors 84,650, put it to realization account 84,650. Clear? Then you have bank OD 44,330. What will you do with bank OD? Transfer it directly to the bank account by balance brought down. Okay, bank you should keep always separate. Credit or debit balance, keep it separate 44,330. With that, do you agree that your balance sheet is empty now? Now you just have to see what is happening in the question. Premises sold for 60,000. Plant is sold for 1,07,500. What is the entry? Bank account debited to realization account. Premises you sold, plant you sold. Clear? Next, fixtures realized 20,000. So fixtures also you sold. Then stock is acquired by another firm at a book value of 5% less. Another firm, some other firm is buying your stock. Stock is 43,200 minus 5% if you do, you will get 41,040. That is also sold. Clear? Then after that, debtors realized 45,900. You can see 45,900. This is the amount you got from all the sale of assets. This is 274,440. This will go into your bank account 274,440. Is this clear? Now, what next? Realization expenses amounted to 4,500. Realization account will be debited to bank account. Can you see 4,500 gone? Any doubt still here? No. Then what we are supposed to do? Bank overdraft is discharged and creditors are also paid in full. Bank overdraft we are paying. Okay, no problem. Bank account already we have taken credit balance only and started. Creditors we are paying 84,650. So you can see over here 84,650 by realization account. And in realization account you have creditors also 84,650. Is this clear? Are you following this? This was the balance brought this side and we are making the payment. Next, after that, what next? Nothing. Nothing is there. You have to just close. But Ghana versus Murray. One person is bankrupt. Who is that? Fat. Fat does not have any money. Okay, now what we will do? Partners current account. Partners current account. Realization loss comes over here. Can you see the realization loss? 14,216, 14,216 and 7,108. Realization loss is brought forward. What did I tell you? Immediately as soon as the realization loss is brought, the solvent partners should bring money. Can you see? By bank, solvent partners are bringing. Fat is not solvent. That's why there is nothing here. Clear? Realization loss when you transfer, immediately you have to bring, solvent partners have to bring money. Is this clear? After that, whatever balance is there, okay, whatever balance is there in the current account, transfer it to capital account. Can you see? Whatever respective balances, we are transferring it to capital account. Who is insolvent? Fat. If you see Fat's ledger, no, there is 1,608. 1,608 Fat has to give. It will be given by whom? Other partners. In what ratio? Capital ratio. Can you see the capital ratio is 8:5? That is why 990 and 618 deficiency bone in the capital ratio. This is Ghana versus Murray question. Remaining amount, whatever is there, bank account. The solvent partners will take money. If there is any money, they will take money. That is end of the story. Clear? In Ghana versus Murray, very easy questions will be asked. But what you have to worry, if realization loss comes, if there is realization loss, immediately solvent partners have to bring money. Then insolvent partners loss, that has to be borne by partners in capital ratio, not in profit sharing ratio. Is it clear? Yes, that should be it with dissolution normal. Now we'll go into piecemeal. Piecemeal, what is the first method we are going to cover? Higher relative capital method. Then we will go into, which is maximum loss method. It is SLM, it seems. Illustration 8. Dissolution. We'll go to illustration number 8 and we'll just quickly go through that. Yes. Illustration 8, higher relative capital method. Now, in piecemeal distribution, whichever method we have discussed, okay. Can't I show the money bought in current account itself? Yeah, you can show, because ultimately from capital account, current account, it goes to capital only. You can show it in either places. That's fine. Yes, higher relative capital method. Remember that time the concepts we had discussed? I told you we'll go through these steps again. How to find higher relative capital method? Understand this. Step 1, divide the partner's capital by profit sharing ratio. Have a look at this. This is the capital. What did we do? Divide it by profit sharing ratio. You are getting some resultant figure? Clear. What was this next thing? Keeping the capital of the partner who has the least resultant figure as the base, calculate the required capital. Who has the least figure here? A, B or C?
B.
B is having least resultant figure. So now you take his capital as the base and calculate the capital. When you calculate, for example, 48,000 is 2 by 5. How much is 1? 48,000 into 5 by 2. What are you getting? 1 lakh? 20,000. So 1,20,000 will be distributed in the ratio of 2:2:1. That time you get 48, 48 and 24. Can you see A? He has a capital of 76. But his required capital is only 48. That means 28,000 is excess capital. Can you see B? His capital is 48. Required capital is 48. So it is 0. Can you see C? Capital is 36. Required capital is 24. So higher relative capital is 12,000. Did we get higher relative capital? 100% yes. But we have to keep repeating the steps till we have one person standing. Correct? Now this person is gone. Now these two. 2:1 is a ratio. Divide. Did you get 14 and 12? Who is the least here? This person who got 12. Take his capital as the base. 12,000 is for 1/3 share. How much is 1? It will be 36,000. Correct? 36,000. Distribute 36,000 in profit sharing ratio. Is it 36 only? Yeah. Yeah, it is 36. 24,000 and 12,000. 2:1. Distribute it. He has capital, excess capital of how much? He has excess capital of 28. 24 is required. 4,000 is higher relative capital. He has excess capital of 12. 12 only is required 0. So, yes. So now what you have to understand, when money comes, listen, higher relative capital is calculated. When money comes, first you will give 4,000 to this person because his higher relative capital is 4,000. After that, if money comes, you will give 24,000 and 12,000. How did we get 24,000 and 12,000? Remember, their higher relative capital was 28 and 12. Out of 28, if you have paid 4, remaining is 24. So 24 and 12 will be given to A and C in the ratio 2:1. After that, whatever money comes, will be distributed between all the partners in the ratio of 2:2:1. Is this clear? Yes, this is the situation. Now, what you have to remember, higher relative capital or maximum loss, it is only when you are paying partners. It is not when you are doing payment to outsiders. Outsiders you pay. After you pay outsiders, when money comes, you will pay the partners in higher relative capital method. Is this clear? Higher relative capital method only will be followed, and the distribution of second installment is shown over here. What you will do, first you will give 4,000 to this guy, then 24,000 and 12,000 to these. Then whatever money comes is distributed between all partners in the profit sharing ratio. Clear? This is your question on higher relative capital. Easy question. Next, we'll go into 35, 36. Okay, maximum loss method. Maximum loss also starts only when we go to paying partners. Only when we are going to pay partners, that time maximum loss will start. Now, if you look at this question, first what you are doing, see, you are paying outsiders. First in distribution, if you see, first 6,000 when you get, you are just paying outsiders. Oh, sorry. First is not 6,000, no. First is this 1,000, 3,000, 3,900. All this money is going to pay the outsiders. Who are the outsiders? Creditors, realization expense, creditors, partners loan, all that you are going to pay. When you pay that, after that you will be left with some money. Now, how to calculate maximum loss? Can you see over here? I have 42,000 balance to be paid to these three partners. I have only 900 rupees with me. When you come to this adjustment, no, see, only 900 rupees is there. So what you are expecting, anymore I will not get any money. If you have to pay 42,000, but you have only 900, that means loss is 41,100. Distribute that loss in profit sharing ratio. Distribute the loss in profit sharing ratio. Can you see one person has gone into negative? That means Ghana versus More. Distribute that in capital ratio. Capital ratio is 2:1. Distribute it in capital ratio. Then what happens? That time you get resultant figure of 600 and 300. Was the 900 in your hand? So you can give 600 and 300 to these people. Capital ratio. It became capital ratio automatically. You will get resultant figure. See, 1560 minus 960, 780 minus 480. You will get the resultant figure. That is the amount paid. Next time you got 6,000. Next time you got 6,000. How much you have to pay the partners? 41,100. 900 you just paid, no? 41,100. If you have 6,000, that means the loss is 35,100. 35,100 loss is distributed among the partners in profit sharing ratio. Can you see that time you got resultant figure 960, 3360 and 1680. That is the amount paid. That is the amount paid. Next time if you see you got 20,100. What will you do? You have to pay 35,100 to partners. 20,100 is the amount available. That means maximum loss is 15,000. What you will do? Distribute the loss in the ratio. That time you will get how much amount is to be paid. You will get how much amount is to be paid. This is maximum loss method. Every installment is taken as the last installment. Is it clear? Yes. Let's go further. With that, we are done with dissolution as well. We have one question on death. We'll do it at the end if we have time. Okay, because right now I think it's better we go into other chapters. One question is there at the very end. Last thing we will do is that death of a partner question. Huh?
You're going to skip it. I'm asking if
No, I'll do it at the end. I'll do it at the end after we finish all the chapters.
you will do it next time.
No, it's better we start with chapters because those are also having weightage, no? We are in flow. We'll go into the chapters. Now, first, company accounts. Company accounts. I thought we'll go into income accounts, but we'll go to company accounts. We'll go in the order only. Now, company accounts. We'll discuss the concepts of company accounts. Okay, lot of things are there. I don't think I will discuss everything at once, then it will become too much. First, we'll discuss share issue and forfeiture and debentures. Then we'll solve the questions. Then we'll go into bonus, solve the question, redemption of preference shares, solve the question, redemption of debentures, solve the questions. Clear? Now, what is a company? Artificial person having separate legal identity with perpetual succession, limited liability, common seal. Company law, one answer done. Okay, features of the company. Clear? Now, types. We have public company, private company, government company, OPC, dormant company, small company, section 8 company. All these are definitions for you in your company law. You should know this. What is share? Share is a share in the share capital. Correct? That is what? Share is a share in the share capital. That is the definition. That is the definition as per Companies Act. Okay. Now, what is share capital? What is share capital? Total amount invested by owner. Total amount that owner has invested is called as share capital. I have only smaller portion of that. That is share. Total amount invested by Infosys is some thousands of crores. Share capital. Correct. In that one share if you buy today, that is the share for you. So share in the total capital is called as share. Equity share. Any share which is not preference share. Companies Act definition. What is preference share? Tell me. That's why you are here. Preference share, there is a definition. Dakkan. If both ways, if they are going to tell, why will they put it in the material? Preference share is which has preference. Preference for what? Dividend, and in case of winding up, repayment of capital. If the company is going, preference shareholder will get preference when we are distributing profit, which is called as dividend. And when company is shutting, we pay all the outsiders. We have to pay money to shareholders. First, we'll pay the preference shareholders. Is it clear? Yes. That is why equity share means anything other than preference share. Not studying concepts and expecting to clear. You don't know preference share definition. You shouldn't have gone into the exam hall itself. Yes. Huh? What is? Yeah, he'll ask you what is preference. He'll also know because he has seen so many CS students all these years. He'll like, hey, preference share, that has preference. In the name only the answer is there. Barnacle. Yes. Types of share capital. We'll go into types of share capital. This is required for you to understand. First thing is authorized capital. What is authorized capital? The maximum capital that can be issued by the company, that can be collected or raised by the company. Clear? Can we increase authorized capital? Yes. You have to alter. You have to pass special resolution, all that you have studied. Issued capital. Out of the maximum, how much I have issued shares? That is issued capital. Whatever I have issued, did you take everything? No. That is subscribed capital. Clear? Then out of whatever you have taken, how much I asked you to pay today, that is called up capital. Whatever I have asked you to pay, did you pay everything? No. That is paid up capital. Did you understand this? Okay. Now, accounting for issue. From here we start our journal entries. Entire chapter is journal entries only. Now, application stage. Share is issued at par or face value, it's called. Application stage. What is the first entry? You're getting money. Bank account debited to equity share application account. Next, what you will do? Transfer it to share capital. Equity share application to equity share capital account. Clear? Next, allotment stage. First thing is due entry. What is the allotment due entry? Equity share allotment account debited to equity share capital account. Then you will get the money. Bank account debited to equity share allotment account. What do you have to remember? Application stage money comes in first because the story starts only if you pay the application money. Allotment stage, first you are asking the money, then they will pay the money. Clear? Except application, everything due is first and then receipt. Okay. Share issued at premium. Call entry I have not written. Why? Call entry same, no? Equity share call to equity share capital, bank to equity share call. Same entries will repeat. First call, second call, how many ever calls you want to have. Now, shares issued at premium. Shares issued at premium. That means issued at higher than face value. If premium is collected at application stage, then what will be the first entry? Bank account debited to equity share application, including premium. Then whenever you transfer to share capital, your entry will be equity share application to equity share capital to securities premium. Clear? If it is collected at allotment stage or call stage, first you are transferring to share capital. So your entry will be equity share allotment or call account debited to equity share capital to securities premium. So whenever securities premium is there, remember at whichever stage you are transferring, whenever you are passing the entry to transfer money to share capital, excess amount will always be transferred to securities premium. Is it clear? Yes. Now, share issued at discount. Can you do it? No. Prohibited. It is allowed in one case. That is in case of sweat equity shares. Sweat equity shares are not covered in our syllabus. So for you it is prohibited only. Now, are you thinking that, sir, in reissue, we issue share at 9 rupees, 8 rupees and all. Is it at discount? No. Earlier person has paid some money. This person will pay some money. Total will be more than 10 or at least equal to 10. Clear? Under subscription means what? You are getting less shares than issued. Sweat equity shares means shares issued to employees, not whoever has found. Like for example, if some employee is there who found a new formula, now he will sell that formula to the competitor. So you give him shares and make him stay here only. Okay, you will see that at lunchtime. Don't worry about it. Okay, now under subscription. What is under subscription? I got less shares than what I issued. Is under subscription fine? Yes, but minimum subscription is 90%. Under subscription is fine. I have issued 40,000 shares. I got 39,000 applications. Good. But if I get 36,000 applications, still good. But if I get 35,999 applications, then I cannot do anything. I have to refund all the money. Huh? No, they'll get it. Then they have to refund it. Because they'll not get to know. When they're getting money, they don't know how much they're getting. No. Because today some people are paying, tomorrow some people are paying. When the cutoff date is done, that day they'll sit and count. Did they get 90%? No. They got 89.9%. Still, everything will be refunded.
As per their wish, they cannot accept the 90%. Less than 90%.
No, they cannot accept.
It's mandatory.
It's mandatory. Why? Because in the prospectus, they have already told that we are collecting money for a particular purpose and we are going to use it like this. If you get less, you cannot change your plan. Plan is already told in the prospectus. 10% is a variance that is kept. Another way to look at it, if you are getting less than 90% subscription, that means public does not have trust in your company. So Companies Act, they are not letting company to go ahead with the public issue. Is it clear? These are Companies Act rules. SEBI rules are some other level only. SEBI has more rules for issuing shares to public. Okay. From the benefit of the public only they are saying all this.
Remaining 5% like overly big, like I will only interest 5%.
90. Whoever it is, 90. There is one concept called as underwriting. Underwriting is I'm giving the shares to agent and telling you should get the shareholders. If at all it is only 10% subscribed, then full remaining money will be put by underwriter. Underwriter will put from his pocket. Now, if it is refund, what will happen? If it is refund, equity share application account debited, application gone, money also gone. Clear? Whenever there is under subscription, you have to refund the money. Over subscription means what? Shares subscribed more than share issue. I issued 40,000 shares. I got 1 lakh applications. Can I tell, okay, I'll keep all the money? Can I tell? No, we can't. Yeah, that we will do. Pro rate allotment. Can I issue 1 lakh shares? No. I can issue only 40,000 shares. Okay, reject and refund excess application. That is one option I have. Another option is called as pro rata allotment. Pro rata allotment means what? 10 people came to your house. You have 4 dosas. What will you do? Will you give 4 dosas to 4 people and tell 6 people to go back? That is reject and refund. Correct? Pro rata is that 4 dosas only you give to the 10 people. Are you getting my point? Everybody is getting, but they are not getting what they asked They are getting what we give. Is it clear? Yes. Shares are issued even to everyone, but not how much they have asked by the shareholders. Pro rata allotment. If I issue 20,000 shares, I got 30,000 applications. Then I will issue 2 shares for every 3 applications. 2 shares for every 3 applications. Pro rata is one question which can be asked for 15 marks also. Which can be asked what? It is asked. Okay. Partly reject, partly pro rata. What is that? Some extra applications I'll reject, some extra applications I will do pro rata allotment. Clear? Now, excess application amount, if you have, what will you do? Can be adjusted with allotment. Cannot be adjusted with call. That means excess after adjusting should be refunded. If you have extra money you adjusted with allotment. After that also you have extra money remaining. You cannot adjust it with call unless it is mentioned in the question, which will not be mentioned. So you have to refund it. Why you have to refund? Today if you have done allotment of shares, you can ask the call money after 2 years also. So 2 years there will be a time gap. Are you getting my point? So therefore, adjust with allotment. After that, if you have money, refund it. What next? Calls in arrears. Asset. What is calls in arrears? Shareholder had to give you money. He has not given money. They have not given money. That is called as calls in arrears. Amount unpaid by the shareholder after call is made by the company. Next, interest on calls in arrears. Maximum is 10%. Interest on calls in advance. Maximum is 12%. Journal entry. Now you have to interest on calls in arrears. You have to get money. Equity shareholder debited because he has to give you money. Interest on calls in arrears. Due entry. When they give the money, bank account debited to equity shareholders. Interest will be transferred to P&L. P&L transfer. Clear? Now, interest to be charged from last date of payment till the date of payment is actually made. What does it mean? I told you pay today. You pay 2 months later. From today till 2 months later, I will charge interest. Clear? How much maximum? 10%. Calls in advance is liability. Why? I did not even ask you money. You have given me early. This is basically income received in advance, no? Okay, liability. Amount paid by shareholders before call is made. Maximum here is 12%. Here you have to get interest or pay interest. Here you have to pay interest. So interest on calls in advance debited because it is an expense to equity shareholder. To equity shareholder. Then equity shareholder account debited to bank. Is this clear? Then finally P&L account debited because expenses are always transferred to P&L. Interest on calls in advance from where to where you have to pay. Interest to be paid from the date amount is received till the date the call is actually made. I received the amount today, but I made the call 3 months later. So from here till here, I have to pay interest. Is it clear? Yes. Interest on calls in arrears. See, I have written here. Interest from this period to interest for this period to be received. What is the period? Date of payment. Date payment was supposed to be made. When did you actually make the payment? This is interest on calls in arrears. Interest on calls in advance, date of payment. But when was the date of payment actually in future? So difference for this period you will pay. Clear? You were supposed to pay here, but you paid here. Interest on calls in arrears. You paid here, but you are supposed to pay here in future. Interest on calls in advance. Is this clear? Yes. Forfeiture of shares. What is forfeiture? Cancelling the shares because I asked you money. You did not pay. Again, I am not asking you money. I am removing you from the position of shareholder only. You are not the owner itself. Now, share value was 10 rupees. You paid 10 rupees. Can I cancel your share? Why? Fully paid up. Limited liability concept in company accounts. Company law. Limited liability. A shareholder's liability is limited to the unpaid amount on the share. Is there anything unpaid? Nothing. I cannot touch that shareholder. As long as he wants to be shareholder, he will remain shareholder. 10 rupees share. You paid only 8. 2 rupees is not called only. Can you forfeit? 2 rupees is called and you didn't pay. Can we forfeit? Yes. Just because it is partly paid up share, you cannot cancel it. If it is called up and you don't pay, that means you default, then I have the opportunity to cancel the share. Clear? Yes, cancellation of share for non-payment of amount called. We'll go into journal entries. Example journal, I forget. Now, journal entries. Shares were issued at par. Here, whenever there is a forfeiture situation, immediately you have to see in the question, Was this share issued at par or premium? Was it issued at par or premium? If it is premium, little more you have to think. If it is par, little less you have to think. Clear? If it is par, what happens? Equity share capital debited. Why? Share is gone. Debited for what value? Called up value, not the face value, called up value. If it is fully called up, then it will be face value only. There are questions, okay, there are questions where 2 rupees you paid application money, 3 rupees you are supposed to pay allotment, you did not pay, cancelled. Now it is not 10 rupee share, it is 5 rupee share only. So called up value, debited for called up value, you are removing the share capital. 2, share forfeiture account. To share forfeiture account, amount received. Clear? Amount received. Whatever you received from the shareholder, are you going to give it back? No. For the company, it is profit. Profit is always credited. Share forfeiture account. Clear? What is not paid, it will be equity share allotment or call or calls in arrears. If the amount is transferred to calls in arrears, here you are going to use calls in arrears or you are going to take the respective ledgers. Clear? Now, tell me one thing. Why I have not written to equity share application here? If application is only not paid, we are not there in the story itself. We will not reach till forfeiture. Are you getting my point? Next, share issued at premium. Now, if share was issued at premium, you have little more thinking to do. If share is issued at premium, you have to think whether premium is received or premium is not received. If premium is received, let it be. Ignore the premium. Focus only on the face value. Ignore premium. If premium amount is not received, then you have to reverse the premium. See, I received the premium amount and premium is sitting in securities premium account. Good. Securities premium is also a reserve. Share forfeiture is also a reserve. Why to let it be there only? I have not received the premium, but already in the due entry, I have transferred it to securities premium. Now, reverse it, remove it. I have not received, but it is sitting here. Reverse it. Is it clear? So now, equity share capital account debited for this one. When securities premium is received, only face value. Share forfeiture account, only face value. Allotment or call or whatever is not received will be credited. Is it clear? Only focus on face value. If premium is received, I mean premium is not received, then what you're going to do? Equity share capital debited for face value. Securities premium debited for the premium portion. To share forfeiture account, only the face value because premium is not received. Only the face value. To share allotment call or calls in arrears, whatever it is. Is it clear? This is your share forfeiture entry. What next? The reissue. Correct? Reissue, is it compulsory? No. Company can decide that I will not reissue to anyone. It's okay. Okay, but if they reissue, what will they get? Money. Correct? If they reissue, they'll get money. Now, the bank account debited, amount received. What you did not get. Imagine I issued the share at 8 rupees. How can I issue share at lesser value? Because the previous person has paid something. Clear? So whatever you did not get, it's a loss now. Share forfeiture account debited. Face value minus what you received is loss. 2. Equity share capital. Face value. 2. Securities premium. If share is issued at higher than face value. Both of this cannot be in the same question. Same entry both cannot be there. Either you are issuing it lesser than face value. If you issue it at lesser than face value, share forfeiture debited. If you issue it at higher than face value, securities premium is credited. Clear? Now, optional, I have already told this. Minimum amount at which share must be reissued. At what price minimum you have to reissue? What was not paid by the previous person? Unpaid amount by the previous person. Minimum amount that much you have to get. Previous person paid only 4. Now I have to issue the share at least at 6. Previous person paid only 1. Now I have to reissue the share at least at 9. Because it has to have the face value. You cannot issue shares at less than face value. Provision, I mean it is prohibited. Remember we discussed that time. Only sweat equity shares it is allowed. That's not there in a syllabus anyways. Now, if shares are forfeited and reissued. If shares are forfeited and reissued. There are questions in your study material where they tell you Ram shares are cancelled. Sham shares are cancelled. Then we have reissued the shares. Ram's fully we reissued and Sham's only little we have reissued. So the little we have reissued, only for that we will calculate capital reserve. Otherwise, what is not reissued, we are not going to bother. Remember, only shares which have completed the cycle. What is completed the cycle? Shares are forfeited and it is reissued. Such shares you will calculate if there is any profit or loss and transfer balance in share forfeiture account to capital reserve. Imagine when I forfeited, I had 4 rupees profit. When I reissued the share at 9 rupees. That means I have 1 rupee loss. 3 rupees which is there will be transferred to capital reserve. Is this clear? This is share issue, forfeiture and reissue. Share issue, forfeiture and reissue. What if shares are issued for consideration other than cash? I issued share, I didn't get money, I got land. Asset account debited to equity share capital. If shares are issued at higher value, it will go to securities premium. How to calculate the number of shares to be issued? Asset value divided by issue price, not the face value. Issue price. Asset value is 12 lakhs. I'm issuing 10 rupee share at 12 rupees. I will divide it by 12. That time I'll get to know the number of shares that are issued, that are supposed to be issued. Is it clear? Yes. Then we go into issue of debentures. But before that, we'll solve problems. 36 was done. 37. Only examination questions I have picked for this thing, shares. See, question number 37, 15 marks, obviously. Question number 38, 15 marks, obviously. Question number 39, 15 marks again. Question number 40, 15 marks. And question number 41, also 15 marks. And all the questions are different. The focus area is different. Concepts are covered, but the focus area is different. Basically, any type of question can be asked in the exam. That's what I'm trying to tell you. So June 2023, we'll see June 2023 first. Where are you, June 2023? Here you are. Yes. Share issued. Always company accounts questions are at towards the end. Okay. Now, let's see what is asked. B Limited issued a prospectus inviting applications for 1,20,000 equity shares. How many shares we are issuing? 1,20,000 at a premium of 2 per share. Correct? Okay. Application 3, allotment 5. That means here it is 3 plus 2. 3 is face value, 2 is premium. First and final call 4. So 3 plus 3, 6. 6 plus 4, 10. Applications were issued for 3,60,000 shares. Pro rata. Extra we got. Applications for 80,000 shares were rejected and money refunded. First category. Shares allotted to the remaining applications as applicants as follows. Category 1 and category 2. Can you see 1,60,000 we are giving only 80,000 shares and 1,20,000 we are giving only 40,000 shares. Clear? Excess money received with the application was adjusted towards sum due on allotment and the balance amount returned to the applicants. All calls were duly received. That we will see later. Now, did you understand that they are adjusting the excess money with the allotment, but they are not adjusting with call? I told you cannot adjust it with call. Don't adjust it with call. Excess money you can only adjust it with allotment. Now, always when we have pro rata, it's always better to have a table like this. It's better to have a table like this. Clear? Number of shares applied is how much? 80,000. First category. Which? It is not rules of anyone. It is just general practice. Yeah. Nowadays, yeah. Because of DMAT, it is not happening like this. Yes. Now, listen. Shh. 80,000 shares are applied for. Are you giving them any shares? Shares allotted? Nothing. 0. What is the amount received on application? 3 rupees. So 80,000 into 3 will be 240. Amount required on application? Nothing. Why? We are not giving them shares. So we don't require anything. Amount adjusted on allotment? We are not giving shares only. What will we allot to them? So entire amount will be refunded. Entire amount will be refunded. Is this clear? Now, second category. 1,60,000 shares are applied, but we are giving them only 80,000. So how much money is received? 1,60,000 into 3. How much money is required? 80,000 into 3. Do you have extra? I wanted 240. I got 480. That means 2,40,000 is amount adjusted. Okay, extra. Amount adjusted. Now understand this. How much do you require for allotment though? 4 lakhs. How do you know 4 lakhs? Because 80,000 shares into 5 rupees was the allotment. 4 lakhs I require. Do I have 4 lakh now to adjust? Do I have 4 lakh to adjust? No, I have only 240. I'll adjust 240. I'll adjust 240. Remaining 160, when will I get it? At the allotment stage. At the allotment stage. Clear? What about the third category? 1 lakh 20, I have issued only 40,000 shares. 1 lakh 20 into 3, I have received 3 lakh 60,000 rupees. But how much I require? 40,000 into 3, 1 lakh 20,000 rupees. Clear? Now, extra application money is 360 minus 120, 2 lakh 40,000 you have extra. But for these shareholders, how much money do I need on allotment? 40,000 into 5. I require 2 lakhs. 2 lakhs I have extra of 240. Can I adjust? I can adjust only 2 lakh, no. So 2 lakh is adjusted. See, amount adjusted on allotment is 2 lakhs and 40,000 is refund. 40,000 is refund. This table will help you whenever there is pro rata. It's better to make this table. Clear? Now, understand the journal entries. First entry will be bank account debited to equity share, application account. What did you get? 1080. What did you get? 1080. So the first entry will be for 1080. Can you see? 1080. Out of 1080, are you issuing shares? Everything? No. You need only 360. You need only 360. And 440 will be adjusted against allotment. And 280 will be refunded. Can you understand that? You got 1080. 360 is transferred to share capital. 440 is adjusted against allotment. 280 is refunded. So now you look at this entry. Equity share application debited to equity share capital to equity share allotment to bank account refund. Did you understand this? This entry, if at all the table is not there, you cannot do so much calculation here. You cannot do it. It will become a mess. If you do it, it will become a mess. Clear? Next. Equity share allotment account debited to equity share capital account. Okay. Normal calling the money. So we are issuing how many shares now? We got 360, but we are issuing only 120. Over 360 situation is gone. 1,20,000 into 3. 1,20,000 into 2. Securities premium. Is it clear? Did everybody pay the allotment money? Yes. Now you have to go back to the question. Can you see here? All calls were duly received except final call by a shareholder holding category shares who applied for 680 shares. Okay. So this person, except this person, everybody has paid money, but that person has not paid what? Final call. First and final call. Allotment, everybody has paid. But can you see what is the allotment amount? Where were you?
P1, so they saved 145 months at lunch.
Oh, both the pages there was a problem. Okay, settle down. Yes, how much money we were supposed to get on allotment? Can you see over here how much money you are supposed to get on allotment? 6 lakhs. But how much? 6 lakhs. Out of 6 lakhs, already 440 you have adjusted at allotment stage only. Can you see 440 is adjusted at allotment stage? So 160 will be refunded. 160 only will be collected. So you can see bank account debited to equity share allotment 160. Do you know that is already there in the table itself? See over here. Amount received on allotment 1,60,000. Amount adjusted minus amount receivable, that difference is 1,60,000. Now what happens? You have to make the final call entry. Final call is for how much rupees? 4 rupees. So 1,20,000 into 4. That makes it 4,80,000. Is this clear?
Yes, sir.
Next. Bank account debited. Are you getting everything? No. One person is not paying. Here you can make a major mistake in the exam. You just see that who has applied for 680. Applied for 680, no, but didn't get 680, no. Category 1. Category 1 is this, no. Whoever applied for 160, they got 80, no. So if he has applied for 680 into half, he has gotten only 340 shares and he has not paid the money. What he has not paid? Call money he has not paid. So now what we are going to do? 340 into how much he has not paid? 4. Now, whenever there is forfeiture, I told you have to think whether share is issued at par or premium. Is it issued at par or premium? Premium. Is the premium amount received or not received? Received. Why? Because he has not paid the call money. Premium is at allotment stage. He has paid the allotment money. So 340. Ignore the premium. Application is 3. Allotment is 3. Application is 3. Allotment is 3. Why? Ignore the premium. This 2 is there, no. We are going to ignore that. Only this 3 will be bothered about. Application is 3. Allotment is 3. So 340 into 6. Are you getting 1360?
Yes, sir.
340 into 6, 1360. Are you getting it? Calls in area. Sorry. 340 into 4. Are you getting 1360? Yes. What is that? Because 3 rupees plus 3 rupees you have paid. What you have not paid? 4 rupees. What you have not paid is 4 rupees. Bank account debited. Calls in areas debited. To equity share final call account. This is the receipt entry. This is the receipt entry. Are you getting my point? Now what you are doing? They did not tell actually in the question that calls in areas account need to be opened. Did they tell? They said open calls in areas account whenever is required. If they would not tell, we would just ignore it. Clear? If they would not tell, what this entry would look like? Bank account debited 478,640 to equity share first and final call 478,640. Clear? Now the forfeiture entry. Forfeiture entry, equity share capital account debited. Equity share capital account debited. How much?
Face value into 10 rupees.
340 into 10. 3,400. Clear? 2. Calls in arrears. 340 into 6. 4. Okay. Forfeited shares. 340 into 6. Clear? This is the entry. You are reissuing the share. 100% you are reissuing the share for 13 rupees. Higher value. Higher value. So bank account debited 340 into 13 rupees. To share capital 340 into 10 rupees. Extra will go to 340 into 3 rupees securities premium. Is this clear? Are you following this? Yes. Then finally, when you cancelled the share, how much profit you made? 6 rupees. When you reissued the share, how much loss you incurred? 0. Why? Because you reissued the share at higher value. So 340 into 6 minus 0 will be the 2040 that is there. Entire amount will be transferred to capital reserve. Entire amount is transferred to capital reserve. Is this clear? Are you following this?
Yes, sir.
Yes. Next. 38th question. Okay. December 2022. December 2022. Again a 15 mark question only. Nothing less than 15. Okay. We'll see what the question says. Now, yes, before we continue, last bench, 1, 2, 3, get out. Fast, fast, fast. Last bench, pick them up. Out, fast, fast. Go. It's not a forced thing. There are, no, don't waste my time. I have lot of things to cover. Huh? No need. That's the door, you can go. That's the way. Go. Wake your friend up also. Go. And Chetan, even you. What are you laughing for? You are joining them. Yes. Go.
Visualizing, sir.
Huh? Go outside, visualize other things. Go. Fast. Don't waste my time. Get out. Goldman's friends, everyone. That is the door. Fast. Chetan, even you. Huh?
Visualizing large entries, sir.
Chirag, you are no less. At this rate, you will be looking for me. 100%. Right and keep. At this rate, if you continue, you will be in May along with Goldman. Or you can ask him, if there is an opportunity in his shop, extra people are required, you can join him. Honestly, we told you sugar coated when it was the previous attempt. You didn't understand it. Now we have to tell you openly on your face for this attempt. Okay, if you are serious, sit. Otherwise, you can go. It is not a forced thing, guys. Are you getting my point? It's not forced. ICU batch people, if you want, I'll talk to Nitin. You can go down and you can sit. Okay. Others, you can go home. You can go to the mall. It's a Sunday. Sunday is nice. The weather is nice outside. Okay. Anything can be done. So if you're interested, sit. Otherwise, you're free to go. I'm not forcing you. Even if there is nobody, I'll still continue because the online number is consistent. Okay. They are interested. They are there asking doubts. Some of the doubts I'm actually ignoring because it is marathon. I can't clear all doubts in marathon. Yes. Question number 38. Question number 38. Company accounts shares December 2022. PQR issued 2 lakh equity shares of 10 each, payable 3 per share on application, 5 per share, including 2 on premium. So what happens automatically? This becomes 3 plus 2, okay, on allotment, and 4 per share on call. So basically application is 3, allotment is 3 plus 2, and call is 4. So basically it's a 10 plus 2 share. All these shares were subscribed. Money due on all the shares were fully received except Mr. J holding 5,000 shares, who failed to pay the allotment money and the call money, and K holding 10,000 shares, who failed to pay the call money. Clear? All these 15,000 shares, lucky for you. All these 15,000 shares, so your calculation somewhere in the future becomes easy, were forfeited. All the shares were forfeited. Out of the forfeited shares, 10,000, not lucky. Out of the 10,000 shares, okay, out of the 15,000, 10,000 shares, including whole of J's shares, were subsequently reissued to L as fully paid up at a discount of 1 per share. Clear? Why we have picked this question? Because if shares are forfeited and reissued, you have to understand. And what they have asked in this question, two people's shares are forfeited. No, one person has paid premium, one person has not paid premium. Can you see? Share forfeiture, premium received, share forfeiture, premium not received, both are covered in this question itself. Okay. Now application stage, what is the entry? Bank account debited equity share application. Any problem here? No. Bank account debited equity share application, 2 lakh shares into 3. No issue. Now next entry, equity share application to equity share capital. There shouldn't be a problem till here. Next, after that, allotment due entry. Okay, 2 lakh into 5, correct? But face value is only 3. 2 lakh into 3, 2 lakh into 2. Is this clear? Securities premium. Now, is everybody paying me allotment money? No, one person is not paying. Who is that one person? J. J is not paying. Who is having 5,000 shares? He is not paying allotment also. He is not paying call also. So what amount I am going to get is only from my 195,000 shareholders. Correct? Yes. 195,000 into 5 rupees. You will get 9,75,000. They did not tell in the question open calls and arrears. So can you see there is no calls and arrears? Otherwise you would have added over here calls and arrears debited 25,000. But they haven't told, so no need to do it. So 2 equity share allotment 9,75,000. Is this clear? Yes. Next, what next? You're getting money. Okay, they have given the OR entry also for your understanding. I'm going with this only because just now we saw the calls and arrears situation. Next, call entry. Now call, will I ask money from 195 or full 2 lakh? Full 2 lakh because they are still not forfeited. They are still not forfeited. So this will be 2 lakh into 4. The call amount was 4 rupees. 2 lakh into 4. 8 lakhs is what you get. Is this clear? Next, equity share, bank account debited to equity share call. First of all, you had 2 lakh shares. In that J was 5,000, did not pay. Now with J, there is one more person joining, K. K also did not pay. 1,85,000 into 4. Are you getting 740? Yes. Can you see this? You can also put calls and arrears if you want to. Next, what happens? Forfeiting entry. Am I forfeiting all 15,000 shares? Yes. I am forfeiting. But am I reissuing? No. Okay, forfeiting I'll do 15,000 into 10. Face value was 10. Can you see securities premium is 5,000 into 2? Why? Why it is 5,000 into 2? If premium is received, don't worry. J is 5,000. K is 10,000. J has not paid allotment plus call. K has not paid only call. If he has not paid allotment plus call, in allotment premium is there. He has not paid that. 5,000 into 2 reversed. I see you people, other day we did this question, but we did it separately. So compound entry is there over here. 2 equity share allotment 5,000 into 5. Why equity share allotment I have put? Because J has not paid the allotment money. 5,000 into 5. Everybody has not paid the call money. 15,000 into 4. Share forfeiture. How am I getting share forfeiture? Understand this. J has paid application money. How much? 3. Correct? K has paid application 3 plus allotment also 3 because premium is received. So, yeah, premium is ignored. 5,000 into 3, 15,000, 10,000 into 6, 60,000. 60,000 plus 15,000, 75,000 is your share forfeiture. Obviously, you need calculations in the exam. ICA is giving suggested answer. Suggested. Only suggested. No? No, you can show in bracket calculation. Simple, no? You can show that, like how they have shown 5,000 into 5, 15,000 into 4 and all. For share forfeiture also, you can show the calculation in bracket, which they have not shown. Okay, next, after that, what happens? You're reissuing the share. Reissuing the share, all are not reissued, only 10,000. Reissued at what price? Discount of 1 means it is reissued at 9. So 10,000 into 9, 90,000. 1 rupee loss. Remove it from share forfeiture. Share forfeiture account debited or forfeited shares debited 10,000 to equity share capital 1 lakh. Always face value. Always face value. Forfeited shares to general reserve. How? Whose shares are not reissued? K. Now, J, you understand, J, 5,000 shares, J. Have we reissued everything of J? Everything of J. When we cancelled, what was the profit?
15,000.
3 rupees, yes, per share I'm taking. 3 rupees, correct? Minus, now when I'm reissuing, what is the loss? 1 rupee. So basically I have a 10,000 net profit here. K, cancelled 10,000, but I am not reissued. I have not reissued 10,000. I have reissued only 5,000 into. How much did we have profit that time? 3 plus 3, 6. 6 minus 1 rupee loss. That makes it 25,000. That means 35,000 is transferred to capital reserve. Clear? Balance sheet you need to have a look at. Okay, you know all the journal entries are there. You need to look at the balance sheet. Next. Okay, I'll show you one thing. We'll spend 5 minutes and I wanted you to watch it in the morning, but I forgot to play it. Just have a look at this. Once give me the remote. No, the TV remote, sorry. Thank you. Okay, just have a look at this.
बंदिया राह पे चल बंदिया बंदिया राह पे चल बंदिया रुक जा रे बंदिया ये रात जरा सी है बात समझ बंदिया कुछ देर ही बाकी है रख यकीन आँखों से बादल आज हट जाएगा चाँद तेरी आँखों में बंदिया चल के आएगा
क्या हुआ?
बंदिया राह पे चल बंदिया बंदिया राह पे चल बंदिया
तूने बहुत रख लिया है सबर हाँ अभी नहीं तो कभी नहीं सीने में चला ले आ ना आंख बंद कर जी बंदिया अब रुक जरा तू जा
सफर पर सुन ओ मुसाफिर, हो कहीं अगर तू रुका तो मंजिल आएगी ना फिर, कदम कदम.
What did you feel? You watched it before? No, you do not want to know that. The question I have to ask you is, do you want to feel that? Are you getting my point? The happiness is not on that day. The result on that day is a result of many days of sacrifice. If you're passing on that day, it's lot of days of sacrifice. You will see your friends going out and playing. You will see your friends going out and watching movies. You will see people getting married. Correct? And you will be invited, but you can't go. Or you shouldn't go. Because if people are getting married, they will get married even if you don't go. You're going for food only. Are you getting my point? So all those days of sacrifice will benefit. Overnight success in CA, never. I will write and give it to you. If somebody tells you, I studied 10 days and passed CA foundation, I will write and give it's not possible. If somebody tells you that I studied only like last 1 week for CA Inter and I cleared, tell, good for you. Because after passing, you can tell anything. If I tell you I studied only previous day of the exam and passed CA final exam, can you tell no? Because I passed. Correct? I can tell whatever bakwas I want. You are bound to believe it. Are you getting my point? But is it possible? Never. It's not possible. Some of you have come close, right? I had a CA final attempt where I got 197 and 195. You're feeling bad for CA foundation 189 and 170 and people who are coming close, clearing all subjects. I cleared all subjects of group 1, all 4, 197. I cleared all subjects of group 2, 195. Imagine the regret. One question, 8 marks. If I had done anywhere properly, I would have cleared. And I took 2 more attempts after that to clear. Are you getting my point? So you don't want that regret on the result day. For that, the process has to be correct. A lot of Chennai people are there. CSK fans, Dhoni, keeps telling, focus on the process, result will automatically happen. That's what he did his entire life. Have you seen him being happy on, other than winning World Cup and all, most matches, when they win, he'll just walk, pick a stump and just walk. If they lose, he will not pick a stump because the other team has to pick it. Okay, and he'll just walk. Winning or losing doesn't matter. Focus on the process. If you have done the process correctly, you will be happy on the result day. Are you getting my point? One of my students only told me. He said, sir, I want to prepare in such a way that from the exam day till the result day, I just want to enjoy life without even thinking about the result. Some of you have written before. When ICAI announces exam result date, what happens to you? You know the feeling? Correct? Some butterflies in the stomach, scary feeling. He said, I don't want that. I want to literally enjoy life. I'll prepare in such a way that from the exam day till the result day, I don't want to worry only. I'm sure I'm going to pass. It's just the marks that I have to see how much I'm going to get. And he prepared like that. And when there were 8 subjects in Inter, he got 680 something. What am I telling? 580 something. 680 would have been AIR 1. Okay, he got 580 something. He missed the rank by some 6-7 marks. Okay, 50th rank was 587. I'm not too sure about exact numbers, but he just missed the rank. So he did prepare, no? What he told. Now, can it be possible somebody targeting 600, where 400 is the passing mark, somebody targeting 600, can that person fail? Never. You are targeting 200. That's why you are on the border. If a person is preparing for 300, he or she might not get 300. But will they fail? Ultimate goal is to pass, right? If you want to score high, that is a secondary goal. That is for your own personal benefit. But if you have kept target higher, there is no way you can fail. Somebody targeting 300 will prepare for 300. You're preparing for 200. I tell this in regular class. You have paid the exam, you have paid the course fees, right? You got your books, right? Study. You paid the money for that. Do it. You will pay the exam fees, right? They will give you the exam question paper. You go and write it. Do it. That's what you paid the money for. What did you not pay the money for? For setting the paper. Somebody will set, so don't do your predictions. Somebody will set the paper. For them, they are paid. Don't do your predictions. When you're studying, don't tell that accounts I have to score 55, law 45, something else 50, this 50. Are you paid money to do the correction? No. So you don't do that. After the exam, here 6 marks, here 4 marks, here 2 marks, here 1 mark. Are you paid the money to do that? No, you have paid the money to study for the next exam. So after the exam, just go and study. That's it. That is it. From that video, what you have to understand is, if you have to be happy on the result day, you have to sacrifice. This is not a course without sacrifice, guys. It is not. But you're like, at this age, should I sacrifice so much? What is this? Trust me, it will all be worth it. It will all be worth it. All the functions you missed, all the birthday parties you missed, all the friends' calls that you ignored will all be worth it. Everybody will remember you after you clear. Trust me, in CA, I mean, some of you have failed, right? Before. You know, when you fail, it's a very lonely journey. It's a very lonely journey. Nobody wants to talk to you that day. Everybody will be congratulating the people who cleared. Even if people are calling you and telling, I'm sorry, you failed. You know, it's still a very lonely journey. Whatever they tell doesn't matter. You'll still be depressed only. You'll still be sad. Are you getting my point? So you have to come out of that. The day you pass, you see, everybody will be with you. Everybody will call and wish. They'll be with you. Are you getting my point? The day I cleared CA final, I did not see any messages. I had more than 300 because I had already started teaching. So some of my students only were messaging me. I had more than 300. I did not open one single WhatsApp message. Because if I open, I have to reply to everyone. I'm like, I just wanted to feel it. I just wanted to feel the success. I'll reply to people later. People who called me and wished, I answered their calls and I spoke to them. But I didn't spend time on replying to everyone. That night, maybe after 12 o'clock, 1 o'clock, I sat and replied to everyone. Are you getting my point? So, I have failed CA final attempts before. I didn't get 300 messages. I got 2, 3. Those 2, 3 people were there with me on the result day when I cleared. So what am I trying to tell you? You know it. If you fail, it's a very lonely journey. People will not want, even parents will like talk to you, but they will also be sad. Are you getting my point? They will also have that self-doubt in their eyes. Because 1,000 people would have told them also, no, CA is difficult. So do you want to be happy on the result day? Study. That's it. Trust me, for Jan attempt, still there are enough number of days. 42 is huge amount of time for CA foundation exams. If you don't waste time. If you don't waste time, that's it. Simple. It's very simple. On the CA inter exam, next day is law exam. Previous day, we have 1 day gap. That day, my first cousin is getting married. My first cousin is getting married. My entire family is in that wedding. They also told me, it's a gap day, no? Exam day means we would have not called you. You have a gap that day. Why don't you come and attend the wedding? I'm like, no. Okay, I'm like, no. After the accounts exam, I went straight to the wedding house. Because on the previous side of the wedding also, there will be some functions and all. On the exam day, you can't study much. I mean, I couldn't study much on the exam day. So I went straight to the wedding house. I attended some functions there. Next day was the wedding. I did not even step out of the house. After doing all that, I got 41 in law. If I would have gone for 2 hours, maybe 6 months later, when their wedding fights would have just started, I would have been writing the next attempt. Are you getting my point? 6 months later, first 6 months, happy. Okay, after that, when their wedding fights would have been started, that time I would be writing the next attempt. And because of that 41, I cleared. Because all the other subjects, I got good marks in that attempt. So, was it worth it? What would I do going for that wedding? Yes, I missed one of the important cousin's wedding. But I would have had food only. No? I would have had food only, no. Spoken to some people. And when you go to these functions, when you're writing CA exams, they'll ask you what you're doing. You'll tell CA. They'll ask you which college. What to explain to them? They'll ask which college. Then you have to explain to them, boss, CA is not done in college. It is like this, like full concept you have to explain to them. Okay. Then they'll ask you how many more years. Other than ICA, no one knows. Correct. How many more years other than ICA, no one knows. Are you getting my point? Okay. Focus. It is possible. Focus. If you want the joy, you have to work hard. You see Virat Kohli raising his bat after scoring the 100. Do you know Virat Kohli has not eaten junk food for 8 years? Are you getting my point? Literally, me and one more faculty from ArivuPro, we had gone when we were in Chennai to watch match, India versus Bangladesh. Chennai test match was going on. We were watching. Okay, we were watching. We were feeling thirsty because it is hot and humid in Chennai. So they were not supplying water. They were supplying glasses of Coke, Pepsi. We bought 2 glasses. We are drinking. And Virat Kohli just came to bat. And we are like, what fitness this guy has maintained, right? So many years he has not gotten injured. And what are we having? Coke. Same thing. People who pass, you will watch them. Okay, if you want to, you have to work hard. Simple. You only see Virat Kohli, you will think, 80, 100, so easy. Scoring hundreds. But the efforts, can you have a boring life? Then you will get success. Can you have a boring life? You will get success. Virat Kohli has a boring life. What does he do? Get up at the same time every day. Work out for a particular amount of time every day. Eat tasteless food every day. He has told, I have stopped eating food for taste. I eat only what is required for my body. I have stopped eating food for taste. Then sleep at the same time early every day. So for you, obviously you are not going to do workout and eat tasteless food. You can eat little junk. Okay, but what are you going to do? Get up at the same time, study, sleep at the same time, study, put in those hard yards, 8 hours, 7 hours, whatever it is, study. If you do the boring things, you will get success. If you do the fun part, you will not get success. You have 7 days in the week. If you want to enjoy 7 days, it's not possible to pass CA exams at least. You can do BCom. If you don't go to college also, you'll pass. They'll make you pass. What will you do with BCom? You decide for yourself. Are you getting my point? It is tough, I understand. Okay, but you have to work hard. No other option. Yes, let's go further. After all the gyan, let's continue. Question number 39. Actually, I don't believe in any motivation. I feel there is nothing called as motivation. You got motivated now for 2 minutes. After 2 minutes, at least one person will be yawning. Are you getting my point? There is actually no motivation. It is self-motivation. Find a reason why you are doing CA. Whenever you feel demotivated, think of that reason. It can be money. Some people might be like, I just want to earn money. That's it. Okay, that's the motivation. Some people are like, I want to make my parents proud. Put your parents in your phone wallpaper. Whenever you feel demotivated, look at them. That is a motivation. That's a great motivation. Some people are like, I don't want to make anybody proud. I just want to make myself proud. People think I'm a loser. I want to make myself proud. My biggest motivation was that. In my family, I have a lot of cousins. I have told this story in regular class. A lot of cousins are there. Because earlier days, they didn't have anything else to do. So my grandparents were fit. Okay, so a lot of cousins I have, because a lot of uncles and aunts I have, they all have 1, 1, 2, 2 kids. So a lot of cousins. Everybody is engineer or doctor. I was the first person to take commerce. First person to take commerce. So now, I just have to prove myself. Every time I went to a function, they gave no shits at me. Because every other cousin was doing engineering. And they were all seen as like, wow. Are you getting my point? I was the only person commerce student. They didn't care. Like commerce. Okay. So I had to prove. On the demonetization day, all of them called me. Remember, Modi came on in 2016 somewhere one day, sudden announcement at 8 o'clock. Correct? The relatives who didn't even look at my face or didn't even have my number, they called me on that day. Because they all had black money, obviously. Okay, so you find your self-motivation point and go for it. Okay, if you have had a bad breakup, also can be a motivation. I swear, I told you. I mean, I've told you this one story of my friend, right? On the day of his exam, his girlfriend for many years was getting married. Previous day, all his family knew that person and they all had gone for the function. He cleared that exam. After that, he became a CA. I'm just telling you. Yes. Question number 39. Chirag, shall we continue? Yes, question number 39, focus. A Limited issued 20,000 equity shares at 10 each at a premium of 10 per share, payable 2 on application, 4 an allotment including premium. How much is the premium? 10%. So it is 1 rupee. So 3 plus 1 allotment, 2 rupees application, 2 on first call, 2 plus 3, 5, 5 plus 2, 7. First call will be another 3 rupees. So total amount should be 10. 10 plus 1. 1 is the premium. Clear? Now, all the shares were fully subscribed. No under subscription, no over subscription, nothing. Mr. M, who held 2,000 shares, paid full remaining amount on first call itself. First call itself, he has paid the entire amount. This is called as calls in advance. Final call, which was made after 4 months from the first call, was fully paid except a shareholder having 200 shares. Final call was made, everybody paid except one person having 200 shares and one another shareholder having 100 shares. Calls in arrears. They paid their due after 3 months and 4 months respectively. Clear? Along with interest on calls in arrears. Interest on calls in arrears maximum is 10%. Company also paid interest on calls in advance to M. Maximum is 12%. The company maintains calls in arrears and calls in advance account journal entries. Exact same question is there in the study material. Exact same question is there in the study material. Now what you have to do, understand this. Journal entries you have to pass. We have discussed the journal entries. Now understand this. This person paid money early, right? Paid full remaining amount on first call itself. Final call amount is how much? 3 rupees. He paid that also. Final call was made 4 months later. So this person will get interest for 4 months. He'll get interest for 4 months. This person paid 3 months later. What did he pay 3 months later? The final call money. So interest is for 3 months. This person paid 4 months later. So the interest is for 4 months. Are you following this? Okay. Just wanted to have this problem in front because exact question is there in the study material. But what you have to understand, that point, that diagram which we had discussed that time. If it is calls in arrears, from the day you are supposed to make payment till the day you actually paid interest. That is 3 months here and 4 months here. If it is calls in advance, you paid early from that day till the date you are supposed to pay interest. Here it is 4 months. After 4 months, the first call was made. After first call, 4 months later, final call was made. Is it clear? Yes. Let's go into 40. December 2021. We'll see what is the bouncer over here. Yes, this is important question. This will change that forfeiture concept only, where you tell no face value is debited. December 2021. Called up value, yes. Yes, here we go. Now, understand this. This question we will discuss because it's important. Fashion Garments Limited invited applications issuing 10,000 equity shares of 10 each. Correct? Application 1, allotment 2, first call 3, final call 4. Totals up to 10. Totals up to 10. No premium, nothing. Okay. Issue was fully subscribed. No under subscription, no over subscription, nothing. Ram, to whom 100 shares were allotted, failed to pay the allotment money and his shares were forfeited immediately. What he did not pay? Allotment. Immediately his shares are forfeited. And after the allotment, Sham, to whom 150 shares were allotted, failed to pay the first call. Did not pay the first call. His shares were forfeited after first call. Immediately cancelled. Not waiting till the end of the story. Afterwards, second and final call was made. Mohan, to whom 50 shares. Yes, Mohan, to whom 50 shares were allotted, failed to pay the second and final call, his shares were also forfeited. All the shares are reissued at 9 per share. Can you see we are not waiting till the end of the story? Who are the three people who are not paying money? Ram, 150 shares, right? Sorry, 100 shares. Sham, 150 shares. And Mohan, 50 shares. Ram did not pay what? Allotment, cancelled. This fellow did not pay what? First call, cancelled. This fellow did not pay what? Final call, second and final call, cancelled. Clear? Now, understand this. How many shares? 10,000. Application entry. Application entry. Bank account debited equity share application. 10,000 into 1 rupee was the application amount. Equity share application to equity share capital sorted. Allotment due entry. 10,000 into 2. Allotment was 2. Can you see it? 1, 2, 3, 4 it is. Allotment was 2. Did everybody pay? No. Who did not pay? Ram, who had 100 shares. So can you see over here? It's only 9,800 into 2. Sorry, 9,900 into 2. Ram did not pay. How did I get 9,900? 10,000 minus 100 shares of Ram. 9,900 into 2. You can pass even with calls and areas if you want. Clear? Next, equity share. Forfeiture immediately. We are not going to next call. Immediate forfeiture. What is the value? 100 into 3. Why 100 into 3? Application 1 rupee, allotment 2 rupees. What did he pay us? Only application. So 100 into 1. What did he not pay us? Allotment. 100 into 2. Clear? Ram is sent out. Then we go into first call. First call will not be for 10,000 shares. First call will be for 9,900 shares. Because already for feature, 9,900 into first call 3, 29,700. Clear? Is everybody paying you? No. Who is not paying? Sham. Sham is not paying, who has 150 shares. So if you see this, it will be 9,900 minus 150 into 3. 29250. You are getting this money? Clear? Now what will you do? Will you wait? Immediately cancel Sham shares. Sham has paid till now 150. Okay. Application 1, allotment 2 and call 3. This is the amount called up. 6 rupees. What has he paid? 150 into 3 rupees. What is 3? Application 1, allotment 2. What did he not pay? First call. 150 into 3. Is it clear? Yes. Next, equity share, second and final call account debited. Now when we go to second and final call, do we have Sham with us? No, it's only 9,750 into 4. Is it 39,000? Yes. Did everybody pay the final call amount? No. Mohan did not pay, who had 50 shares. So it is going to be bank account debited 9,700 into 4. Why 9,750 shares of Mohan gone? He is not paying. 38,800. Are we cancelling Mohan shares now? Yes. 50 into 10. Finally, we are fully paid up. When we reached Mohan fully paid up, 50 into 10. What has Mohan paid? Application, allotment and first call. 6. So 50 into 6. 300. What has Mohan not paid? Final call. 50 into 4. Is it clear? Yes. Finally, you have the reissue entry. You are reissuing everything. How many shares? 100 of Ram, 150 of Sham and 50 of Mohan. So 300 shares you are reissuing. At what price? 9 rupees. It's given in the question. It's reissued as 9 fully paid up. If you reissue at 9, what happens? 1 rupee is loss, right? 1 rupee is loss. So 300 into 1. 300 into 1. Now, I know here you can just take total and calculate what is the amount of capital reserve, but I will do it share wise, because if they tell all shares are not reissued, then you have to do share price wise. So Ram, how many shares cancelled? 100 shares. When we cancelled, he had paid only application. So that was the profit. Now we have 1 minus 1, 0. Correct? Sham, 150 shares. When we had cancelled his shares, he had paid us application and allotment, 3 rupees profit. Now 1 rupee loss, 150 into 2, 300. Then we have Mohan. Mohan, how many shares? 50 shares into, he had paid 6 rupees. 6 minus 1, 5. 50 into 5, 250. So 550 rupees I should transfer to capital reserve. Is this clear? Important question, just because it is stage wise forfeiture. All the questions, it is end of the story for future. Yes, that should be your question. Then next question, we will just have a look at it. It's simple. Okay. Now see this question. 25,000 equity shares are issued at a premium of 25 per share. Application 50, allotment 50. Oh, sorry, this is mistake. Allotment 50, including premium. So is it 25 plus 25? Allotment is 25 plus 25? Yes. On final call, 25. Total price becomes 125. Applications were issued for 29,000 shares. Did we get more? Are we doing pro rata? We don't know. Letter of regret were issued to applications of 4,000 shares and shares were allotted for others. Letter of regret means what? We wrote one letter. Sorry, we couldn't issue shares to you. So that means for 4,000 shares, reject and refund. Reject and refund. Okay, Mr. A, holder of 150 shares, failed to pay the allotment and con money. The shares were forfeited. Show the journal entries. Regular question it is. Shouldn't be a problem. Are you getting my point? Yes. Now that is it with the share issue. Next is bonus. Debenture issue. There isn't a question in the last few years. Okay, but with new scheme, debenture issue also you have to study because they can merge it with redemption and ask one question. Okay. Now, next, let's go into the concepts. Issue of debentures. Issue of debentures. Quickly, we'll go through that. Then we'll go into bonus. Then we'll go into redemption of preference shares. Then we'll go into redemption of debentures. Clear? Now, issue of debentures. Issue of debentures. Tell me, what is issue of debentures? What is debenture? Debt instrument. It's a debt instrument. I am issuing some instrument and I'm getting loan from somebody. If I'm issuing share, I am getting money and that person becomes owner of the company. Clear? Company borrowing funds from debenture holders. Liability in the books. Long-term borrowing. Clear? Issue of debenture. Here, you have different situations. What I'm trying to tell you is current profit should always be recorded. Current loss should always be recorded. What is current profit? Debenture is issued at premium. What is current loss? Debenture is issued at discount. Both should be recorded. If future profit, that means future debenture will be redeemed at discount. Ignore, because we follow conservatism. Future losses only are recorded. Future profits are not recorded. Future loss, that means debenture is redeemed at premium. You are paying higher amount. Record it today itself. Is this clear? Record it today itself. Now issue. First one. Debenture is issued at par, redeemed at par. Is there any problem? No. What will you do? Bank account debited to debenture application and allotment account. Then debenture application and allotment to debenture. Clear? Issued at par, redeemable at par. Today also no profit, future also no profit. Debentures issued at par, redeemable at discount. Same entry. Why? Redeemable at discount. No, future profit anyways you are ignoring. Same entry will pass. Third, debenture issued at par, redeemable at premium. In future, I have to pay 10 rupees extra. Do you agree? So now can you see this entry? Debenture application allotment account debited. Loss on issue of debentures debited to premium on redemption of debentures. This will be inserted. This will be inserted. That has to be added. Are you getting my point? That has to be added. Whenever debentures are redeemable at premium, this entry will get inserted. Loss on issue of debentures to premium on redemption of debentures. Clear? Debenture issued at premium. Issued at premium means today profit or loss. Today profit or loss. Profit. I'm getting money. Issued at premium. So see over here, 10 rupees is transferred to securities premium. Issued at premium, redeemable at discount. Nothing to worry. Same entry will be there. Issued at premium, redeemable at premium. Today profit, future loss. 10 rupees is transferred to securities premium. But for that 5 rupees over here, no, future loss. Again, loss on issue of debentures to premium on redemption of debentures. Is this clear? Whenever it is redeemable at a premium, that entry loss on issue of debentures to premium on redemption of debentures will be inserted. Is this clear? Now, 7. Debentures issued at discount, 95. Redeemable at 100. Issued at discount. Today loss, right? See, loss is debited to discount on issue of debentures. 5 rupees. Loss is debited. In future, if it is redeemable at 98, good, but no entry today. I mean, no extra entry today. Same thing you will pass. In future, it is redeemable at 103. That means 3 rupees extra I have to pay. Loss on issue to premium on redemption. Can you see 3? Is this clear? This is Yeah, we can club these two and make it 8. Discount and loss on issue, you can club and make it 8, no issues. Because for both of those, treatment is same. It will be transferred to P&L over the life of the debenture. Yes, debenture issued as collateral security. What is this collateral security? Bank gave you a loan. Okay, you issued debentures to bank as collateral securities. Okay, 2 treatments are there. There is no way they are going to ask question from this, but it can be a small part of some other question. So there are only 2 treatments. What is this? One is no entry. No entry. Okay, because I did not issue debenture today. I just told I will issue debenture if you don't pay the loan. If you don't pay the loan, debenture gets activated. Till then, no debenture only. Clear? No entry. Mention in as a note in the balance sheet. Where you write loan, no, just write debenture. A loan is secured by debenture issued as collateral security. Entry you want to pass. You want to pass. Dummy entry. Debenture suspense to debentures. Dummy entry. Debenture suspense to debentures. Because you want to bring debenture into the books, which is not even existing. So debit has to be there. No, debit will become suspense. If you bring only credit, debit will be suspense. Is it clear? 2 marks possible. Loan will exist in the balance sheet. As long as you're... How will you compensate with the... Loan will still be there. Loan entry, what is it? Bank account debited to loan account. Loan will still be there. As long as you're paying, this is suspense only. If you don't pay, then bank will come and sit as debenture holder in your books. Clear? Yes. Discount on issue of debentures. One more small concept. Discount on issue of debentures. What you are going to do? Transfer it to P&L. 2 questions are there. ICU batch people, I told you. 2 questions are there. Okay. Now, what is it? End of every year, equally you will transfer. If the debenture is redeemable at the end of the life. If debenture is redeemable in installments in ratio, there is a question 5:4:3:2:1. You will transfer it to P&L. Basically, debenture loss on issue, discount on issue is a loss. So you will pass the entry P&L account debited to discount or loss on issue. Clear? How you are going to transfer depends on is it redeemable in lump sum or is it redeemable in installments. Interest on debentures. Here there is a concept called as TDS. What is TDS? Tax deducted at source. When company is paying interest to the debenture holder, they will pay only 90% and 10% they will cut and they will not put it into their pocket. They will pay that 10% to the government as tax in whose name? This person's name. So basically company is paying debenture holders tax to government. So from company's pocket, 100 rupees only will go. But 90 rupees into the pocket of the debenture holder, 10 rupees into the pocket of government in the name of the debenture holder. Clear? So due entry will be interest on debenture debited. Why? It is expense. To debenture holder 90%, to TDS payable 10%. Clear? When you pay, what happens? Debenture holder debited, TDS payable debited, to bank. Done. Is this clear? Small concept, 4 marks you can expect, and you can also expect it to be added to your redemption of debenture concept. Same chain of events it is. Now, bonus issue. Very easy concept. Very easy. If they ask, no, you're lucky. They're asking also. Yes. Now, bonus issue, understand this. Shares issued to existing shareholders for no consideration. That means it is issued for free. Bonus word only, you can understand it's for free. Okay. Main reason is what? You have extra profit. Okay. Main reason is you have extra profit. You cannot have a situation, company is issuing bonus. You don't know, there is no profit. You know why? You saw profit there and you're like, what to do with it now? Give bonus. So can you have a situation you are starting to pass entries for bonus? There is no money there. There is no profit there. Not possible because company sees the profit and then decides to give bonus. So excessive profit is there. Distribute in cash as dividend, or you can convert it into shares and give it as bonus. When you have extra profit, give money only. That is called as distribution of dividend. Otherwise, you convert and give it in the form of bonus. In bonus, you have 2 things. Bonus issue, bonus call. One question is there in your study material of bonus call. What is bonus call? What is bonus issue? I am giving you extra shares. Correct? Bonus call is, it is partly paid up share, making it fully paid up by putting money from company's pocket. Clear? So you won't get any extra share, but you'll get extra benefit for sure. You'll not get extra share, but you'll get extra benefit for sure because you'll have 8 rupees only you had paid. Now you have a 10 rupee share. You had paid only 8 rupees. Now you have a 10 rupee share. Clear? Bonus issue is shares issued to existing shareholders for no consideration. Bonus call is converting partly paid up shares into fully paid up shares without consideration. Is this clear? Are you following this? Yes. Only if shares are fully paid up, you can issue bonus shares. Boss, you didn't pay your money only fully. How will I give you extra shares? You did not fulfill your commitment. I will not do anything. Clear? So bonus shares possible only if they are fully paid up. Now, journal entry for bonus issue. Due entry. Now, understand this. Whenever you're passing bonus due entry, only 2 entries are there by the way, bonus issue. 2 entries. Whenever you're passing bonus issue entry, you have to take money from profit, no? When you're taking money, there is an order of utilization. First preference will always be CR, Capital Redemption Reserve. In redemption of preference share, you yourself will create CR, Capital Redemption Reserve. Clear? Second preference will be securities premium. Then if you want, you will go to general reserve and P&L. General reserve third, fourth P&L. Clear? Why?
Free
Free reserve. Why CRR first? Because CRR can be used for only one reason, that is for issue of bonus share. So today if you don't use it, you will not get an opportunity in the near future. Securities premium has only 5 uses. So one of the uses is issuing bonus share. So when you get a use, utilize it. General reserve and P&L are called as free reserves. Free reserves means it can be used for anything, including distribution of dividend. That is why last preference you keep general reserve and P&L. Is it clear? So CRR debited, securities premium debited, general reserve debited, P&L debited, to bonus to equity shareholders. So you are taking money and keeping it aside. Next, issue entry. Bonus to equity shareholders debited to equity share capital. Bonus to equity shareholders debited to equity share capital. Is this clear? So bonus you have removed and you have given them shares. What if it is bonus call? First you have to make the final call. Final call entry, equity share final call to equity share capital. Usually what is the next entry? Bank account debited to final call. Now no bank account. Why? We are putting money from our pocket only. So next entry will be general reserve or P&L to bonus to equity shareholders. Why general reserve or P&L? Why I didn't use CRR here and securities premium here? CRR can be used only for issue of bonus shares. Bonus call you can't use. Securities premium can be used only for issue of bonus shares. For bonus call you can't use. Are you getting my point? That is why companies are. You cannot use. Now, adjusting. Bonus you adjust with the final call amount. Bonus to equity shareholders debited to equity share final call. Done. Clear? Right issue. What is right issue? Shares issued to existing shareholders for consideration. Are you getting my point? Market price is 100. I don't want other people to come in. I will issue shares to existing shareholders only and tell, do you want to buy? If I tell 100, they will think about it because they can buy it from market. I will tell, I will give it to you at 70. Now you will think about it. Are you getting my point? This is right issue. We don't want new people to come in because then there will be a problem in voting. There will be a problem with the mindset also. So we don't want new people to come in, but we want money to expand the company. So we offer shares to the existing shareholders only for a lesser value. This is called as right issue. If you're passing entry, no, nothing. Bank account debited to equity share capital to securities premium if you are issuing it at higher value. Just issue entry, that's all. Okay. Value of right. One formula is there. 1 to 2 marks, small questions are there. Come right price per share minus X right price per share. Okay, you have to have a look at this. X right price per share means what? Price after right issue. Come right price per share means what? Price before right issue. When you get the difference, that is called as value of right. How to calculate X right price per share? Formula looks big, but it's basically before plus after divided by after. Before plus after divided by after. What is this? Number of shares before right issue into price per share before right issue. Did you get the value before? Plus right shares into right issue price. Did you get the after value? Yes. Total shares after right issue. So value before plus value from right or value after divided by after. Two small questions are there in right issue chapter or bonus issue chapter where this X right price per share and the value of right is also discussed. Okay, these are the formulas. You have to remember it. Nothing. It is just replacement of values. Clear? Substitution of values. Next, we'll go into redemption of preference share. But before that, we will have a look at the bonus issue problems. 1, 2. I think 2 problems should be more than sufficient to understand bonus. 42nd question. Study material. See, 25 marks is the weightage. Not for bonus, but for entire company accounts. If they give 25 marks on bonus, where is bonus issue?
So it's very cool. Can you increase?
It's very cold, yeah. Okay. I think I forgot to download the study material for bonus, but we can manage without the study material only for bonus. Yes. Now, question number 42. Question number 42. Following items appear in the trial balance of Saral Limited. Okay. Can you see the items? 4,500 equity shares of 100 each. Securities premium collected in cash. Why did they tell collected in cash? If securities premium is not collected in cash, you can't use it for bonus issue. But they have told collected in cash, and every question they will tell collected in cash because they want you to use it. Now, capital redemption reserve, general reserve, P&L. All these items are there. Can you see company decided to issue equity shares to bonus shares at the rate of 1 share for every 3 shares held. How many shares do we have right now? 4,500. 4,500 into 1 share for every 3 shares. That means we are going to issue 1,500 shares into 100 rupees is the face value. That means I require 1,50,000. When I require 1,50,000, first I will take money from CRR. So CRR will be debited for 70,000. Then I will take money from securities premium. So securities premium will be debited for 40,000. Then I require still 40,000. I have money in general reserve. General reserve debited for 40,000 to bonus to equity share holders 1,50,000. Next, what happens? Bonus to equity shareholders account debited to equity share capital done. End of story. Company decided that there should be minimum reduction in free reserves. Anyways, it is minimum reduction only because first we use securities premium and CRR. Clear? Next, 43rd question. SM practice question number 2. Can you see balance sheet is only given to us? First part, share capital. This is authorized. This is authorized capital. Clear? Then we have issued and subscribed capital. How many equity shares do we have? 10 crore equity shares of 10 each. Fully paid up? If it is it fully paid up? No. Can you see here? Called up and paid up. 10 crore equity shares of 10 each. 8 rupees per share paid up. Clear? Now, reserves and surplus, you can see CRR is there, securities premium is there, general reserve is there, P&L is also there. Now, on 2nd April, 1st April, they spared it for Fool's Day. Okay. 2nd April, the company made final call on equity shares at 2 per share. How many shares? 10 crore. 10 into 2, if I'm taking it in crores, it will be 200. Final call entry, equity share, final call account debited to equity share capital. Clear? See over here. 10 crore shares, 2 per share. Clear? Yes. Then after that, what happens? The entire money was received in April, in the month of April. What is entry? Bank account debited to equity share, final call. Now, are the shares fully paid up? Yes. Can you issue bonus? Yes. Now, on 1st June, the company decided to issue equity shares, shareholders bonus at the rate of 2 shares for every 5 shares held. 2 shares for every 5 shares held. So 10 into 2 by 5 will be 4. Correct? You're going to issue 4 crore shares. 10 rupees is the face value. 4 into 10, you need 40. Is that right? You need 40 crores. Don't get confused. These people have written in lakhs. 40 crores. These people have written in lakhs. 4 crores is I have written in crores actually. 4 crore shares into 10, it becomes 40 crores. 40 crores is basically 4,000 lakhs. 4,000 lakhs I need. What will I do? First I'll take from CRR. CRR is 1485. Then I'll take from securities premium, that is 2,000. Still I have only 3485. Still I need 515. 515 from where I will take? General reserve. Sufficient balance is there. So CRR account debited, securities premium debited, general reserve debited, 2 bonus to equity shareholders. Next entry, bonus to equity shareholders to equity share capital. That should be it. Okay, easy questions. If they are asked, you are going to put that, you should put that marks into your pocket very soon. Okay, now, the last to last attempt they asked, but they merged bonus and forfeiture in one question. So what? So what? Pass entry for bonus, pass entry for forfeiture. If forfeiture is first, when you are passing bonus entry, what is gone, only leftover you will calculate bonus on. If bonus is first, you will not again calculate for forfeiture because partly paid up shares you cannot give bonus. Are you getting my point? Troublesome shares bonus not possible only. Is this clear? Yes, that should be it. Next we go into redemption of preference shares. Redemption of preference shares. We are taking a break only after we finish company accounts. So don't ask me break. Only little is there in company accounts. Redemption of preference share, redemption of debentures, both easy concepts. Okay, redemption of preference share. We'll just quickly discuss. How can we redeem preference shares? From existing balance, if you have profit. Okay, from profits basically, or issue of equity shares, or sale of investments. Now here only concept that you have to be very careful is the concept called as CRR. CRR. Very simple it is, but you have to worry about it. Journal entry. What is redemption of preference share? Paying the money back to preference shareholder. Paying the money back to preference shareholder is called as redemption of preference share. What is the due entry? If the redemption is at par, preference shares are going, preference share capital debited. You have to pay money to whom? Preference shareholder, to preference shareholder account. Clear? If it is redemption at premium, preference share capital account debited, only face value, because when you issued shares, you put only face value. When you are removing, you can remove only face value. So preference share capital account debited only for face value. Are you paying extra? Yes. Premium on redemption of preference shares debited because it is loss to preference shareholders. Clear? Payment entry. You have to pay to whom? Preference shareholders. To bank. Money went. Clear? Next, if premium is a loss, it should go to P&L. P&L account debited to premium or redemption. Clear? Next, CRR creation. How much CRR you have to create? Very, very important. How much CRR you have to create? Face value of preference share that went minus face value of equity share that came. Difference if it is there, you create CRR. See over here. Face value of preference shares redeemed minus face value of equity shares issued. That will create CRR. Is it clear? That will create CRR. What is the entry? You are creating CRR. So you are taking money from free reserve and putting it into CRR. P&L or general reserve account debited to CRR. Clear? And CRR can be used, examples I am not covering now. CRR can be used only for issue of bonus shares. Only for issue of bonus shares. That is why in bonus issue, first we use CRR. First we use CRR. Clear? Then we move into redemption of debentures. Can we finish redemption of debentures also together? Then we can see the problems. Why do we create CRR? Okay. Usually for capital redemption, basically company wants to maintain share capital at the same value. So if share capital goes out, you compensate the shareholders by creating something called as CRR. This CRR can be used for only one thing. If you use that one thing for that one thing, CRR goes and you are back in share capital. Money goes back into share capital. So we don't want the money, we don't want the share capital to reduce. That is the reason. Section comes out of Companies Act only. Okay. Now, in detailed discussion we actually do in regular class. I can't do it now. With the examples, we draw the balance sheet and show why, what happens. Okay, redemption of debentures. What is redemption of debentures? Paying the money back to the debenture holders. Remember, debenture holders are also there. Loan people. Okay, now, how can you pay money to them? In lump sum. In lump sum means what? 5 years got over, paid entire amount. In installments. In installment means what? During the 5 years, paying part by part. Conversion means what? 5 years got over. Now you convert the debentures into shares, equity shares. Purchase from open market, I have written in blue. Why it is not there in your syllabus? Purchase from open market. Company can go to market and purchase their own shares. It is written in theory, but it's not there in syllabus, because to purchase debentures from open market, you have to study accounting standard 13, which is there in Inter. Is this clear? Yes. Not only accounting standard 13, all the accounting standards are there in Inter. Accounting. Debentures are redeemed in lump sum. Debentures are redeemed in lump sum at par. Debentures are going debenture account debited to debenture holder. Premium, debenture account debited, premium on redemption debited to debenture holder. You are making payment, debenture holder to bank. Transfer of premium, P&L to premium on redemption. Same thing what is there in preferential redemption. But only thing is, here there is no CRR. CRR is when there is a reduction in capital. Debenture going will not reduce the capital. Debenture is a loan. Clear? Now conversion, what will be the entry? Debentures to debenture holder. Okay. Then what will happen? Or debentures, premium on redemption of debentures to debenture holders, because if it is converted at a premium, then you are giving issue of equity shares. Debenture holders are gone. What are you giving them? No money to equity share capital to securities premium. Is this clear? Yes. Two important concepts, DRR and DRR investment.
Okay, you issued debentures.
No, you issued shares at a premium. See, conversion means debentures are getting converted into shares, right? So I am issuing shares, 10 rupee share, I am issuing it at 12 rupees. Market value is 12. So 2 rupees will go into securities premium. Now, DRR is important concept. If you see debenture question, no, there only they will tell other than unlisted company, other than AIFI, banking company, NBFC, HFC. Okay, now see, applicability. Listed company is not applicable. DRR concept only is not applicable. Unlisted companies applicable. But in unlisted companies, banking company, NBFC, HFC, AIFI, not applicable. Why? These are all banking related companies. RBI will keep an eye on them, or central government only will keep an eye on them. That is why DRR concept is not applicable. Is this clear? That is why in your questions, in the question itself in bracket, they are telling other than these guys. Clear? Rule is what? Minimum 10% of outstanding debenture must be in DRR. 10% of outstanding debenture. If I have 100 rupee debenture, 10 rupees I should keep it aside. Now, why are we keeping it aside? Because we are showing that we have intention to pay the money back. Why should I not keep 100 rupees aside? Then why did I borrow the loan? If I take loan of 100 and keep 100 rupees aside, I have to pay this money back. Then why did I even take the loan? Are you getting my point? So 10% is the rate. So how will you create DRR? Take money from your free reserves and put it to DRR. Then after redemption, if DRR is still there, then transfer it to general reserve. That is it. Transfer it to general reserve. So first you have to, whenever a debenture redemption question starts, first you have to see, is it 10%? If it is not 10%, you have to make it 10%. You have to make it reach 10%. Then after redemption entries, last day, you transfer it to general reserve. Clear? DRR investment. DRR investment. The rule is same. Companies are same, but it is 15%. But what 15%? 15% of debentures maturing during the year must be invested in safe investment by 30th April. 15% of the debentures maturing during the year should be invested. By what? 30th April. Now, company year is starting today. 1st April, year is starting. When the year starts, I am saying, okay, this year, who and all debenture holders I am supposed to make payment to? 100 rupees I am supposed to make payment. End of the year. So, what I will do? 15 rupees I will invest now only. That is 15 rupees I am keeping it aside. Investing the money. So that money is there. Why can't I keep 85, all 100? If I keep all 100, let me make payment only. No. If I am keeping 100 rupees only and aside, then 100 rupees I can make the payment only. No. So DRR investment rule, 15% must be invested in the year of payment. Safe investment means what? Don't put it in the stock market, and if stock market crashes, your money is gone. Put it in government bonds, FD, so that money remains. Return might not be high, but money remains. Clear? By 30th April. Investment to make, what is the entry? Investment you are making. Debenture investment to bank. DRR investment to bank. When you are planning to redeem, what will you do? You will sell the investment. That time bank to DRR investment. Profit or loss, if any, which is very rare, will go to P&L. These are safe investments. It will not fluctuate. So you will not have profit or loss. But if it's there, it will go to P&L. Is it clear? Yes, that's it. That is it. Now let's go into questions. Question number 44. Okay, question number 44. You are recognizing the questions as soon as it is put. You're recognizing the questions as soon as it is put. I can see the... No, that is the level we need to reach. But as soon as I put the question, is just recognizing the question. This one. Yes. Balance sheet of XYZ Limited. See, sometimes no. The more we solve, we will remember the partners' names also. We'll remember partners' names also. We are like in that question. Oh, Ram and Rahim were partners. Karim came later. Correct? Yes. No, that is a good thing. Now, question number 44. Balance sheet of XYZ Limited. SM illustration 9. This one I just want to quickly discuss with you. Where are you? Illustration 9. Yes, here you are. Now, understand this. 50,000, 8% debentures of 100 each, 70 paid up. That means it is partly paid up. It is partly paid up. If it is partly paid up, can we redeem the debenture? Can we redeem the preference share? No, same rule. Convert now. First you have to make the final call, take the money, then you can make the payment. 1 lakh equity shares of 100 each fully paid up. Securities premium, CRR, General Reserve Bank. All this is there. Under the terms of their issue, preference shares are redeemable on 31st of March 2022 at 5% premium. At 5% extra. In order to finance the redemption, company makes a right issue of 50,000 equity shares of 100 each at 110 per share. We don't have money. So what I'm doing, I'm issuing equity shares. 20 rupees being payable on application, 35 including premium on allotment, and balance on 1st January 2023. You know what is the problem in this question? Why did I pick this question? We are redeeming debentures, preference shares on 31st March 2022. When I am redeeming the preference shares on 31st March 2022, somebody will come and give me money on 1st January 2023. What is the use? What is the use? What is the use of the pickle which is not there for the food? Kannada, it is there. Okay, I just converted it into English. Okay, for general audience. In Kannada, it's called as Uta Killada Uppinkai. That means you are sitting for food. Uppinkai, pickle is not there. What is the use if pickle comes after 1 hour? Are you getting my point? Same way here. Application money, you are getting it on time. Allotment money, you are getting it on time. But the call money is coming on 1st January. So that money we are not going to consider only when preference share redemption is taking place. This is the twist in this question. That's why it is picked. Now, the issue was fully subscribed and allotment was made on 1st March. Allotment is made on 1st March. That means share issue is, allotment is happening on 1st March. Call is on 1st January later. The money due on allotment was duly received by 31st March. 31st March, you got the money. You can use it for preference share redemption. Preference shares were redeemed after fulfilling the necessary conditions of section 55. That is nothing but CRR. Okay, you are asked to pass journal entries. You are asked to pass journal entries. This part we will see later. Okay, now what is happening? Is it fully paid up? No, first you make it fully paid up. Preference share final call to preference share capital, bank to preference share final call. That means you're making it fully paid up. Is it clear? Then what is happening? Equity share issue. Bank to equity share application to equity share capital, bank to equity share capital to securities premium, bank to equity share allotment. No call because call is happening much later. Call is happening much later. Can you see they have created CRR entry here only? What is the CRR value? How to calculate that? Face value of preference shares redeemed. Is it 15 lakhs? So no, it is not 15 lakhs. It is 50 lakhs. It was 35 plus 15. So it is 50 lakhs minus face value of equity shares issued for the purpose of redemption. Did we issue 10 here? Minus 10. Did we issue 17.5 here? No, because that is not fully face value. 12.5 we have issued. So minus 12.5. How much is remaining? 22.5. This much we have to create CRR. Oh, sorry. 27.5. This much we have to create CRR. See the entry for CRR. General reserve to CRR. Face value of preference shares redeemed minus face value of equity shares issued. That will be the CRR value. Why didn't I consider the final call? Because it is not made only. It is not made yet. Clear? That should be it. Now you see the entry. Preference share capital debited 50 lakhs. Premium on redemption because 5% premium I am paying to preference shareholders. Payment entry, preference shareholders to bank. Then general reserve to premium on redemption. Why didn't they use P&L? Because I think in the question there is no P&L only. There is no P&L. General reserve is there. Usually loss on issue of, premium on redemption of debentures we take from P&L, right? But in the question you can see P&L is not there. But general reserve is there, which is equivalent to P&L. Free reserves basically. Is this clear? Are you following this? What is the important thing you have to remember? If final call is after the redemption date, ignore that part. Now here there is a second subpart to this. With the help of the details given in the above question, assuming that the preference shareholders holding 2000 shares fail to make the payment for the final call made under section 55, you are asked to pass necessary journal entries. 2000 shareholders don't pay final call money only. So what? What will you do? What will you do? See, preference share entry now when you are doing, here you are getting only money from 48,000 shareholders. Final call. So you will redeem only 48,000. You will redeem only 48,000. See the preference share final call entry here. Entry here. 48,000 into 100. 48,000 into 5 premium to preference shareholders. Because you are redeeming 50 lakh 40, your CRR amount is also different. It is not 27 lakh 50. It is only 25 lakh 50. Are you getting this? Preference shares, you are not paying 50,000. Why? 2,000 people didn't give the money. Why will I return the money now? I told them to give final call. They did not give. So they are not eligible for redemption. This is important. Okay, this is important in this question. Now, illustration 8. Yes. Why I picked this is because they have introduced one small thing called as investment allowance reserve. What? Actually, investment allowance reserve is kept so that if there is a fluctuation in investment, that can be adjusted. That is the reason that is made. But in this question, what they have done is, see over here, 20,000 equity shares we have and 1,000 preference shares we have. Undistributed reserves and surplus stood as follows. General reserve 80,000, P&L 20,000, investment allowance reserve 5,000 not free for distribution. That means other 5,000 is free for distribution. So I can use that. Okay. Securities premium 2,000. Anyways, we can't use securities premium for all this. Okay. Cash and bank amounted to 98. Preference shares are redeemed at a premium of 10%. For the purpose of redemption, directors are empowered to make fresh issue. They said you can make fresh issue. But for the equity shares at par after utilizing undistributed reserves. Recently we did this. Undistributed reserves. So now, understand this. General reserve, how much is there? 80,000. But they told don't use 20,000. So you have only 60,000. Then you have P&L. P&L, how much do you have? 20,000. But I cannot use 20,000. 10,000 will go for premium. So I'll have only 10,000. How premium? See over here. 1 lakh is the preference share capital. They said it is redeemable at a premium of 10%. 1 lakh into 10%, there will be 10,000 premium. Premium should be taken from P&L only. If you take it from P&L, you won't have P&L 20,000 remaining. You will have only P&L 10,000 remaining. Investment allowance reserve, they only told. Otherwise, we will not touch it. They only told 5,000 is free. That means 5,000 you can utilize. So 75,000 you can utilize. Correct? Now, the face value of preference shares redeemed is 1 lakh. For CRR creation, I have 75,000. Remaining from where should it come? 25,000. Equity shares should be issued. Equity shares should be issued. This is the question which you have to worry about. Now see over here. Bank account debited, equity share capital, 25,000. Now, general reserve debited, P&L debited, investment allowance reserve debited to CRR, 75,000. Now, preference share, premium on redemption of preference shares debited to preference shareholders. First only, I missed this. Preference share capital debited, premium debited to preference shareholders. Due entry. Then the payment entry, preference shareholders to bank. Then profit or loss account debited to premium on redemption of preference shares. Is this clear? That should be it. Calculation what we did that time 60, 10 and 5. It is over there. That should be it with redemption of preference share. We move forward to redemption of debentures. I've kept all questions, I think. Redemption of debentures. Okay, once we finish redemption of debentures, we'll take a break. We'll take a break. After break, we'll start with NPO. After NPO, we'll go to incomplete records. And with that, we'll finish. And then whoever wants to stay back can stay back because I'm solving that death of a partner, that one question which is there. After that, we'll tell good night and go bye. Anyways, it gets dark very soon, no, these days. Redemption of preference shares. Where is redemption of debentures? What happened? You're feeling cold, huh? See, too much silence. You don't like it. I don't have this thing. Let's just have a look at it.
Company equity shares is mandatory. Equity is mandatory.
If they have told that they have issued equity shares, then then it's mandatory. If they have told shares issued, then you just write share capital. But they will tell it is equity shares only. Yeah, you have to write. Arey, what will you lose in that?
So, could you please explain illustration 5, preference share redemption?
Yeah, 1 second. Preference share redemption, huh? Yeah, this one. Yeah, sure. Okay, illustration 5. What did they tell? We have so much share capital and we have trade payables, we have PPE, we have current non-current investments, and we have current assets. Clear? Now here, share capital of the company consists of 50 each equity shares. 50 each equity shares, 2,25,000, and 100 each preference shares, 65,000. Can you see 225 and 65 is 290 only? 290 it is. Okay. They said reserves and surplus comprise of P&L only. In reserves and surplus, you have only P&L. Now, in order to facilitate the redemption of preference shares at a premium of 10%, company decided to sell the investments. Sell the investments at 15,000. What is the value of the investment here? 18,500. So they are selling the investment at a loss. To finance part of the redemption from company fund subject to leaving a bank balance of 12,000. Use money, but 12,000 you leave in the bank. So 19,000 from the bank you can utilize. Issue minimum equity shares. Okay, of 50 rupees. Now, how much do you need actually? 65,000 issued at a premium, right? So 65,000 plus premium 6,500. I need 71,500 rupees. I need 71,500 rupees. Do I have 71,500? No. How much do I have in the bank? I have 19,000 and I sold the investment for 15,000. Can you find the difference? 37,500. I don't have money. What will I do? Issue equity shares. At what value? 50 rupees. See, bank account debited to share application to share capital, then preference share redemption, normal entries. CRR you have to pass entry. CRR what you are doing? Face value minus face value. Face value is how much? 65,000. Issued how much? 37,500. So you will get 27,500. Why they have written P&L? Because they have only P&L. Reserves and surplus comprises of P&L only, they said. This was your doubt? Yeah, it was you who asked. Clear now? Yes. What do we do next? Go into redemption of debentures. It's actually very easy, debenture redemption. Question number 46. Illustration 1. Illustration 1 itself. Content is very limited for debentures, so it's easy. Now see what is happening over here. Following balances appeared in the books of the company. Can you see in the heading only they have told unlisted company other than AIFI, banking company, NBFC, HFC. What are they trying to tell you? That means DRR and DRR investment rules are applicable. DRR is how much? 10%. DRR investment should be 15%. Yes. 6% mortgage debentures are there, 100 each. Can you see 6% mortgage debentures balance brought down 10 lakhs? 100 each, no? 10 lakhs. Debenture redemption reserve, 50,000. See debenture redemption reserve ledger, Yes, here 50,000. 10% of 10 lakhs is how much? 1 lakh. That means they are not following the rule. First thing, what you are going to do? P&L account debited to DRR. Did you make it 1 lakh? Yes, you have followed the rules. Next, after that, there is investment in deposit with a scheduled bank free from any charge or lien, 1,50,000 at an interest rate of 4%. That means what? DRR investment it is. DRR investment 1,50,000. 15% should be there. 10 lakh, 15% is 1,50,000. We are following the rules. We are following the rules. No problem over there. Now what we are going to do? See, interest on debenture has been paid up to 31st March. We have paid all interest till 31st March. But we are doing the redemption on 28th February. 31st March, no, sorry, 31st December. Till 31st December, I have done everything. Till 28th February, on 28th February only, I am redeeming the debentures at 101. So now what happens? I have to pay interest also for 2 months. And on my investment, I'll get interest also for 2 months. I have to pay interest for 2 months. And on my investment, I'll get interest for 2 months. Clear? So what happens over here? Understand this. Okay. What is the due entry for redemption of debentures? Debentures account debited. Premium account debited. Two debenture holders. Debentures account debited. Can you see? 10 lakh. Two debenture holders. Premium on redemption debited. Two debenture holders. And in debenture holders, okay, they have not prepared debenture holders account. But in debenture holders, it will be on the credit side. Then next, what is the entry? Debenture holders account debited to bank account. Can you see in bank 10 lakh 10,000 is there? 10 lakh 10,000. Why? 100 rupee debenture. I'm paying 101. 1 rupee extra. Okay. Now 2 months delay. I will get in. I have to pay interest for 2 months. See this debenture interest. Debenture interest account debited to bank. You are paying 2 months interest. 10,000 into 100 into 6% into 2 by 12. When you are calculating interest, remember interest is always paid on face value. It is always on face value. 10,000 debenture interest. Same way, don't you think I'll get interest? I have investment of 1,50,000. 1,50,000 into 4% into 2 by 12. I got 1,000 rupees interest. Then if I'm redeeming the debenture, will I keep the investment just like that? I'll sell the investment. Bank account debited to investment. Bank account debited to investment. Is it clear? Finally, balance brought down, balance carried down in the bank. Now, what you have to understand here, where will debenture redemption reserve investment go? Sold. Where will interest go? It will go to P&L. Ultimately, where will this DRR go? Debenture redemption reserve account to general reserve. Transfer to general reserve. Is this clear? So, what journal entries we discussed, they asked ledgers for that. Sir, I didn't get yesterday's notes. Wasn't it put? Which group you are in, you have to find that out. It's put in the marathon group, I think. Can't we use securities premium for premium on redemption of preference shares? No. Can we use securities premium for premium on redemption of preference shares? Actually, some companies can. But there is a problem because you don't know accounting standards. Some companies where accounting standards are not applicable, they cannot. I mean, they can. The companies which are following accounting standards, they cannot. So some conflict is there over there. We don't know accounting standards only. So to avoid this, what institute has done, they have told all the solutions are solved by using P&L. P&L can be used for anything. Yes. So don't use securities premium. If you have studied this in BCom or somewhere else, no, there they use securities premium. But if otherwise, ignore. Okay, you use P&L only. Just use P&L. Yes. Next, we'll go further. Illustration 2. Same type of question. See these ledgers they have asked again. Same type of question. But here the 2 months delay is not there. So you don't have to worry. Clear? Next question. Illustration 3. This is not same type of question. This is conversion. This is conversion. Now understand this question. XYZ Limited has issued 1,012% convertible debentures of 100 each, redeemable after a period of 5 years. According to the terms and conditions of the issue, these debentures were redeemable at a premium of 5%. The debenture holders also have the option at the time of redemption to convert 20% of their holdings into equity shares of 10 each at a price of 20 per share and balance in cash. If I have 100 debenture, can I convert all my debenture into equity shares? No, I can convert only 20%. Remaining, I have to quietly take money only and go. Clear? Now, debenture holders amounting to 20,000 opted to get their debentures converted. That means how much we have? 20,000, correct? 20,000 they want to convert. Can they convert everything? No. The debentures are redeemable at what? Premium, right? So plus 5% you do, this becomes 21,000. Can they convert this full 21,000 rupees into equity shares? No. How much they can convert? 20% they can convert. 80% they have to take money only. They have to take money only. 20% of 21,000 is 4,200. And the shares are issued at 20 rupees. Divided by 20. 210 equity shares I have to issue. And remaining money 16,800. They will take cash itself. Is this clear? This is the FOMA question which is there over here. Journal entry is not asked. But if they ask in the exam, no, you should not make mistake. Entry will look like this. Debenture account debited 20,000. Premium on redemption debited 1,000 to debenture holders 21,000. The next entry will be debenture holders debited 21,000 to bank 16,800 to equity share capital 2,100, not 4,200, to securities premium 2,100. Is this clear? This should be the entry. Then one more entry will be there. P&L account debited to premium on redemption of debentures. That's fine. Remember, don't put full 4,200 to equity share capital because it should be at face value. It should be at face value. Now, last question. Redemption of debentures. Why I have kept this is just to show you that they can merge. Otherwise, there is nothing in this. See this. To give equity shareholders option to purchase one share at rupees 15 for every 4 shares held. Right issue. To issue one bonus share for every 5 shares held. Bonus issue. To repay the debenture holders at a premium of 3%. Is there any problem? No. What is the question number? 4. Yeah. We'll see in the study material. Yes. See over here. First they are issuing bank right shares. Bank account debited to equity share application. How did they get the number of, what is the number of shares? We have 20,000 equity shares. 20,000 right shares are given to 1 by 4, right? 1 by 4. That means 5,000 people will take the right shares. And the right shares are at what value? 15 rupees per share. Can you see it is 15 rupees per share? So 20,000 into 15 will be 75,000. Bank account debited to equity share application to equity share capital to securities premium. 5 rupees has to go to securities premium. Don't forget the basics. Okay. Then can you see bonus shares we are issuing? Very next thing they said issue bonus shares. 1 share for every 5 shares is held. Now when you're calculating bonus, no, if you do 20,000 into 1 by 5, you're wrong. Why? It was 20,000 before right issue. Now it has become 25,000 into 1 by 5. So how many right shares now? Bonus shares 5,000. 5,000 bonus shares, 10 rupees is the face value. Do we have CRR? No. Do we have securities premium? Yes. If you look at the balance sheet, no, you will not find only securities premium. But do we have securities premium? Yes. Here only I have issued, no. I will utilize that. Securities premium account debited, P&L debited to bonus to equity shareholders, bonus to equity shareholders to equity share capital. Clear? Now, after that, we are going into debenture redemption. Debentures are redeemed at 3% premium. But see this entry here. P&L account debited to DRR. DRR reserve investment, DRR investment to bank. Remember I told you, you have to create DRR if it is not 10%. You have to invest if it is not 15%. Did you do both of this? 1,20,000 is the debenture. Into 10%, 12,000 into 15%, 18,000. Is this clear? Then what is happening after that? Debentures account debited, premium on redemption debited to debenture holders. Then debenture holders to bank. Loss will always go to P&L. Same normal entry. Now you just created DRR over redemption done. Put it back to general reserve. Put it back to general reserve. And if you are redeeming the debenture, you don't want the investment, sell the investment. Sell the investment, pay the debenture holders. Clear? So entire process is followed. So if they don't tell you also, check DRR not there, create DRR. DRR investment not there, make the investment. Then pass the due entry for redemption. Then pass the payment entry for redemption. Then the premium you transfer to P&L. Then over redemption done, remove DRR and put it to general reserve. Over redemption done, sell the investment, then pay the debenture holders money, whatever is there supposed to be paid. Yes, that should be it.
DRRI, if they don't mention also we have to create.
Yeah, if they don't mention also we have to create, because here in the bracket they said unlisted company other than AIFI, banking company, NBFC, HFC. If at all in the exam they tell you B company limited, listed company. Listed company, DRR is not applicable. Ignore the concept altogether. Yes, that is it. Next topic is NPO. Take a break. Take a break for 15 minutes and come back at 4:05. Come back at 4:05. Okay, let's start. Let's begin. NPO. Yes. We have NPO, non-profit organization, 100% sure short question is always asked. Yes, 10 marks, 12 marks, always asked from NPO. Now, what is NPO? Not-for-profit organization. Okay, all the clubs, Rotary Club, Lions Club, Sports Club, Alumni Club, and even educational institutions and hospitals are also falling into the category of NPO. Correct? Accounting. What are the things to be prepared? Receipts and payments account, income and expenditure account, and balance sheet. What is the purpose of receipt and payment account? Receipt and payment account is nothing but a cash book. It is just a cash book. Income and expenditure account is like P&L, but we won't use the word profit or loss. You will use the word surplus and deficit. Balance sheet, you won't use the word capital. You will use the word capital fund. Clear? Yes. Why can't we use profit or loss? It's not for profit organization. Writing NPO heading, writing P2 net profit, carried forward. Okay, that doesn't make sense. Now, receipt and payment account. See, this page, no, will decide whether you'll make mistakes or not. This page, that's it. This page. See here, receipt and payment account is like a cash book. If it is like a cash book, accrual concept is not followed. Cash book means what? Whenever you get money, if it is 10 years ago ka money also, you'll record it. Clear? No accrual concept in receipt and payment account. All receipts and payments to be recorded. All means capital items and revenue items both. If you buy asset, that also will be there in receipt and payment account because cash went. If you sell asset, that also will be there in receipt and payment account because money came. Depreciation will not be there in receipt and payment account because it's a non-cash item. Okay. Related to any year to be recorded. What about income and expenditure account? Like a P&L, right? Like a P&L, record only transactions related to current year and only revenue transactions. In P&L, will you put asset purchase? No. Only revenue transactions. Even if it is paid or not, if it is not paid, not received, still you will put. Why? Outstanding. Accrual concept is followed in P&L. Outstanding, still related to this year, you will record it. Is this clear? That is very important to understand in NPO. Then, this chart, expenses if they are there, and if you are going from receipt and payment to income and expenditure account, what to do? If receipt and payment account is given and you are supposed to prepare income and expenditure account, what to do? See the rule here. Record only related to current year, even if it is not paid or received. If it is current year, record it. Now see, expense is paid. Outstanding of current year, what will you do? Add. Why? It is this year's. Outstanding of last year, what will you do? Minus, because it is last year's. Prepaid of last year, what will you do? Add. Why? It is last year prepaid means this year's. Add. Prepaid of this year, what will you do? Minus. Why? Prepaid this year, but it is next year's expense. Okay. When we talk about income also from receipt and payment account, if you are going to income and expenditure account, income received you will take as the starting point because receipt and payment account is there. Income receivable of previous year, what will you do? Last year's, right? Minus. Income receivable of current year, this year's, right? Add. Income received in advance. Previous year, what should you? Last year already received, but it is related to this year. Add. Income received in advance of current year, minus. That time you will get the income which should go to income and expenditure account. This same thing can be done with ledger also. Now, expenses. If you are going from income and expenditure to receipt and payment, Imagine income and expenditure is given to you and they are asking you to prepare receipt and payment account. That time what rule you will follow? Record whatever is received or paid in current year. Whatever is received or paid in current year. Clear? Now, outstanding expense of previous year. What will I do? Outstanding expense of previous year will be paid in current year. So add outstanding expense of this year will be paid in the next year. So minus prepaid expense of previous year already paid minus prepaid expense of this year. Okay, next year's it is, but it is paid, add. So when you're preparing receipt and payment account, you're only thinking whether you paid or not. Which year doesn't matter. When you're talking about income receivable of current year, what will you do? Did you get it? No. Income receivable of current year, receivable, you will get it in the next year, minus. Income receivable of previous year, what will you do? Add it, because you will get it in the current year. Income received in advance, previous year, minus already received, right? Minus income received in advance, current year. Next year's it is, but you got it. Add. This is how you prepare receipt and payment, or you prepare income and expenditure account. You already know that 90% of the problems are created with outstanding and prepaid only. Subscriptions, receivable, received in advance, salary, outstanding, prepaid, all this is going to cause trouble. Okay, ledgers also you can use. You can use ledgers to prepare the same thing. You will get the same result. Clear? Some special items we'll discuss and then we'll go into problems. If I have entrance fees, nothing is told in the question, then it is always capitalized. Nothing is told. But in the question, if they tell you 50% capitalized, that means remaining 50 will go to income and expenditure account. See, if mentioned in the question, income and expenditure account, income. Otherwise, it will always be added to capital fund.
Sir, if we get any doubt in respect of this, we can write an assumption and can we write.
If nothing is mentioned, you can write the note. But always entrance fees, if they don't tell anything, capital fund. If they don't tell anything, capitalize, because entrance fees, usually it is one time. Life membership fees, also one time, capital fund. Annual membership fees, again and again, income expenditure, income. Clear? Donations, if they don't tell anything, donations are considered as general donation. General donation means you can use it for anything. It will go to income and expenditure account. If they tell specific donation, specifically given for particular purpose, it will go to balance sheet liability side, add it to capital fund. Clear? If question is silent, always take it as general donation. Is this clear? Entrance fees, if they don't tell, add it to capital. If they tell you, put it to income and expenditure. Donations, if they don't tell, put it to income and expenditure. If they tell, then you put it to balance sheet. Honorarium, always an expense. Honorarium is you're paying money to honor somebody. One shawl you are putting and you're giving one plate and some flowers and little money. Okay, this is called as honorarium. Okay, this will always be expense. Legacy, somebody died. He told 2 crores. When I die, we'll go to this NPO. What happens? Amount received due to will on the death of a person. Will that person die again and again? No. He is not Undertaker. Do you know Undertaker in WWE? He will die again and again and he'll be born again. Okay. If you have watched WWE, you'll know Undertaker. Yes, he'll do like this. Then after few years, few months, he'll be like dead. Then he'll be like dead man walking. Again, he'll be back.
That is scripted.
Huh?
Scripted, sir.
Movie which you're watching also is scripted only. No? We are watching like that only. In South Indian movies, don't you watch fight? Somebody will jump from here like this and still nothing will happen to him. He will go rolling in the ground. Then he'll get up and hit everyone. Bones are made of steel. Yes. Legacy. Okay. It will be added to capital fund because it will be one time. Endowment fund. Endowment fund means what? Somebody is giving you donation and telling don't use it. Endowment fund means somebody is giving you donation and telling don't use it. They are giving you donation. They are telling you can't use this. Invest this. Whatever comes out of that, use that. Are you getting my point? If I give you donation, it will get over, no. But if I tell you invest it and from that return you use, you can use every time. So usually what happens, somebody might give like 50 lakhs or something and tell this is for midday meal. So this 50 lakh is invested. For whatever comes out of that 50 lakh will be utilized for midday meal. Is it clear? So specific donation which should not be used must be invested. Return received used for the purpose.
Means it will be considered as expense.
It will be considered what? Which one? Return.
Return is considered as expense.
No, return is considered income. I'm getting money, no?
We will be
Amount is a liability.
we will be spending it on midday meals.
Spending it on midday meal. See, I have taken this example here. Price fund. Imagine I have price fund of 20,000. I got price fund. So I got cash also. Not 20,000, 2 lakhs. Now what did I do? I invested this price fund. So cash went, I have investment now. From that investment, I got 20,000. Added to the price fund. How much can I spend now? Only 20,000. Only the return I can spend. If my price expense is 19,000, still I will have 1,000 left. So 2 lakh 1,000 will be there. Can you see over here? If at all the price is 22,000, I can take only 20,000 from price fund. 2,000 will be expense in income and expenditure account. Is this clear? So I can utilize extra, will always go to income and expenditure account. Oh, that's it. We have few questions. I think 4 only. Okay. Gratuity fund. What fund you said? Yeah, liability side. Any fund, liability side. Gratuity fund is you have kept a fund to pay gratuity to employees. What is gratuity? Something paid to employees when they retire. After retirement. I mean on retirement.
How much years they live?
Yeah, how much years they are there in the company? Company will be taking money and keeping it aside, and then they'll give. This is not company, NPO. Yes. Shh. The following is the resident payment account of Mumbai Club. Okay. Shh. Following is the resident payment account of Mumbai Club. If you have done study material, then there is no problem in any examination question. If you see this Mumbai Club question, it is there in study material. Same question is there in study material. If you see subscription due, amount due for printing, checks unpresented being payment for repair, interest not yet entered in the passbook, estimated value of machinery and equipment. All this is there in an exam, in a study material question, some 7 or 8, I don't know. Okay, starting only it is there. Now, what they have given you? Receipt and payment. What are you supposed to prepare? Income and expenditure account. Now, which attempt is this? June 2022. June 2022. Delhi Club, where are you? Earlier there was consignment, don't worry. Yes, sorry, not Delhi Club, Mumbai Club. Mumbai Indians. Okay. In NPO, always what you should do first thing? First thing, prepare opening balance sheet. Prepare opening balance sheet. Why? To get the capital fund. Can you see this? Subscription due 15,000. Where should I put it? In the opening balance sheet. See, subscription due, subscription receivable 15,000. Next you can see amount due for printing. Amount due for printing means what I'm supposed to pay. Okay, amount due.
In the same, columnar format together. Like instead of preparing 2 balance sheets, just like that can be done.
I wouldn't suggest. You can do it, but even ICA is not following anywhere. Once or twice in some places they do it, but I wouldn't suggest, because opening balance sheet you always prepare at the starting of your solution. Closing balance sheet you will always prepare towards the end of the solution. And in fact, I do not suggest you to do income and expenditure first, then closing balance sheet. Income and expenditure account, keep it open. Closing balance sheet also keep it open. Whatever writes, put it into the respective places, so that once you read the question, the solution is completed. Even final accounts can be done and should be done like that. Okay, if you watch the regular videos, it's done like that only. But don't do columnar. You will confuse yourself and put it into the wrong column, you will be in trouble. Organization is 5 people coming together to do some activity. There is no legal entity for that. Company has a legal entity, no?
Then why is it called non-profit organization?
Because they have not formed a company here. You for non-profit purpose, you can form company also. That is called a Section 8 company. But here, they have not taught you how to do the accounting of company, no? Financial statement of company is not there. So they can't tell Section 8 company. So all are not-for-profit organizations. Not-for-profit organization can become a company also. But for that, we don't know the balance sheet. Balance sheet format is different. Okay, so they have kept it non-company itself here. All the company-related items they have put into inter. Now, can you see outstanding printing? 10,000. Next, checks unpresented for payment for repair. Check is not presented. So what will you do? See over here. Can you see the opening balance? Cash, savings account, current account. Correct? All should go to the balance sheet. So now see what is happening. Cash in current account, cash in savings account, cash in hand. Where is the check unpresented payment for repair? Subtracted. Subtracted from what? Current account. This is 60,000. Check unpresented is 30,000. Can you see the current account has become 30,000? Clear? Check unpresented. So what we are doing, bank balance will go down when they present the check. So that is why it is taken as 30,000. Is this clear? If you have taken 60,000 here and put check unpresented here, still you'll get the same result. But it's not right way to present it. Okay. So when you present the check, this becomes 30,000. Next, after that, what do you have? Estimated value of equipment. Equipment you are going to put over here. 80,000 equipment. That is it. Now, whatever honorarium to secretary. Did they tell you anywhere in the table? Did they tell in the table here? No. But here they told honorarium to secretary 40,000. That means you have paid last year's honorarium now. That means last year it was outstanding. So in last year's balance sheet, there should be honorarium of 40,000. Is this clear? Balancing figure is always your capital fund. Balancing figure is always your capital fund. And this capital fund will be there in your closing balance sheet as the opening balance. 2,88,000. Clear? Now another important thing you have to understand here. Can you see? Honorarium to secretary is to be increased by 20,000. Last year's was 40,000. This year's is 60,000. But this year's you have not paid. This year's you have not paid only. Last year's only you paid this year. This year's will be paid next year. So can you see honorarium you will find 60,000 and this entire 60,000 will be there in the balance sheet as outstanding. Entire 60,000 in the balance sheet as outstanding. Same way here they have told groundman is to receive a bonus of 20,000. Is to receive. Is to receive means did not receive, no. So now you can see 20,000 will be there in the income and expenditure account. And in outstanding, you can see 20,000. Last year it was 40. This year it is increased by 20,000. So this year's honorarium is 60,000. But if they pay 1 rupee also, nothing. They'll pay next year. Because last year's only they paid this year. Okay. Next. That is it. Now you see subscription due. Where will it go? It will be there in this balance sheet also. Subscription receivable. And you can see amount due for printing. It is there here outstanding. Then you can see checks unpresented. What will you do? See the closing balance. Current account there is only 20,000. But check unpresented is 25,000. Automatically we have bank OD. Same thing happens in study material question. Trust me, same question is there in study material. Same question is there in study material. Okay, you can go and check. Exact same question. Because here also it's like BRS and all. There is a boundary. They cannot cross that boundary. Within the boundary, all adjustments are covered everywhere. Now what will they ask extra? Okay. Next, after that, you can see 2,000 interest not yet entered in the passbook. Interest not yet entered means interest receivable. You are supposed to get interest receivable, and interest receivable will be shown added to interest. Can you see interest? If there is any receivable, you will add it to the income, no? So it is added. If there is any outstanding, what will you do? You will add it to the expense, right? See over here. What are the expenses? We had printing and office expenses. It is 28,000. What is the printing and office expense showing over here?
30,000.
30,000. Is it 30,000? Did I take the wrong number? Printing and office expense. See. See, last year's outstanding, this year's outstanding. When you do that, it will become 28,000. Last year's outstanding will be subtracted. This year's outstanding will be added. Can you see repairs to equipment also? Last year's outstanding will be added. Last year's outstanding will be subtracted and this year's outstanding will be added. Can you see this? And the depreciation we have to calculate. How will we calculate depreciation? Opening balance is given. Purchase also we know. Closing balance is given. Sale is given. Difference is depreciation. Okay, usually this is the adjustment which is very common. Assets, what you have to do? Better if you want, you know depreciation chapter, prepare a ledger. Opening balance, closing balance, purchase, everything you put. You get a missing figure, that is depreciation. Is this clear? Next, apart from that, subscriptions also, what is happening? Last year's receivable minus this year's receivable add. Clear? Then, apart from that, in this question, the most important thing I want to discuss, one of the important things is, see, when you have situations like this, no? Can you see contribution to club night? And on the other side, you can see club night expenses. You can club both of this and take it in the income and expenditure account. You can club both of this and you can take it in the income and expenditure account. Can you see bar room receipts? Bar room receipts. Is there bar room expenses? Oh, not there. Only receipt in bar room. Okay. Proceeds from club night. This also can be added. This and these two can be added and then that can be subtracted. So net amount you are going to take from club night. Other than that, there is nothing in this question. And yes, you can do that. Entrance fees, what did they tell? Did they tell you anything? What will you do? Capital fund. Capitalize it. Can you see entrance fees is added? Only if they tell 50%, 40%, that whatever percentage, then you will take it to income and expenditure account. Any doubts?
No, sir.
That should be it. If you have study material with you, you can open and see this question is there. 8, 9, 7, I don't know, somewhere at the starting. One of the first questions of, one of the full-fledged questions, first one, NPO, this is the one. Because the receipts are income, no? All the receipts will not go, madam. All the receipts will not go. Here, purchase of equipment, it's an asset. It will not go. Groundsman's fees, income, it will go. Rent of ground, income, it will go. Club night expense, income. Income. Oh, where are we seeing? Payment side. Sorry, this is asset and this is expense. Expense, expense, expense. Repair to equipment also expense. Honorarium is also expense, but not 40,000, 60,000. Because last year's minus this year's outstanding you have to add. Now, even in receipt, everything will not go to income and expenditure account. This is opening balance. Okay. Bank interest fine, donation and subscription fine, entrance fees, see, capitalized. Contribution to club night fine, sale of equipment, asset. It will not come to income and expenditure account. If you make profit or loss on sale, only that will come to income and expenditure account. Bar room receipts and proceeds from club night, all are incomes. Clear? Now, why it is on the opposite side? Always, you take from receipt and payment, put this side. From there, you take them, put this side. Why? Here, receipt and payment is a cash book. Cash balance increases when receipt comes. Debit, asset increases. And cash balance decreases when asset goes. Correct? Asset goes. Asset reduces, credited. Income and expenditure account is a nominal account. Expenses are debited, incomes are credited. Is this clear? Yes, that should be it. 54. This also is from study material, but I am showing. Sorry, how did we reach incomplete records? What is this? No, there are more. Let's not disappoint you. Okay. Don't get disappointed. December 23, there is one question. See this. See this. What is happening? Cash in hand at bank is given 31st December 2021. No. Starting balance is given. Closing balance is not given. So you have to prepare what? Receipt and payment account. December 2023. Do we have a question like that in study material? 100% yes. Do we have a question? Of course. ABC Sports Club, no? Yes, here it is. See, they asked us to prepare receipt and payment account. Listen. They asked us to prepare receipt and payment account. Everything is given. Receipt and payment account. This is balancing figure. This is balancing figure. Do you remember there is one study material question where opening balance is balancing figure? If opening balance is balancing figure, this you have to prepare first, then get the balancing figure, put that into opening balance sheet, then only you will get the capital fund. Then only you will get the capital fund. In this question, that is not a problem. See, income and expenditure account is given and they have given one table. This table, this is for opening balance sheet. This is for closing balance sheet. Clear? Government securities. Where will it go? Government securities. Opening balance sheet. Asset. Government securities. I have invested. I am not government. I have invested in government. Correct? Asset. Next, you have subscription outstanding. Outstanding means receivable. Subscription is an income. Where will it go? Asset. Can you see? Subscription received in advance. Liability. 2000. Then, can you see salary unpaid? Liability. Outstanding salary. Then, can you see furniture, land and building, sports equipment, stock of stationery? All are assets. Cash from where we'll get? They have given here. Cash in hand on 31st December 2021. Opening balance. No, they have stock of stationery. Here what we do, whenever we have stock in NPO, the stock of material consumed should be taken in income and expenditure account. Stock of material consumed. Now here see income and expenditure account is given. Can you see stationery expenses this much? Stationery expense. That means that is what they have consumed. Okay, so that is basically you'll get with the formula opening balance plus opening stock plus purchases minus closing stock. That time you'll get how much you have consumed. Only that much you will show in income and expenditure account. What you purchase will be used even in the next year, no? So purchase is not there. You have to take only what is consumed. Whenever you have stock of stationery, when you have stock of medicine, such stuffs which when it comes in NPO, you should always take material consumed. Yes, you can see that opening balance is already given. So because of that, we got the capital fund. Can you see capital fund open balancing figure? What will you do with this capital fund? You will put it in closing balance sheet. Okay, then obviously you will calculate surplus. Now surplus is already given. Why? Because they have prepared income and expenditure account. 63,300. Can you see? We have put it over here. Now you have to prepare what? Receipt and payment account. Is that correct? Yes. Yes. When you are preparing receipt and payment account, understand this. First thing, stationery expense. Can you see? Stationery expense will not come only in receipt and payment account. Stationery expense will not come. What will come? Stationery purchased will come. How much was the opening stock of stationery? Opening stock of stationery is 3,000. Correct? How much is the purchases? We don't know. How much is the closing stock of stationery? 5,500 is equal to material consumed, we know. 30,000. So, how much? 27,500. Where is it? No, you're getting different value. See, 30,000 is equal to 3,000 plus purchases minus 5,500. Add 5,500 minus 3,000, 32,500. Are you getting 32,500, everyone? Did you get it? So what is given? Consumed, because it is income and expenditure account. What we should find? Purchased, because for that we have paid. Okay, not even purchased, what amount you have paid. Okay, now what next? See over here. Rent and taxes. Do we have any adjustment for rent and taxes? No. Directly you will put it onto the payment side. Insurance, do we have any adjustment? Directly you will put it onto the payment side. Office expense, do you have any adjustment? No. You will put it directly into the payment side. Depreciation, will you put? No. Depreciation, will you put? No. What you will do? You will prepare the ledger for building and furniture and you will see if there is anything purchased. If there is purchased, it will come over here. See, furniture, sports equipment. How did we get this? From the working notes. You have to prepare the ledgers. See, land and building 20 lakh minus 37,500. You are reaching the closing balance. Furniture, when you see, you are getting a missing figure over here. Missing figure on the debit side means asset purchased. Missing figure on the sports equipment debit side means asset purchased. Are you following this? Every time without fail you have to prepare the asset accounts. Asset account you have to prepare. This time asset purchased is missing figure. Next time depreciation might be the missing figure. If they give income and expenditure account and ask you to, if they give you receipt and payment and ask you to prepare income and expenditure account, this will be the missing figure. So you have to prepare the ledger. Is it new preparing this ledger? No. Depreciation chapter, you are preparing this ledger again and again. Is this clear? Yes. Now, what next? Furniture and all, it will come from there. Subscription is very important. Now, how much is subscription? 250. Are you going from income and expenditure to receipt and payment, or receipt and payment to income and expenditure? Income and expenditure to receipt and payment in this question. Correct? Now, when you are doing the adjustment, you have to remember what is received this year, I will take it. So, 2,50,000. Okay. What is subscription receivable of last year? 70,000. Last year receivable means received this year. Add. Receivable of this year means received next year. 1 lakh minus subscription received in advance last year. Last year received in advance. So already received minus 2,000. Subscription received in advance of this year. That means it is received in advance this year. Next year subscription but got it already. 6,000. What is the value?
2,06,000.
Are you sure?
2 lakh
2,24,000. Clear? You can check subscription. Subscription is 2,24,000. Are you getting 2,24,000? Is this clear? Rest of the thing, interest, donation, miscellaneous receipts, directly it is put. Directly it is put. There is no problem in that. Just like how I told you, final accounts, 20% adjustment, 80% fill in the blanks. Same thing here also. 20% adjustments. Major adjustments are subscription, entrance fees, donation sometimes. Clear? Next, let's go into the next question. Chirag, let's not disappoint you. There is another one. Okay, June 2023. Now here, what have they given? Receipt and payment. What are they asking you? Income and expenditure account. Can you see? Yeah, and balance sheet. Can you see they have given balances of starting and ending? Using this, what you will prepare? You will prepare an opening balance sheet. You will get capital fund. And cash you will pick from here. Clear? There shouldn't be any problem. Opening balance sheet shouldn't be any problem. Okay, closing balance sheet, what you will do? Now, major adjustment will be for subscription due. Are you going from receipt and payment to income and expenditure, or income and expenditure to receipt and payment? Receipt and payment to income and expenditure. How much is your subscription here? 65,000. Correct? 65,000. Last year's due will be minus because it is last year's 2,500. This year's due will be added because it is this year's. Last year received in advance will be added because it is this year's. This year's received in advance will be subtracted because it is next year's. 66,000 should be there in your income and expenditure account. Oh wait, which year is this? June 2023. Where are we searching? June 2023. Can you see consistently every attempt is there? Every attempt there is a question. Subscription 66,000. Can you see the 66,000? Yes. What else can trouble you? Chirag tells everything. Yes. Now, stock of medicine. This is going to be the thing. Stock of medicine will trouble you. Stock of medicine, opening stock plus purchases minus closing stock. Opening stock is 12,500. Closing stock is 17,250. Purchases. Can you see on the payment side? Purchase of medical equipment is not that one. Buy medicine supply is not the one. Buy medicine supply is not the one. That is payment to creditors. That is payment to creditors. You have to prepare a creditor's account. You have to prepare a creditor's account. Amount due for medicine supply. That means we had creditor 12,000. Amount due for medicine supply. That means we have creditor 16,500. Opening balance, closing balance. How much did you pay the medicine supply person? 35,000. So you'll write over here to bank 35,000. Now here you will get by purchases balancing figure 39,500. Correct? What is the entry for credit purchase? Purchase account debited to creditors. Last question, why we didn't do this? Because in last question, creditor was not there only. Are you seeing the difference? If creditor is there, purchase account debited to creditors, creditors account debited to bank, which will go to receipt and payment. So now 39,500 you put into this formula. 34750. This is your medicine consumed, which should be there in income and expenditure account. 34750. If you take any of the numbers, you're wrong. So what is the thing? I have to take medicine consumed. Opening stock plus purchases minus closing stock. Opening stock, closing stock given. Purchases is credit purchase. If it is credit purchase, I'll find it in the creditor's account. What you see over here is not credit, not the purchase. This is the amount paid. This is the amount paid to creditor. So you have to open a creditor's account and do it. Can you see this? Can be asked, same kind of adjustment. Remember this. Other than that, what is it? Value of equipment, value of building. You will open the building and equipment account. Then you will get the depreciation. Other than that, there shouldn't be any problem in this question. This medicine consumed, absolutely important. Clear? Because they said here, amount due for medicine supply. Amount due means we are supposed to make payment. So creditors. And this amount due for medicine supply in the opening balance sheet and closing balance sheet. Can you see amount due for medicine supply on the liability side? In the closing balance sheet, amount due for medicine supply on the liability side. That's why it is creditors. Is it clear? Yes. Now, asset I am not telling because asset you know, we have done it in other chapters. You have to prepare asset ledger. Can you see 21,500 and 37,200? There is a difference. You have to prepare asset ledger, put the purchases. Can you get the purchases from the receipt and payment account? Yes, purchase of medical equipment. Can you see if you get a difference, depreciation is a missing figure. Is this clear? Yes. Now see this question. Can anyone recognize this question from the study material? Young Boys Club, there it was called Youth Club. Young Boys Club, there it was called Youth Club. What did they give you? Income and expenditure account. And what did they ask you to prepare? Receipt and payment account. This is the exact question where I am telling you that on 31st of December 2022, cash in hand is 1,600. 31st of December 2022 is end of the year. Cash in hand is given. Starting of the year, cash in hand is not given. You have to prepare receipt and payment account. You will get the balancing figure. That balancing figure you will put it to opening balance sheet. That time you will get the opening capital fund. That you will bring it to closing balance sheet. Clear? It is a tricky question, but it is there in the study material already. Are you getting my point? No change. Structure also not changed. You know what? This table is given for subscription there also. Then salary outstanding at the beginning and ending is given. General expense include insurance prepaid to the extent. Audit fees is still unpaid. During 2022, audit fees of last year is paid. Club owned the land. Exact same structure of the question. Club owned the land valued at 20,000. Club had sports equipment. End of the year also they had sports equipment after depreciation. Club raised a bank loan in the last year. Did not pay at all. This was outstanding throughout 2022. Ditto. Then copy paste. Control C over here, Control V over there. But numbers are different, so they are putting into 0. Are you getting my point? See, do not by heart. Just because ditto questions are asked, do not by heart. Understand the concept. You will be able to solve in a very quick manner. Speed will not be a problem. See, if you had solved that question, speed will not be a problem for this one. 10-12 marks, if it is asked, easily you can score. NPO shouldn't be an issue. What is the main thing in NPO you have to remember? Tell me again. Receipt and payment to income and expenditure I am going. Receipt and payment to income and expenditure account. Last year's outstanding, what should I do? It is last year's remove. This year's outstanding, what should I do? It is this year's add. Last year's prepaid, what should I do? Last year's prepaid, but it is this year's expense, add. This year's prepaid, what should I do? This year paid, but it is next year's, minus. Same logic apply for income as well. Okay, income received, we know. Income receivable of last year, what to do? Last year's, minus. Income receivable of this year, what to do? Add. Income received in advance last year, that means it is this year's, add. Income received in advance this year, it is next year's, minus. When we are going from income and expenditure account to receipt and payment account, income and expenditure account to receipt and payment account, what will happen? Now, outstanding of last year, outstanding of last year, add, because it will be paid this year. Outstanding of this year, minus, because it will be paid next year. Prepaid of last year, minus, because it is already paid last year. Prepaid of this year, add. Why next year's but paid this year? When we are talking about income. Income receivable of last year, what will you do? Add, because it is received this year. Income receivable of this year, minus, because it is received next year. Income received in advance of last year, minus, because it is already received last year. Income received in advance of this year, next year's it is, but it's already received, so add. Is it clear? Done. That is it with NPO. We have one chapter remaining. We have one chapter remaining for which there is no concept only. Do we have any concept for incomplete records? Actually, no.
Sir, basic ruling not coming.
What?
No basic ruling not coming.
Basic, no, Verma, you are like chat it, you know, some such a That's not my problem. It's not fast.
Yes. Starting with the main question. Huh? Only 4. Then there is depth of a partner, one question. Yeah. Okay. In 2 minutes we start. 2 minutes we start. Incomplete records. Have you studied it? Yes.
No, sir.
Huh? Then it is total bounce it. The chapter. Very important it is. Hello, they asked. This time they asked.
Yes, sir.
There is a 4 mark question. They asked.
Sir, can I ask something?
Only debtors account or something. What? That old accident.
Like, next question.
No, no. Can we start? Yes. What? When Maggie got cooked. 2 minutes, Maggie got cooked. It was 4:48. Now I saw the time, it's 4:50. 2 minutes, time flies. Yeah, 2 minutes it is. Okay, let's start. Now, do I have any concept to show you for incomplete records? The answer is no. Answer is no. Why? Yes, there is nothing. There is no concept to learn in incomplete records. You learn all the concepts in other places, you will be able to solve incomplete records. But still, what is regular things that you have to do? Opening statement of affairs. Opening statement of affairs is prepared to find the capital. Opening capital will be the balancing figure, which we did in NP also just now. Then the common items you are going to prepare is debtors account. If debtors are there, bills receivable account, then creditors account. If creditors are there, sometimes you will have bills payable account, then you can have cash account, and there is bank account. Clear? Then you have to ultimately prepare trading account, profit and loss account, and you have to prepare balance sheet. This is our job. Clear? Why debtor account might be prepared? Because credit sale might be missing. Amount paid, amount received from debtor might be missing. Why bills receivable account is prepared? Anything can be missing. You know the entire bills receivable structure. Creditor account, credit purchases can be missing. Amount paid can be missing. Bills payable account, what is that? Bills payable, honored, dishonored, what we have paid, not paid, what is endorsed, anything can be there. Cash and bank account, anything can go missing. Anything can go missing. Correct? Now, what we are going to do? We are going to solve only the complicated questions. 3-4 are there. We'll solve that. First question, Anup runs a wholesale business wherein all purchases and sales are made on credit. All purchases and sales are made on credit. He furnishes the following closing balance. So what you will do? Use the closing balance. Question number 10. Question number 10. Now see. Can you see first opening statement of affairs is prepared? Opening statement of affairs. Sundry debtors. Sundry debtors. Clear? You can see sundry debtors here also. Then you have bills receivable. You will find bills receivable on the asset side. Then you have bills payable. You will find bills payable on the liability side. Then you have sundry creditors. Creditors you can find on the liability side. Then you have inventory. You can find inventory on the asset side. Then you have cash at bank and cash in hand. You put those items. Your missing figure will be capital. Missing figure will be capital. Now, guess what? Because you have all these ledgers, debtors, bills receivable, bills payable, sundry creditors, you have to prepare ledger for all that. You have to prepare ledger for all that. Do you have bank account? Yes, you have to prepare ledger for that also. Do you have cash account? You have to prepare ledger for that also. Do you have the opening balance and closing balance of all these items? Yes. Then you have to prepare, you have opening balance, closing balance. That means something else is missing. Is it clear? Something else is missing. Now, why don't you have to prepare inventory account? Because inventory, opening stock will go to opening balance sheet. Closing stock will go to closing balance sheet. And closing stock will also go to trading account. Trading account. Basically things that we studied on all places we are applying over here. Okay. Now, if you see the working notes. Debtors account, balance brought down, balance carried down. Creditors, bills receivable account, balance brought down, balance carried down. Creditors account, balance brought down, balance carried down. I am not picking the numbers. It's not balancing figure. It's given in the question. Bills payable account, balance brought down, balance carried down. Then cash account and bank account. They have done columnar, cash book they have done. Cash balance brought down, bank balance brought down, and cash and bank balance carried down. Is it clear? This is a test of your accounting knowledge. Now, see. You have to tell me the journal entry, otherwise I will not proceed only. Summary of cash transactions during the year. Deposited to bank after payment of shop expenses 600 per month, salary 9,200 per month, and personal expenses 1,400 per month, 760 to 750. What they told? After paying all these things, money you have deposited into bank. That means all these things are paid through cash or bank? Cash. Correct? Why? After paying this, you're depositing. No, that means it is paid by cash. How to multiply into 12, you know. Okay, don't worry about that. Now see here, by shop expenses, by salary, money went from cash. By drawings, money went from cash. Is this clear? Yes. It's given. 762, 750. I'll come to that. 762 to 750. Expenses, you understood what happened. Don't you think this shop expense should go to P&L also? P&L. Where are you? Oh. Can you see P&L? Shop expenses. Can you see in P&L the other thing that was salary? Can you see two things which was there? Drawings I am not finding here because drawings will be subtracted from capital. Can you see drawings? Did you understand the transaction, how it impacted? Impacted the cash book and it went into trading P&L and impacted balance sheet also. Next, they have told deposited 760 to 750. Deposit is always a contra entry, no? What is the entry for deposit? Bank account debited to cash account. Bank account debited to cash account. Can you see over here? Bank account debited to cash account. Bank account debited to cash account. Yes, it's raining. It's better to stay indoors. Okay. He's looking out. He's like, oh, it's raining. Then we'll stay indoors and continue. Yes, stay safe. Cash withdrawn from the bank. What is the entry? Cash withdrawn from the bank. Cash account debited to bank account. Cash account debited here and bank account credited here. Is this clear? This also, like final accounts and NPO, you should do everything at once. That is debtors account, creditors account, bills receivable, bills payable, trading, cash account, bank account, trading, P&L, balance sheet, all the things. Okay, all the things. Now, cash payment to supplier 77,200 and furniture 25,000. What is the entry? Supplier is who? Creditor. Creditor account debited to cash. Creditor account debited to cash. Can you see 77,200? Can you see 25,000? This 77,200 you will also find here. Creditors. 25,000 you will not find here. In balance sheet it will get added to furniture. Only one furniture is there. It was not there earlier. Now it is purchased. Now after that, checks collected from customer but dishonored. Oh. Bank to debtors, debtors to bank. Correct? Checks collected. Can you see bank? In the bank account you will find 5,700. On the credit side you will find 5,700. Check received. Huh? What? You can ignore it, you are telling. Yeah, but better not to. You can ignore. Effect is nil, right? Okay. See, if you see debtors account also, it will have an impact. Debtors account, got the check. Check bounced. Got the check, check bounced. Clear? Next. Bill accepted by customer. Bill accepted by customer. Bills receivable account debited to debtors. Can you see bills receivable 40,000? Can you see debtors 40,000? Is it impacting my trading P&L? No, it's not an expense or income. Next, bill endorsed. Creditors account debited to bills receivable. Creditors account debited. Can you see 10,000 to bills receivable 10,000? If you don't pass all the entries correctly, you will not get the end result. That is how incomplete record works. Okay? They can ask for 15. They can ask for 15. This is a huge question. They can ask for 15. No, 20. I don't think so. Bill discounted 20,000. Discounting charges 750. Tell me what is the entry? Bank account debited how much? How much? No, 19,250. Discounting charges. Yes. Discounting charges debited. 2. Bills receivable. Can you see bills receivable? Both these numbers are there. In this, 750 is expense. Go to P&L. You should find 750. Where are you? Okay, they have added it to discount itself. 750. Clear? Other discounts are also there. They added it to discount. 750. Clear? Next, after that, what happens? Bill matured and duly collected. Bill matured and duly collected. What is the entry? Bank account debited to bills receivable. You can see bank account here 16,000. Bills receivable you can see 16,000. Is this clear? Okay. Bills accepted. Be accepted. Creditors account debited to bills payable. Creditors account debited to bills payable. Yeah, here we are. Yes, creditors to bills payable 24,000 and here you can see 24,000. Is it clear? Next, paid supplier by check. Creditors account debited to bank account. Creditors account debited to bank account. Can you see bank account 3,20,000 here? Yes. Next, received 20,000 on maturity of one LIC policy of the proprietor by check. Owner's money we got. Entry is bank account debited to capital account. Bank account debited to capital account 20,000. So in the balance sheet, you should add this 20,000. Can you see added it 20,000? Next, rent received 14,000 by check for the premises owned by proprietor. Again, owner's money. Owner's money, bank account debited to capital. Can you see this 14,000 is added over here? And in bank, you're going to show bank account debited to capital. Owner's money, whenever it is coming into business, we'll just add it to his capital. Next, after that, you have building was purchased on 30/11/2021 for opening a branch 3,50,000. Good. Building account debited to bank. But, and some expenses were incurred on this building, details of which are not maintained. When you purchase a building, if there is expense, what you'll do? You'll add that to the building only, no? You'll add it to the building only. Now they are telling building, there is some expense which we don't know. We'll keep it pending. Maybe in the bank account later, this will be the balancing figure. Clear? They told your purchase building, I don't know the expenses. So you should find it as a balancing figure. Keep it pending. Electricity and telephone bills paid by cash, 18,700. Due is 2,200. How much will you show in the cash account? 18,700. How much will you show in P&L? You will add the 2,200. You will add the 2,200 and you will show it. And the 2,200 should go to balance sheet. Telephone charges. Is this clear? You paid only 18,700. Accrual concept tells you to show full expense, show the full expense, then 2,200, show it in the balance sheet as liability. Clear? This is what we are doing in final accounts also. Nothing new in incomplete records. What we are doing in final accounts. Okay, next, after that, claim against the firm for damages 1,55,000 is under legal dispute. Legal expenses are 17,000. Firm anticipates defeat. Somebody has filed a case on you and you have to pay 1,55,000. You are feeling that you will lose the case. Conservatism concept tells you whenever you have a situation, future loss, you have to create a provision. And you have not paid the legal charges also. For that also you have to create provision. So if you see the P&L, you will find both these numbers. 1,55,000 and the legal expenses 17,000. Did you pay it? If you had paid it, you would have found this in the cash and bank account. You have not paid. That's why you are seeing it in the balance sheet. Provision for damages 1,55,000. Total is put 1,55,000. Correct? No, even 17,200 has to be there. It's here 17,000. Is it clear? Are you following this? If you had paid, it would not be here. It would be there in the bank account or cash account. Next, after that, goods returned to supplier. Goods returned to supplier. Creditors to purchase return. Okay, do we have creditors account? Yes. Can you see in the creditors account to return outward? Where will it go?
Reduce from purchase.
It will be reduced from purchases. When you prepare trading account, it will be reduced from purchases. Can you find this 4,200? Next, returns, goods returned by customer. Sales returned to debtors. It will be reduced from sales. Can you see it is reduced from sales? And in debtors ledger, you should find 1,200. Where is it? Here. 1,200. Is it clear? Now, after that, discount offered by suppliers. Discount offered. They gave us discount. So, creditors to discount received. Creditors to discount received. Here you see 2,700. And discount received should go to P&L also. Can you see on the P&L credit side you find discount here? Yes. Discount offered by customer. Discount allowed to debtors. Can you see discount allowed? You have added 2,400 here. You have added 2,400 here. And then you will show in the debtors. Can you see the discount? 2,400. Discount allowed to debtors. Creditors to discount received. Discount allowed is expense. It will go to P&L. Discount received is income. It will go to P&L. Both will go to P&L. Business is carried on rented premises for an annual rent of 20,000, which is outstanding at the year end. 20,000 is a rent for you. You have not paid 1 rupee. So what will happen? You will show in the P&L 20,000 is the shop rent, and you will show in the balance sheet outstanding rent. This is final accounts basically. This is final account, but things are not given directly to you. That's all. Okay, that is it. That is it. Now we will not go and prepare trading P&L. We have to close one by one. In sundry debtors, if you see, two numbers are missing. What are the two numbers? Now you can see the number there. Cash sales, not cash sales, credit sales, and what is the amount received? Both we don't know. Both we don't know. When you have debtors account, do not close debtors account first. Always close bills receivable first. Bills receivable, if you see, you have the opening balance, you have new bills, you have bill endorsed, you have bill discounted, you have bill discounted, you have money received also, still it is not tallying. That means it is bill dishonored. That means it is bill dishonored. In bills of exchange, what can happen? Opening balance you have, new bills you have, bills discounted you have, bills endorsed you have. Okay, closing balance is also given, bill honored is also given. What should be the missing figure after that? Bill dishonored. For bill dishonored, the entry is debtor account debited to bills receivable. So 3,000 comes here as the balancing figure that you put over here. Then also two numbers are missing in the debtors account. Amount received, credit sales. Amount received, credit sales. Both are missing. Clear? Now, what will you do? Bills receivable done. Creditors you won't close. What will you close? Bills payable. Check bills payable. Opening balance is there. Creditors new bills accepted is there. Closing balance is there. What is missing? Bills paid. If bills paid and bills not paid are there, first option is always bills paid. 22,000. What is the entry for bills paid? Bills payable to bank. You will put that 22,000 to bank. Clear? Now bills payable is closed. You will close the sundry creditors ledger. Sundry creditors ledger, everything is there. One thing is missing. That is your purchases. That is your purchases. Purchases will go to trading account. Purchases will go to trading account. Now sundry creditors also closed. Now you will close your cash account. In your cash account, everything is there. What is not there? They have told you, you have deposited money. They have told you have deposited money. They have told you have paid shop expense. They have told you have paid salary. They told you paid drawings also. But where did the money come? Money coming in is not there. Money came from sundry debtors. Can we assume that money can come from cash sales also? No. Why? In the first line they said, this company has only credit sales and credit purchases. Maybe some other question, the missing figure can be cash sales. Is this clear? So 897, 150 we got from debtors. That is the only place from where we can get money. You put this debtor value, that time you will get the sale value. This is the balancing figure. When you put the debtor value, you will get the sale value. Sale value will go to your trading account. So now debtor closed, bills receivable closed, creditor closed, bills payable closed, cash closed. Bank is missing. You know what is the missing figure in the bank? That building. You have purchased one building. We don't know how much value. 350 is the building. But after that remaining figure we don't know. Can you see you are getting missing figure? You are 372. That is your building. 350 is the building. 22,000 you have spent extra. Some expenses. Clear? 372. Obviously this 372 should go to balance sheet also. 372. Other than that, you see in the balance sheet what is there? Inventory already given. Sundry debtors we know. Bills receivable we know. Cash at bank we know. Cash in hand we know. Creditors we know. Bills payable we know. Rest of the things we already saw. Clear? Now, from where will we get this net profit? Trading account, everything is there. Put it, you'll get the gross profit. P&L, everything is there. Put it, you'll get the net profit. Is it clear? This is your question. Incomplete records. Did it test many chapters only? Forget about this chapter. He tested your concept of so many other chapters. That is why there is no concept for this chapter. You study everything, come here, you will be able to solve. Is this clear? Yes. Let's go further. Illustration 9. Array. Stop identifying. Okay. There are a lot of people who are not identifying the chapter. Which chapter is this? Yes. Now, from the following data furnished, Mr. Manoj, you are required to prepare trading account, P&L account and balance sheet as at the end. All data should form part of your answer. Clear? What has happened over here? They have given the detail at the starting, given the detail at the ending. Given the detail at the starting, given the detail at the ending. Now what you will do? First thing, always you will prepare opening statement of effects. Question number what? 9, no? Question number 9. Okay. Always you will start preparing opening balance sheet. You'll start preparing opening balance sheet. In this question also you'll start preparing opening balance sheet. So what you will do? You will see, oh, creditors 15,770. I'll put creditors 15,770. Oh, then I found sundry expenses outstanding. Outstanding expense, I know it's a liability. Done. Then what I will do? I'll be like sundry assets 11,610. I'll put 11,610. Then I'll be like next thing. Inventory. Okay, I know inventory is asset. I'll put 8040. Then I'll be like cash in hand. Okay, I put that also, cash in hand. Then I am like, oh, question mark. Oh, question mark. Debtors is not given. Debtors is not given. So we have to keep debtors pending. When I get debtors, that time I will get capital. How will I get debtors? When I prepare debtors account, balancing figure is opening balance. How? When we are preparing receipt and payment account, balancing figure was opening cash. That came to the balance sheet. That gave you the capital fund. Here this will give you the capital. Are you getting this? Okay. Now that means in the question, what and all are there at the starting of the year? Creditors. So you have to prepare creditors ledger. Debtors. So you have to prepare debtors ledger. Asset, can you see it has increased? We'll see how it increased. Okay. Cash in hand at bank. Luckily for you, cash and bank, they give together. So you don't go to separate it now. Cash and bank you will prepare together. So the ledgers you have to prepare: debtors account, creditors account, cash and bank. That's it. You don't need to prepare anything else. Now you can see over here the ledgers, cash and bank combined, debtors combined, creditors combined, no bills receivable, no bills payable. Feel happy. Clear? Now we are going to start, guys. Debtors account, opening balance and all, you know how to put it. Opening balance, closing balance. Sorry, opening balance is not there only. This will be the balancing figure at the end. Creditors account, opening balance, closing balance, given. Creditors account, it's given, no? Yes, it's given. Actually, they wrote balancing figure here. I think this balancing figure should actually be here for purchases. Now, after that, cash and bank, they have given opening balance also. They have given closing balance also. Closing balance also is given. Now you are going to tell me the transactions. Okay. Cash and discount credited to debtors. I don't want together. I want separate. Somewhere below it is given separate. Cash, you keep it pending. Sales return. What is the entry? Sales return account debited to debtors. Can you see over here in debtors? You can see 1450. And this will go to my trading account returns 1450. Okay. Now, next, bad debt. What is the entry? Bad debt account debited to debtors. Bad debt account debited to debtors. Go to your debtors. You'll find the bad debt 420. Okay, where will it go? 420. I mean amount. Okay, it will go to P&L account 420. Next, sales. Cash and credit is given. Sales we know, cash and credit. Can I put it anywhere? Nowhere. Why? For cash sales, entry is bank account or cash account debited to sales. For credit sales, the entry is debtors account debited to sales. I cannot put it anywhere. I need to know the separation. Discount allowed. Now can you see this? Cash and discount credited to debtors. You know the cash, you know the discount. You know the cash, you know the discount. So, oh, sorry. This is creditors. Discount allowed by creditors. We see discount allowed and we directly think it is debtors. Discount allowed by creditors. What is the entry? Creditors account debited to discount received. Creditors account debited to discount received. Where will this 700 go? P and L on the credit side. 700. Is this clear? Next, purchase returns. What is the entry? Creditors account debited to purchase returns. And in the trading account, you have to subtract it from purchases. Done. They have done it. Next, after that, additional capital paid into bank. What is the entry? Bank account debited to capital account. Can you see that should get added to the capital? And it is added over here. And it should be there in the bank account, 8,500. Next, after that, realization from debtors. Now we know how much money we got from debtors. And we know the total was 64,500. 64,000. That means difference of 1,500 is discount. I was supposed to get 64,000. I got 62,500. Entry for 62,500. Bank account debited to debtors. Bank account debited to debtors. It's here. Yes, 62,500. What is the entry for discount? Discount account debited to debtors, 1,500. And where will this discount go? In the P and L. Can you find 1,500? Yes. Next, after that, cash purchases. Cash purchases. No. Cash purchases. Purchases account debited to cash. Where will I put that? Trading account, 1030. And I will show it in cash account, 1030. Clear? We'll see. What is missing, we'll see. Cash expenses. Expense account debited to cash. Expense account debited to cash, 9570. I will not put 9570 into P&L because expenses, we have some outstanding and all. Last year's outstanding will be subtracted. This year's outstanding will be added. That time I will get 9,300. Concepts of other chapters, we can't forget it. Just now we saw outstanding prepaid. Clear what happens? So that is the situation. And the 330 will go to closing balance sheet. Liability side. Outstanding. Clear? Next, after that, what do we have? Paid by check for machine purchased. 430 rupees machine they have purchased and they are paid by check also. Machinery account debited to bank account. Can you find 430 here? Can you see over here machinery from 80? Sorry, where is that? Yeah, machinery is not there only. Sundry assets. Sundry assets 11,610 had become 12,040. Can you see the difference is nothing but 430. 430. That means there is no depreciation. If it is matching, how will you find depreciation without them giving you rate? So now 12,040, where will it go? It will go into the balance sheet. Can you see 12,040 sundry assets given? Now, what other transactions are there? Household expenses drawn from bank. Entry, drawings account debited to bank account. Can you see 3180? And that 3180 will be subtracted in its capital also? Yes. Next, cash paid into bank. Ignore. Why? Because cash and bank is together. What will you pass entry for? You can actually pass, but no need to pass. They have passed. See, contra they have passed here. If it is given in columnar form, then contra. If it is the same ledger, what contra? Okay, if you ignore also, no problem. Cash drawn from bank, this is also contra. Both sides it will be there. Now, cash in hand, 1,200. We don't need. We know cash and bank together. This is not required. Can you see? We already know 8080 is the total. Then finally you have checks issued to creditors. Creditors to bank account. Creditors account debited to bank account. 60,270. Done? Done. Nothing else is there. Now what you will do? Close the debtors account. Close the debtors account. When you close debtors account, in debtors account you can't close only because you have only found credit items. Debit side opening balance also you don't know. Sale also you don't know. Sale also you don't know. Correct? So what you have to do? Then you close cash account. In cash account, everything is there. But one thing is missing. That is cash sale. In the previous question, missing figure on the debit side of the cash account was amount received from debtors because we did not have cash sale in that question. So here the missing figure is cash sale. Somewhere in the question, they only told you total sales was over here 71,810. So out of that, if you remove 71,810 minus 4,600, see over here, you will get the credit sales. You will get the credit sales. If you get the credit sales, missing figure is opening balance. Missing figure is opening balance. If you get the opening balance, happily you will come and put it here in the opening balance sheet. Now you will get the capital. Did you understand the route which we took? Okay. Now sales, total sales will go to trading account. Total sales, cash and credit will go to trading account. Correct? Correct? Yes. Now debtors done. Cash and bank also closed. Creditor still something is missing. Credit purchases. Credit purchases. Cash purchase was given. By them only they had given. Cash purchase. So what will happen? Go into the trading account and put credit purchases over here. 58,000 plus 1030. Any doubt? Anybody has any doubt? No. Trading account. Now what you will do? You will just find the gross profit. Carry it forward. Then you will get the net profit. Put the net profit to balance sheet. And your balance sheet should tally. Inventory, sundry debtors, cash and bank. Given in the question only. Closing balance also. Is this clear? You need to have your accounting concept strong. You will be able to solve easy questions. They are not testing you with tough questions yet. Yet. We don't know in future. Okay. 55 done. Small question is there. Why everything is same. Everything is same. Okay, you can see. Sales for the year end were 20% higher than the sales of previous year, out of which 20% is cash sales. Total sales of previous year is 5 lakh. What are they telling? Last year sale is 5 lakh. This year sale is 20% more. That means this year sale is 6 lakh. Out of 6 lakhs, 20% is cash sale, 80% is credit sale. Okay, you know the entries for cash sale and credit sale. Okay. Payment for all purchases were made by check only. Wherever you are making payment to creditor, it should be creditor account debited to bank. Then goods were sold for cash and credit both. Credit customer pay by check only. Debtors are paying by check only. So whenever debtor is giving money, you will pass the entry debtor account debited to, bank account debited to debtor. Then depreciation on furniture to be charged. That you know how to do it. Now only thing is this over here. On the evening of 31st March, cashier absconded with the available cash in the cash book. Whatever was there, he ran away. Whatever. Luckily, what you did, cash deposited into the bank during the year. If you would not deposit this 80,000 also gone. Are you getting my point? How much did he run away with? We don't know. So what we will do, we will prepare practice question 2. Yes. Only thing that you have to understand in this is you will prepare the cash book. Okay, unnecessary. They have done like vertical. Everywhere they are doing horizontal, vertical. See, opening balance plus minus. All the things that are given. See, cash sales during the year, salary, office expense, drawings, cash deposited, everything is there. One missing figure you will find, that is the cash book. But what mistake you can make the ledger like this. You put all the numbers and write by balance carried down and put 23,600 and put this in the balance sheet. Wrong. Why? There is no balance carried down. Last day he ran away with everything balance carried down. He carried the balance into his pocket and went. Are you getting my point? There is no balance carried down. So 23,600 is the loss. Loss. How will you show the loss? Loss should go from cash went and loss should be shown in the P&L. 23,600. This is the most important point of this question. Is this clear? Rest of the things, if you see, everything is same but different, but same. A's capital is given. Earlier question, we had to prepare opening statement of affairs. Here, they have given the opening statement of affairs. No problem there. Okay, so other than that, there shouldn't be any issue. One last question I have to see. Why? Because stock is only missing. If stock is missing, boss, how will I calculate gross profit? Inventory chapter was taught to you. Stock is missing. Till now in trading account, what you did? Opening stock is there, purchase is there, sale is there, closing stock is there, gross profit, balancing figure. Next question. Correct? Correct. Here stock is only missing. Closing stock is missing. Capital is missing. Don't worry about that. Why? Opening capital plus additions minus drawings plus profit. You'll get the closing capital. Stock is only missing. Who will teach us how to do stock? A formula called as opening stock plus purchases plus direct expenses minus cost of goods sold is equal to closing stock. Cost of goods sold, what do I do? Nothing, I don't know. Cost of goods sold, I'll do sales minus gross profit percentage. Can you see they have told, he informs you that he sold goods at 25% on sales. Is it clear? So now you have to find sales. How will you find sales? In the debtors account you'll find, like how you did in the previous questions, you'll get in the debtors account the sales, but you have to add the profit. I hope they have shown the calculation, otherwise we will solve it. Question number 3, practice. See. Oh. See, in sales account, no, you will find the credit sales. This we know. Okay, in purchase account, no, you will find credit purchases. This also we know. Now what you will do? In trading account, see over here. Trading account, opening stock, purchases, sales. Sales we know. On sales, we know the gross profit percentage. Gross profit percentage is 25% on sale only. Apply the percent. We don't need. It's given on sale only. Are you getting my point? Every time the percentage is given, don't go to change it. See, gross profit percentage 25% on sale. And we have sale only with us. Sale into gross profit percentage will give you gross profit. Okay, now the missing figure is closing stock. This closing stock will also go to balance sheet. That is it. That is the only twist in this question. Other than that, there is nothing. I mean, you have to know how to prepare debtors account. That we have done in the previous questions. Okay. Debtors account missing figure will be sales, credit sales. Creditors account missing figure will be credit purchases. Cash sales will be given in the question, or it will be the missing figure in the cash and bank account. Then what you will do, you will get the total sales, total purchases, use the formula or prepare trading account. You will get missing figure as closing stock. Why do we need that closing stock? Otherwise our balance sheet will not tally. You need to put that closing stock to balance sheet as well. This is incomplete records. If you study everything completely, you will be able to complete this also. Okay. If you miss something somewhere, see, if bills of exchange was skipped, you will be in trouble here. Inventory was skipped, you will be in trouble here. Final accounts was skipped, you will be in trouble here. Depreciation chapter is skipped, you will be in trouble here. NPO, how to add outstanding prepaid and all, if you had not focused, you will be in trouble here. Are you getting my point? It's basically a collection of all the chapters which will be over here. Yes, that should be it. We are done. We have one death of a partner question. Don't be too happy. We have one question, death of a partner. We are doing it. You thought I will skip it? No. I have to go against your expectations. Death of a partner, one question is there. If you want, you can take 2 minutes break. Till I just arrange it. 2 minutes break, just. By 6 we'll finish. I told you we'll finish by 6. But you came to class thinking that we will finish by 4. That was your mistake. Yes. June 2023. This question very, very important. We have to do it. Death of a partner. 20 marks only. But that adjustment will come, man. What? What is the issue?
Actually, I don't understand what.
This is the missing figure question now. See the study material end, that missing figure question is there. That is the one. See, raw material account is nothing
Why
but
this additional information is given again? We have to adjust this in this account or?
no. Wages include wages paid to factory workers and it is paid to labor at office. That means this wages is wrong.
Yeah, this is wrong.
This wages is wrong.
Okay, we have to adjust that.
Yeah, you have to change the wages.
Okay.
Depreciation include the electricity. Direct expenses include electricity charges pertaining to office. That means the direct expense is wrong. You have to change the direct expense. And what is there? Fuel charges right inwards. Delivery charges of customer, that you have to remove. Write out outwards.
Okay, from expenses.
Yeah. And then what will happen? You will change all this. But when you take missing figure is this raw material.
This is correct. 17 lakh 44,000.
That will not be correct. But this is wrong. These three are also wrong.
Okay.
This missing figure is correct. From all wrong numbers, you are getting one missing figure. That you will put it to raw material consumed. Then you will get all the things here. Then you'll get the correct thing to go into the trading account. It is there in the study material end. Practice question, yeah. Manufacturing account. Yeah, you solved that. See, 20 marks. I told you it's for 20 marks. Yeah. I'll just be back in a minute.
So 2 minutes over, sir.
मुर्गी देखा नहीं देखा तो बकरी का नहीं बकरी शायद बेचारी मुर्गी के गले तक तो उसने बोला यार
I'll check my bag. Okay.
Check my bag.
Yes. Last question. Last question for the marathon for Jan 2025. Yes, this question is important. You can see, just to make you understand, see over here. Why it is important? 20 marks. They asked only for 20 marks. Okay. Will they ask again? Yeah, partnership. Will they ask again? Possible. Because partnership weightage is anyways 20 marks, no? Yeah, this question is equivalent to 4. No. They can ask smaller part also. They can ask. Okay, we'll understand the entire thing. ABC were trading in partnership, sharing profits and losses in the ratio 4:3:3. Yes, focus on this question. Any part of this question can be asked in the exam. 4:3:3. The balance in the books of the firm on 31st December 2022 subject to final adjustment is as follows. Can you see capital account of partner is given? Can you see current account of partner is given? Yes. Then you have land and building, furniture and fixtures, stock, debtors. Okay, good. Bank account also is there. It will not bother us much. Profit for the year before charging interest. First you have to determine which year is this. 2022. 31st December 2022. Clear? This is the profit. Creditors are also there. 2022 profit, that is. 2022 profit. Now see here. Goodwill may be recorded separately instead of through revaluation account. Who is going to put goodwill into revaluation account? It is going to be adjusted through partner's capital only, no? C died on 30th June. 30th June. Exact half. Middle of the year. Exact half. Correct? Okay. Partnership deed provided that interest was credited on capital account of partners at the rate of 12% per annum on the balance at the beginning of the year. Is it confusing, this sentence? They just told that interest should be always paid to partners at the rate of 12%. Okay. Remember this? 12%. On the death of a partner, goodwill was to be valued at 3 years purchase of average annual profit of last 3 years up to the date of death. Up to the date of death. Remember 2019 half, 20 full, 21 half, 22 half, 22 full. That we did half. We made 3 years. Up to the date of death. That adjustment only they put over here. Clear? After deducting interest on capital employed at 10% per annum. Oh, my goodness. Just now they told 12% per annum. Here they are telling 10% per annum. Should I take 12% per annum? Should I take 10% per annum? For goodwill calculation, interest will be 10% per annum. Normally giving interest will be 12% per annum. Is it clear? Yes. And a fair remuneration to each of the partner. We have done this fair remuneration in one of the places. Remove the interest, remove the remuneration, whatever you get, that you use for goodwill purpose. Fixed assets are to be revalued by an independent valuer and all the other assets and liabilities to be taken over at book value. Okay, somebody will do the revaluation, good, no problem. Whenever necessary, profit or loss should be apportioned on time basis. Okay, when you want 6 by 12, 3 by 12, do it. You ascertain that profit for the 3 years before charging interest, 2019, 20, 21. Before charging interest is this. You have to take half. Why? Because 2022 he has died on 30th June. So 2022 half. 2021 1 year. 2020 1 year. 2019 half. This will give us 3 years which they are looking for. Independent valuation is on the date is this. Land and building and furniture and fixtures are valued. So we know revaluation account will prepare, calculate the profit, put it. Valuation of goodwill. For valuation of goodwill, fair remuneration for each partner should be taken 56,250. What did they tell you? Remuneration each partner 56,250. So it will be 56,250 into 3. 1,68,750. That is your remuneration which you have to subtract when you are calculating goodwill. Clear? And the capital employed in the business to be taken at 5,85,000 throughout. Why capital employed? Because when you are calculating goodwill, you need interest on capital or at the rate of 10%, not 12%, 10%. So they said for that capital you take 5,85,000 throughout. Clear? Till here? It was agreed between the partners that goodwill was not to be shown as an asset in the asset of the firm in the balance sheet. Unnecessary adjustment, forget it. We never show. Gaining partner will give to sacrificing party, end of story. Therefore, adjustment for goodwill should be made in capital account. Even if you would not tell, I would have done that only. The amount due to seize estate was to remain as loan with the carrying interest of 12% per annum. After you calculate what you have to give to C, the balance will be transferred to his loan account. We are not paying 1 rupee now. A and B would share profits equally after the date of death of C, 1:1. New profit sharing ratio 1:1. Depreciation on revised value of asset to be ignored. Thank you very much. Otherwise, on that revision also I have to calculate depreciation. Not there. You are required to prepare, you, not me, partner's capital account and current account and balance sheet of the firm. Working should be done to the nearest rupee. Don't fight over paise in the exam hall. Is this clear? Yes. Now, capital account you have to prepare. Current account you have to prepare. Balance sheet you have to prepare. Okay. Now, I am going in the order only. First, tell me. Don't you think you will put the opening balance first? Easy. Figure, fill in the blanks. Go to the capital account. Opening balance brought down. Balance brought down. Current account, don't you think next thing you will do is put the current account balance? Correct? Will I write by balance brought down? No, because this is on this side. Be careful with the balances. This is on this side. So you will write in current account, to balance brought down. To balance brought down. Is it clear? Now, after that, our story starts of goodwill calculation. Goodwill calculation. Goodwill, remember, half. Okay? See the goodwill calculation. 2019, 6 months. 2020, 2021, 2022, 6 months. Now you are thinking, sir, in this table 2022 is not there. Only 19, 20 and 21 is there. Where is 2022? In the trial balance, 2,34,000. That half you are going to take. Is it clear? Did you get the total? Divide by 3. You will get the average profit. From the average profit, what you are going to remove? Interest at the rate of 10%. Not 12, 10%. Then you are going to remove remuneration. 168,750 we had written somewhere. 168,750 remuneration. Remove interest, remove remuneration. Will you get the average profit now? Multiply into 3. Because number of years of purchase was 3. You will get the goodwill. 114,750. Who is the partner who died? Poor guy. C. What is C's share? 3 by 10. This is the goodwill of the firm. 3 by 10 will give you 34,425. 34,425. Who has to give? Other partners. In profit sharing ratio or capital ratio? In the sacrificing ratio. Remember, gaining partner will pay to sacrificing partner. See the old ratio given 4 by 10 and 3 by 10. New ratio 1 by 1. 1:1. Remember seeing in the question 1:1. Now you got the ratio as 1:2. 1:2. Clear? Now this 34,425 will be distributed like this. A's capital account debited because it's gaining. B's capital account debited because it is gaining. To C's capital account. Is it clear? Now they have done the goodwill adjustment in capital only. So you can see over here A and B's capital account is debited. C's capital account is credited. Any problem? Any problem? No. Now what? Goodwill is done. Goodwill is done. Now what? Interest. 6 months. Are you getting this? Interest 6 months. Goodwill calculation only we finished. Now P&L appropriation account they have prepared. P&L appropriation account. Understand this? Very, very important. Okay. If you understand this, there is nothing much. See, after that revaluation. Revaluation if you want, I'll finish. Furniture, land and building 45,000. How? Can you see? Sorry. Can you see over here? 225. In the trial balance land is showing 180. 45,000 profit. 45,000 profit. Fixtures, what is this showing? 33,750. How much is the fixture here? 22,500. That means loss. Overall, we have a profit. Profit should go to partners. 13,500, 10,125 and 10,125. Where will it go? Go straight into partners capital revaluation profit. Partners current account revaluation profit. Correct? Now, what we have to do? 6 months interest on capital we have to give. 6 months interest on capital. Correct? See here, interest on capital. Actually, it is not 6 months. 6 months for 3 people, then 6 months for 2 people. Okay? That is why I said this P&L appropriation is very important. Remember in the trial balance, the profit was 2,34,000. Divide it into 2 halves. Divide it into 2 halves. First half 1,17,000, second half 1,17,000. Is that clear? Why 6 months? Till death, after death. Till death, after death. Clear? Now, interest on capital C. A is getting 6% here also, 6% here also. Clear? 6% here also, 6% here also. Take your calculator. 2,25,000 into 6%. How much you are getting? 27,000. 13,500. Oh, okay. They have taken 6%. Why is it 6%? Actually, it is 12%. No. For 6 months, it is 6%. Okay. Now, here you can make the mistake of taking 10%. 10% was only for goodwill calculation. Here it is going to be 6%. Clear? Now, can you see 6%? That also you can do. Same thing it is. 12% into 6 by 12 is also giving you same rate, same amount. Okay, you can take that. No problem. Okay. Now, B is also there for both halves. 6%, 6 months interest, 6 months interest. C is there only for first half. C is only there for the first half. No. So, you are giving only 6 months interest. Can you see second column 0? Shh. Can you see second column 0? Okay. Now, done. This total interest will go to, this total interest will go to A, to B and to C. Partners current account. Can you see here? Interest on capital came from P&L appropriation. This is actually wrong. Better to write by P&L appropriation, not by interest on capital, by P&L appropriation. Next, after that, what is happening? See this. Interest. Now see what happens. 6 months are over, no? 6 months are over. Calculate the profit for 6 months and distribute it to all the partners. Calculate the profit. See, 1,17,000 minus this, minus this, minus this, minus this. I mean, that time you'll get the profit. Distribute it to the profit partners in the ratio of 4:3:3. Clear? Why we are doing this first?
Because after the profit sharing ratio change.
After that, profit sharing ratio will change. But first you have to send the partner who is going. Now, this partner is going on 30th June. Distribution of profit, you know, 4:3:3. You will take calculator and distribute it. Now, this 4:3:3, when we put no, see here, partner's current account. Partner's current account. First half you will put. Okay, here you will write only the first half. First half, when you put no, just put for C. Is C's profit 26,595? Others you put later, no problem. C we have to send no. 26,595. When you put 26,595, is the C's current account fully completed? C's current account is fully completed. Whatever balance is there, it is transferred to capital account. Whatever balance is there, transferred to capital account. And in that whatever balance is there, it will be transferred to executor. And the balance is 162.45. Why am I stressing so much on completing first half? Because this guy, no, this amount is transferred to executor's loan account. And we have to give interest for 6 months. Are you getting my point? We have to give interest for 6 months. If I just distribute the profit fully for the full year, no, then I'll be in trouble. Clear? First, I calculated profit only for 6 months, distributed to the partner. Other partners I'll distribute later. C I distributed, closed C's current account. Whatever balance was there, transferred to his capital account. Closed the capital account, transferred to executor. Is the executor's loan now 162.45? 162.45. Now what I will do? See over here. In the second half, 162.45 into 6%. How do I know this? Can you see over here? Amount due to C's estate was to remain as loan with the firm carrying an interest rate of 12% per annum. So for 6 months, they have taken 6%, 9615. Is it clear? Only after I put this amount, I will get to know the balance profit for the next 6 months. That will be shared by these two people equally. When you are doing equally, there is a ratio problem, rounding off problem. So one person will get 1 rupee more. That's why they said don't fight over paise. Is this clear? Are you following this? If you don't put this, you will not get the correct amount. So first you have to find the profit of all the partners for the first 6 months. Give it to C. See what is the amount of loan. On that loan, calculate interest for 6 months. Interest for 6 months. That time you will get the remaining profit, distribute between the partners. This add the profit and this profit will go to partner's current account. Current account. What is there other than this? Nothing. Balance carried down. This balance carried down will go to balance sheet. And capital account balance carried down. This balance carried down will go to balance sheet. Land has been revalued, new value in the balance sheet. Fixtures have been revalued, new value in the balance sheet. Stock is given in the trial balance only, you will take that stock. Debtors are given in the trial balance only, you will take that value. Bank is also given in the trial balance, you will take that value. C's executor's account you found out. But C's executor's account pending interest is a liability, outstanding interest, that is also here. Creditors are also given in the trial balance. This is your question. Question looks huge. Huge. You know what is the only adjustment, only two adjustments you have to worry about? Calculate goodwill properly, calculate profit properly. Overdone. Calculate goodwill properly, calculate profit properly. Goodwill, you know where you can go wrong? By mistake, take 12% interest. By mistake, take 12% interest. There you can go wrong. And goodwill, if you have taken 10% interest also, if you take interest on capital on this capital, no, you are wrong. Why? For goodwill, they have given separate capital, 5,85,000. You have to take on that capital. After taking on that capital interest, later when you are giving actual interest, if you take on 5,85,000, wrong. Because that time you give on actual capital. Are you getting this? And when you are giving on actual capital, okay, you pick the actual capital also. But now if you give 10%, you are wrong again. Because now the interest rate is 12%. It's a scoring question. If it comes to 5 marks, what will you do? 10 marks, what will you do? They'll shorten the length of the question and give. But adjustments will remain, no. One adjustment can come, no.
If same question, copy question can be possible.
If same question copy paste, you should be happy and you should just solve it. 20 marks into the pocket.
We saw it the first time.
No, you should see it. If you see it for the first time, people got stuck. When people saw it for the first time in the exam in June 2023 attempt, they came and told they got stuck. Because now here, see how many pages it is going into. Here only it is going into 2 pages. Institute question paper will go into, I think it went into 4th page or something. Because they use big font, small paper. So it went into 4th page. Now when you see a lengthy question in the exam, what happens? Question might be easy. You have already decided its stuff. Question might be easy. You have already decided its stuff. Before reading the question only, you have already lost confidence on that question. Are you getting my point? In this, only 2 adjustments. Goodwill, profit calculation. Profit calculation, where you can go wrong. Full year's profit, if you do together, you are wrong. You have to do 6 months, calculate, give it to C, send C, and on the C's balance, you have to calculate interest, then remaining will be shared. Clear? I don't know if they will ask 20 mark question like this, but just the goodwill calculation can be there in a 10 mark question. Just the profit calculation can be there in a 10 mark question. In that small goodwill question in the study material, they had told no profit share till the date of death. So we did half. That same thing, that point they put over here. Question was not same, but that point they put over here. Are you getting my point? So don't expect same questions to come in the exam. We are done with the marathon. Okay, don't expect same questions to come in the exam, but the same concepts can come in the exam. Not can. Same concepts only will come in the exam. Is this clear? Okay, students, we are done. I told you by 6 we'll finish. It's 5:52. So we are done 8 minutes early. So there is enough time. Still you have some 42 days. 42 days are there. Okay, there is enough time. Just focus. There is no other alternative to clearing CA exams. Focus. You know, there is one sentence where someone told for CA students only, CA exams are the place where hard work beats talent. CA exams are the place where hard work beats talent. I have seen people who have scored 35% in second PUC, just passed, with all hard work became chartered accountants. I have seen people with 99% in second PUC with overconfidence. They have not cleared. Are you getting my point? Both sides are there. So basically this is a place where you start with clean slate. What you have done in PUC and all doesn't matter only. Okay. If you put your hard work here, you will 100% clear. Hard work beats talent. When talent is lazy.
Now AC beats me.
Huh?
Now AC cooling is beating me.
Hard work beats talent when talent is lazy. Are you getting my point? If talent also works hard, obviously they'll clear. Now, wish you all the best for your exams. See you in inter. We don't want to meet in foundation class again. We will meet again only in CA inter class. That is your lunch time. Now you are at breakfast time. Correct? Yes. All the best. See you. Bye-bye. Welcome.